This comes after some pretty disappointing Uniqlo numbers overnight, so watch out for the fast fashion and the retail names. Also, miners pull back in gold. We'll be watching as well whether the FTSE 100 stays vulnerable to moves in mining stocks. And then lastly, chip stocks. We've had some news that the Germans have decided to fund roads instead of chips, so we're looking for some weakness perhaps in ASML today.
Okay. We'll see whether or not that story turns around for the chip sector. We'll watch that at the open. Here we go. It is time for the opening trade this Friday morning. There is a lot going on and a lot to fold in. Does it all cancel itself out and deal a kind of fairly neutral hand? Maybe that's what we see here. The FTSE 100 is down a little bit. We're down by 0.2%. We'll wait for the other markets to open up before we get a solid reading on the Stock 600. The CAC 40 is going to be interesting this morning. What is happening in terms of the taxation story? The socialists take over that prime minister role in France. We'll watch that one. The IBEX is up by 0.2%. Not much read there, but watch the fast fashion story, as Val says, into names like H&M and Inditex today. That's going to be an interesting trade to watch out for. The DAX and the SMI, we're going to wait, we're going to watch, we're going to see what happens with those markets. They could take a little while to get going. Yesterday, a huge session for the German auto sector, the Italian auto sector as well. Do we see some recovery in that space today in the German market? We'll wait and we'll find out in just a few seconds. Valerie, sectors, single stocks, what are we seeing?
Well, when it comes to the sectors, the one that jumps out to me is we are seeing a slight recovery when it comes to the auto sector. It had one of its worst sessions in a while, with Ferrari shares yesterday dropping the most in nearly a decade. So they are recovering in the first moments of today's trade. So we have autos at the top. We also have retail at the top. So it does seem like Uniqlo isn't posing a negative catalyst for European stocks at the moment. We have H&M actually in the green, up 0.7%, but one we will continue to monitor. At the bottom of the basket, we do have basic resources, so that turnaround in copper is weighing on some of the minor names. I see Antofagasta dropping more than 2%. That is dragging down the basic resources sector. Also at the bottom of the basket, we have energy and healthcare. So some of perhaps the pullback in oil prices on the back of this breakthrough of the peace plan from Gaza having some negative effect when it comes to Shell, Total Energies, and the likes of BNP.
Okay. So in terms of some of the movers this morning, we are seeing maybe that gold story, that copper story rolling into the market. You can certainly see that in names like Glencore, Rio rolling off a little bit. It's interesting to see the market feels a little bit more defensive this morning. It's always fascinating when you have names like Anheuser-Busch, Unilever and Diageo at the top of the market. It feels like a safe place to hang out, maybe the beer market and the toothpaste market and the deodorant market. That feels like a kind of safe place maybe to be in a world that has been driven by AI trades.
Yeah, if you're worried about a bubble, you hang out in things like toasters and people that make kettles, right? Is that what we learned? But yeah, let's broaden this conversation out. We do have a guest around the table. Hugh Jimber from JP Morgan Asset Management is joining us this morning to discuss this and more. Hugh, I see that you are still bullish. You want to stay pro-risk. You want to stay invested. What are the risks on the horizon on your plates?
Well, good morning. I think you do have to stay invested here, because ultimately the big drivers of markets are monetary policy turning more supportive, number one, and fiscal policy still booming. So when you have more fuel being added to the fire, clearly this is going to be a difficult time to fight stock markets going further. But for me, this all hinges around inflation, because the story that keeps this all together is this benign assumption that US inflation is going to remain at low enough levels to keep the Fed being able to cut and importantly, to avoid any questions around Fed independence, to justify Fed cuts via their concerns around the labor market being greater than their concerns around inflation. So that's an area we're spending a huge amount of time. Good news, hopefully, overnight, that we're going to get some more data on US CPI in the middle of next week as some of the government statisticians return. But inflation, I think, is the key metric in Q4 because we know the goods price pass-through from tariffs has been slow so far, but we are expecting that to show up more and more clearly as we move towards Christmas.
How are you feeling, though, about the broadening of this rally? I got some stats from our own Daniel Curtis saying that there's only 3 S&P sectors that are up this month. Tech, the obvious one, healthcare, and utilities. The other remaining sectors are in the red. Does that concern you about this bull market here?
Well, I think it makes sense in the context of what AI is doing for the US economy. So there was a very popular trade coming into 2025 where many were saying you need to look away from the Magnificent Seven and the US mega caps, and you need to anticipate this broadening out of earnings that should then benefit a much wider range of stocks in the US. Have we seen that in the earnings data so far this year? No, not really. And as you look ahead into the forecast for 2026, you've got the Mag 7 cooling earnings growth towards something around 15% year over year. But for me, the bigger question here is, can you really expect to see the rest of the S&P 500 also delivering mid-teens in earnings growth? Because that, for that group, is very unusual. And AI is driving economic growth. We've had tech spend really contributing more to US growth this year than the US consumer. If that falters, you'd expect broader economic growth to falter, and that's going to put more pressure further down the S&P 500.
Yeah, there was some data from a Harvard economist that I was reading yesterday from Jason Furman that said if you stripped out all the data center investment, first half GDP for the US is not 0.1%.
Exactly. So this is where I think if you're looking to diversify away from the AI trade, shuffling around your US allocation no longer really works because we know the 493, particularly US small caps, which have had a good run over the summer, but they're much more closely geared into what you're seeing in the US economy. So this for me is where regions like Europe and particularly the UK start to get more interesting because you have different economic drivers and fundamentally you just have a much lower exposure to the tech names, which for 10 years has been a big problem, but is starting to look like a much more attractive characteristic again.
Are European politics going to get in the way of that trade? Right, we've got a budget coming up, could be problematic here in the UK. French politics, we all know what's happening there. Is that a problem?
I don't think it is for the large caps. Take the UK as an example.
Yep.
The FTSE 100, I think, can look through most of what we see in the budget, and particularly if that budget leads you to a weaker pound because of weaker growth prospects for next year, that is categorically a positive for UK large caps. So we can debate the macro, we can debate what it means for the gilt market, for the OAT market, where clearly there are more challenges. But for the large caps, and indeed in France, you've got a market which has very little to do with the French economy, in truth. So politics, I think, is preventing some international investors from coming back to the region. But ultimately, what's driving these stock markets is the composition, the sectoral composition, and not the domestic politics.
If the US tech trade falters, isn't there just going to be a markdown of everything? And kind of, how do I deal? These conversations are relative or absolutes. Are you saying this is a relatively good trade? The UK and the Europe is a relatively good trade or an absolutely good trade? If the US rolls over, what is the beta into Europe?
Yeah, so let's take the UK as an example here. The relative argument is a much easier one to make. Sure. Let's be clear. You know, if the tech trade falters, clearly the FTSE 100, it's a defensive market, trades typically with a much lower beta to global markets than anywhere else, and so your confidence is primarily a relative story. In terms of the absolute, I guess the question here is, does this M&A wave that we're seeing in the UK actually put a floor under valuations? Because we're seeing repeatedly this year more and more international buyers coming in for UK companies, and on average, they're doing those deals at about a 40% premium to the share price before those deals are announced. And so that, for me, does give you an interesting angle on the UK specifically, because clearly, tech stocks coming under pressure, the US market coming under pressure, is going to create headwinds globally for valuations. But I think what's more interesting about the UK is if we can be confident in the floor on where those valuations are going, given the appetite from both international investors and indeed buybacks, it starts to make the case for maybe not so negative an absolute story as well.
Hugh, you wrote that you expect further yield curve steepening to be in effect. What could possibly dent a kind of call like that? I do think that steepeners are still a popular trade. Perhaps maybe something ripe for a sharp unwind if we get upset.
Yeah, I do find it hard to see because this is a market where fiscal concerns are coming to the fore. Now, those fiscal concerns are rotating around the world. I think the bond market likes to focus on one country at a time. Today, it's France. This week, it's been France and Japan. Maybe it's the UK in a few weeks' time as we move towards the November budget. But ultimately, investors, I think, are absolutely right here to be demanding more compensation for risk. So how would you get that out? Well, at the front end, maybe you need the Fed to start to think a bit more about its inflation mandate and less about its labor market. So you see the Fed really trying to get a grip again of inflation and tackle the problem that's building. But how likely is that in a world where we know that central banks everywhere are really backing off how seriously they take a 2% target and thinking much more about the health of the overall economy rather than a kind of singular view on controlling inflation? I don't see that as likely anytime soon, with central banks waking up one morning and saying, well, we've lived with inflation above target for 3 years, but today the time is now to really tackle that. I find that hard to see.
So in some way, this is causing permanent damage to central bank inflation targeting. The fact that they've let inflation stay above target for so long, people aren't going to believe they're ever going to be serious about it ever again.
Well, let's question what their target really is, right? Yeah. Are they implicitly accepting here that a 3% inflation target is absolutely fine? And to be honest, what would be the problem with a higher inflation target? If you're willing to run economies hot, we learned back in the 2010s that 2% was chosen as the level where we thought we'd never have to go to negative interest rates. We'd never have to mess around with QE, and yet where did we get to? So I don't see really a big problem with moving an inflation target higher. I think the difficulty today is, can you move that inflation target when inflation is already above 2%? Or do you have to wait for the next global macro shock, the next big recession, ultimately, that does take inflation down, and then is that your opportunity to open up the discussion about inflation targets moving higher?
If Scott Besson's watching, take some notes and think about what we're talking about. Final quick question. Emerging markets. It's been a great run this year. Feels like investors are just waking up to that trade. Are they too late?
I don't think they are, but I think you have to be very careful about what you're trying to get exposure to. So the tech story is, for me, the most interesting here. All of what we're hearing between the US and China is about two super powerful economies trying to grow their independent tech infrastructure, because this is an issue of national security. So Chinese policy support has turned, and just look at the back and forth that we're getting on chips at the moment. The US passing a ruling overnight to say US companies have to have first bite at the apple in getting their hands on US chips. At the same time, the Chinese are saying, well, maybe we don't want those US chips because we want our companies to be dependent on domestic infrastructure.
As a result.
Exactly. So with that, I think you do need to foot in both camps, because this is no longer a zero-sum game. These are two tech supply chains that are serving very different demand centers. Where we're still a little more hesitant is around the domestic Chinese consumer backdrop, where consumer confidence is fragile, the labour market is still pretty weak, and so I think your case for an EM allocation today looks quite different to a few years ago, where it was all about the emerging consumer and upgrading purchasing preferences and increased purchasing power. Today, I think it's more about the tech story.
Great to see you, Hugh. Covered a lot of ground this morning. It was great. Hugh Gibber, Global Market Strategist, joining us from JP Morgan Asset Management. Course 6 looks a little bit like this morning. Let's check out what is happening at the centre of gravity here in Europe. Defence unchanged, ASML soft. You are seeing actually some of the pharma stocks coming under pressure as well. We're hiding out in maybe some of the staples. Nestle up by 0.2%. The luxury stock sector coming back a little bit. The car sector's had a bumpy ride this week. You are definitely in need of an update on that front. Let's get that right now with Chloe Mellet.
Good morning, guys. So let's start with a positive movement for a car maker this morning. Stellantis said that its third quarter deliveries jumped 13%, and that was due to a really strong performance in North America specifically. So this really points to recovery in that market. We heard from Stellantis recently about wanting to refocus, reinvest in that US market that it had abandoned a little bit. And it seems that that recovery is coming through, and we see the shares up this morning 1.5% on the back of this. Moving on to the mining sector that is seeing a little bit of weakness this morning on the back of a pullback in gold and in copper. We see in particular Fresnillo, which had really benefited from this rise in gold, this gold hitting a record, and now that pullback is driving down the shares. We are down 3.8% for Fresnillo this morning, and downward movements across those other mining names as well this morning. Moving on to Energy Contour. So this is a smaller company over in Germany. It makes it operates windmills, operates solar sites as well, and it is down after cutting its 2025 forecast. It is down 13.4%, so massive downward movement there for that company. It really points to weakness across the renewable energy sector. And finally, let's move over to France, where Technip Energies, which is a engineering and technology company, was downgraded to a neutral rating at BNPP, and that is also driving down the shares quite a bit. We are down 6.7% for this company.
Chloe Melly from our equities team, thank you. Coming up on this show, a blistering run in global equities has faltered amidst rising concerns that technology valuations have run too far. We'll have more on this next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
18 minutes into the equity market session. We're fairly quiet at an index level, though we are seeing green on the screen across much of Europe this morning. Not much, though. And actually, the sector story is more interesting. We'll come into the sector story in more detail in just a moment. I just want to do a bit of breaking news for just a moment. China, in some ways, mirroring what we've seen in the United States, announcing in the last couple of minutes that it is going to impose special port fees on US vessels from October the 14th. 1,120 yuan per ton on US vessels will be imposed. Remember, this all comes ahead of this US-China summit, which may happen, may not happen. We think it's going to happen in a few weeks' time, but it's also worth adding in overnight. We've seen China talking about chip restrictions. We've seen the US talking about chip restrictions. So we're very much focused on what is happening in that landscape as well. But we're now imposing special port fees in China on US vessels.
Well, let's broaden this out to a discussion. As you mentioned, we have tech also on our mind when we're thinking about the negotiations between the U.S. and China. It's on our mind as well for this AI trade as it continues to heat up. We are seeing, though, a bit of weakness when it comes to European chip names this morning. ASML down 0.9%, really dragging down the Eurostock 600 today. But over in the U.S., it has been a fairly positive week for the NASDAQ, up 1.3% in the last 5 sessions when it comes to those NASDAQ futures. We did wobble a bit in yesterday's session, and there were maybe some panic about whether the correction is finally here. But let's talk Bloomberg. Let's talk with Bloomberg's Tech Europe anchor, Tom McKenzie, on this subject. Are we ripe for a correction when it comes to these tech stocks? I think that is on the mind of most market participants.
It does seem to be on people's minds. What you've seen, though, in the last year or so, more than that, is that every time there is a drop in these tech stocks, it's just an opportunity for people and investors to add exposure. Look, the run-up's been there, the spend is huge, the numbers are there. But as others have pointed out, the balance sheets of the hyperscalers who are doing a lot of this spend and a lot of this commitments, they're pretty solid as well. They have their own revenues. Yes, there's the mismatch between the CapEx spend and the revenues at the end of this. But for now, standing in front of this train is something that most investors seem to think is too big a risk. So if you do see a correction, and there's been a softness, it was a challenging session in Hong Kong. The tech stocks in Hong Kong, the Chinese listed names in Hong Kong took a fairly sizable hit. And so there's that sentiment is filtering through to Asia as well, which is interesting. UBS putting out a note. This is coming from their global head of equities. The AI trade is not without its risks, but we see compelling reasons to stay engaged because of the fundamentals, accelerating adoption, and the favourable macro environment.
It's interesting. We were talking about this with one of our previous guests, talking about the fact that we've shifted from cash flow funding to debt funding. And that's the kind of the moment that people are beginning to kind of think, actually, is this bubble going to be sustained? Is it all getting a bit circular? Is it now fueled by debt? Kind of when all that unwinds, therefore, once you put the debt into the mix, you have to mark it down. Things get a little bit more aggressive on the downside. You've had a really interesting few days talking to bank CEOs, and not just any bank CEOs. We're talking Goldman Sachs, we're talking JP Morgan here about the impact that AI is going to have.
And one of the key lines came from JP Morgan's Jamie Dimon himself, who said, they invest about $20 billion on tech every year, about $2 billion specifically on generative AI, of which they get revenues of about $2 billion. And he expects that dynamic to shift positive in terms of revenue. So they're seeing real change as a result of that. But we also, of course, spend a lot of time talking to all these CEOs at Goldman, at JP Morgan, and of Klarna, newly listed on New York as well, about the impact that AI is having on jobs and the banking space there. And they all said, yes, jobs will be affected, but with slightly different nuances. Take a listen to what Sebastian Siemiatkowski, the CEO of Klarna, had to say about that.
It comes back to the vision that we had at Klarna 10 years ago, which was very basic. It said, in the future, there will be a digital financial assistant. It will analyze your spending. So to us, this was basically where we believe retail banking was heading. And a little bit like self-driving cars, don't know when, but know that it will happen. And that's the future. And it has profound impact and consequences for the banking industry.
Okay, the CEO of Klarna, Sebastian Siemiatkowski there, talking about his vision to have a position in 5 or 10 years' time where Klarna is an AI superpowered app that can address all of your financial needs. He has a vision where he's sitting there alongside the likes of Revolut. Goldman Sachs will still be there, he says. JP Morgan will still be there. That ultimately, he says, in 10 years' time, there'll be 5 major banks. There can be a major consolidation result of this. He'll be up there with Klarna, Revolut, Goldman Sachs, and JP Morgan. JP Morgan, by the way, top of the list on one index in terms of companies and banks specifically that are adopting AI. For the second year in a row, JP Morgan is at that top of that list. Klarna wants to play a role.
Okay, but Tom, to deliver that kind of those AI apps, you need the data centers, you need the computing capacity, and we just had a warning from Microsoft, Bloomberg Learning, that they're saying that the data center crunch could last well into 2026.
This ties into the bull case then for the spend on AI and some of the upside that you're seeing. Microsoft's challenge is not a lack of customers, it's not a lack of demand, it's actually meeting their customers to the point where the Azure cloud, which is the big profit driver for Microsoft, $75 billion US, now into 2026, first half to 2026, some of their customers, some of their additional subscriptions, they won't be able to actually online into the first half of 2026 because they don't have enough data centers to serve traditional computing needs, but also the AI.
Okay, so where's the revenue from the AI? Where's the revenue going to come from?
How are they going to make the money to pay for all of this if they don't have the computing capacity?
But this comes back into the debt story. But it's all going to get debt funded because the revenue won't be there in order to do it out of cash. It gets very circular. Tom, thank you very much indeed. BTEC Europe, Tom McKenzie. BTEC Europe's Tom McKenzie. There we go. Got it right. It's been a bad week for the auto sector here in Europe. Did you see Ferrari yesterday? Let me just show you the 5-day. Let's run through some 5-day charts just to give you an idea of what's been happening. Let's start with Ferrari because that was pretty ugly, as you can see. Fine. Very ugly, very quickly. Porsche 5-day. Let's just show you that one. That kind of gets uglier faster, but still pretty ugly. BMW, let's show you what BMW looks like, just to give you a kind of sense of what's happened there. These are big losses. Craig Trudell, our global auto editor, has had quite the week. It all suddenly seems to have gone wrong. I say that. It's been getting bad for a while, but this week has been bad.
Well, I do think this is a unique week because I would put Ferrari and BMW sort of in the camp of the companies that were sort of flying high and sort of keeping above the rest. We've seen Porsche for some months now really struggle. We've seen Volkswagen, Stellantis, Renault. These companies have real issues. I think Ferrari was a high flyer and has been a high flyer for years. BMW, I think, is sort of widely regarded as the best executor in the German car industry. And to see these companies really sort of fall flat on their face this week, it is a sort of further indication of just how tough it is in terms of the sledding for this industry.
Well, a tough market for EVs. We're seeing these companies pull back on their EV pledges, but at the same time, we've had the German government pledging aid to help Germans essentially purchase EVs.
Yeah, absolutely. And I think that's important, particularly for the sort of larger volume manufacturers. I think, look, Ferrari's going to be fine. I think part of the reason that the stock fell so much is it's been, rising so much for so many years. Chris Bryant had a great Bloomberg opinion column yesterday about just the incredible amount of inflation in Ferrari vehicles, and at some point you had to wonder, how much are even consumers who are buying Ferraris going to take that?
But his piece is really interesting because it talks about resale values as well. Because if you buy a Ferrari now, not that I've had this experience, but basically you customize it quite heavily.
Absolutely.
The problem is though that if I'm buying a used Ferrari, I don't want somebody else's customization, so the value of that customization goes down really fast.
Very quickly, yeah. And I think, to tie this back to the sort of broader industry, though, I do think, even Porsche, apparently needs some help incentivizing its customers to go electric. And that's not to say that this sort of broader industry that employs a lot of people, where the need for affordability is so much greater. I think that's where these incentives come in, where we're going to need this for the number of jobs that we have.
Great to see you, Craig. What a week. Craig Trudell. Coming up, we've got much more to talk about. We're going to be talking about auto parts suppliers.
In case you missed it on Bloomberg Surveillance,
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs?
And you're lowering the cost of meatballs. I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Friday the 10th, good morning. How are you doing? European equity markets a little bit calm this morning, so you've probably got a chance to sit back and take a look at what the landscape looks like, maybe from a broader perspective. European equities aren't doing anything. Stock 600 up less than 0.1%. DAX is up a little bit more. Autos are bouncing back. CAC 40's a little bit stabiler this morning, more stable this morning. Luxury names are on the front foot. Miners are not, so that's dragging a little bit on what we're seeing in the London market. So just look at that 1/10 now on the FTSE 100, and probably ascribe it to what is happening with the gold story and the copper story and everything else. In terms of the market internals, quick look at what is happening. As I say, it is a Friday, so just bear that in mind as well. 385 up, 202, 200 down. Volume's a little light. As I say, it is a Friday. 52-week highs, 52-week lows. I've got a few highs for you. Nordex is the one that actually stands out to me in this board here. NL as well to a certain extent, but Nordex here up by 0.2% at a 52-week high. You're actually seeing a little bit of momentum maybe coming back into the renewable sector. I know it's been under a pretty big cloud over recent weeks as a result of what's been happening in the United States. But it's interesting that actually Nordex has climbed that and is now up by 0.2% this morning, Val, at a 52-week high.
Well, here's what else you need to know this morning. President Trump says he'll travel to the Middle East after the Israeli government approved a deal for Hamas to release its remaining hostages in Gaza in exchange for more than 2,000 prisoners and detainees. The French president is expected to name the next prime minister this evening in an attempt to form a new coalition. This is after the resignation of Sébastien Lecornu. Bloomberg understands some business leaders attended a dinner last night with the head of the Socialist Party, which is seen as the kingmaker. The party wants a left-wing premier open to agenda changes, such as the suspension of pension reforms. And finally, Japan's ruling coalition has collapsed, according to the leader of Komeito, the junior party to Takaichi's Liberal Democratic Party. This is after the two sides failed to overcome their differences on political funding regulation. Guy?
Okay, let's turn our attention to what has been happening in private markets this week. The Financial Times is reporting the US Department of Justice has opened an inquiry into the collapse of First Brands Group. Separately, US court documents have revealed a joint venture between Norwegian Bank and the Japanese trading house Mitsui faces a $1.75 billion exposure to the bankrupt auto parts supplier. We're also learning this morning that potentially you're seeing some of the European insurers on the hook potentially around claims relating to this story. James Reynolds, Global Co-Head of Private Credit at Goldman Sachs Asset Management, joining us around the table. Good morning.
Good morning.
So here we go. Here's kind of one of the first major blow-ups we're seeing in private credit rippling through markets, and the effects are quite substantial. US banks are being caught up in this, insurers are being caught up in this, Japanese banks have been caught up. It reaches out into lots of parts of the world. Would you expect this to change the nature of private markets and this incredible run that we've seen as money has poured into this space? Is this something that you think changes the tone more broadly?
Look, we remain very constructive about private markets in general and private credit in particular. By the way, we have been in this market for almost 30 years, right? So we have seen, cycles on the up, on the down. So I don't think it changes the direction of travel and the interest for private markets, private credit in particular.
Yep.
Now, I think if you step back, look, what are the two key pillars of private credit and performance in credit? It's discipline, right?
Yeah.
And it's underwriting and credit selection.
Yeah.
And I think, by the way, in general, on the private sides, you have differentiated access to information. So I don't think there's going to be less interest. I think, though, what you're likely to see in the coming years is, for the first time since the GFC, is dispersion in performance across managers.
Okay. And that's going to become because some haven't done their due diligence, basically.
I think some managers may not have had the experience of prior cycles.
Yeah.
Some managers may not have, the origination edge that, others may have to effectively find those good assets. Some may not have, the scale nor maybe the teams to navigate challenges.
There were 30% interest rates being offered here on vendor financing. That screams to me that somebody wasn't paying attention to risk. That's what is going to make people worry. The obvious signals were ignored in this desperate rush to put to work serious quantities of money that are piling into this sector.
Yeah, look, I'm not going to be drawn into a specific deal, but if I look at what we're doing in private credit, and clearly for the last 28 years, we indexed our business towards defensive stories, defensive sectors, stable, recession resilient. The alpha in our business is almost solely related to minimizing defaults and avoiding those losses. That's it.
I want to turn maybe our focus into how private credit is going to play a role in data center funding in this AI frenzy. In some ways, I want to ask you, how big can some of these private credit deals get? Because the gap for funding, we get new numbers every week, it feels like, but there's a $1 trillion that needs to be raised in order to finance all of this pledged infrastructure spending. How do you expect private credit to play a role in that?
That's true, and here we're probably moving towards more the private investment grades, right, which is a big trend. It's a trend that started several years ago, almost a decade ago. It's led in particular by insurance companies trying to pivot from public to private to get a bit of a premium compared to what they otherwise would get in a public portfolio. So we're seeing that. We're very active in that space. We're working very well with our investment bankers, actually, very active in that space. Look, this is likely to continue, and not just data center financing, but also anything that has to do with, I would say, powering the data center, energy transition. And so we're very active in that space as well. You're right. I mean, the numbers are large, and so it will require sound underwriting, sound structuring, having the right collateral, the right counterparts, contractual agreements as well, so that you have attractive offtake agreements. And then I think, a lot of the insurance companies or pension funds or even sovereign wealth funds today are really kind of pivoting towards kind of private investment grade or structured investment grades. And I think that's likely to continue for a few more years, decades maybe.
And when it comes to financing some of these specific deals, I guess what can private credit offer some of these infrastructure companies that maybe, tapping the public markets can't? We saw Oracle tap that large bond deal. I guess, what's the pitch from private credit on why they should look into private financing?
Customized structure, bespoke financing, no need for a rating. You can really sit down with the management teams and provide a very kind of bespoke structure that otherwise the market would not be able to provide, because the market and the banks underwriting for the market are going to have to go for fairly standard financing. And so that's the power of private credit, and that's why we remain very constructive about the outlook. Yeah. There's a place for private credit.
But do you think that, to Val's point, there's an awful lot of money going to be required as we switch from cash flow financing to debt financing? There is this gold rush mentality that is there at the moment, and we started this conversation talking about due diligence. Is there just this? What vibe do you pick up from the market about this kind of headlong rush into financing data centers? When you listen to people in the technology sector, they say some of this stuff isn't going to work. A lot of this stuff isn't going to work. How good can the due diligence be at this point?
Well, I go back to the basics, right? I mean, it's getting access to information. It's about not having the FOMO, a little bit what you're describing here. Yeah. It's about, and it helps when you've actually been through cycles, right? And I think that's what's going to make the difference. I go back also to the point I made earlier, which is you're going to start seeing dispersion in performance. We're already starting to see it. And I think investors, whether it's the insurance companies, pension funds, even wealth management or retail, will have to certainly be more discerning about the managers that they want to back.
James, I guess one of the perhaps issues with private credit is that maybe that private credit and private markets in general have only really ballooned because essentially regulation to do public financing has gotten too onerous. Are you seeing anything out of the Trump administration that could really have a catalyst for your business when it comes to this deregulation push across the banking sector?
No, I would say private credit has ballooned or increased because it offers a very unique proposition to the borrowers. That's the reason. We were doing private credit back in the late 90s, right? And the banks were still very active, holding on their balance sheets. It has a reason to exist. It provides, the benefits that I mentioned earlier. And it provides those benefits, by the way, at times when even the market is shut down, right? And so if you're now in the shoes of a management team and you can know your lender is going to be here almost in any market, and is long-term and patient capital. I mean, these are the reasons why private credit exists. And so whether it's in the US, in Europe, or increasingly in Asia, by the way, we're seeing a lot of interest for the sector.
If the Fed cuts rates aggressively, which is a possibility next year, would that be a headwind?
Look, we've operated in markets where we've had zero interest rates, right, and have delivered very strong returns during that decade. So is it a headwind? Yeah, it is a headwind to the extent that most of what we do is floating rates exposed. Yep. But I would say we've been able, in a decade where we had even negative rates in Europe, we've been able to deliver really attractive risk-adjusted returns.
Just to kind of wrap this all up, I just want to kind of get, we don't have to get to talk to kind of people who have got first-hand experience as to what is happening. The message you're delivering as the market's got really big, managers that are kind of tourists, can we call them tourists, have come into this space and they've not done the kind of the work that they need to, and as a result of which, you need to be really careful on who your manager is at the moment, because the dispersions are going to go up. Can I just focus on that last point for a moment? How much do you think dispersion is going to? At the moment, the tide has gone up. Everybody's gained. As the tide starts to maybe kind of we get to the top of the tide. How big is the dispersion going to get? How big is the difference between what you're doing and what another manager could be doing at this point?
I think the dispersion is likely to be very significant. And what's likely to happen, by the way, is that a lot of these platforms are unlikely to raise the next funds, right? I mean, when they go to LPs, to institutional LPs, it's going to be that more challenging to explain some of the mistakes made in previous portfolios, in past portfolios.
It's great to see you. Thanks for stopping
Thank you very much.
Come back anytime. Thanks. Global Co-Head of Private Credit at Goldman Sachs Asset Management, James Reynolds. Coming up, we're going to head to Riga. Oliver Crook is getting ready to have a conversation with the ECB Governing Council member and Bank of Latvia Governor Martins Kazaks. We will bring you that conversation. And today, you can also watch the latest Leaders with Lakar, her conversation with Bridgewater Associates founder Ray Dalio. Got some interesting things to say about what is happening in the States. It's out on the Bloomberg website. It's on the terminal. You can catch it on Bloomberg TV, 5:30 p.m. in the UK. I just want to leave you with a little preview of what Ray has been discussing and talking about his controversial management style.
What I call it is tough love. It's tough love. Yeah. Let's say you have a player on a team, okay, and he's got an issue. Okay, are you going to let it go, or are you going to deal with it? If you're going to have an effective team, you have to deal with it, right? So I can't not deal with that.
But this is the concern with leadership, right? You also want that person to be confident, because as soon as you lose that confidence, then you no longer have a player that's any good.
Yes, but you see, the confidence I learned to get was by knowing my weaknesses, to gain the open-mindedness. Pain. Yeah. We don't like pain. But what happens is pain is a messenger. It tells you about how the world works, and it tells you how you should deal with the world to be effective.
How is that? I mean, how did you think about pay? Was it
I think about pay as sharing the mission. And if we're successful, then we should share that. If we're not successful, we'll go through the pain. Can we go through the pain together in order to get to be successful? If it's too transactional, you're going to have a problem, okay? I want people who will go through the ups and downs with me because we have a greater mission.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Tehran, and this is Bloomberg.
The latest account of the European Central Bank September meeting says officials considered another rate cut in September, but ultimately decided against it amid upside inflation risks. Oliver Crook is standing by with one of those ECB decision makers. Ollie?
That's absolutely right. Thanks so much, Valerie. We're here in Riga in the sidelines of the LATO conference here dealing with security, but also sort of financial prosperity within Europe. And I'm very pleased to be joined by the governor of the Bank of Latvia, Martiņš Kazaks. Thank you so much for your time today. Greatly appreciated.
Thanks for having me.
I'd like to begin, if we can, just on your view of where sort of rates are heading here in Europe. It seems that things are finally balanced. That seems to be the consensus view over at the ECB. Is there still an easing bias at the ECB, or could either the next rate move, even if it's in the distance, go in either direction?
In my view, we are about neutral, and I don't think there is any kind of bias at the moment necessary. We have delivered the target. We are at around 2%. Of course, there are going to be short-run deviations from 2%. There's going to be some volatility around it. The important thing is how large and persistent are those deviations and what is the medium-term outlook. From the data that I have today, and from the inflation outlook that I have today, I think 2% policy rate is very appropriate. Of course, uncertainty is very high, and there are risks on both sides. Risks on the downside perhaps are more in the category known unknowns. For instance, the strength of the currency, the size of the Chinese dumping and push on the prices in terms of kind of lower inflation, also the ETS2 in 27. But there are also quite a lot of unknown unknowns, and those are mainly geopolitical, and those, for instance, negative supply side shocks would push inflation up. So I think we are in a relatively neutral place. 2% is all right.
And have you seen any sort of quantifiable data from the Chinese potentially disinflationary pressure of dumping recently?
We see some trade flows improving, but increasing, and those pressures are gradually increasing. But of course, we still don't know exactly what the size of and scope of that is going to be, what's going to be the deflationary pressure from that. And of course, we don't know how European politicians would react against it.
And the French government seems to be collapsing every couple of weeks. What kind of risk does that pose?
Of course, we've seen some movements in terms of the spreads, but I don't see at the moment anything extraordinary. We've seen similar levels in the past. We have a wide set of instruments, but there is no need to, in my view at the moment, to discuss such issues. We are not in those kind of straits. But one of the issues that, of course, is the direct implication from political instability is the ability to perform and introduce structural reforms. Europe is in bad need of stronger growth and structural improvements. Single market, if we talk about finances, single market financial services, capital markets union or savings and investment union, whatever we call it, let's just take the, I would even call the Draghi's manual, okay, and implement it. It's going to be better.
And on some of those reforms, your colleague over at the Bundesbank has proposed a common European budget for defense, suggesting that it could be financed by joint debt. Where do you stand on that?
By all means, yes. It would also be more efficient than doing it individually. The procurements, the fragmentation nationally makes the process longer and more expensive. I think this is a common European necessity, and it would be a very cornerstone of European security. Yes, I would support it.
And another structural reform, some reporting out overnight that we're seeing that the Germans seem to have lifted their resistance to giving up some of their financial regulation within Germany and potentially willing to give that up to a broader European project. Do you think that the Capital Markets Union could finally be in sight, and what would the impact of that be?
We badly need that. The issue of Europe is that Europe is aging, but Europe is still rich. But we are playing a defensive strategy. And if you keep playing defensive strategy at the time when technologies are changing rapidly, at the time when geopolitics are shifting, That, in my view, is a wrong strategy. We need to play offense. And that means stronger growth, better use of our financial means, and that means opening European market for single market benefits, which is still, in my view, lots of low-hanging fruit.
And one of the ways that policymakers are now discussing about playing a little bit more offense is talking about touching or monetizing in some way the frozen Russian assets that currently sit in Belgium. I'd like to understand from you what your perspective is on the possibility of monetizing those without, taking them. Is there a possible path to that, and will that endanger the euro?
I think there is a path to that, and in my view, there is a necessity, because at the end of the day, the war in Ukraine is also with direct impact onto us. And it needs to be financed. And bluntly speaking, there are two choices. One is to tax our own societies. The other is to take the aggressors' money. And I think the second option, of course, is a better option. So I think there needs to be ways found how to employ those assets for defense of Ukraine much quicker and to a larger extent. Of course, law is law, but there's private property, of course, is of importance, but there is also private property in Ukraine that gets destroyed. There are human lives that get destroyed. So Ukraine is our ally, and we should help it, and we should find the ways that are most efficient and less costly.
And a final question about you, sir. Commerzbank has pronounced that you are one of the 4 oracles of the ECB, saying that you stand out throughout the entire observation period. Your assessment of the economy and inflation are very close to what the Council has, and as a result, you often draw the right conclusion with regards to interest rate decisions. Should there be a place for an oracle on the ECB's executive board where positions are opening up very soon?
Well, that was very pleasant evaluation of the work I've done so far, and I'm going to do the best I can going forward as well.
Can we say that your hat is in the ring for the executive board?
It's going to be for politicians to decide.
Well, Martin Kazaks, thank you so much for your time. Greatly appreciated. I'm speaking here at the sidelines of the Riga conference here in Riga, Latvia.
Oliver, thank you for that interview. Interesting that he did weigh in on the French political crisis, saying he's not seeing anything extraordinary in the French situation at the moment, but maybe that could heat up over the weekend. Remember, we do have Macron's self-imposed deadline to pick a new prime minister later this evening, but some other things on your agenda today. At 10 a.m. UK time, we hear from the Nobel Peace Prize who their winner will be. That will be announced at 10 a.m. At 3 p.m., we have the UMich consumer sentiment. Remember, we have a lack of government data, so we are really hinging our hat on these other private surveys for a guide on the U.S. economy. And later tonight at 7 p.m., the federal budget balance for the month of September.
So this weekend, let's kind of think about what we're going to be doing this weekend. I think we're going to read a lot about France and French politics and whether or not actually the next prime minister has any chance. Japanese politics looks like it's suddenly inserted itself in quite a big way into the agenda as well. I think you're going to read lots of articles this weekend about the bubble, no bubble, AI data center story. And then there's the Peace Prize.
And there was some Trump tweets about him being upset about it.
Well, yeah, the odds at the moment are not in his favor.
I think Polymarket had it at 8%.
Yeah, I think it may have crept up slightly, but yeah, 8% yesterday was the number. So that comes out fairly shortly. I think we're all going to be agog with anticipation watching that one. Next weekend for sport is amazing. So basically, this means that this weekend you're going to have a lot of time to read things, which is good because there's a lot of things to read. So the next weekend is fantastic for sport. This weekend, I think you got Denver versus New York. I think that's in London.
Yeah, NFL games in London, week 2 of 3.
I think you're going to be. I'm sure you're tuning in on that one. Massive football fan. Horse of the Year show, is that high on your list of kind of? I think it's in the Midlands. It's up near Warwickshire, near Solihull or something. But anyway, Horse of the Year show.
And then in Paris, we have a 20-kilometer race, as well as the Prime Minister announcement. So maybe some running for the gates in political
Feels
ways.
Like a marathon. We've already run
athletics.
a marathon already, it seems. Maybe. And the London Film Festival is on as well. Anyway, as I say, politics is going to be fantastic this weekend to watch out for. There's great reading to be had. Bloomberg Weekend newsletter, definitely worth catching up on. Anyway, have a great weekend, folks. We'll see you Monday. Hope you enjoyed the show. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Celebrations as Israel and Hamas approve a peace deal, paving the way for all remaining hostages to be released. President Trump says he will travel to Israel to welcome them home. Bloomberg learns that Microsoft's data center shortage will last well into next year, a lot longer than the company had previously forecast. Plus, Japan's Prime Minister in waiting suffers a major setback as her party's coalition collapses. Let's get to the markets then, and certainly we keep an eye on the Japanese yen. A bit of strength coming through for the currency there on the back of the evolving story politically out of Japan. We'll get more details through this show, of course. Some surprises out of Tokyo. 152, close to 153 on the currency then over in Japan. Up 0.1% versus the US dollar. Talking of the dollar, set for its best week. A little bit softer in the session today, but set for its best week since November of 2024. S&P futures then pointed to gains of about 0.1%. The 10-year, you're looking at 4.11. Bit of a bid for treasuries right now. Yields down a little over 2 basis points on the benchmark. And Brent, $64 a barrel, below 65, down 0.5% on the prospects of peace in the Middle East. Oil under pressure. Let's check in on the European map, where across the board and the benchmark, you're essentially flat after losses of around 0.3% by the close yesterday. Here in the UK, the FTSE 100 is down 0.1%. The CAC current over in France is gaining 0.4, despite, of course, the continued uncertainty there. Maybe we get a new Prime Minister by the end of today. The DAX in Germany up 0.2%, and the IBEX in Spain is performing well, up 0.8%. The FTSE Mid in Italy up 0.4 as well. On your sector-by-sector basis, interestingly, a bit of a reversal of the trends that we've seen in the last couple of days. You actually have basic resources under pressure and autos near the top of the list in terms of the sectors that are gaining. We'll get more analysis and the guest insights, the expertise coming up. The show starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, happy Friday. Welcome to The Pulse. I'm Tom McKenzie in London. So, President Trump says he will travel to Israel after the Israeli government approved a deal for Hamas to release its remaining hostages in Gaza in exchange for more than 2,000 prisoners and detainees. The Israeli Prime Minister Benjamin Netanyahu called the developments momentous.
We're at a momentous development in the last 2 years. We fought during these 2 years to achieve our war aims. And the central one of these war aims is to return the hostages, all of the hostages, the living and the dead. And we're about to achieve that goal.
Well, covering all of this for us, of course, is Bloomberg's Jumana Pasecci joining us now from Dubai. Jumana, walk us through the latest then, how we got to this ceasefire, when it goes into effect, and what to watch for then in the hours ahead.
Yeah, well, the ceasefire has technically gone into effect now. They were waiting for the cabinet to agree on it. The package was agreed to throughout the course of the night. And quite interestingly, as you were just showing there, on both sides of the Israeli Prime Minister, you had Jared Kushner and you had Steve Witkoff. They actually attended the cabinet vote. They were watching to see if there were going to be any holdouts. And of course, it did end up passing. But I think it's demonstrative of the fact that the U.S. really have invested a lot in getting phase one of this peace deal passed. So that has happened now, which means implementation will be due in the next couple of days. And what that means is over the next 24 hours, the Israeli forces, IDF, will be retreating to a pre-agreed yellow line. That still means that they'll maintain control of about 50% of the Gaza Strip. In the subsequent 72 hours after that, Hamas would then have to release the remaining hostages, and that is 20 thought to still be alive, 28 deceased. Probably a bit more difficult to retrieve the bodies of those who did die in captivity. But then that would be in exchange for up to 2,000 Palestinian prisoners and detainees. So all of that is going to happen over the next 72 hours. President Trump has said that he's going to be in the region, will be there around the time that the hostages are released. He's saying that that could happen around Monday. We're hearing that he may be flying into Israel and possibly making a trip to Egypt too. Still unclear what the president's plans are at this point, but we do know that he plans to come to the region and has also spoken about addressing the Knesset. So it is a very pivotal moment, but a reminder, Tom, that this is still phase one, and there are still many questions left unanswered, including the questions surrounding Hamas disarmament, what that means exactly, the enforcement mechanism, future governance of Gaza, and where the funds for the reconstruction of Gaza later down the track are going to come from.
Okay, so significant questions that still remain as we look at phase one being implemented. Part of phase one, Jumana, of course, is also addressing the humanitarian crisis in Gaza, and that involves more aid into the Strip. Where are we on that front? What is that likely to look like?
Absolutely, very important point, Tom, because as you know, the Strip and the population in the Strip have been suffering from malnutrition. A big percentage of the population suffering from famine, and this is something that has been flagged by the World Health Organization and really raised alarm bells around the world, the international community. The United Nations say that they are ready, they are prepared to immediately support several humanitarian efforts in Gaza. Tom Fletcher, the emergency relief coordinator for the UN, has said that they've mobilized up to 170,000 metric tons of food, of medicine, and other supplies that could be readily provided into the Strip. They've also talked about providing shelter and even learning centers for children that have not had access to school over the past couple of years. Essentially, the war's been going on for 2 years now. Alongside that, and this was quite interesting, the White House press secretary, Caroline Leavitt, said that they're also, the U.S. are mobilizing 200 troops from their CENTCOM command to help oversee the implementation of the ceasefire, monitor for any violations. And the plan is for some security forces out of the Arab countries, from Egypt and Qatar, possibly Turkey as well, to participate in that security forces monitoring, just to keep tabs on what is actually happening on the ground. But still, at very, very early stages, as I said, and I think at this point in time, key is the release of the hostages in exchange for the prisoners, the facilitation of those humanitarian aids, and then later on some of those bigger consequential questions will be looked to be answered.
Jumana, thank you very much indeed with that update. Bloomberg Horizons Middle East and Africa anchor Jumana Pasecci. Thank you. Meanwhile, switching focus now to what's been a factor, of course, for these markets, but also somewhat idiosyncratic to one big name, Microsoft. Bloomberg learning that the company's data center crunch will continue for longer than expected, as many of its US data regions are experiencing shortages of physical space or servers, underscoring the software giant's struggles to keep up with cloud demand. It's a similar picture across Google and Amazon. Let's bring in then Bloomberg's AI reporter, Sarita Rai, who has the details on this. Sarita, thank you for your time. Talk us through what this means for Microsoft, but also, importantly, for the broader AI industry.
So AI-driven cloud computing has been an undisputed area of growth for a lot of these players like Microsoft, Google, and Amazon in the last several quarters. For Microsoft, it's even more important, and it's a priority area because Microsoft Azure Cloud Division has contributed something like $75 billion of revenue in the fiscal 2025 and helped Microsoft outpace all of its competitors, Amazon, Google, Meta. So it's really an important area of growth, Tom. But quite besides this, in the broader picture, there's been a huge investment surge into AI-driven AI infrastructure in the U.S. Some $375 billion worth of investment pledged in 2025 alone. Infrastructure is not being built fast enough. Old conventional AI data centers are being modified, but that is not happening fast enough to meet the demand.
And this all happening at a time, of course, Sarita, when the markets are starting to second-guess some of these investments, starting to second-guess the run-up and the valuations when it comes to tech. Talk us through how markets have been reassessing this trade.
Well, I think AI is certainly giving an extra layer of uncertainty to investors these days. The latest news being that China is blockading completely the NVIDIA chip import into the country. The latest reports this week indicating that on the back of China banning NVIDIA chips, its major companies from using NVIDIA chips, China's customs officials are tracking and impounding any imports that are coming into the country. Now, NVIDIA is one of the key players in the AI supply chain. All of this, certainly adding much more, uncertainty to investors these days.
Bloomberg's AI reporter, Sarita Rai, thank you very much indeed on the AI uncertainty and challenges for Microsoft, in fact, in building out its data centers to provide for the demand that it still sees from its customers. Sarita, thank you. Meanwhile, to FX and the dollar in particular, the greenback at a two-month high, despite the continuing US shutdown, of course. That government shutdown continues. Traders in Asia and Europe say hedge funds are adding options bets that the rebound versus most major peers will extend into year end. With me now is Sam Linton-Brown, Head of Global Macro Strategy at BNP Paribas Markets 360. And Sam, we will get your views, of course, on what's happening with AI and tech, and we'll go to France as well. But we'll start with the dollar, given the recent strength that we've seen. Is it your assessment that we're seeing a turnaround for the greenback?
We'd assessed that we're seeing a positioning squeeze. The market had got quite short dollars, and we think the price action that we're seeing at the moment is predominantly a positioning squeeze. What's happened here, and as you mentioned, we may talk about the shutdown shortly.
Yeah.
There's no US data flow, at least not a super sort of tier one data release data flow there. So the dollar's being driven by factors outside of the US. We had a real political surprise over the weekend in Japan. We've had a resurgence of some uncertainty, although it's dissipated somewhat in France. And each of those factors has been broadly dollar supported. So it's really driven this positioning squeeze.
Okay, so we actually have to think about France and we have to think about Japan when we're thinking about the relative strength that we've seen for the dollar. And to be clear, your view is that there's further dollar weakness to come.
Euro dollar at 120 has been our target since Q1, and that's still our target. The key point here is FX is typically driven in the medium term by front-end interest rate differentials. The Fed's going to be cutting rates. The ECB, we think, is done cutting rates. We think it's going to begin actually hiking rates towards the end of next year. And so front-end interest rate differentials over the medium term are going to be supportive of euro dollar going higher. Not to the same extent as we saw in H1.
Yeah.
Euro dollar had a massive rally earlier this year, and we think the gains from here will be more moderate.
Okay, and look, you touched on the government shutdown, as did we. Does the government shutdown make it harder or let's put it this way, more likely or less likely that the Fed cuts in October? Given the lack of data?
More likely. I think the key point here is the Fed has started cutting rates because it's nervous about a downside risk materializing in the labor market. And therefore, it's an insurance cut. If you're flying blind, you need to keep buying insurance. So if we don't have a clear picture on the data, the Fed's going to cut rates in October.
The Bank of England putting out a pretty stark assessment in terms of the valuation that we're seeing across AI and tech and the risks of a correction, particularly in that space and what that would mean for the equity markets. Are you worried about, are there bubble risks in AI that you're focused in on? Do you align with that cautionary tone from the BOE? How concerned are you?
Our call on US stocks is one where sort of the macro picture is we have a solid US economy and we have a central bank that's cutting rates, perhaps even with a somewhat more of a dovish reaction function than it should have, simply based on the economic data. So solid economy, dovish central banks. That supports risk on. So from a macro picture, that's bullish for stocks. You ask about valuation, and I think a key input here that I'd share is our positioning metrics. So at BNP Paribas, we run many proprietary quantitative positioning models, and what it shows for stocks is, of course, the market's quite long, but it's flashing amber, not flashing red. And when you have such a strong secular momentum trend that's at play in the US, we'd say you only really want to consider being super cautious once those indicators flash red.
Okay, so you're not there yet in terms of being super cautious on that trade. We've touched on France, so let's get your view on that. We may have a new Prime Minister announced as soon as the end of today. We'll see what happens. Various different scenarios still that could play out in France when it comes to the politics. On the risk, on the political risk, what is priced in at this point? And are you seeing any opportunities to add exposure to French assets?
I think the key point here is that it seems there's a consensus to get a budget approved this year. That requires constitutionally one being submitted Monday next week. And that means the market can price out what it had been beginning to price in, the political risk that was embedded, which was this scenario in which the budget for this year got rolled to next year, i.e. no fiscal consolidation. That seems less likely now. So can there be scope for a rally in French bonds? Yes. There's a lot of uncertainty, though. We still don't know the composition of the budget. We don't know if it will actually get approved. We don't know where it leaves the deficit for 2026. So there's scope for a rally, perhaps to 75 basis points on a spread to Bund, but that would really be the most bullish picture one can paint for this year.
Is that rally contingent on reforms around the pension system in France being kept in place? Or if those are delayed, can you still see that rally precisely because it would enable a budget to be passed this year instead of next year?
The pension reform's key. I think the type of rally I'm describing of 75 bips at 80 bunds is really the most positive scenario. That's one in which the deficit for next year would come under 5% and the pension reform would remain as is.
Okay, so you need to see your deficit below 5%. Let's see if we get any more traction on that story in the next 24 hours or so. Before we let you go, you touched on the fact that the ECB, in your view, the ECB could be hiking in 2026. Is that a German fiscal stimulus story? What underpins that view of a more hawkish tilt from the ECB next year?
We're positive on European growth. We have a forecast for 2026 of 1.4%. For Europe, that's really strong. Trend growth is probably beneath 1%. And as you point out, the real change here versus 2025 is indeed Germany. German growth this year is going to be relatively soft. Next year, we think it will be well above 1%. Combined with Italy and Spain that are likely to continue to perform quite well, that pushes the Euro-wide aggregate, we think, to 1.4%. So you've got above-trend growth, which over time is going to create some inflationary pressure, which in turn we think is consistent with an ECB that's done cutting, and its next move is going to be a hike Q4 of next year.
Okay, there we go. We'll come back to you on that, and hopefully before that point as well, to see if that plays out. Sam, thank you very much indeed. Sam Linton-Brown, of course, BNP Paribas macro strategy at BNP Paribas Markets 360, head of global macro strategy, with views there on the ECB, views on AI, and of course a touch in terms of where the Fed goes, given the lack of data that we're seeing out of the US right now, with the shutdown continuing. Coming up, the US-China trade war, meanwhile, has thrust rare earths into the limelight. We're going to be discussing these critical minerals with Techmec's Chief Strategic Development Officer, Helena Matza. That is next. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. So rare earths are, of course, among the most critical raw materials on the planet, yet few people had even heard of them, really, until the trade war between the US and China thrust them into the limelight. This week, China unveiling new curbs on its exports of rare earths. For a view on this, insights into this space with deep experiences, Helena Matza, Chief Strategic Development Officer at TechMet and Senior Associate at the Center for Strategic and International Studies, someone who, of course, spent 14 years working for the US government in the State Department and the White House, and really central in terms of the Lobito corridor, in terms of the architect of that, which was linking, of course, Western markets to Africa's copper and cobalt production as well. So really, really fantastic to get you on with all of that experience, Helena. We want to get into what you and TechMet are doing, but before we get there, can you just frame for us where things stand in terms of the supply chain story when it comes to crucial inputs into our new economy, whether it's cobalt, lithium, rare earths, the US and its partners versus China? Where is that?
Yeah, and Tom, thank you so much for having me today. So, look, this has been a really interesting story, but it's been unfolding for almost 20 years, right? And now the U.S. and the West has been awake to it for more like 7, with this administration in the United States really taking a turbocharged view, right? But if we look at the challenge with China, I look at it really from a few different perspectives. One is the current dominance, right? We see not only from China on the production side, but on the processing side, right? Whether that's rare earths, which is really a hot news story right now. Something like 80% of rare earth magnets produced exclusively in China, but it goes across all of these critical supply chains, whether that's graphite anodes, which they have about 80% dominance, or cobalt itself, which 70% dominance. When you have that type of overconcentration on the supply chain, it creates complications and supply chain chokes in just natural situations. And now what we're seeing over the last several years is China willing to use that as a tool of a foreign policy. Just a year and a half ago, first signals with the germanium and gallium export license requirements. And then just yesterday, this sweeping announcement on rare earth export restrictions that will take place in December 1, right? And so we're all, over the last couple of days, trying to unpack what that looks like.
So, to your point, people like you, at least, have seen this coming for 2 decades. So what is the time for, on current trajectories, when, if at all, can the US and its allies catch up?
So I think the question is, what is catching up?
Okay.
And I think how the United States has traditionally looked at this, in the West in general, is not that China's out of this market, but that there's enough resiliency in the supply chain, and that we're able to be in a price environment where that investment makes sense in Western markets. And so we're seeing a lot of action right now to try to make that the case, right? Happy to talk a little bit about some of the things that we're seeing in the United States right now. One of them I think is really interesting. You know, the administration came in with a series of initial executive orders that were trying to do things to bring more domestic mining and processing back to the U.S. We saw a lot of permitting things move forward. We saw a lot of different opportunities for new investment to come into the energy space, all of that being accelerated Then, of course, legislation with the big, beautiful bill that brought $7 billion to the Department of War, both in the strategic stockpile, but also in the industrial defense-based funds. So there's a lot happening. And then, of course...
these are the right steps? You welcome these measures?
I think so. Look, my experience, starting on this issue, even though I started in the Obama administration, I worked this issue all through Trump 1, through the Biden administration, and the beginning of the second Trump administration. And I think that you have to take a multifaceted approach. You need to be encouraging different investment at home. You need to find ways to incentivize, and it'll be interesting to see how these equity investments work. And it's also part of our story at TechMed, as we joked before it was cool. We received, the first equity investment from the U.S. Development Finance Corporation to help expand our portfolio outside of the U.S.
Do you expect the measures that the Trump administration has put in place to accelerate private capital into this space?
Absolutely. That's the objective, right? It's not the U.S. government's job, and I don't think this administration feels that it is, to totally subsidize an industry. But you need to put together the right public-private partnerships that encourage more private capital to move into these markets.
What is TechMet's priorities there? So to be clear to our viewers, TechMet, private critical minerals investment company. Are you looking to add to your portfolio in 2026 or double down on investments that you already have? What are the priorities for 2026?
Yeah, so look, a little bit of both, right? So, TechMet is a U.S. government-backed, Western-aligned critical mineral investment firm. Half of our net present value is in the United States, and we're working to bring those projects online. That's going to be a huge focus of 2026, whether it's the lithium project that we have in California that's using ex-China direct lithium extraction technology, or the work that we're doing in Zarion and Dayton, Ohio, which is trying to bring manufacturing for high-performing cathodes to the United States and use commercialize new novel technologies to do processing of many critical minerals at a much lower cost. So that will be a big part of our agenda. But we also are looking ahead, and part of our relationship, given the relationship we have, like I said, with the Development Finance Corporation, has helped us expand into other markets faster. So we're looking at new opportunities, whether it's in Africa. We're participating right now on the PSA tender process for Dobra Lithium in Ukraine. So, we're very excited about the year ahead.
Is other private capital becoming aware? Because some of these jurisdictions are they're clearly risky areas. Is the concern around risk being offset by the overriding need to ensure that we have greater supply chain control over some of these crucial inputs?
Yeah, I wouldn't say it's overwritten, but I think what we're seeing is that these initial equity investments that the U.S. government's making is boosting markets, right? We've seen rare earth prices go up. We've seen some stabilization in the lithium market. That is going to continue to crowd in more private finance. Okay, and very, very briefly on rare earths, do we rebalance versus China in the next decade? Is that even realistic? Look, if this continued trajectory happens in the trade negotiations between the U.S. and China, we're going to have to find a way. And I think there's a lot of innovation happening in the United States to make that a reality. Helena, fantastic to get your insights. Thank you very much indeed. Helena Madza, Chief Strategic Development Officer at TechMet. Coming up, political chaos on Japan as the ruling coalition collapses, throwing the LDP's grip on power under new leader Sanae Takaichi into jeopardy. We have all the details on that story next. This is Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Good morning, welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. Celebrations as Israel and Hamas approve a peace deal, paving the way for all remaining hostages to be released. President Trump says he will travel to Israel to welcome them home. Bloomberg learns that Microsoft's data center shortage will last well into next year. That's a lot longer than the company had previously forecast. Plus, Japan's prime minister in waiting suffers a major setback as her coalition collapses. Let's get more on that developing story and bring in Bloomberg's Japan economy and government reporter, Alistair Gale. Alistair, thank you for staying up late for us. What is the latest? The news flow out of Japan coming thick and fast. There is uncertainty now around what happens with this government.
That's right, Tom. This is still a developing story. We've had the Komeito Party, which is the junior party in Japan's governing coalition, which has really run the country for most of the last 26 years, saying it no longer wants to be part of that coalition. They're unhappy with the stance of Sanai Takeichi, who's the new president of the bigger party, the Liberal Democratic Party. They can't agree on policy issues, and they've said that it's time for them to leave the coalition. Now, she's still holding out hope that they can come back. She said that she hopes they'll have talks again next week and try and resolve this issue. And they really need the Komeito to be in the coalition. She's not yet the prime minister. We're expecting a vote later this month, and she's got a good chance. But without Komeito, it becomes a lot harder. And also for her policies that she wants to enact, it will become hard without Komeito. So this is a very big deal.
And we're seeing live pictures right now of the outgoing Prime Minister in Japan, of course, Mr. Ishiba, speaking in Tokyo. We'll keep across those lines for you, of course, when we get more details. Alistair, what can we expect? How does this unfold from here? You talked about that 1 month timeline in terms of how to think about Sanai Takeichi and her potential role. What are you and the team watching for in the hours and days ahead?
Well, what we're watching for is firstly whether they can resume talks with Komeito and find some kind of resolution to this, but also she's now going to need to talk to the other parties, the smaller parties, and try and reach some kind of arrangement perhaps with them for their support when it comes to the Prime Minister vote, which will be later this month, and then whether they are willing to work with her on policy implementation. So her political skills are really going to be tested now. She's got to go around all the parties and try and get the support that she can to form a government list to become prime minister. So that's what we're really watching for. We're expecting a vote on the prime minister to decide whether it's her or not sometime around October 20th, 21st. But before then, there's lots of horse trading that will go on.
Okay, Bloomberg's Japan economy and government reporter Alistair Gale, who'll be across all of that horse trading for us, no doubt, as we continue, of course, to watch the movements with a slightly stronger yen on the back of the developments out of Tokyo. Alistair, thank you for that update. So from the politics and the uncertainty in Tokyo to the French political uncertainty, where the French president expects to appoint another new prime minister this evening. This after, of course, the resignation of Sébastien Lecornu. Bloomberg understands some business leaders attended a dinner last night with the head of the Socialist Party, which is seen as a kingmaker. For analysis, let's bring in Marta Lorimer, a politics lecturer at the University of Cardiff, with experience, of course, on French politics. Marta, thank you for joining us on this. Do we get a socialist prime minister in the next 24 hours? Is that the solution for Macron to get to a place where France can finally pass a budget?
We have no idea at the moment. This is the real problem. We know that that is one of the options on the table. So essentially, there are two broad options here. One is to get another center-right prime minister that is going to be a continuation of what we have seen so far, or finally Macron tries something new and decides to appoint a socialist prime minister, which is what the left has been calling for since in 2024 they were actually the biggest coalition in the French parliament. What isn't quite clear is how amenable is his own party and the center-right Republicans to not vote against such a prime minister. The right has up until now always said that they would not accept a left-wing prime minister. Part of the reason for that was because the left was still a coalition including France Unbowed, so Jean-Luc Mélenchon's party. Things have changed. The left is now much more divided. Mélenchon would likely not be included in a government, and perhaps that is the kind of concession that we could see the right being able to live with.
Okay, so that is potentially a workable solution with all of those caveats. If we get a new prime minister, and we'll see what political colours they have, what is the time frame for getting a budget passed? Our previous markets guest was saying that there is now a higher chance that you actually get a budget passed this year versus next year. He sees that as market positive, potentially. Again, with caveats, we have to get there's a budget decision on Monday.
Yes, precisely. So in order to get the budget approved by the end of the year, the budget proposal needs to be submitted on Monday, on the 13th of October. And provided that that is done, there is enough time for the parliament to negotiate the budget, to debate, and then to vote in time for France to have a budget by the beginning of next year. And this does seem to be the most likely scenario. The reason for that is that Lecornu's mission was essentially to see if there was enough of a majority in parliament to agree to not have an early election and have a budget instead. So this is why we're thinking that this is probably what is going to happen, that he's managed to find enough agreement that it's better to have a budget than to not have a budget, and it's better to have a budget than to actually have another election.
So what Macron reforms are most at risk then, right now?
The pension reform. The pension reform is probably the one that is most at risk, because it would be something that the left can really, really sell to their electorate. And they have said that this is, as far as they're concerned, that is the one reform that they want to see either stopped completely, paused, changed. So I think that is the one where we might actually see some movement. We've also seen the right move a little bit on this. So the Republicans, Bruno Retailleau, the Minister of the Interior, still says he will not support a government that wants to backtrack on the pension reform, but he's not the only person in his party. And within the party, there are people who are willing to make some concessions there if it means getting a budget passed in time.
What about taxes on the rich?
Taxes on the rich is another area where we might see some movement, particularly because this is, again, something that the left has really been pushing for. But I think that might be a little bit more divisive, particularly as far as the right is concerned.
Where does all of this leave Macron's legacy? He has until 2027, his term. The reforms around pensions were seen as key to his legacy. On many aspects, his critics will claim that he has mishandled the domestic political scene, certainly in the last year. What happens to the Macron legacy?
That's really the big question, I think, on his mind. I think Macron can still look at his years in power as perhaps something of a success story internationally. He was certainly able to make sure that France's voice was heard, particularly in important areas such as the war in Ukraine. But domestically, I think his second term has been, I would say, an unmitigated disaster.
How much of a win is this for the National Rally and the party of Marine Le Pen?
Well, the National Rally is interesting right now because, of course, Marine Le Pen is just continues to say, because Marine Le Pen right now can smell the blood. She knows that a new election is going to happen. This is probably going to happen before a presidential election. And she wants to place herself as the main opponent to the political system. But she's also in quite a difficult position because if there is another election and it happens early next year, for example, she might not be able to run. So she could be losing her current parliamentary seat because, of course, she cannot run for the next 5 years. And it's really unclear then how the National Rally stays relevant. I think they're certainly going to do well, but one of the reasons the National Rally is going to do well is because they're the only known quantity in many ways. But they still face a lot of rejection. I would like to remember that in 2024, a lot of people turned up to vote just to vote against the National Rally.
Okay, Marta, thank you very much indeed for that analysis, of course, of what is unfolding in France. We may get a new Prime Minister possibly by the end of today. Marta Lorimer, politics lecturer at the University of Cardiff. Thank you. Now to the Latvian Prime Minister, Vika Salina, who says that she welcomes the European Union's plan to set up a so-called drone wall along the eastern border of the bloc, but called the idea very raw. The EU is trying to create a system to stop incursion of unpiloted Russian aircrafts. This after a series of airspace violations and drone sightings that recently disrupted airport operations in countries including Denmark and Germany.
I think the idea is very just raw, if I may say so, because no one really knows all the details. We really need to cooperate together with other European countries because now the drone threats are reaching not just Baltic states, but Copenhagen, other countries of Europe.
All right, switching focus now to Klarna, where shares are higher in pre-market trading after it announced a partnership with Google Cloud to use AI to develop products and targeted marketing campaigns, including enhancing images. Klarna said early pilots showed AI had led to a 50% increase in orders. It will also use Google Cloud AI to prevent fraud and money laundering. And sticking with Klarna, the CEO has told me he thinks AI is about to have a profound impact on jobs that companies aren't ready to deal with. Sebastian Simakowski also told me that AI will reshape the banking sector, ultimately driving down what he described as excess profits. Here's some of my exclusive conversation with the CEO and founder of Klarna.
I think it comes back to the vision that we had at Klarna 10 years ago, which was very basic. It said, in the future, there will be a digital financial assistant. It will analyze your spending, let's say your mortgage, and it will say, like, that's too much. I found a better offer for you. The only thing you need to do is say yes, and I'll do all the paperwork and get it all done for you and save you the cost, right? So to us, this was basically where we believe retail banking was heading. And a little bit like self-driving cars, don't know when, but know that it will happen. And that's the future. And it has profound impact and consequences for the banking industry because to a large degree, banks today don't need to be competitive because people don't want to switch. And it's difficult to switch and they need to bring all the data and all that stuff. So they don't need to be that competitive. They don't need to be that great. And this would mean that in the future, customer mobility would be ultra high. People would switch to whoever gives them the most value for the least money. And it's going to drive down the excess profits in the retail banking industry.
Now, I know you think deeply about this as well. How do you see financial services, the workforce, when it comes to financial services, changing in the next, say, 5 to 10 years?
Well, I, for one, have been trying to be a little bit more honest about this because I feel a lot of my tech bros are being slightly, not to the point on this topic. I think there is a massive shift coming to knowledge work, and it's not just in banking, it's in society at large. There are 8,000 people in Brussels that work as translators And I would argue that most of that can be done by AI today already, even though obviously some quality assurance and so forth would still be valuable to have humans to review. But the point is that you don't need as many as we did. So there is a massive shift coming. I think society will have to figure out what are we going to do, because yes, new jobs will be created, but in the shorter term, that doesn't help the Brussels translator. He's not going to become a YouTube influencer tomorrow. So you may find other ways in how we support people from a society perspective. For us as a company, we see we have increased our revenue per employee from 400K to over $1 million per employee in the last 2 years. We haven't hired, we've a little bit hired a small recruitment, but generally we've shrunken the company from 7,400 people to 3,000 now. And that's at the same point in time while the revenue and number of customers has grown significantly. So we're simply not recruiting, which means that we can avoid doing layoffs. And we have taken a lot of the savings in payroll cost and reinvested that into an acceleration of the compensation of our employees, which means that they are seeing a huge benefit from us applying AI internally. So I think that there's paths in how you can make this work, both from a society perspective and a company perspective. But in the end, our job is here to drive as much value at the best possible price to our customers. And so we need to use these technologies to accomplish that. And then in general, I think there will be implications for a lot of knowledge-based work.
The Klarna CEO speaking to me exclusively for Bloomberg Tech Europe. Coming up, will there finally be peace for Israel and Gaza? We're going to be talking to Fawaz Gersh, International Relations Professor at the London School of Economics, for his analysis on the Gaza ceasefire deal. That's coming up. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Ray Dalio, the founder of Bridgewater Associates, of course, has repeated warnings that US government debt is rising too quickly. The billionaire investor has long cautioned of the risks of spiraling US debt. On the latest episode of Leaders with Francine Lacroix, Dalio also said global conflicts and wealth inequality were helping to create a worrying environment.
We're in wars. Okay, there is a financial money war, there's a technology war, there's geopolitical wars, and there are more military wars. And so we have a civil war of some sort, which is developing in the United States and elsewhere, where there are irreconcilable differences.
So how do you see it being settled?
actually? Where do you see the U.S. going? Does it get settled? Does
well, either we will rise above it and realize that our common good is going to necessitate us dealing with it so that what works for most people is going to work. I think that's a little bit idealistic. I have to be a practical person. And I would say that I think that these conflicts will become tests of power by each side.
Well, you can watch the full interview with Ray Dalio on Leaders with Francine Lacroix. It is out on the Bloomberg website and on the terminal. You can also catch it on Bloomberg TV today at 5:30 p.m. in the UK. Let's return to the latest on the Middle East now. Following the Israeli cabinet's approval of a deal with Hamas, LSE International Relations Professor Fawaz Khajiz says President Trump's Gaza plan is littered with minefields. He joins me now. Fawaz, thank you for your time. What is your assessment of the current moment in terms of this deal and where it leaves the prospects of peace?
Oh, thanks for having me, Tom. I think it's the beginning of the end of the humanitarian catastrophe in Gaza. The loss, the suffering, the pain, the famine, the starvation for 2.2 million Palestinians for more than 2 years. And it's the beginning of the end of the horror for the Israeli hostages and also the Palestinian prisoners. So it's a temporary relief. Do I really believe it will lead to permanent peace? Sadly and tragically, no. Do I really believe that what we have seen in the past few days will lead to a lasting peace, as President Trump would like us to believe? Sadly, no. Because I think what we need to understand, as you said, every point in President Trump, 21 point, is a minefield. And we can talk about the various points and break them down for your audience.
Well, let's do that. What are the major hurdles to getting beyond phase one? We're currently in phase one. We're going to see the implementation. We're starting to see the implementation of phase one as part of this deal. Then we move to phase two. What for you then are the major roadblocks to getting additional movement there?
I think we should not really underestimate the first phase. I mean, I think this is very, very important because it's taken more than 2 years to bring about the end of the first phase. The release of all the Israeli hostages, 48 alive and dead, and also almost 2,000 Palestinian prisoners. So it's a moment of hope for both populations. But here's the first point. Do I really believe that basically Israeli Prime Minister Netanyahu will pull out Israeli troops permanently from Gaza? I have no doubt that he will not. And Trump plans does not really basically stipulate the removal of all Israeli forces from Gaza. In fact, based on the outline that we have seen, Israeli forces will remain, according to Israeli forces, in 53% of Gaza after the execution of phase one. Do I really believe that Hamas will lay down its arms and surrender? Of course not. I doubt it very much. Palestinian groups, there is consensus among Palestinian groups and people. They really would not accept the return of colonialism under a different pretext, that is a board of peace led by the United States President Donald Trump and former Prime Minister of Britain, Tony Blair. So in a way, what I'm trying to really say is that President Trump and his team and the Israeli leadership, their strategic priority were and are to get the hostages back. And as they should, right? That they really, everything else in Trump's plan, the details for them, particularly for President Trump, don't really matter, because President Trump is a transactional president. He likes to cash in. He wants instant rewards. And that's why he's going to Israel and Egypt either Saturday or Sunday in order to really celebrate his political victory, quote unquote.
What are the potential governing options for Gaza then, given all the caveats and all the uncertainty you've just outlined for us?
You know, Tom, there are 3 plans. There is the Egyptian Arab plan, and there is the French-Saudi plan that was basically voted by 142 states in the United Nations. And the French-Saudi plan combines elements of the Egyptian plan and the American plan. It calls for an active role by the Palestinian Authority and the training of Palestinian police, and basically creating many committees to really empower the Palestinians, help to govern not only Gaza and the West Bank, but enable them, empower them, to prepare them to really basically help self-determination and a state of their own. Trump plan, I mean, look at the Trump plan, if I were to summarize it, and I'm a bit critical of President Trump, but he deserves credit for this particular moment. But President Trump's plan is technical, it's not visionary. It does not really mention basic Palestinian rights or the right for self-determination. It's technical. So what I really would like to say, I would like to see a visionary plan, genuine reconciliation between the Israelis and the Palestinians, a summit for peace led by the United States and Europe and the Arab state and the Muslim state and the United Nations in order to really bring about reconciliation, genuine reconciliation between Israelis and between Palestinians, because regardless of what happens, you and I were talking about Gaza. There will never be permanent or lasting peace in Gaza or in the Israel-Palestine conflict, even if we see President Trump's 21 plans basically develop further. So this is really what we're missing. We're missing the huge element of reconciliation, of really talking about taking Palestinian basic rights seriously. And again, final point on President Trump. What we know about President Trump, Tom, he's temperamental, he's chaotic. Will he have the attention span? Will he remain focused? Will he really basically keep Prime Minister Netanyahu's feet under fire? Because we know from what we have seen that only the United States could really pressure Benjamin Netanyahu in order for him to really stop the war in Gaza.
Fuzz, we see Jared Kushner has been on the ground there, and clearly he played a central role, the son-in-law, of course, of President Trump in the Abraham Accords. Is there a role for those who signed up to the Abraham Accords to extend that and provide some kind of infrastructure for that lasting peace that you've outlined?
Well, you know, Tom, I mean, I think we need to really, again, break down the Abraham Accords. The Abraham Accords, the underlying idea was that the Palestinians don't matter. The Palestinians were not taken into account. They were really not basically consulted, because the idea was once Israel normalizes relations, top-down normalization with the Arab state, why would you reconcile with the Palestinians? So it was strategically flawed, literally, because in fact, the 7th of October would not have happened without the Palestinians coming to realize that the Palestinians were being thrown under the bus. And that's why I'm saying, I hope that President Trump relies on more seasoned experts in the State Department and the American political and intellectual community to realize that top-down normalization between Israel and authoritarian Arab state will not bring about peace. The only way to bring about peace, again, reconciliation, genuine reconciliation between Israelis and Palestinians.
Professor, we've run short of time, but we really appreciate your insights and analysis this morning. Fawaz Gesh, the International Relations Professor at the London School of Economics, thank you. Up next, we're going to bring you Bloomberg Brief. We've also got the decision on the Nobel Peace Prize out of Oslo, Norway. This is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Based on the data that you've seen, do you think it's a good idea now for the Federal Reserve to lower interest rates?
The Fed doesn't want to lower rates and appear to be kowtowing, if you will, to President Trump's language. On the other hand, I think there's actually room for them to lower rates. If you look at the Fed's Beige Book, which the Fed reacted to last year when they started lowering rates, I think there's room for them to take action now. And if I were the Fed, I'd start thinking about going ahead and lowering rates. Real rates are very high right now relative to history, and of course we have a pretty significant term premium built into the term structure of interest rates right now.
So let's talk about the Fed's goal, which is 2%. Is that too low a rate to really get to at this point? And does it have to be at 2% or in sight of 2% before the Fed should lower?
They have a credibility issue right now. The Fed has to get to 2% because that was the target that they set. Although they've already started to project that they're willing now to target a range of inflation, which I think is the approach they should have taken all along. But they're going to get to 2%, and I think the trajectory is still in favor of the Fed's 2% target. And what we're seeing on a shorter-term basis is that's where rates are actually going to in terms of the inflation level, and I think the trajectory is their friend.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's 5 a.m. in New York City. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Japan's ruling coalition collapses. Japanese assets whipsaw in a major setback for the new LDP leader. Israel's cabinet backs the Gaza deal, paving the way for the release of hostages held in Gaza. Futures pointing to gains after maybe a less enthusiastic week. The dollar is snapping its four-day rally. Investors digesting the international headlines. So let's take a look at where they are, because we've had 2 up days and 2 down days this week. Looks like we're headed for another up day. But even without today, we're still higher on the S&P 500 and the NASDAQ 100 for the week. Russell 2000 futures up 0.4% as well. Perhaps the situation in the U.S., even though we're into a 10th day of a government shutdown now, doesn't look as bad as it does internationally, in Japan, in France. Let's take a look at yields, because we haven't seen too much movement in yields. We did have that auction. The 10-year still at 4.1131, a tiny bit of flattening. The 30-year coming down below 470, and the 2-year up at 357.85. Gold is also below 4,000, so a little bit of a calmer Friday. And the VIX as well is just a little lower than where it was yesterday. The yen has strengthened just a little bit because it looks like that ruling coalition will not work. And what does that mean for Japanese policy? Certainly, Tanae Takaichi is going to have to rethink her strategy for becoming Prime Minister. But let's get to some individual market movers now. And for that, we'll go over to London and Valerie Teitel. Good morning, Valerie.
Good morning, Vonnie. Happy Friday. Let's start with some earnings. Earnings from Levi are disappointing investors. Levi shares down nearly 8% so far in pre-market trade. Now, they did upgrade their full-year guidance, gave a rosy outlook on sales, but it was their warning on their tariff impact which is causing the negative reaction. Their assumption for the tariff rate, the average tariff rate they'll be paying for the rest of the world, other than shipments from China, was notched up to 20%. So investors worried that heading into the holiday season, the Levi's tariff bill could be larger than expected. Let's move on to the tech trade. Applied Digital Materials is also rising after earnings, up nearly 25%. Now, Applied Digital is a company that makes equipment for manufacturing of semiconductors. They're also involved in data center expansion. And the excitement about these results is that they did, yes, beat the revenue estimates, but they also announced an expanded lease agreement with CoreWeave for more compute, and said they got more, or they secured more funding on that. So a lot of positive stories for Applied Digital. Lastly, let's end in the rare earth space. A lot of speculation on where just perhaps the U.S. government could take its next equity stake. We're seeing critical metals up nearly 14% in pre-market trade. Vonnie, this stock has flown 80% so far this week on speculation it could be the next target of an equity stake by the U.S. government.
Valerie, thank you so much. That is Valerie Title. And later this hour, we'll talk tech trade and more with Maria Weitnan. She is Senior Multi-Asset Strategist and Head of Equity Research at State Street Global Markets. And I do want to point out that CCTV is reporting that China is now probing Qualcomm for suspected monopoly behavior. Once again, this is a report coming from CCTV that China is probing Qualcomm for suspected monopoly behavior. We'll keep an eye on Qualcomm shares. Japanese assets, though, whipsawing after Japan's governing coalition failed to overcome differences on political funding regulation, of all things. Joining us now is Bloomberg's Japan economy and government reporter, Alistair Gale. Alistair, this is all happening in real time. We're seeing this collapse just occur before our very eyes. What is the latest?
Well, Bonnie, this is a political earthquake in Japan. We've seen the minor party in this coalition decide that they want to pull out. And this is the coalition that's governed Japan for most of the last 26 years. So the breakup is, it seems like it's real. The leader of the larger party, Sanai Takaichi, says she wants to continue talks, wants to find a way to keep the coalition together. But this has big implications for her. We're expecting her to be the next prime minister, but it's really going to make it hard for her to get her policy agenda through. The LDP will be weakened. She'll be a weakened prime minister. So there are many implications here. This is a big deal.
And just for context, I mean, this coalition has been in power for 25 years. This could be a sea change. Who's left to be a junior partner, or are we looking at some other kind of rainbow coalition that doesn't even include the LDP, given that they're losing more and more seats in both chambers?
I think at this point, we shouldn't rule anything out. I mean, what we're seeing now is the LDP is looking for potential other partners. I mean, they've been doing this really for the last few days when things have gone south with Komeito. So they'll look for any way they can to hold things together. But what that means is policy compromises. Takaichi is going to have to take on board some of the policies from other parties. We've seen the reaction in markets is very interesting. People have expected her to be very aggressive on sort of pump priming for the economy, but maybe she has to consider other approaches now. So it's a time for compromise. It's a time for horse trading. It's a time that will really test her political skills. And she's only been in this job for less than a week.
She was the presumptive prime minister. Is that for sure to happen now? And what is this Komeito party, the leader being Tetsuo Saito? What do we know about their types of policies?
Komeito is a party which is more focused on social issues. It wants to see more kind of social welfare support. It's been really a kind of break on some of the more aggressive economic policies and security policies that the LDP has had over the years. So if that coalition breaks up, then we may see the LDP perhaps move more to the right. There are a few parties that it could do deals with to adopt some of the policies that Takaichi wants to do in terms of stimulus for the economy, tax cuts, that kind of thing. So there's potential for lots of sort of policy implications here. But without Komeito, the problem is that she might struggle to get through that vote to become prime minister. So if that's the case, then she may not even have a chance to get her policies through.
We'll be watching those Japanese assets, the yen strengthening at 152.70 now. That is Bloomberg's Alistair Gale. Thank you. Meanwhile, President Trump says he'll travel to Israel after the Israeli government approved a deal for Hamas to release its remaining hostages in Gaza in exchange for more than 2,000 prisoners. The president spoke about the breakthrough.
Peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. Getting them is a complicated process. I'd rather not tell you what they have to do to get them. There are places you don't want to be, but we are getting the hostages back on Tuesday, Monday or Tuesday, and that'll be a day of joy. I'm going to try and make a trip over. We're going to try and get over there.
Let's bring in now Bloomberg Horizons anchor Jumana Bersecci. So, Jumana, walk us through the latest now that the ceasefire has gone into effect. Have there been any holdouts? Are there any factions, either politically or in the electorate, that don't support this?
There's certainly parts of the electorate and parts of actually the Israeli cabinet who aren't supportive. But overall, though, the cabinet voted to pass phase 1 of this peace agreement. So it is a remarkable moment. It technically means that the ceasefire will now be implemented, and Israel has 24 hours to withdraw its forces, the IDF, to a pre-agreed line, that yellow line, which still means that they'll maintain control of about 53% of the Gaza Strip. Once that has happened, there's a 72-hour window for Hamas to begin mobilizing to release the hostages. There are 48 hostages in total, 20 of them still thought to be alive, 28 who would have died in captivity. And that would happen alongside the exchange of Palestinian prisoners and detainees, totaling about 2,000 in total. So all of that is going to happen over the course of the next 3 days. President Trump himself saying that he would like to be in the region for the release of those hostages. He said that he will most likely be traveling to Israel at some point over the weekend, perhaps the beginning of next week. There's also talk about him addressing the Knesset there and then potentially traveling on to Egypt afterwards. So all of this is to say that personally, President Trump was very vested in this process. We saw those images of Jared Kushner and Steve Witkoff sitting next to the Israeli Prime Minister throughout the course of that cabinet vote, and really just testament to how much and how keen the president was to get this over the line. And it still is a breakthrough moment in diplomacy, but many questions still remain about the longer-term governance of Gaza, the disarmament of Hamas, and of course, some of those key questions about how far the Israeli forces are going to be withdrawing eventually.
Absolutely. Jumana, thank you. That is Bloomberg Horizons anchor Jumana Brzezinski. Let's get the view from Washington now. We have Bloomberg's Kasia Klimaszinska joining us. So, Kasia, the president is due to leave for Israel, and he seems to be very pleased. Does he have, the optimism that phase 2 will go as well?
Hello. So President Trump is hoping to leave the U.S. on Sunday to be there on hand for the release of hostages, perhaps on Monday or Tuesday. He's very happy about this progress, about this agreement. Yesterday at the cabinet meeting, he thanked the leaders in the region, so the leaders of Egypt, Qatar, Turkey. He even mentioned Indonesia, and indeed he hopes to be in Israel and then go to Egypt for the signing ceremony. Now, yesterday, some White House officials briefed reporters on the details of this agreement, and they did point out that there are 2 stages, 2 phases, with perhaps the second phase being much more tricky, with a lot of things that could still go wrong. Nevertheless, now the Trump administration is focused on the progress. Yesterday, a lot of cabinet members congratulated President Trump on this major accomplishment. They pointed out that now with this a strong coalition in the Middle East, perhaps President Trump could use this leverage, especially in the energy sector, to focus on the next big conflict, which is Russia's war in Ukraine.
Absolutely. Keep the momentum going, as it were. Elsewhere, the U.S. Treasury set up that $20 billion currency swap framework that is now done, but it also bought Argentinian pesos. Is this very unconventional? What was the story here? Was it a unilateral decision by Scott Bessent?
A major move here, but again, ahead of a meeting of President Trump and his counterpart in Argentina, Javier Milei. President Trump and Milei are very close. They already spoke last month in New York on the sidelines of the UN meeting, and that's where this aid came from. So Treasury Secretary Scott Bessent spent a lot of time talking to his Argentinian counterpart, and they came up with this framework, with this solution that led to this $20 billion currency swap line, and U.S. Treasury intervening directly in the currency markets to buy peso, and successfully they managed to stop the decline in the currency, at least in the short term.
And Kasia, it looks like we might actually get CPI data at some point by the end of the month. The BLS is recalling staff. It has to, though, right? Can you give us more detail?
We are now in the 10th day of this government shutdown, which means that all the non-essential activities of the government have been frozen. That includes collection and release of economic data. But the CPA data, the inflation data for September, is really necessary in order to determine the social security payments for next year. And so the BLS, the unit of the Labor Department, is calling some people back in order to put together this report, hopefully by the end of the month. So it will be ready not only for the Social Security, but perhaps also for the Federal Reserve, which is meeting at the end of October.
Yeah, absolutely. Kasia, thank you so much. Bloomberg's Kasia Klimaszinska in Washington. Now to other top stories trending on the terminal this morning. The collapse of auto parts supplier First Brands has dragged Japanese financial giant Norinchukin Bank into the debt mess. First Brands bankruptcy has left factories and distribution centers on the hook for more than $10 billion to some of Wall Street's biggest firms like Jefferies, UBS, and Millennium. Bridgewater Associates founder Ray Dalio once again warns that U.S. government debt is rising too quickly, and that's fueling a climate, quote, that's very much analogous to the years before World War II. Dalio also told Bloomberg that civil war is brewing in the U.S. For more on Dalio's comments, tune in to the latest episodes of Leaders with Francine Lacroix, airing tonight on Bloomberg TV at 7 p.m. New York time. You can also, of course, watch it on the website and on the Bloomberg terminal. Maria Corina Machado of Venezuela wins the Nobel Peace Prize for 2025. The committee noted her, quote, tireless work promoting democratic rights for the people of Venezuela and for her struggle to achieve a just and peaceful transition from dictatorship to democracy. Coming up, Presidents Trump and Xi maneuver for leverage ahead of their summit later this month. More on this story next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacroix in Sintra, Portugal, and this is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Presidents Donald Trump and Xi Jinping are battling for leverage ahead of their upcoming meeting with the expiration of a U.S.-China trade truce looming. Joining us now with the latest is Bloomberg's trade czar, Brendan Murray. Brendan, just a few moments ago, a CCTV headline that China is probing Qualcomm for monopolistic behavior. This is a little bit out of the blue, right? Talk to us about all of these things that are cropping up day after day.
Yeah, exactly. Things are really heating up here at the 30-day mark before the ceasefire on tariffs between the U.S. and China expires. They're going to have to push that out further, delay the reimposition of those tariffs. And what we're seeing are both sides really trying to assemble the best hand that they can to bring to the table as leverage. With the Qualcomm issue is one of these examples where China can make life miserable for U.S. companies. The regulators just go knock on their door and start asking questions, and that can hurt the business of American companies in China. The U.S. is trying to do similar things with restricting exports to China that China needs, things like routers, high-tech gear, sophisticated AI chips, and those kinds of things. And what we have are really both sides trying to get the upper hand and bring things to the table that they can then offer to take off in exchange for relief from the other side. So it's all shaping up to be a pretty interesting meeting if it does come together between Presidents Trump and Xi at the APEC meeting in Korea later this month.
Yeah, exactly. I mean, you mentioned some of it, but it's affecting so many sectors now. Sweeping new curbs on rare earths yesterday, and still no purchases of soybeans on the part of Beijing. Is it possible that only one or two of these things will get resolved or semi-resolved later this month, or could we see an actual breakthrough?
Yeah, it's hard to see some kind of grand deal coming together over the short term in the next several weeks. President Trump really wants to put something together, so you would imagine things like the fentanyl, the 25% fentanyl tariffs would be on the table for discussion to get some of those concessions from China. But this is the jockeying that we're seeing right now, is trying to apply as much pressure on each other as they can.
Brendan, thank you so much. That is TradeStar Bloomberg's Brendan Murray. Coming up, French political drama. President Emmanuel Macron is expected to appoint a new prime minister sometime today. More next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up on the Financial Times, China launching a customs crackdown on NVIDIA AI chips. Teams of customs officers have been mobilized at major ports across the country in the past few weeks to carry out stringent checks on semiconductor shipments. Next up on the Wall Street Journal, a blow for President Trump's efforts to use troops in Chicago. A federal judge blocked the president from deploying National Guard members to Illinois for 2 weeks, saying that continuing to militarize the response to local protests was likely to cause civil unrest. And on the New York Times, New York Attorney General Letitia James being indicted on bank fraud charges. The indictment alleges that James falsely represented a Norfolk, Virginia property she bought in 2020 would be used as a secondary residence when she actually used it as an investment property. Now, over in France, President Macron says he'll name a new prime minister by tonight, having avoided the need to call a snap election. Joining us now is Jean Dalbar of Bloomberg Economics. So, Jean, who actually is in the running? Can Macron find someone that will keep markets calm and the economy on a sound footing?
Well, that's the key question, and President Macron is meeting party leaders this afternoon in Paris, and we would expect someone to be appointed as prime minister tonight, potentially a figure from the center-left or someone with such kind of a technocratic profile could be appointed. But after that, I mean, the main difficulty is still the same. He would need to form a government with political parties that struggle to compromise, and with a current ruling coalition which is imploding. So the challenges remain unchanged for the potential new prime minister that we expect tonight.
Yeah, I mean, the OAT bund spread has come in, but we're still at 82 basis points. That's where we were before all this started. It's not great, right? If it is somebody from the Socialist Party, and if that party is becoming a little more influential now, what kind of policy changes could we see?
So indeed, the Socialist Party, which is the center-left party in France, remains the kingmaker for the government and for the budget. And this time, they have much more leverage than before. And they would like, I mean, they have two main points in their economic platform. The first one is the suspension of the pension reform, which in our view will cost 0.3 point of deficit in 2026 and 2027, so it will be costly. And the second point is a new wealth tax that would be, in our view, not a game changer from a fiscal perspective, nor from an inequality perspective. But all in all, we would expect that with the socialists on board, the fiscal consolidation for next year's budget will be substantially watered down compared to the previous budget proposal from the former PM.
All right, Jean, we have to leave it there, but we'll be keeping an eye out for that new name. That is Jean Dalbar of Bloomberg Economics. Let's take a look at these markets, because we've had 2 up days and 2 down days so far this week. Futures look to be pointed higher fractionally now for the S&P. The dollar index down just a little bit, as we are seeing some yen strengthening today as that ruling coalition just falls apart in real time right now. It's happening in Japan. The 10-year yield down 2 basis points to 4.11. This is Bloomberg.
how much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Japan's ruling coalition collapses. Japanese assets whipsaw in a major setback for the new LDP leader. Israel's cabinet backs that Gaza deal, paving the way for the release of hostages held in Gaza. Future is pointing to gains in the U.S. after perhaps a less enthusiastic week. The dollar snapping its 4-day rally. Investors digesting international headlines. So let's take a look at where we stand now, because those futures are pointed higher, both for the NASDAQ and the S&P. Those 2 indices are higher on the week, even though we've had 2 up days and 2 down days. Now we have gold back below 4,000, a little more calm in the market. The VIX is also showing a little more calm. It is at 16 and change right now. Let's take a look at yields. Little bit of flattening. We have the 2-year at 357.85. The 30-year yield, though, down 3 basis points at 469. 2 basis points there on the 10-year after that middling demand for that auction sent yields just a tiny bit higher yesterday. So not too much movement in U.S. yields. Elsewhere, we're seeing the French-German spread come in just a little bit. If we take a look at the yen, it has strengthened after that ruling party coalition collapsed. 152.77 is where we're at, but we're still not that far from 153. And there you can see the price of gold just very slightly below $4,000 an ounce. So let's get to some individual movers to watch now. Over in London, we have Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with some earnings. We got some out from Levi after the bell yesterday. It is disappointing investors. Those Levi shares are down over 6.5% so far in pre-market trade. Yes, they did raise their guidance. They did sound more rosy on sales, but it was a disappointment around their tariff outlook. They guided that they are assuming a higher tariff rate from shipments ex-China. So I think investors are worried about Levi's imports ahead of the busy holiday season, potentially having more of a tariff impact to the company's bottom line. Let's move over to the tech space. This is an issue with Qualcomm I want to bring up. Qualcomm shares down 2.2%. This comes after an announcement from China that they've entered into an antitrust probe of Qualcomm's acquisition of auto talks they made previously in the year. And Vani, this chimes very much with what they announced about NVIDIA also investigating an acquisition of theirs on an anti-monopoly case. So it does seem like China, at least at the moment, is ramping up pressure pressure on the U.S. administration ahead of these supposed talks between Xi and Trump to take place in Asia later this month. Lastly, let's end in the rare earth space. This one also having issues, having a tie with China, should I say. The U.S. is trying to combat China's dominance in the sector, and it's all about who the U.S. government could potentially take a equity stake in next. Critical metals up another 11.5%. The stock has flown over 80% this week on speculation the U.S. government could be eyeing critical metals for its next equity stake. Funny?
Fascinating, Valerie. Thank you so much. That is Valerie Titel there in London. Keep calm and buy tech. That's according to Maria Waitman of State Street Global Markets, who writes, "We believe that the time to rotate out of IT would be when and only when we see improving earnings outlooks in other sectors or regions." Maria is Senior Multi-Asset Strategist and Head of Equity Research at State Street Global Markets, and she joins us now. Maria, you see those headlines, the most recent one about Qualcomm, but you also have, China inspecting containers at ports for NVIDIA chips and so on. Does it not make you nervous about keeping calm and buying tech?
I mean, at current valuation, at current investor positioning, any news in tech obviously makes us like concerned and worried. But I think the message is, as I said, it's very easy to sell out of tech, and investors have tried to do it a few times this year, but you need to have a good place to go to, and that's where the problems are. That's our concern. We don't see any earnings growth outside technology sector, any kind of strong earnings growth outside technology sector, and that's why investors kind of gravitate back towards the sector. And that's what we see in our institutional investor flow in State Street custodial database. Any dip is met in tech is met by buying. Investors go back to tech. That's the key trade for them. That they're sticking with it.
Is it wise, though? I mean, couldn't we be maybe a little bit more responsible this time around if there is something looming? You mentioned State Street flow data, but we also had Bank of America flow data saying that cash funds in the last week drew nearly $73 billion. Stocks drew $20 billion. So there is some rotation into cash.
Yeah, I mean, we see, it's really interesting. So we see allocation to stocks at historical high levels. We have to really go back to like pre-JFC levels to see higher allocation to stocks, while allocation to cash is about average. So it's not like that investors are, just gung-ho. And obviously we see like alternative assets like gold, for example, doing really, really well. So it's almost like a barbell. So within equities, it's very much tech, very little else, but investors do hedge. As you said, like cash allocations are there, gold allocations are there. It's just like not broadening. I think that's the issue for investors.
When will be the quarter that we do see a little bit of outperformance from sectors that are not tech?
Yeah, very good questions. We're still waiting. I think analysts expected consistently over the last couple of years it would be broadening. Actually, if you look at current projections for Q3, they still have that trade. So they consensus expectations for tech is coming down a little bit from previous quarters, and everything else is coming up. So again, the analysts are kind of expecting that broadening. I have to say I'm quite skeptical, but we'll see. We'll see in a couple of weeks' time.
Now, within tech, where would you still be buying? So if you're in, you're going to stay in. But if you haven't been in, or if you want to, have a look at other areas of tech, what are the more attractive areas now?
Yeah, that's a really, really, really difficult question, but I think you really have to stay with profitable tech. So, there are, the debates about where is the bubble. I think that's very fair. So staying with more profitable tech, staying with companies with better cash flows, with better margins. So that's an areas where I see, yes, no question, they're crowded, they're expensive, but that's the reason why people gravitate towards them is their kind of underlying strength and a kind of first ability to monetize that AI sim. So yeah, profitable tech is our preferred.
One of the observations you've been making, and so have many, is that value stocks have been underperforming, and you say this is very unsettling. Why is it unsettling? Perhaps it's not value's time yet.
Yeah, I mean, I think if we just said that value is like underperforming this year, it would be fine. But the chart I have is that value has underperformed for over a decade now, and that's really unsettling to us. I mean, all kind of your study of financial theory, you buy low, sell high, find undervalued companies, invest them, kind of understand that. The other thing that worries me a lot is this idea that what we see in our custodial database, institutional investors have this enormous underweight in value stocks. So it's almost like it's not like just underperformance, but it feels like investors given up on value stocks, and what they're doing is chasing momentum, chasing earnings. For now, it serves them really well, and as I said, I suspect the reason for that is a kind of narrowness of earnings. That's what investors are doing, but long term, that's a concern. That's something we are watching very carefully.
For sure. You know, you also mentioned China and that it's increasingly on your radar, and I'm not surprised because if you look at some of the indices, they are up massively. HS Tech this year alone up 40%, HS Healthcare up 86% this year. What changed to make China investable again, and does it continue to see gains?
Yes, I think you're very right to formulate your question, is it investable again? I mean, we know that for many, many years, Chinese earnings really struggled, and a lot of it is kind of regulatory, kind of structural, and earnings expectations are still not great. I think that's kind of the main driver that kind of I'm excited about in technology stocks and kind of this growth stocks and quality stocks is the underlying strong earnings. China doesn't have that, and Chinese authorities really try to stimulate it. So far, they're more focused on kind of stimulating financial markets, and that's what the result is. We haven't seen like huge kind of improvement in underlying corporate profitability. But I think important point to note is that large foreign investors have not really participated in that rally. It was mostly kind of domestic institutions driving it. And seeing the performance, of course, it's kind of important for foreign investors and kind of benchmarked investors to get into this market. So we're seeing kind of this kind of closing of the underweight position in China. I personally would be a bit skeptical about them going overweight,
Yes.
but for now there is a room to add to kind of in terms of close underweight, which is actually quite painful for them. So we expect this kind of tactical outperformance of Asian stocks to continue.
Maria, thank you. Pleasure speaking with you this morning. That is State Street's Maria Waitman. Now to other top stories trending on the terminal this morning. Japan's decades-old ruling coalition collapses after political party Komeito withdrew its support for Sanae Takaichi's Liberal Democratic Party. The coalition ended after the two sides failed to overcome differences on political funding regulation. The collapse of auto parts supplier First Brands has dragged Japanese financial giant Norinchukin Bank into the debt mess. First Brands' bankruptcy has left factories and distribution centers on the hook for more than $10 billion to some of Wall Street's biggest firms like Jefferies, UBS, and Millennium. Venezuelan opposition leader Maria Corina Machado wins the Nobel Peace Prize for 2025. The committee noted her, quote, tireless work promoting democratic rights for the people of Venezuela and for her struggle to achieve a just and peaceful transition from dictatorship to democracy. Coming up, keeping an eye on chip stocks as China investigates Qualcomm and launches a customs crackdown on NVIDIA chips. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
President Trump says he'll travel to Israel after the Israeli government approved a deal for Hamas to release its remaining hostages in Gaza in exchange for more than 2,000 prisoners. The president spoke about the breakthrough.
Peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. Getting them is a complicated process. I'd rather not tell you what they have to do to get them. There are places you don't want to be. But we are getting the hostages back on Tuesday, Monday or Tuesday, and that'll be a day of joy. I'm going to try and make a trip over. We're going to try and get over there.
For more, Bloomberg Horizons anchor Jumana Brasetti joins us now from Dubai. So, Jumana, walk us through the latest now that the ceasefire has gone into effect.
Yeah, well, the latest development suggests that the ceasefire actually went into effect at 12 p.m. local time. This follows on from the Israeli cabinet voting in favor to move ahead with phase 1 of the plan. And the IDF are now saying that the troops have been positioning along this updated deployment line. That is the line that is stipulated in that 20-point Gaza peace plan. And of course, it still allows for Israel to maintain control of about 53% of the strip. Now, the first phase of the peace plan also entails the release of hostages. That is expected to happen over the course of the next 72 hours, possibly Sunday, even Monday, is what President Trump was referring to, in exchange for around 2,000 Palestinian prisoners and detainees. Later today, it is expected that the Israeli side will be releasing the names of exactly who is on that list. That was a big point of contention when those negotiations were underway. But President Trump himself has said that he would like to be in Israel, coinciding with the timing of the release of the hostages. He has also said that he may be looking to address the Knesset. The latest reporting suggests that he may be arriving to the region as soon as the end of the weekend, perhaps on Monday, and then maybe continuing on to Egypt as well. So a lot is yet to happen operationally in the next 72 hours with regards to the IDF redeployment, the exchange of the hostages for those prisoners. But ultimately, some of the bigger picture questions remain vis-a-vis Hamas disarmament, whether there's an enforcement mechanism for that, in addition to future questions around the governance of Gaza and what exactly that apolitical Palestinian committee, as stipulated in the peace plan, actually looks like in practice.
And we just got headlines a few minutes ago, the IDF warning Gaza residents from approaching the Rafah border crossing, troops positioning along the updated deployment line. What about aid, Jumana? What do we know about the distribution and entry of humanitarian aid now into the Strip?
Yeah, so very important to raise that because it is actually a key clause included in the first phase of this Gaza peace plan, the resumption of humanitarian aid and the return of food and water and medicine and necessary supplies back to the enclave. This is a region and a population that has been suffering from malnutrition and in some cases extreme famine. So the United Nations has said that they're readying a plan. Tom Fletcher, who is the coordinator for the region, says that they're mobilizing up to 170,000 metric tons of supplies. That includes medicine and food that they're very capable of mobilizing into the region. And in addition to that, he's also talked about a 60-day plan that would allow for setting up facilities so that people can get access to these supplies, learning centers for children who've been not had access to school over the last couple of years. And then also setting up centers whereby people can get access to water, again, that has become in short supply in the Gaza enclave. So there's going to be a lot of focus on that in the coming days, the coming weeks. And then alongside that, there's also going to be a focus on maintaining what is known as the security force. And yesterday, the press secretary, Caroline Leavitt, said that the U.S. are actually willing to deploy 200 troops to monitor the ceasefire and ensure a smooth implementation over the next couple of weeks.
Jumana, thank you so much. That is Bloomberg Horizon's anchor, Jumana Bersetti in Dubai. Let's get the view from Washington now with Bloomberg's Kasia Klimashinska. Kasia, the president is expected then to go to Israel and address the Knesset, and then it will be on to phase 2. Will there be as much momentum for phase 2?
President Trump is getting ready to depart from the U.S. here maybe as early as Sunday. He's very eager to be there on site to greet the released hostages. He wants to address Knesset, perhaps be there in Egypt for the signing ceremony. But yes, this deal has 2 phases. So the phase 1 is the release of hostages, a very important one. But the second one that the U.S. officials described as an almost permanent ceasefire. And of course, there is a lot of things that can go wrong there. Nevertheless, the Trump administration is very optimistic. It wants to build on this momentum, perhaps expand the Abraham Accords that were signed during President Trump's first term.
I want to move to Argentina because we knew that there was a swap line that was about to be set up that has now officially been set up, but also we know that the U.S. Treasury bought Argentinian pesos and the peso strengthened off the back of that. So the U.S. intervening basically in the Argentinian currency market. Has this ever happened before? Was it a Scott Bessent decision?
A really big move here, especially coming ahead of the elections in Argentina later this month and before the meeting between President Trump and Javier Milei. Milei is a close ally of Trump, and this action was discussed when the 2 leaders met here in New York last month. And then Treasury Secretary Scott Bessent had multiple conversations with his Argentinian counterparts. Argentina also spoke to the IMF. So this move was in works, very discussed, analyzed, and yesterday the U.S. Treasury not only finalized this framework, this $20 billion framework, but also intervened in the currency markets, buying pesos, successfully managing to stop the decline in the currency for at least for now.
We'll see what happens next. Kasia, thank you so much. Kasia Klimashinska in Washington. In tech news, shares of Qualcomm are falling in pre-market trading as China opens an antitrust investigation of the U.S. chip maker's acquisition of Autotalks. Now, this news comes on the heels of the Financial Times reporting that China has launched a customs crackdown on NVIDIA AI chips to wean the company's technology away from Chinese products. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. So 2 more rounds of poking the bear, if you like, Tom. You know, how concerning is it that China is now opening an investigation, according to CCTV, into Qualcomm?
Yeah, so as you say, according to Chinese state media, this is a probe and investigation into Qualcomm into whether or not they violated the anti-monopoly law in China related to that takeover of Autotalks, which happened back in June, in the summer, of course, of this year as well. The context in terms of the market for Qualcomm, 45% of that company's revenues come from China and Hong Kong. You compare that to about 25% for the United States. So that is the size and scope of the Chinese market and the importance of the Chinese market for Qualcomm, which of course supplies the chips that go into smartphones, iPhones, and Samsung phones as well. And that is the biggest slice of revenue for them. They also supply into autos and the Internet of Things space as well. But it should be put in that context, of course, Vonnie, in terms of the potential meeting between the 2 presidents. This is a China that's ratcheting it up in terms of the pressure points on the US and trying to give themselves more leverage, frankly, in those conversations. And so you pair that with the reporting from the Financial Times that there are now these inspectors at major ports in the US looking at shipments of NVIDIA chips and AMD chips into the Chinese market, putting pressure, again, on those domestic firms in China. They've jawboned them in terms of trying to pressure them to walk away from purchases of US GPUs and try to get them to buy more chips from Huawei. Now it seems they're putting those inspectors in place at ports to really ramp up the pressure on those domestic firms. At a time we're also hearing and reports that they're adding fees to docking of US ships into US ports as well. So all of these measures, I think, should be put in that context. This is China trying to get more leverage.
Finding every avenue available, it would seem. Tom, thank you so much. Tom McKenzie is host of Bloomberg Tech Europe. Coming up, we're going to get you set up for your trading day, your Friday trading day. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Bersetchi in Vienna, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead for your Friday trading session. Chicago Fed President Austin Goolsbee is speaking at 9:45 Eastern. Plus, we do get University of Michigan sentiment data for October. That's at 10 a.m. Eastern. And President Trump makes an announcement at 5 p.m. Eastern. So we'll be keeping an eye out for all of those events. Plus, maybe a little relief that the BLS is calling back people to get those inflation data out by the end of the month. Let's take a look at some micro movers now pre-market. Qualcomm down after China is probing the company for suspected violation of its anti-monopoly laws. Levi's down almost 7%, even though it beat in the third quarter, but it did warn it's starting to feel the pain of tariffs, and investors are getting jittery about that stock. The surge in critical metals continues. If you bought it last Friday, you'd be up 86%, and that's even before today. And this is even with the White House saying, we're not looking at a stake in critical minerals. Clearly, the market doesn't believe it, and that stock is up in the pre-market by more than 11%. As for the macro picture, we have turned negative. Just a warning, we were positive for most of the rest of the morning for futures. It's been 2 up days, 2 down days. You can roll a die. The US dollar index down about 0.1%, and gold back below $4,000 an ounce. Just maybe, I don't know if I'd call it a little bit of relief. We'll see how the day trades. But that is it for Bloomberg Relief. Bloomberg Brief even. Surveillance continues the conversation. This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
The American capital markets is the envy of the world.
The equity market is doing really, really well, despite the economy not being particularly healthy.
People like myself, I think, underestimated that role of AI, and I think it helps explain the resilience of the U.S. economy.
Even if the AI narrative continues, it might challenge the fact that we look around and say everything is extraordinarily expensive.
As difficult as it is, and it is difficult to invest in these valuations, we think that you need to stay invested.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Heading into University of Michigan Friday. I cannot believe that I'm saying those words, but the U.S. government shut down for a 10th straight day. The economic data of corporate earnings continuing to show a resilient U.S. consumer.
And Treasury Secretary Scott Bessent making good on his pledge to support Argentina's currency, very much in the forefront amid a whole slew of questions around governments around the world.
So when it comes to potentially having more data, because as you say, you're starting the show talking about University of Michigan, something I've never thought I would hear you say. We are in a data desert, so you have to dig deep, but potentially Bureau of Labor Statistics are going to bring people back. By the end of the month, we might actually get inflation. I think that's a positive note to this market. When it comes to political instability, the U.S. government, really unprecedented moment, setting this $20 billion swap line, buying pesos. Financially, they are trying to shore up the markets in Argentina and also really give a backstop to Milei as he goes into a very difficult midterm election at the end of the month.
Well, this is an awkward moment. And as you point out, this promise to Argentina that was made good on by the United States comes at a time when U.S. workers are starting not to get their paychecks. And there's increasing questions around buying soybeans. And one person could argue it actually makes sense for the U.S. to fortify Latin American relationships to compete with China in that region. On the flip side, are they effectively doing that when it comes to issues like soybeans in Argentina?
Well, the Treasury Secretary made this point last night on Fox News. He was talking about he doesn't want China to still be ingrained in Latin America. He made this point to me in April in Argentina. It was his first trip as the Treasury Secretary. He talked about the fact how China has all these mineral deals in Africa and they don't want that to happen in Argentina. But politically, the blowback at home, it's going to be pretty stiff. We already see Senator Elizabeth Warren talking about this and wanting more questions and answers in regard to this swap line, as well as already on display the issue Brooke Rollins is having in terms of China not buying cargoes of soybeans from the United States. They are looking to Argentina.
It is sort of a mess, and that's the reason why maybe we're seeing a pause in the stock market. Right now, you're seeing equities not doing much. You do see a little bit of a softness ahead of the open in futures after yesterday's declines. And really, it was a broad-based decline. I think it's really important to say that stocks, bonds, and gold all moved lower yesterday, which is ironic considering that gold was supposed to be the diversifier. Yesterday, it was silver. Today, you see a bit of a reversal of that with 10-year yields down 3 basis points, 410.73 after that 30-year auction that was a bit soft, but at least had strong demand. A little bit of dollar weakness. This comes after the biggest potential weakening, strengthening of the dollar so far, going back several months. Coming up this hour, Christian Nolting of Deutsche Bank will be joining us with that stock rally, pausing, even though we are near record highs. AJ Rajadashta of Barclays on gold's record run, and Doug Redeker of International Capital Strategies on the historic U.S. investment in Argentina and what the implications are. We begin this hour with stocks trying to rebound, maybe, but actually softening as investors look ahead to earnings season. Christian Nolting of Deutsche Bank writing, Friday will be data heavy, which will help shape expectations for the Fed's next move, especially as markets weigh the balance between improving sentiment and lingering fiscal concerns. Christian joins us now. Unfortunately, we don't have a lot of data because of the government shutdown. I do wonder what you make of the fact that we saw stocks, bonds, and gold all sell off yesterday in tandem at a time when a lot of people are talking about diversification.
Yeah, of course, diversification is very, very important, as we all know. But I would just say, if you look, for example, at gold, after such a rally, if you look at some indicators like RSI, it's really overboard. It was above 80 on RSI, so now it's below that. But I think it's not a surprise. And I would say, even if you see gold correcting a little bit, I would say it's a healthy development, but we would buy that dip on gold, because I think that story for gold is not over from our point of view. And so I would say also on the equity side, as you said, we've seen quite a rally. Last day's markets were a bit sideways. And as you rightly said, it's about the earnings that are coming in for further market development and market direction.
So we're learning that actually demand is pretty strong in the U.S. We learned that from Delta. Levi's was really interesting yesterday because they actually upgraded their expectation for earnings, and yet their shares fell out of bed because they increased their expectations for the tariff hit. They said consumers were taking on that tariff increase in costs and actually paying higher prices. What's the conclusion? And I understand that it's early, but what is the conclusion from the earnings we've gotten?
So I would say, if you look at the earnings, first of all, the market is not as much expecting from a growth perspective as for Q2. If you look at Q3, I think that's good news. On the other hand, if we weigh this a little bit, what you can see is that the earnings revisions were not as much lowered as before for Q2. So from that perspective, the market probably is a bit cautious, but I think it's not expecting too much. So there is a room for companies to be better. from that perspective, I think we do expect the earnings season to be okay-ish. If you think through of the tariffs, I think we see the pass-through rate so far being quite low. That might be increasing a bit over the next months. And our conclusion from that is what we've been saying before, we don't see inflation to come down quickly. So it's rather staying at levels where we are or slightly higher. So from that perspective, we are not surprised that yields, if you look at 10-year treasuries, for example, are above 4. We would say 4.25 is possible in 12 months' time.
Right now, and to Lisa's point, Levi's is talking about how the consumer is able to handle what's going on with tariffs, but when more rates get passed on, as you talk about in coming months, how difficult is that going to be for corporate America to continue pass on higher costs?
I think you need to take this into account, right? So do companies take that from their margins, if you want, or is the consumer able to digest this? I think so far the economy in the US is very strong. We do see a soft patch. So just to give you some numbers for Q4, over Q4, we do expect a growth rate of 0.8, so 0.8. But if you then look with fiscal spending into next year, if I meet you again in Q4 2026, the growth rate we have Q4 and Q4 is 1.7 already. So it's a soft patch. But I think the growth in the economy could help the consumer as well.
Christian, how difficult is this moment with the U.S. government still shut that we do not have the gold standard data coming out of the United States?
Yeah, it makes things a bit easier, right? So I see on your ticker as well, shutdown of the U.S. government. Be careful what you're doing there in a way. Yeah, we have been living through government shutdowns before. So from that perspective, I'm not so concerned. Of course, you fly a bit blind, but we think we don't need to change our forecast at this point in time. If you look at equity markets, for example, government shutdowns have not been really completely negative. I mean, the longer they take, there could be higher volatility, but we are not that concerned about this one because we think, yeah, even it might be a bit longer, but at one point in time, it will come back and then we get the data. They might be disrupted, then they might cause some volatility. But from our point of view, we don't need to change strategy because of this.
I love it. It makes it easier because there are fewer numbers to analyze. So, go home early. I guess I am wondering, though, does it make things like the University of Michigan Sentiment Survey take on renewed importance, even though it is sort of a disputed indicator of exactly what it's measuring?
No, of course, as you rightly said at the beginning, right? You try to get everything you get from the data perspective. So, for example, ADP, when you don't get the non-farm payrolls, you really watch closer. But of course, you need to take into account what kind of indicators are there. And I think, yeah, for a certain period of time, you probably can fly a bit blind from the data perspective. So you look at the markets, at diversification, as you're saying. But we have a clear view, as I said, soft patch, but then increasing. And so we would be very surprised if that's changing.
How do you deal strategically, Christian, with things like the credit line in Argentina, like this question of companies that could get caught up in the crosshairs of international disputes, as we're seeing this morning with the likes of Qualcomm in China? I mean, how do you deal with political threats that are new and that could potentially strike specific companies?
Yeah, look, the whole year was about this already, right? So there's a lot of discussion about tariffs, geopolitical risks that came this year, but so far the markets have done quite well. So I think it helps a lot to look at sectors. It helps a lot to look at companies that work globally and how they are impacted. And of course, what we have been seeing this year, what's not so much impacted to a certain extent is the AI trade. You talked about this before. So from that perspective, that's why we look at earnings. And as long as we get them, I think this trade is up and running, and that's clearly a driver for markets, especially in the US. But then on the other hand, we look at markets which probably have so far a bit of negative sentiment, and sentiment is then turning better. And talking here from Germany, we had some weakening sentiment, I think, but now the government has started to put some measures in place, and we do get more calls from clients from outside from Germany, from Asia, from the US as well. And so maybe we see a change in sentiment here, which would be positive for markets.
Christian Nolting of Deutsche Bank, thank you so much for being with us. We hope you enjoy your weekend. We were talking there about Qualcomm, and China came out this morning opening an antitrust probe of Qualcomm's auto talks deals. It just highlights how this sort of effort to try to gain leverage ahead of any kind of talks between President Trump and Xi Jinping is escalating and moving to more industries.
We're going to see tit for tat every single day until those two leaders sit down. And we saw a number of, not just Qualcomm, but a number of salvos coming out of Beijing overnight, as well as when it comes to ports and chips. So we're going to see this tit for tat until these two leaders sit down. What's interesting, what's so complicated for Qualcomm, probably why their shares are down some 3% in pre-market trading, is because they get almost half of their revenue from China. So when China goes after them, it's a really big deal.
And this is a reason why it's becoming a really fraught territory, particularly in the semiconductor space, to get involved and try to predict what the political backdrop's going to look like. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The U.S. has launched a bailout for Argentina, offering $20 billion in financing and carrying out a rare intervention to prop up the peso. Treasury Secretary Scott Bessent announced the currency swap and government purchases in a social media post. Trump's support for Argentine President Javier Milei comes ahead of this month's midterm elections in Argentina. Meanwhile, President Trump is doubling down on his threats of sweeping cuts to Democratic priorities as the U.S. government shutdown continues. Speaking at a cabinet meeting, Trump repeated his warning of cutbacks while blaming Democrats for the shutdown. Government workers and military personnel are set to miss paychecks today. And Maria Corina Machado of Venezuela has been awarded the Nobel Peace Prize for 2025. Machado winning for her work promoting democracy and decades-long struggle against authoritarianism in Venezuela. Known as Venezuela's Iron Lady, Machado has been in hiding for more than 14 months after Nicolás Maduro declared victory in the disputed 2024 elections. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, day 10 of the government shutdown.
We'll be cutting some very popular Democrat programs that aren't popular with Republicans, frankly, because that's the way it works. They wanted to do this, so we'll get a little taste of their own medicine. We have no idea who we're dealing with over there.
Ed Mills of Raymond James joining us next. This is Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It is day 10 of the government shutdown, and right now what you can see in markets is just an inability to find direction. So many crosswinds underneath that we are essentially paralyzed at 6779 on S&P 500 futures. And the Russell 2000, you're seeing a little bit of a lift, and maybe it's coming from the bond space. If you take a look at what's going on in 210s and 30s, you do see a rally led by the long end. It comes after yesterday's 30-year auction that was not necessarily a screaming buy in terms of just the concession, and yet yet, you did seem to see the internals really support demand for the longer end yields. Those yields down almost 4 basis points at 468.51. Meanwhile, the precious metal of the moment, silver, up more than 70% so far this year, up again this morning, another 2.4%. And Anne-Marie, what I find fascinating is this is a metal that actually has an industrial use well beyond just keeping in your basement and feeling that you can sleep at night.
Yeah, it's dual use. Usually when gold rises, sometimes the, was it stepkid, ugly duckling cousin, silver also rises along with it. But to your point, there actually is a use case for silver, not just in a store of value and assets. So it's also getting some love.
Yeah, almost half of the demand is coming from industrial uses. Under surveillance this morning, day 10 of the government shutdown.
We'll be cutting some very popular Democrat programs that aren't popular with Republicans, frankly, because that's the way it works. They wanted to do this, so we'll get a little taste of their own medicine. We have no idea who we're dealing with over there. Republicans have voted repeatedly to pass a clean, nonpartisan bill to reopen government. We're not going to do anything only good for health care. We're really, I think, become the party of good health care.
Here's the latest. Government workers are preparing for missed paychecks today as the shutdown enters its 10th day. Congressional leaders are still at a stalemate as President Trump threatens sweeping cuts. Bloomberg's Tyler Kendall joins us now. Tyler, do we have any sense of where the potential plates of progress could come from? Have there been any? Is there any sign of progress?
Yeah, hey, Lisa, good morning. At this point, there are no indications that either side is letting up. Republicans are really holding firm that they will not negotiate until the government reopens. Now, our understanding is there are informal bipartisan talks happening on the Hill, but that leadership is not engaged. For example, this week we got sort of an insight that there are some discussions happening about what potential structural reforms could look like for the Affordable Care Act premium subsidies, such as a potential new income limit in exchange for an extension to those tax credits. But leadership says that they're not going to talk about any of those changes until the government ultimately reopens. And pressure is definitely mounting. As you mentioned, today marks the first missed paycheck for many federal workers. And I'll point out that the Senate left town last night. They're not going to be back until Tuesday. That is one day before October 15th, when many members of the military could also potentially miss a paycheck. Now, our analysts at Bloomberg Economics say that if this shutdown extends into a third week, which at this point with the Senate out, it looks likely, the U.S. unemployment rate could jump from 4.3 to 4.7% as furloughed workers are counted as temporarily unemployed, which is just a good reminder that 750,000 federal workers are expected to be furloughed during this shutdown. And Lisa, while we are talking about data, important to point out that a person familiar tells us that the U.S. Bureau of Labor Statistics is calling back some of its employees to prepare the September CPI report that was also supposed to be out next Wednesday. At this point, it does not look likely that they will make that deadline, but it is expected to be released before the next FOMC meeting at the end of the month.
Tyler, you asked the president about troops getting paid next week. We have a number of organizations that represent the National Guard, that represent the more than 1 million currently serving active duty service members, writing to their House and Senate representatives asking for a standalone package. Is there any sight on Capitol Hill that there is going to be legislation to pay our troops?
Well, President Trump told me, Anne-Marie, that he would encourage Congress to pass a standalone bill to pay our military. He did say that he thinks that the issue will be resolved by that October 15th deadline. But at this point, House Speaker Mike Johnson is holding pretty firm that they are not going to put that up for a vote. Republicans are really trying to hold this line that they are not going to negotiate. They want Democrats to pass exactly what's in front of them, which is that clean stopgap measure that would fund the government until November 21st. Now, we have to see if the pressure mounting will continue. The House Speaker did hold a phone-in town hall yesterday on C-SPAN where he heard from many members who were urging him to pass some sort of standalone legislation. But, Anne-Marie, at this point, we haven't gotten any indications that that's going to move.
Tyler Kendall, thank you so much. We'll be speaking with you throughout the morning. Meanwhile, Ed Mills of Raymond James writing this. A short-term continuing resolution is likely, though we cannot rule out a prolonged shutdown through November. Ed joins us now for more. Ed, can you just lay it down what actually is happening, who's offering who what, and whether there is actually genuine negotiations on both sides or whether this is just all politics?
Lisa, at this point, I'd say this is mostly politics. I don't think much is being offered in either direction. And in many ways, this is the shutdown that isn't. If you're a government worker, if you're a member of the military, this is very real. This is very personal. But let's look at what else is happening in Washington, D.C. Yesterday, the Federal Reserve held a community bank deregulation summit. We have a peace deal potentially here in the Middle East. We have a Trump-Xi summit later this month. The Senate actually passed the defense authorization bill. That is almost as if there is a government shutdown that's just in the background, that we're not really focused on that. Previous government shutdowns, it was like a 24/7 news story. It was really the only thing that was going on in Washington, D.C. So to the extent that it almost feels normal, that there isn't the pressure to reopen it, there isn't the kind of all hands on deck approach here, really does push me to say, when you ask me about the timing, right now, Lisa, I'm taking the over.
Ed, though, I hear what you're saying, but if you listened to that C-SPAN call yesterday with Speaker Johnson, you had Americans around the world, especially individuals whose families are active duty service members, incredibly angry. Do you think at some point, if this lingers, they're going to be forced to make moves?
Yes, I mean, we're going to reopen, and I think that when we've asked, kind of questions, and we've gotten, kind of this, at Raymond James here, what actually forces this open? It is missed paychecks. It is an actual impact on day-to-day lives of Americans. We're starting to see slowdown at airports as TSA lines get longer, as kind of flight delays get longer. That pressure builds. We probably need to see one of the political parties make a mistake. Right now, Republicans get slightly more blame in most polls, but it is kind of not overly skewed in one direction or another. Democrats feel like they are fighting the good fight, and they feel that having a conversation about health care is important, and they feel as if they have this fight and they have a situation where kind of Americans who are on the Affordable Care Act get significant increases, that they will politically benefit from that. I go back to the 2018 elections. How did Democrats win the midterm election when Trump was in office the first time? Make it about health care. That's what Democrats are doing here. So right now, these battle lines are still being drawn. The pressure hasn't built to the point where someone feels as if it is absolutely necessary to reopen, because so much else is going on and so much bigger fights are happening here in D.C.
But Ed, just to be clear, because former Speaker Nancy Pelosi said it wasn't a clean CR, and then Minority Leader Hakeem Jeffries was on our program yesterday saying it wasn't a clean CR. What is on offer is a clean stopgap funding measure. Is that correct?
Yeah, there's some, most of it is a clean CR. It's a 7-week extension of the current budget. There were some additional things that were added on there, especially more kind of security support for kind of members of Congress and other government officials. And traditionally, Democrats have always said, if it is a clean CR, you vote for it. The Republicans have not voted in the past sometimes for those clean CRs, and Democrats have been able to message that. But Democrats are also saying, because there are some cliffs coming, especially on the subsidies for the Affordable Care Act, Obamacare, that doesn't make it clean. Right now, it's mostly a rhetorical fight. This here is kind of something that Democrats, kind of like the fact that it is mostly clean so they can talk about healthcare, rather than oftentimes we're dealing with all of the appropriations bills and we have messages across the board on what's in there on healthcare, what's there on education, what's there on defense. So I think Democrats strategically decided to do it when it was mostly clean, so that they can say it's about healthcare rather than all the other things that are part of this government budget.
How palatable is it, Ed, for people in the United States not to be receiving paychecks from the federal government at the same time that the U.S. is offering a $20 billion swap line to Argentina?
Yeah, it's politically difficult. I mean, I think that when we look back to the longest ever government shutdown, that was 35 days back in 2018. And the reason it lasted that long was the Defense Department was already funded. I think that the military members in particular are going to be something that the American people have a hard time not getting paid. What I'm watching for is there going to be something that President Trump tries to do creatively to pay even outside the appropriations process. We've already seen the president say that he's going to use Section 232 tariff money to fund WIC and SNAP benefits for women and children of economic need. Is he going to use some of that funding for the military? Is there going to be a push to kind of change the conversation here? One thing I've always noticed about President Trump is he does not stay on the defensive very much. He always goes on the offensive. Yesterday in the cabinet meeting, he was threatening Democrats about different programs that he would cut. Does he take that money and move it over to the military? Does he find a way, even if he's going to get sued, to fund the military to try to put pressure on Democrats to say that lever is not going to be the thing that gets you to reopen this? You have to come to the table and do something different if you want me to negotiate.
Ed Mills of Raymond James, thank you so much for taking the time this morning. Coming up, AJ Radajaksha of Barclays on what's driving gold's record run. Plus, Danny Berger with your morning movers. Applied Digital soaring on a new data center deal. This is Bloomberg Surveillance.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Stocks struggling to find some direction, understandably given how many different aspects are at play geopolitically, but really underpinned by the idea that we are near record highs still. So not exactly really doing too badly. 6779 on S&P futures, going nowhere on the NASDAQ. Russell 2000 seeing a little bit of a bounce up 0.2% coming alongside the move that is going on in bonds, where you do see a rally, particularly into the long end with yields down something like 4 basis points, 4.69% across the board, seeing fairly strong auctions on the 10-year and the 30-year this week. I mean, yes, a concession, but still the internal demand dynamics have been good. Meanwhile, in gold, yesterday, a pause after a huge screaming run of about 50% so far this year. Today, trying to pick it back up about 0.6% as people take a look at where they can find a haven amid geopolitical instability. 3 hours away from the cash open. Here is your Morning Movers with Danny Berger. Danny.
Hey, Lisa. Qualcomm getting hit this morning, down 2.7%. News from state regulators in China that Qualcomm is being probed over anti-monopoly charges. It bought Autotalks earlier this year. It's an auto tech company that lets cars talk to each other essentially for safety. The allegation here is potentially that they did not properly report that acquisition. So again, shares down almost 3%. Also on the move this morning is Applied Digital, up nearly a quarter, up 22%. This is a data center company, reported earnings are really strong, but within that, it also said that CoreWeave was signing one of its leases. Again, there's this really big hype around the AI trade and finding out who the winners are. Data centers, especially with Microsoft saying yesterday that there is still a data center crunch that will persist into 2026, making these companies attractive for investors this morning. Finally, things to the downside. Levi Strauss, Lisa, I know you've been talking about this morning, the fact that Levi's beat on its earnings. Not only that, but its profitability also held up and improved. The issue is the CEO saying that tariffs are starting to bite. Clearly not showing up in their margins yet, considering that they've been able to find more profitable channels and raise prices and have consumers buy it. Still, these shares have run up a lot to date, so shares falling nearly 7% this morning, Lisa.
Danny, thank you so much. I'm so glad that you really went into that, because to me it was a fascinating story, and I wonder how much this is investors just not believing they're better than expected projections considering some of the tariff headwinds.
And also, these are the tariff headwinds now, when most economists are coming on the program and they're saying a lot of companies were able to absorb more than half of the tariff impact, and next year is going to be the pass-through. Do Levi's have to even raise prices again come 2026?
Which is what we're hearing from some CFOs, with the question around whether consumers will absorb it. And in Levi's case, so far, they are doing just that. On our radar this morning, talk about political instability around the world. Japan's decades-old ruling coalition has officially collapsed. The Komeito Party ending its 26-year partnership with LDP, delivering a major blow to Sanae Takaichi's bid to become the country's first female prime minister. You are seeing just a touch of support underneath the yen, with this idea that maybe this would be the key indicator that would force the Bank of Japan to hike rates later this year, should there be a bigger sell-off, a bigger weakening in the yen. President Donald Trump announcing plans to travel to Israel for the expected release of hostages under the Gaza peace deal. The president saying he hopes to be there when the hostages return next week, and added he might address the Israeli parliament, the Knesset. The U.S., meanwhile, launching an effort to stabilize Argentina's economy. Treasury Secretary Scott Bessent announcing a $20 billion currency swap and a rare market intervention to help prop up the sharply declining Argentine peso, which really is fascinating considering, Anne-Marie, that we wondered whether he would make good on this, or whether it was just the promise of some sort of swap line that would be enough to really stave off any kind of massive weakening.
I was with the Treasury Secretary in April when he made his first trip internationally, and it was to Argentina to show this support for Milei. And I asked him, are you going to potentially do something when it comes to more of a swap line? What kind of tools on the table? And they said, no, not at this moment. Clearly, things got bad for when it comes to Argentina and the markets. And mostly that's because a lot of individuals and investors are concerned that more leftist policies might creep in if Milei doesn't succeed, which is why you have this. But you bring up the point, the political blowback at home is going to be very challenging. We saw this with text messages from the Agricultural Secretary Rollins to the Treasury Secretary. If you want to make America great again, then why are you buying pesos, especially when Argentina, it now has an avenue to sell soybean cargoes to China, and they're not buying U.S. cargoes.
And it's a pretty narrow bet that Javier Milei will win. and then will fortify some sort of stability in the peso, given that he just had a pretty big political blow in a recent local election. So how much will this swap line continue should he lose the next election later this month?
Right, and the problem they have that if they don't have Milei in Latin America, the way the Trump administration sees this, their concern is there will be a government that is more friendly when it comes to China. And the Treasury Secretary made this very clear last night. He said what they want to do in Latin America is make sure that these countries are turning to Washington, not Beijing, in times of trouble.
Yeah, so this to me is really the key question. And honestly, I want to rip up the script and go right to our next guest, Ajay Rajadaksha of Barclays, to talk about what we're seeing with respect to the international picture, how much that's edifying what we're seeing in the gold trade, but also how difficult it's been to really make some sort of international call. When you take a look like Argentina, how much does that complicate the emerging market bet? I mean, how much does that complicate understanding what the calculus is there?
It does, but it depends on the asset class you're talking about. So on the bond side, it does matter hugely. But on the equity side, remember, Lisa, you're talking about an EM equity asset class that is primarily dependent on what China does. You know, not so much Argentina, not so much Brazil, not even at this point India. You know, Indian equities have basically traded water for a while. But the Chinese equity market has been on a tear. And that, I think, is the wind beneath EM's wings for the foreseeable future. So there's noise, yes. But this is not going to upset the EM equity rally.
This is fascinating because how much is China the wind beneath the sails of gold? We've been talking all about gold as being this debasement trade, but you're not seeing it necessarily in treasury yields because you are seeing some kind of demand at the auctions. Is this really just central bank buying led by China that's fueling in a narrative that's taking on a life of its own?
It is partly central bank buying, and it started in 2022 when the West froze Russia's FX reserves. We saw an immediate pickup, you know, almost double the amount of buying in 2022 from central banks relative to 2021, and it has not let up since. Central banks have bought over 1,000 tons of gold each year starting in 2022. They used to be at barely 300 to 400 tons. But part of it is also the lack of supply. Weirdly enough, despite gold prices basically tripling in the last 5 to 6 years, the amount of supply, you know, call it geopolitical issues, call it geological issues, but the amount of supply really hasn't picked up anywhere near as much as you expect. And then that is the third thing, what I think you're referring to, which is just uneasiness about the global financial and monetary order.
When it comes to that uneasiness and the central bank buying, what's the impact of that? Because that means then they're not buying as many U.S. Treasuries.
That is actually a very clear impact. So for the first time late last year, by our estimates, the amount of FX reserves globally held moved to a majority, not a majority, but more FX reserves were held in gold and U.S. Treasuries, which is not something that has happened for a long time. You guys just said, it is true that it's not shown up in a lack of auction demand, for example. But if you look at swap spreads and where they are right now, they still seem to be screaming that on a relative basis, you know, sovereign debt is still not as much in favor as all-in yield levels would suggest.
Do you call this the world de-dollarizing?
No, I think the world, it's not so much one currency versus another. You know, because let's face it, there is not an alternative to the dollar. The renminbi is not an alternative. The euro has its own problems. The yen used to be a safe haven, but has struggled in the last 3 or 4. The Swiss franc, you know, quite frankly, is very expensive, too small. So it's not de-dollarizing as in the world moving to other currencies, but the world absolutely is worried about how much we are awash, both in fiat currencies as well as in the trillions of dollars of sovereign debt with the promise of trillions more to come. That is the uneasiness that I think investors are turning to gold for.
You know, I wonder if we're just trying to create narratives around a liquidity picture that people don't fully understand. And as the head of research at Barclays, I'm sure you track the liquidity pictures and the idea that you're having the fiscal and the monetary engines kind of firing at the same time. How much do all assets end up trading in tandem? And I know I shouldn't make too much about this, but the fact that stocks, bonds, and gold all sold off yesterday sort of hinted at this question around liquidity almost as much as some of the narratives that we're trying to put around them.
So I'm less worried about, you're talking about too much liquidity in the system.
and then being withdrawn, and how much that ends up really kind of creating the dynamic in markets well beyond any question around geopolitics or loss in U.S. exceptionalism, weakening growth beyond.
So I think yesterday, just to address that, smaller question first, was not about liquidity. Partly because, like you said, gold was so overbought. The RSI, I have just never seen it. When something goes up 50%, it's not crazy for it to take a little bit of a breather. Equities, I would say the same thing. Bonds, we are running, according to the Atlanta Fed, at a 3.8% quarter-on-quarter growth number annualized for the third quarter. That is a nominal GDP print of over 6%. At some point, bonds are supposed to start to reflect that, and I think that is what they were doing. But I do think that the Fed is laser focused on the amount of bank reserves it starts to take out of the system as it continues with QT. Now, the problem that they have is the way that there is a problem is when there is a problem. We are all guessing at what is the correct level of bank reserves. But if I had to guess, I think they would err on the side of caution, meaning leave too many reserves rather than too few. And that, again, is gold, Bitcoin, silver positive.
So is it very difficult to be bearish in anything right now, considering that that's the backdrop of liquidity?
It's hard to be bearish given the economic outlook. We've turned, notice neither of you guys has asked me a single question on tariffs, and there's a reason for that. We have turned a page on what used to matter. There's this massive AI boom, which even if it ends up with some problems along the way, this amount of spending there's names, Lisa, that I never knew. Colossus, Rainier, Stargate, these are all fantastical names, except that they are all gigantic data centers, each one of them half the size of Manhattan. And that spending is not going to go away. And while that is going on, I just see no reason for a big pullback in most asset classes.
Ajay Rajadaksha, thank you so much for being with us. Ajay Rajadaksha of Barclays joining us here in New York. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The Senate passed a bill that would require top chip makers, including NVIDIA and AMD, to ensure that U.S. companies get priority access to their products before China. The bill's path to becoming law remains unclear as the House passed its version without clarifying language on export controls. Lawmakers must now negotiate a final package. Meanwhile, a grand jury has indicted New York Attorney General Letitia James over fraud claims after calls from President Trump for her prosecution. Court filings show she was charged with bank fraud and making false statements to financial institutions. In a statement, James called the charges baseless and a weaponization of the justice system by the president. And Paramount Skydance CEO David Ellison says more content is key for his company going forward. Speaking at Bloomberg Screen Time Conference in Los Angeles, Ellison made the case for what he sees as the best path forward to keep up engagement and bring value to shareholders.
You actually need more content to yield more engagement, more movies, more television series, more to get to scale, because you need that content, you need that great storytelling to yield engagement.
Ellison also said he sees more consolidation ahead in the media space. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. I've got to say, I feel like there are a lot of choices. Just saying. Up next, aiding our allies.
Argentina is a beacon in Latin America. We do not want a failed state. We are going to use Argentina as an example. We back up our allies.
Doug Redeker of International Capital Strategies joins us next. This is Bloomberg Surveillance. case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs,
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Stocks looking for direction this morning after a pretty big week. More gains until yesterday when suddenly there was a halt, particularly led by a number of the broader stocks. A question here about tariffs and the ramifications for some of the retailers in particular. Under surveillance this morning, aiding our allies.
Argentina is a beacon in Latin America. We do not want a failed state.
So this isn't a bailout?
Sorry, it's not a bailout at all. There's no money being transferred. We are going to use Argentina as an example. We back up our allies. President Milei has done the right thing. He is also a great ally for the U.S. He'll be coming to the Oval Office next Tuesday.
Here's the latest. The U.S. finalizing a $20 billion currency swap framework with Argentina's central bank. Bloomberg's Michael McKee joins us now. Mike, can you just give us some perspective on what swap lines like this have been used for in the past, how frequently they are used by the United States?
Well, they did two things yesterday. They finalized the swap lines, and they also intervened in the currency markets to buy Argentine pesos. Those two things related but not necessarily connected. The U.S. has bought foreign currencies 3 times in the past before this Argentina one to aid Japan twice and once with the euro, but they haven't done it since 2011. The swap line is an interesting thing that we really don't know a lot of details about at this moment. Normally, swap lines are between the Federal Reserve and the central banks of other countries. The idea is to be able to provide dollars when dollars are short for companies in those countries who have to pay back dollar-denominated loans. And what they do is they send us a certain amount of money. Say Argentina would send $50 billion worth of pesos, and we would give them $50 billion. We'd hold on to the pesos, and then we would send them back, and they'd send us the dollars back when that's over. But this appears to be a treasury swap line, and the details haven't been really made public, but it's maybe analogous to what happened in the Mexican peso crisis, where the Treasury Department used the Exchange Stabilization Fund, the same thing that they used yesterday to buy pesos, to basically guarantee Mexican debt. They couldn't roll over their tesobonos, so the U.S. guaranteed that the debt would be good, and they gave some money in swaps, but not a whole lot. And then the Mexicans guaranteed that loan and the guarantees from the U.S. by pledging oil money for collateral. We don't know what Argentina's collateral would be or how this would all work, but it does look like what their goal is to get Milei through the next couple of weeks until the congressional election down there, hoping that he can stay in power and he can continue his unpopular but the kind of reforms that the administration wants to see made down there.
Michael McKee, thank you so much for that perspective. Joining us now is Doug Redeker of International Capital Strategies, who's been covering and studying Argentina for a very long time. Doug, were you surprised by what was announced yesterday?
We certainly had enough flagging that this was coming that I guess I wasn't surprised. I'm following on what Mike was just saying. This is a unique use of the Treasury's instruments under its control under the ESF, the Exchange Stabilization Fund, in that law, the law that created the ESF, says it doesn't use the word swap. It doesn't contemplate a swap. It says actually there has to be an assured means of repayment. And as Mike was just saying, we haven't heard the details, but the details are pretty important. So I guess what surprises me is that the U.S. Treasury is effectively extending a loan by another name. They're calling it a swap, but it's actually a loan to Argentina on terms that we don't know about, but which seem as if they are unique in the history of the ESF, in that we are lending U.S. Treasury dollars to Argentina in exchange for something that seems to be at best of questionable equal value. A swap is we lend you, as you guys were saying, $50 billion for $50 billion worth of pesos. The question is, how do you define what $50 billion worth of pesos really looks like? That's the key.
Doug, why isn't the IMF doing this?
Well, the IMF has extended over $50 billion, the largest program in IMF history for the last several years. They've been doing this over and over and over again. It started back 30, 40 years ago. I forget exactly how many programs, but at this point, the most recent IMF program, where the IMF extended $20 billion of additional funding to Argentina with $12 billion paid up front, was very difficult to get through the IMF executive board, because this is the classic case of throwing good money after bad. And so the U.S. put pressure on the managing director and the board, and they agreed to do it. That doesn't mean it was the wrong thing to do, but the idea was that that $12 billion was supposed to be used to boost Argentina's reserves in anticipation of exactly where we are today. And instead of doing so, the Milei regime, which has otherwise on fiscal in particular done an admirable job of trying to right the Argentina ship, they just whiffed on this one. They didn't use the dollars provided by the IMF to boost their reserves. They are, by most accounts, negative net reserves today. And so when Scott Bessent says this isn't a bailout, I have to scratch my head and say, how are you lending money without collateral to a country that is negative net reserves and viewing it as something other than a bailout? It's a bailout.
Whatever you want to call it, the olive branch that the United States is extending to Argentina, is it enough to stop the bleeding in the financial markets in Argentina?
Well, I guess we'll see, but I'm not convinced. I'm not convinced largely because Secretary Bessent's argument on Fox last night was that the peso is actually undervalued. I don't think you're going to find too many people who believe that, and I think the markets are going to test that. So whether it is the structure that they're undertaking, this 400, well, we don't know how much they intervened yesterday, but the market rumors were that the U.S. intervened as much as $400 million worth of buying pesos naked in the market. At some point, that's going to be tested by the markets. Whether it is enough to get them through the October 26th midterms or not remains to be seen. But I have a hard time thinking that the markets aren't going to be scratching their heads and taking their pencils out and trying to test this, whether it's today, tomorrow, or the next day. It's going to happen.
There is an argument, though, and this is what Treasury Secretary Scott Bessent is talking about, that the U.S. wants to increase its presence in Latin America and have a greater competition with China, which has really increased its presence there. I'm just wondering how instrumental you view Argentina in that effort in terms of what they're doing, in terms of their alliances already.
So geopolitically, this administration, President Trump, really has a spheres of influence worldview, and Western Hemisphere down through Latin America is included in that. So it's a high priority for this administration, for this president, to try and exercise American dominance or control over Latin America. And the big impediment to that, amongst other things, including the will of the people themselves, is the Chinese presence. In Argentina, Milei came in and was very strident in his rhetoric against against China. The problem is what we started with, which is China has an $18 billion swap line outstanding to Argentina. If Bessent gets what he wants, if China says, you know what, we're washing our hands of this place, we're getting out of here, then from a matter of what that $20 billion swap line is going to be used for, that's almost dollar for dollar, simply replacing the $18 billion that China would be withdrawing. So Argentina is actually no better off. So we have to be aware that it might be a little too late to simply aspire to getting China out of Latin America and out of Argentina, because at this point, they're pretty deeply in. And are we as a country really ready, willing, and able to put up that much money to say we're going to replace every dollar of investment and swap exposure that China has in Argentina so that we are the big fish in town? You know, that extends beyond Argentina. What are we going to do in other countries in the region where the governments are not so friendly to the Trump administration? This is a big thing to try and bite off.
Doug Redeker of International Capital Strategies, thank you, and look forward to continuing the conversations next week at the IMF and World Bank meetings. But this really is a key question, and when I was in Peru last year, I was struck by how significant the Chinese presence was with Xi Jinping coming to open a port. How much is the U.S. willing to really compete with that in order to get a foothold on the copper reserves, on the other types of precious minerals?
And the Treasury Secretary said that as well last night in this Fox News interview. He talked about the recent export controls that came, more of them from China, and he said, look to what potentially mineral deals we can do in Argentina. They want to bring these economies closer together, and it almost was a Draghi moment yesterday. Whatever exceptional measures needed.
Coming up next, we speak with Katie Kaminsky of Alpha Simplex, Tobin Marcus of Wolf Research, David Tinsley of Bank of America Institute, and Republican Congressman French Hill. Good morning.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
A cidade estava sitiada. Isso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm not sure that the Fed can fully ignore what's going on with inflation.
There are risks that come from the inflationary side. Cuts seem a little premature.
Short-term rates are pricing more Fed easing over the course of the next 12 months.
The risk to look for right now is, can the Fed cut rates as much as the market is presently anticipating?
I think they cut again, in part because they may not get me more official data.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance, heading into University of Michigan Sentiment Survey Friday, because next week isn't CPI week, and yesterday wasn't Jobless Thursday. And why not? Well, the U.S. government is shut down for the 10th straight day, with federal workers starting to not receive paychecks. And traders are reeling with a slew of international political risks, given that the biggest headlines probably are not coming in markets, because guess what? There is no data.
There's no data. We're still in this data desert. The government is still shut down. The one positive signal from Washington, D.C. is the White House has decided to deem some individuals at the BLS essential. They are going to start collecting the inflation data that we should then have at the end of the month. It'll be delayed, but we will get the data. In the meantime, everyone is grappling with other forms of data we can use. And you've been great on this, Lisa, in terms of corporate America. What are they telling us right now about the health of the U.S. economy and how resilient this consumer is?
So yesterday we got Delta. Incredible read of the U.S. consumer, and it pointed to real resilience, a real strength, not only at the front of the cabin, but also in the economy seats as well. A bit weaker there, I suppose. Levi's, though, and we keep pointing to that because we haven't talked about tariffs. Ajay Rajadaksha of Barclays pointed out we're not asking about tariffs, and yet Levi's said they're going to see a bigger than expected impact on the rest of the world, even outside of China, something like 20% in terms of the cost increase.
And how many more executives are actually going to come out and say it so bluntly? What's happening? Quote, we have started feeling the impact of tariffs. Remember months ago when Amazon wanted to put the tariff impact on the website? And then there was a huge drama between Jeff Bezos and President Trump, and there was calls going on. The Levi's CEO is saying we're starting to feel the impact. But a lot of analysts have come on this program and saying, well, for the most part, companies have been eating it. What kind of impact can we see in 2026? How difficult is that going to be for the Fed?
And Levi's gave a sense of what impact they were seeing in terms of elasticity or consumer response to increased prices. And frankly, they're absorbing them. And that, to me, is going to be a question for the Federal Reserve. Meanwhile, market's not doing much this morning, which is really telling given the fact that everybody's gone home. John's been out today because why should he be here since it's University of Michigan Sentiment Survey Friday?
He's answering the call.
And we know, yeah, he's answering the call. We know how he feels about University of Michigan Sentiment Survey. Up just a touch in terms of futures, up about less than 0.1%. You are seeing a little bit of dollar weakness, but really a dollar strengthening underfoot that has been a real sea change from what we had seen for the rest of the year. And 10-year yields lower by about 3 basis points, 4.10, 4.11 round up. Right now, coming up this hour, Katie Kaminsky of Alpha Simplex with Wall Street pressing a pause on the latest record rally. Tobin Marcus of Wolfe Research as President Trump and U.S. troops head over to Israel. And David Tinsley of Bank of America Institute with a consumer spending surge. We begin this hour with futures struggling for direction with stocks hovering around record levels. Katie Kaminsky of Alpha Simplex are writing this. The rally has been somewhat broad with small cap ahead of big tech. Despite this, there are still concerns about the strength of the AI theme. And Katie joins us now for more. Katie, good morning.
Good morning.
So you're trying to find a trend. Is there any trend in what we're looking at, which right now feels just incredibly paralyzed?
Well, I think the interesting part is the only trend is all systems go. Equities have continued to move. We have been talking a lot about gold this week. I know it reverted yesterday, but really it's this lots of headlines, but nothing moving the markets. Government shutdown, everything is good and, It's kind of confusing to me sometimes.
Well, yeah, I think for all of us, I mean, when we take a look at how sort of bombastic some of the headlines are, and then you take a look at just sort of this quiescence in markets, I am wondering, one of the big movers has been the dollar. And we will get to gold in a second, but the dollar really has seen a strengthening, which has questioned or threatened some of the people who have big short positions on the currency. Do you think that that could be, based on your strategic research, that could be the beginning of something that really feels like a dollar strengthening rally?
Well, I think it's definitely possible, but we also have to remember that we have rate cuts on the horizon. So that's definitely going to be against the dollar coming up. But you have seen so much pressure on the dollar this year that there's a lot of extended positioning. And it's really moved so far that I think it's moved out of a range that people might be comfortable with. So that's why you're definitely seeing that potential pop up in the dollar that could continue, especially if stocks were to revert a little bit.
Is it also because of the timing? You know, political paralysis in France, you have an implosion of a 26-year tie-up in terms of the coalition government in Japan. So what else do you do if, you know, you've already done too much in gold? Maybe it's time now to recalibrate what's going on with the U.S. dollar?
This is a really good point because I've been getting a lot of interesting questions about gold. People have been going into gold with this idea that there's no real safe haven to look for. And maybe at some point, those are getting extended, and they're starting to think the dollar is actually looking like it's still somewhat of a safe haven, especially if we think that the news and headline risk has kind of gone past us, and the dollar is still kind of that strong currency that people see as that safe haven.
But also clients asking you at a time when we are in this data desert, and we actually don't know, hopefully the end of the month, we really don't have an exact pinpoint time frame and where we're going to get the gold standard economic data out of the BLS.
Well, this is a good question because I think in the absence of data, people seem to be perfectly happy, which is strange.
Ignorance is bliss vibes?
I guess so. I mean, you'd think that people would be reacting. We don't know what's going on, what this data is going to be. But instead, the markets are just still so focused on AI is great for the long term. The U.S. growth is still strong. And I just think it's going to take a couple of interesting data points to kind of change that narrative.
Do you think that there is any evidence that that narrative should be different?
Right now, there isn't. I mean, that's what I've been looking for. And I think the interesting part is more going to be once we have the situation where growth is strong and we have a potential for overstimulation, that, you know, we're in a situation where growth looks good, earnings look good, yet if we start cutting rates, that's a potential risk that I'm thinking about and seeing, is that then you could see issues with treasuries. So demand for treasuries, potential steepening in the yield curve, which we haven't seen yet, but we did see last month. And you see that gold position is the only indication that people are a little worried about maybe this is full throttle. Maybe we need to pull back.
I was reading a research paper yesterday saying that that whole idea of the dollar devaluation trade as being represented by the gold is really challenged by what we're seeing in the yield space, the fact that we are seeing demand at the long end of the yield curve, and you haven't seen that kind of sell-off that you would expect. I mean, how surprising has that been to you?
It's been very surprising because, you know, in this particular environment, you've seen almost no signal in fixed income in terms of trends. It's been sort of back and forth in terms of, are we going to eventually see steepening, then we see flattening? So I think we're going to need some sort of catalyst and some sort of realization. So things like CPI are very important to understand that narrative, and we're not going to know what that is. So that means that surprise or potential obstacle for bonds may just be delayed, which could actually make it more extreme.
It's been confusing, especially as we talk about the AI theme and we talk about electricity costs. We talk about the likes of Levi. I mean, if you look at the anecdotes, you can point to a whole different a group of nodes of inflation, whether it's Levi's increasing prices on jeans that we saw and people actually absorbing them. The only argument here is housing. And that, I guess, is sort of the question of whether housing and sort of the lack of a rebound there can provide a tailwind to the treasury market in a way that single-handedly upholds it. I mean, how much are you looking at indicators like that, much more than you have in the past?
Oh, I think that's an important point because I always remember that inflation is the greatest enemy of bonds, right? And so if we start to see more data, especially in more idiosyncratic areas, it's just, I mean, you highlighted this perfectly. It's in some areas, but not in others. That means that it's not just a broad-based inflation effect, and it's also something we haven't experienced before. So this tariff cutting rates, overstimulating the economy, we don't know where that inflation is going to come out. And inflation is very insidious. It can come in some places at one point and then not be observable until later in another sector of the economy. So it makes looking at multiple data sources like housing or retail even more important. So not just the inflation number itself, but drilling that down.
The Fed chair has talked about the fact that basically he's now re-anchored the Fed to the bias, to the labor market, and almost said you can look through these inflation prints. Is that going to haunt them in 2026?
It's quite possible, because I think inflation is a very insidious force, and it will definitely show up where it hurts most, which is the bond market. That's where you're going to see that impact. I do think there's been, there's always a delay between how you see the reaction and the response with inflation. So it's also hard to tell at this point, but it's definitely a risk.
Could it be a place where the Fed start considering hiking interest rates, even though politically we know that there is a move to make a Fed that's more dovish?
I think that's a very low probability event, just given the trajectory of sentiment with the Fed and all these questions about Fed independence. But, should we move to a point where, let's say, growth continues to be strong, the markets are still moving strongly, rates go down, we have some overstimulation, then a pop-up inflation, they're going to be in a situation where they have to answer to that. And most people do not like inflation because you feel it every day.
So for now, it just sounds like you put it all together. Your highest conviction is be long because there's nothing else to be?
I'd say yes.
Katie Kaminsky of Alpha Simplex Group, thank you so much. Really appreciate your time. And a lot of people seem to be saying, stay long until it becomes a bubble and then get out. But we're not there just yet. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. French President Emmanuel Macron is expected to pick a new prime minister by tonight, following the resignation of Sébastien Lecornu earlier this week. France's caretaker finance minister Roland Lescure says the country is on course to meet its budget promises to the European Union, even after outgoing Lecornu indicated there will be less fiscal consolidation next year than previously planned. Meanwhile, Israel's security cabinet and the negotiating chief for Hamas signed an agreement to end their 2-year-long war. Iran-backed Hamas is set to return all of the remaining hostages held in Gaza, and in return, Israel is due to release almost all jailed Palestinians, plus allow a ramp-up of aid to Gaza through United Nations agencies and other international bodies. And Microsoft's data center crunch will continue into the new year as shortages of physical space and servers persist. Sources telling us here at Bloomberg, new subscriptions for Azure Cloud Service are restricted in some crucial server farm hubs. A lack of service to rent out to customers has been a recurring concern for cloud providers. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. And it's the reason why they say maybe it's better to overinvest than not invest enough, even if you end up overpaying. Up next, peace in the Middle East.
Peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. I'm going to try and make a trip over. We're going to try and get over there.
Tobin Marcus of Wolf Research joining us next. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Markets looking for something to chew on without any official data sources. Maybe they'll chew on University of Michigan later this morning. Maybe that's why John called out. What we're looking at right now is a rally because futures tend to do that. This morning, we're seeing about a 0.1% gain on the S&P and NASDAQ, up 0.3 on the Russell. Some headlines coming out of CNBC reporting that the race to become the next Fed chair is now down to 5 from 11. The candidates are ones that we know well: Fed Vice Chair for Supervision Michelle Bowman, Fed Governor Christopher Waller, Kevin Hassett, who of course is the director of the National Economic Council, and then Rick Rieder over at BlackRock is also one of those selected, with Kevin Warsh as well, a former Fed governor.
So the 2 names that stand out to me is Rick Rieder, because he also got a pretty significant shout out in the Financial Times report from people close to the matter that have been part of these discussions and the interviews the Treasury Secretary is holding, and Mickey Bowman. Because Mickey Bowman has come to the Fed and really talked about wanting to get back to the basics, not what the Treasury Secretary would call mission creep. Also, the focus she has on regional banks. This has been an administration that continuously says Wall Street has done well for decades. We want to focus on Main Street. That is someone who brings regional bank experience and could be an interesting pick, because we already know what's going on with the Kevins and Governor Waller.
Yeah, I do think it's interesting to have Rick Rieder there. Mickey Bowman has been on the Fed and definitely has been a stalwart behind a view that the administration seems to agree with. It's interesting that we haven't gotten one already, because a Fed chair nominee, given the fact these names have been in the mix for a long time.
Right. How has the president not just blurted out who he's decided on? But I find that this administration no longer has the urgency to talk about the Fed chair the way they did over the summer, because guess what? Jay Powell's cutting interest rates.
Meanwhile, under surveillance this morning, peace in the Middle East.
We reached a momentous breakthrough in the Middle East, something that people said was never going to be done. We ended the war in Gaza and really, on a much bigger basis, created peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. And that'll be a day of joy. I'm going to try and make a trip over. We're going to try and get over there.
Here's the latest. President Trump heading to the Middle East on Sunday as Israel and Hamas agree to end the 2-year war in Gaza. Bloomberg's Tyler Kendall joins us now. Tyler, do we have a sense of what President Trump wants to do when he goes over to Israel, and how fragile the ceasefire still is?
Yeah, Haley. So while we are still waiting on official confirmation from the White House on President Trump's itinerary, but he himself has said that he will visit Israel and that he's been invited to speak in front of the Knesset. He's also previously suggested that he could make a stop in Egypt, where we know that this final round of negotiations took place. Now, the Israeli government approved this ceasefire agreement overnight, and it's actually our understanding that President Trump's special envoy, Steve Witkoff, alongside his son-in-law, Jared Kushner, actually attended the Israeli cabinet meeting in what was considered to be a sign that this White House was very determined to see this over the finish line. But as you mentioned, there are still a lot of big questions here, including will the ceasefire hold? What will that future reconstruction of Gaza look like, as well as what is going to happen when it comes to that demand that Hamas disarm? Still, the administration is leaning heavily on regional partners. We heard President Trump yesterday in his cabinet meeting thank these countries by name, saying Qatar, Egypt, as well as Turkey have really played an instrumental role. And we know know they're going to play a role in the security forces that are going to be on the ground as well, because Lisa, yesterday, a senior administration official confirmed that 200 U.S. troops will be traveling into Israel. They're not expected to go into Gaza, but rather set up this coordination center where they will help to enforce and oversee security as well as the distribution of humanitarian aid, and they will also be supplemented by these other regional forces there on the ground.
Bloomberg's Tyler Kendall, great work as always. Thank you so much for being with us. Joining us now is Tobin Marcus of Wolf Research. And Tobin, some of these international outreaches come at a rather awkward time domestically, considering that those troops going over with President Trump may not get a paycheck in the next couple of weeks. I'm just wondering how this is being read domestically, even as it is a great victory when it comes to peace, at least for now, in the Middle East.
Yeah, so certainly the peace deal is a genuine breakthrough. I think to the extent that it holds, it's a huge accomplishment and is going to play well domestically as well. I think the questions domestically are many of the same ones that Tyler just flagged. Are we actually going to see Hamas disarm, which they have not really committed to doing, even though they're on board with the earlier phases of the agreement in terms of hostage exchanges and so forth? And if Hamas does not disarm, does not quote unquote decommission their weapons in the language of the peace deal, will Israel really be willing to indefinitely suspend operations absent that step? So I think those longer term questions are still there, but for now, a very welcome breakthrough.
Yesterday, Caroline Leavitt was quote tweeting Fox News, which said the U.S. troops are headed to Israel to support the historic peace deal. And she said this is not true and taken out of context, that the 200 U.S. personnel will be tasked with monitoring the peace agreement. Is the administration going to face some blowback given the fact that President Trump has promised not to entangle the U.S. in international conflicts?
Yeah, I don't think that there's going to be a sort of major long-term U.S. peacekeeping role here. Again, there's lots of elements of this are still up in the air, but I think that the political resistance to, indefinitely having U.S. troops on the ground in a sort of enforcement or operational role is going to be sufficiently high that I don't think President Trump will want to do it. He's always resisted putting boots on the ground to a meaningful extent, even in situations where he's been happy to conduct air operations during both his first term and his second. So I think he's going to be very wary of extending the U.S. directly into this.
When it comes to active duty service members, including those 200 U.S. personnel that are headed to Israel, will they get paid next week, Tobin?
Increasingly, it seems like the answer is no, with the Senate having decided yesterday that they're going home for the long weekend after the vote that they took yesterday on the National Defense Authorization Act. There's not really sort of realistic story you can tell about Congress passing something that gets the government reopened in time to get those troops paid. So I think the only question about whether or not they'll be able to avoid missing that paycheck is if the administration can work out something using mandatory funding from the big, beautiful bill to pay them rather than the normal discretionary appropriations. That's been in conversation throughout the shutdown. There's been resistance to that on the Hill. We haven't seen any plan to that effect from the administration, so I wouldn't count on that happening, but I think that's the only remaining possibility, since it sure does look like the shutdown is going to extend past the point that would preclude those paychecks.
Will that be a pressure point for the government to reopen?
It's been one of the dates that a lot of people in Washington have circled, going back to September when we were going into the shutdown, and even more so since it started this October 15th military pay date. At this point, it looks like something that's going to apply pressure after it happens. People will start hearing those complaints. Presumably members of Congress will start getting calls from their constituents with a very wide footprint of active duty service members across states and congressional districts, rather than something that they're sort of afraid to do in advance. I think one of the interesting political elements of this shutdown has been that the instigating party is not really getting the lion's share of the blame when you look at the polling. It's been somewhat surprising that, most polls have said the Republicans have sort of the plurality of the blame, although there's plenty to go around, even though Democrats are the ones who are making the policy demand. And so I think that creates a situation where even as you look at these consequences, like missed paychecks, like air traffic disruptions, if neither side really feels like they're at fault or they're going to be blamed for it, it doesn't create the same urgency. So it's not like Democrats or Republicans are looking at that missed payday and thinking we can't possibly do that because they're hoping the other side will get the blame. So it does look like we're stretching on a little while longer. I'm still optimistic that we'll get a solution next week, but the odds of an even longer shutdown do seem to be rising.
Tobin, to that point, yes, the Democrats might not be getting the bulk of the blame for now. Do they have a cohesive message, though, other than we just want to fight?
I mean, their message is healthcare, which is sort of the one issue that they still know how to message about. The moment when the party in general has been in shambles, the one thing they still have the muscle memory for is attacking Republicans for cutting healthcare, and that's really the message that they've set up here. So, and I think we have seen, as we expected going into the shutdown, that there would be increasing nervousness across, various parts of the Republican Party about the rise in premiums as these Affordable Care Act subsidies expire. And as we go into open enrollment, that the political reality of that has gotten more concrete for a lot of the Republicans who are staring it down. And so we've gotten these interesting moves like conservative firebrand Marjorie Taylor Greene sort of going out publicly and breaking with leadership and saying, we really need to fix this. And leadership didn't really tell us that this was coming.
But Tobin, isn't this a policy error on the Democratic side? These enhanced subsidies have an expiration date based off the policy and the law they wrote.
Well, sure. I mean, this is a time-honored move, including both the 2017 tax bill and the tax bill that they just passed that the Republicans also did, which is figuring that you'll be able to get an extension of your more popular policies because no one's going to be willing to let them expire. So that was a Democratic calculation in 2022. These were last extended in the Inflation Reduction Act, and the limiting factor at that point was what Joe Manchin would be willing to vote for. They got him to go along with 3 years of these subsidies. They couldn't get him to go along with making them permanent. And so here we are. So, at some level, it's an error. But if they manage to get some deal on this, then it will have played out largely as they kind of hoped back in 2022, the same way that Republicans, successfully calculated in 2017 that they were going to be able to get these nominally temporary tax cuts extended when they came up for expiration.
Tobin Marcus, Wolf Research, thank you so much. And right now, we are still in that data desert as a result of the government shutdown. Although, to your point, they are bringing people back from the BLS in order to get that CPI print to be able to calculate Social Security checks at the end of the month.
And if they are bringing people back, I wonder if they will deem essential the labor market report before the Fed meets if they're still in a government shutdown and potentially release it, because that's ready to go. We're just waiting for someone to push the button.
Yeah, and in the meantime, everyone in the market is taking time off, evidently, because right now we're seeing a pretty quiet start to the last trading day of the week. Coming up next is going to be David Tinsley of Bank of America Institute to really get a check on consumer spending. Guess what? It's staying solid. Plus, Danny Berger with your morning movers. Stellantis shares higher as shipments bounce back in the third quarter. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Futures have a lift after some time this morning, looking up a little bit as you do see a rally into the bond space. And as a number of people say, look, how much can you get bearish amid the cash machine that is artificial intelligence? S&P and NASDAQ futures both up about 1/10%. Russell 2000 really seeing the outperformance, up about 1/3% because of the bond space and the rally that we're seeing there. If you take a look at 2s, 10s, and 30s, you can see the long end driving the rally. 30-year bond yields now 4.68%, down about 3 basis points after yesterday's auction that was better than expected. But across the curve, a rally in. 2 hours away from the cash open, here are your morning movers with Danny Berger. Danny.
Hey, Lisa, a tough morning for Qualcomm. Shares are down 1 1/3%. It is off the lows that we saw pre-market, but this was after Chinese authorities saying that they were probing Qualcomm over anti-monopoly measures. It has to do with a company they acquired called AutoTalks. It does auto technology, allows cars to talk to each other, and concerns that they didn't properly report that acquisition. So again, Qualcomm shares are off this morning. Elsewhere in this market, we see Applied Digital up nearly 25%, a huge move. As you were saying, Lisa, can you really be bearish on this when you have this opportunity of AI? This is a data center company, really solid earnings, and they said that they had a new lease agreement for CoreWeave. So you're involved in this digital economy. Investors snap up shares. Again, shares almost up by 1/4. Finally, this morning to the upside, Stellantis up 1.1%. Its deliveries rose 13%, and that was led by North America. Those deliveries up 35%. And it wasn't just small cars they were buying, it was big cars. Apparently the reintroduction of their V8 Ram truck, whatever that is. I'm in New York, so I don't know trucks, but apparently that was wildly popular. So those positive sales sending shares higher, Lisa.
Thank you so much, Danny. Appreciate that. On our radar this morning, the U.S. finalizing a $20 billion currency swap framework with Argentina's central bank. The Treasury directly purchasing pesos to help stabilize the exchange rate and prop up Argentinian President Javier Milei, who faces re-election later this month. Meanwhile, the Senate passing legislation limiting AI chip exports to China. The move requires NVIDIA and AMD to give U.S. companies priority access to their products before Beijing. The measure now goes to the House for approval. Meanwhile, China, for its measure, has come out, Anne-Marie, and talked about increasing restrictions on rare earths metals, which is creating ire around the world. But again, how much is this leverage and how much is this actually policy?
Tons of leverage. China has used this before, at least when it comes to rare earths, and it worked at the negotiating table. That's when we saw that U-turn when it comes to the H20 chips and whether or not they can go to China or not. But it's not even just rare earths. We are talking about constant tit for tat every single day. This morning, Qualcomm is now under investigation in China. Also, they're slapping levies on ships that come into their port that are American flagged. There's going to be a tit for tat between Beijing and Washington to the last moment before Xi Jinping and Trump sit down And then what's going to happen is slowly these are going to unwind. That's the, I guess, for a lot of people in the market, best case scenario.
It does feel like this is the U.S. and China fighting. It's like mommy and daddy are fighting and the rest of the world is sort of feeling the impact of it. I found this fascinating, the fact that the German's finance minister came out this morning and was talking about how China's expansion of export controls to production facilities of rare earth minerals outside of China is a huge concern. And you take a look at their auto manufacturing sector, and it's really obvious why this is a big issue for them.
China is decimating the German manufacturing base and hollowing out what is going on in Europe in terms of their industries. And right now, Germany sounds a lot like the United States. German companies must reduce dependence on critical raw materials, including rare earths. And basically, they want to reallocate some of that work and do it in Europe. Well, that's exactly what this administration wants to do in the United States. And that's exactly what the Trump administration and even the Biden administration was pushing Europe to do as well. Make sure you're alongside what the U.S. is doing when it comes to competition with China.
Yeah, and meanwhile, people are looking at how the U.S. economy is actually doing, and guess what? We don't know, and why not? Because we're in a data desert. Meanwhile, the BLS announcing that it will release a September CPI report by the end of this month. The agency recalling staff to prepare the key inflation data needed to calculate next year's Social Security checks. Will this end up being the predecessor of some sort of reemergence of official data? We shall see. Nonetheless, maybe we can rely on something more than the University of Michigan Sentiment Survey. Turning to the consumer, household spending rising for 4 months straight, despite tariff pressures, according to the Bank of America Consumer Checkpoint Survey. Joining us now is David Tinsley of Bank of America Institute. David, thank you so much for being with us. The report was fascinating because it shows an increase in spending, but not necessarily an increase in incomes or an increase in the paycheck. How do you reconcile these two realities?
Well, I think on one hand, you've got consumers still spending in the overall US economy. You know, as you say, up 0.2, that was the last 4 months have seen a rise. So the overall consumer looks solid. But I think when we delve into the data, we see these divergences between higher income consumers and lower income consumers. So higher income consumers, their spending growth up 2.6% year over year. Lower income consumers up about 0.6 year over year. So there's this quite wide gap, and that's also reflected in wages and salaries as well.
So this is important, David. Are you basically saying that to the extent that the consumer resilience story is one that everybody keeps talking on and betting on in markets, it is one continuing to be resilience of the upper income consumer and not necessarily an overall read of the health of the U.S. economy?
Well, you know, I guess as a share of overall US consumer spending, the higher and middle US consumers make up a disproportionate share of that spend. So their spending kind of drives the economy, if you like. And higher income consumers, in a way, they have two clubs in their bag at the moment. They've got wage growth at 4% year over year. So that's real wage growth because inflation is below that. But they're also benefiting from these wealth effects from the higher stock market, for example, because wealth is so skewed towards that higher income cohort that they're really the guys that are benefiting from the rise in the S&P as well. So lower income consumers, weaker wage growth. It did tick up a little bit in the September data, 1.4% year over year, but quite a bit weaker. And of course, they don't really benefit from the, at least directly, from the S&P rallies or even housing wealth to a large extent. So I think, you know, they're in a tighter spot.
When it comes to spending groups, are you also seeing a divergence in terms of generations?
Well, yeah, this is quite interesting. This isn't such a new thing, but really over the last couple of years, in our data, the older generations, the baby boomers, traditionalists, they've been driving the spending growth. And actually, you see that reflected in some of the things that have been rising, like cruise line spending. Younger generations, so obviously millennials, Gen Z, but even Gen X to some extent, are in a much weaker spot in terms of their spending growth. I mean, why is that? Well, I guess for the young, you know, you have seen some labour market pressures in things like graduate unemployment rising above overall US unemployment. As you graduate at the moment, it's a little bit tougher to get a position. For Gen X, you know, increasingly they're in this position where they've got, They're potentially going towards retirement. They've got to save more. They might have older relatives. They might still have the kids at home. So they've got quite a lot of pressures on them, I think.
And this has impacted, of course, as well, housing equity, has it not?
Yeah, you know, I mean, there's a lot of equity in homes. It's not increasing that much because obviously the housing market is pretty stagnant. So consumers could, in principle, access that equity that's been built up over time through things like home equity lines of credit, HELOCs. What we look at in our data, which is the HELOC utilisation rate, so people who've got this facility set up, how much they're tapping it, it is picking up, but it's picking up relatively gradually. So I think that's not a major driver for the overall consumer story. But for some, as the Fed cuts and those rates become more desirable, it's going to help.
So, David, we're in a data vacuum right now in terms of the official government numbers that should be coming out. We should be heading into CPI Tuesday next week. Instead, we're talking about University of Michigan Consumer Sentiment Survey Friday. How much do you see some sort of resilience that we should be observing in the data, right? What would we be getting if we were getting that official government data?
Well, you know, I think... I mean, we do this every month, rain or shine. So it's has increased focus right now, of course, because of the dearth of official data. I mean, I think what you'd see in things like the retail sales print is retail might be a little bit soft in September, but the overall consumer picture is pretty healthy. In CPI, I mean, we don't have too much to say on that in our report, but we do notice that when you look at transactions versus dollars spent in some categories of retail that are quite tariff sensitive, if you like, there is a divergence. So there is some tariff pressure probably coming through in the bottom line, but it's, you know, it's gradual and it's relatively modest.
So essentially not necessarily contradicting anything that we're seeing in the corporate earnings or any of the other stories that speak to this consumer resilience for the most part. David Tinsley of Bank of America Institute, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here are your Bloomberg briefs with Yahaira Anand. Yahaira.
Hi, Lisa. China will begin charging special fees on American ships docking at its ports starting on Tuesday. The move comes in retaliation to a U.S. plan that charges port fees on Chinese ships. It marks a significant escalation in the months-long trade dispute and comes ahead of high-stakes meetings between the country's leaders later this month. Meanwhile, Amazon is rolling out an updated version of its main artificial intelligence tool for business. It says Quick Suite is a chatbot and set of AI agents that can analyze sales data, produce reports, or summarize web content. It's the company's latest effort to grab a slice of the market for software designed to automate and speed up office work. And Treasury Secretary Scott Bessent has narrowed down the list of candidates to replace Fed Chair Jay Powell from 11 to just 5. CNBC is reporting the following names made the list: Michelle Bowman, Chris Waller, Kevin Hassett, Kevin Warsh, and Rick Reeder. Trump's pick could be nominated to the Fed, though not necessarily as chair, by January. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. And Chris Waller, who is speaking in a television interview, said that there is nothing political that he experienced in an interview for Fed chair, and that the Fed can use alternative data during the government shutdown. Are they calling
ADP, they're looking at open table bookings maybe. I'm sure they're looking at everything they can get their hands on, corporate America and the likes. Maybe it hasn't been political in these interviews. I will say, though, based on what I have heard about how this has gone when you walk into the Oval with the president, the number one question is, will you cut interest rates?
And that speaks to what he said, which is that the U.S. labor market is not doing great. Up next, standoff on Capitol Hill.
We will evaluate in good faith any bipartisan proposal that is sent over to us from the Senate if it decisively addresses the Republican health care crisis.
Arkansas Congressman Fred Hill joins us next. This is Bloomberg Surveillance.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Building on what already has been a record rally, futures turning up as the session grows older, with bond markets still also rallying. What you are seeing is about a tenth of a percent increase on S&P futures. The dollar giving back a little bit after a pretty strong week, a reversal of what we had seen for the earlier part of this year, and a rally into bond markets. 10-year yields now lower by 4 basis points, 4.10. Just amazing to see how stable it has been over there, especially given the fact that the government has been closed for 10 days, and now we're looking at this data desert that leaves people spinning their wheels. Under surveillance this morning, standoff on Capitol Hill.
We will evaluate in good faith any bipartisan proposal that is sent over to us from the Senate. If it decisively addresses the Republican health care crisis, it's got to be meaningful. It's got to actually improve the lives of the American people. But unlike Republicans, we are actually willing to sit down and evaluate in good faith anything that could advance the ball here.
Here's the latest. The partisan stalemate is dragging on in Washington, D.C., with President Trump threatening cuts to Democratic programs. Some federal workers are preparing for missed paychecks today as the shutdown continues for a 10th day. Arkansas Congressman French Hill joins us now. Congressman, thank you so much for being with us. Is there any progress being made? Is there a good faith effort to be getting in the room and talking about some of the details?
Well, good morning. It's nice to be with you. I think senators are certainly having conversations about what they'd be willing to do in the appropriations process after the government reopens. This is the issue. The House passed a clean, bipartisan, continuing resolution to have all of government open. And just yesterday, Chuck Schumer put a sign up saying, we're getting stronger every day. Well, you know who's not getting stronger? People dependent on the flood insurance program who are concerned about storms or floods, people who are working in the military who know next week they get their last paycheck, people who are dependent on grant programs from the federal government to keep state child care programs open. That's who's not getting stronger every day. And so I would just simply say all the Senate has to do is pass the continuing resolution and keep the appropriations process going. So the answer to your question is yes, senators are having conversations about what they want to do in fiscal 26 spending, including on health care.
Chairman Hill, you just said the active service duty service members, the military members, will get their last paycheck next week. Is it your understanding they will get paid next week? Because I think there's still been a question mark about that.
Well, I think that's the last paycheck that I'm aware of is the 15th, and maybe it's not. But either way, This is why I declined my pay during this whole period, as I have in previous shutdowns. I don't think members of Congress, particularly in the Senate, should be paid while federal workers are furloughed, and some federal workers may well lose their job, when the simplest thing to do, Anne Marie, is to get this government back open. We were in the middle of discussing all of the spending for fiscal 26. The Senate had passed 3 bills across the Senate floor. We had passed 4 bills across the House floor. And Susan Collins and Tom Cole have that process underway. And Schumer, I think, for internal Democratic political purposes, chose to pick a fight with Trump and try to make a name for himself once again. So the Schumer shutdown starts in his office.
Meanwhile, we do see the executive branch continuing along on a number of foreign policy issues, including Argentina. I'd love to get your thoughts on this $20 billion swap line. If they are using the ESF, isn't that taxpayer dollars going to Buenos Aires?
Over many, many years since the 1930s, the U.S. Treasury has used the Exchange Stabilization Fund when they think it's in American interest for geopolitical reasons, for global international finance stability reasons, by both political parties. Treasury Secretary Bessent's first trip as Treasury Secretary was to meet the leadership at the Malay government in Buenos Aires. I visited Argentina in August to assess the IMF program, assess their progress. For the first time of trying to return Argentina back to a market economy that people can be benefited from by low inflation, lifting kids out of poverty, created a private sector, dropping currency controls. So I think the Malay government is on the right track, and I think Secretary Bessent is trying to carefully and prudently see how they can encourage that success. If they're successful, they will rival the stories in Taiwan or Singapore or the Asian tigers, and they will reverse the curse of 150 years of mismanagement in finance in Buenos Aires.
But Chair Hill, I was with the Treasury Secretary when he went to Argentina in April, his first international trip. This is because of the midterm elections coming up, not some geopolitical issue.
I disagree completely with you. I understand that President Milei is having national elections in Buenos Aires on October 26th. That's true, and it's important that he keep the momentum going because they need legislative support for the reforms that they've made. But just in the first few months of his leadership, he's made substantial macroeconomic reforms that have improved the outcome, and individual citizens have been improved. So it's more than that. Argentina is an important strategic partner to the United States in the Southern Hemisphere for national security purposes, for shipping purposes, for global open navigation purposes. So it's a much bigger issue than just the fact that they have domestic elections coming up.
Congressman, the market is shrugging off all of what's going on, whether it's geopolitically or whether it's the government shutdown, and they're actually looking more to measures that you've put forward, including some of the deregulation of banks, including some of what we've seen with respect to easing some of the ability for tie-ups in the financial sector. As someone who has been a part of the financial sector in the small banking area, as well as who's been really a leader in this particular space, how much more do you see this continuing? Are you encouraged by what you're seeing? What kind of consolidation are you hoping for?
Well, it's not about consolidation. It's about right-sizing the role of government supervision and tailoring bank regulations. This began under the first Trump administration when we passed a bipartisan bill that was signed into law by President Trump back in 2018. And in that effort, we wanted to tailor regulation and supervision of our financial institutions based on their complexity, not just simply based on size. And that's been a theme that we've had for my first 9 months of leading the Financial Services Committee, as we want tailoring both in capital markets and in commercial banking so that we encourage banks to be able to stay successful, have the capital they need to lend to customers, whether they're building new homes or starting new businesses. And that had gotten atrophied under the leadership by the Joe Biden Fed. It was too bureaucratic, too paper intensive, and that's the focus that we've taken.
How much are you watching what's going on in financial markets, the unprecedented run in things like Bitcoin, the mergers and acquisitions, the leveraged buyouts that are starting to come back? Is starting to worry that maybe things will begin to get a little too far? Is that something that is in your purview in any way?
Well, I do think there is a return of animal spirits in the market. You see that in the equity and bond market spreads. You certainly see it in the number of initial public offerings that we've had, the largest in probably about 5 years. And so there are elements of that, and you've seen a return to some merger and acquisition activity in some industries. All of that is true. It's not something that I worry about instinctively that it's happening, but can it be overdone? Certainly, and that's the nature of markets. We want a regulatory and supervisory system, both at the Securities and Exchange Commission and in the bank supervisors, that makes sense, that's focused on material financial risk, focused on information that investors need, focus our CEOs and boards of directors at banks on material safety and soundness issues, and not be distracted by, tertiary topics like, is making this loan going to have an impact on climate risk?
Arkansas Congressman French Hill, thank you so much for being with us this morning, and good luck as the negotiations do continue. Really interesting to see kind of these diverging issues, the idea of markets that see animal spirits at the same time that you see a real kind of conflagration of desires down in Washington, D.C.
Oh, yeah. The divergence is on full display. And also what we see is going on in the equity market is fueled by AI demand. At some point, that is going to become incredibly difficult politically. Electricity demand, the price is already skyrocketing. We're seeing in places around Texas where some people are actually having to line up and ask for federal help to pay their electricity bills. And not only that, all of these graduates coming out of school not having the menu of entry-level jobs because so many firms are starting to look at potentially using artificial intelligence.
Retraining programs and energy support is going to be the really key two issues going forward that maybe we'll be hearing about in terms of Washington, D.C. talking points. In the meantime, what we are seeing in markets is a bit of a lift to end the week after what we have seen, which is near record highs, led by the bond market, which does continue to rally. Coming up next hour, Paul Christopher of Wells Fargo, Sheila Kayalu of Jefferies, Alejandro Grindal of Ned Davis Research, and Charlie McElligott of Nomura, as we do look to the potential for more of a data desert. University of Michigan Sentiment Survey. John is saying, I'm so glad I'm not there because you keep focusing on that. This is Bloomberg Surveillance.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-1
is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aqua in Sintra, Portugal, and this is Bloomberg.
The American capital markets is the envy of the world.
The equity market is doing really, really well, despite the economy not being particularly healthy.
People like myself, I think, underestimated that role of AI, and I think it helps explain the resilience of the U.S. economy.
Even if the AI narrative continues, it might challenge the fact that we look around and say everything is extraordinarily expensive.
As difficult as it is, and it is difficult to invest in these valuations, we think that you need to stay invested.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. John stayed home today since we're going to focus on the University of Michigan Sentiment Survey. After all, what else is there to focus on given that the government and all its data releases are staying closed and disrupted for a 10th straight day? We can go over what we might be getting if it reopens, which it probably won't. We would be getting that University of Michigan Sentiment Survey at 10 a.m. Eastern today, as well as a number of Fed speakers. Over into next week, we would get Wednesday CPI, we would get retail sales on Thursday, and we'd also get PPI, initial jobless claims, so much to chew over. Instead, Anne-Marie, we're looking down the barrel of just more emptiness.
We'd also get the jobs report, which we still don't have. That is done, that someone just basically needs to press the button and release. The issue right now, of course, is we're in the middle of a government shutdown. You just heard from Chair French Hill of the Financial Services Committee. Does there seem like any urgency based on the politicians we spoke to this week that they are going to reopen anytime soon? The Senate has left. It's a long weekend for them. So we're going to pick this story up on Tuesday, which means likely no data next week. But what the White House is doing is deeming some individuals essential, so at least they can make sure the collection of data is ongoing, so that by the end of the month, if the government does reopen, we do get CPI report and the others.
Well, if we want a CPI report, if we want any kind of data, we've been looking at corporate earnings, Delta we mentioned, really demonstrating a positive read on the consumer, and Levi's indicating they're able to pass pricing along. Right now what you're seeing in markets is a little bit of a lift as the session grows older, because ultimately people can look around, hate the valuations, as we just heard Cameron Dawson talking about, but ultimately having faith in this AI story up about 0.1% on the S&P and NASDAQ, Russell 2000. Futures up about 0.33%. If you take a look, the rally is into the bond space as well. These two asset classes have been intimately connected for quite a while now. 30-year yields lower by 4 basis points after an auction yesterday signaled that, yes, there was plenty of investor demand, even if there was a concession. 4.68% after flirting with that 5% level not so long ago. Meanwhile, gold reprising its rally after yesterday's brief hiccup after seeing a 50%, more than 50% gain, continuing to turn upward in the market. Coming up this hour, Paul Christopher of Wells Fargo, as stocks are stalling near record highs. Sheila Kahyaoglu of Jefferies as airlines face the impact from the government shutdown, perhaps. And Alejandro Grandal of Ned Davis Research as we look ahead to University of Michigan Sentiment Survey, because what else do we have to look for? We begin this hour of futures struggling for direction with stocks hovering around those record high levels. Paul Christopher of Wells Fargo writing this: Based on our expectations for accelerating earnings, we believe the next 12 to 15 months will favor U.S. equities. Paul joins us now. Paul, let's start there. The idea that people don't like buying into valuations like this. They don't like buying into consensus. They don't like doing it in a vacuum that is just because of government dysfunction, and yet it seems like that's the only place to go. Can you explain how that is somewhat of a difficult trade, yet an obvious one to many people, including yourself?
Yeah, I mean, surely it is uncomfortable for all the reasons that you mentioned, but you have to sort of focus here on what I'd call the big rocks. The big rocks are that artificial intelligence is a trend. It has some momentum behind it. It's investable, and we need to take advantage of it. Now, there's smart ways to do that and not smart ways to do that, and we're going to try to stick with the smart ways, and I'm happy to talk about those.
Okay, so let's talk about them. The smart ways to do it. Is it investing in the hyperscalers, or is it investing in energy companies that are going to have to fuel this over the longer term?
The answer is yes. But look, you've got hyperscalers in comm services, communication services, and in information technology. All right, so you've got two sectors there. Do you want to buy them both, or do you just want to buy one right now? Buy the one that looks the least overpriced, and then let's sit there for a while. And then at the same time, let's try to diversify that AI exposure by going with what I would call adjunct trends, like the data centers. You've got some of these 2- and 3-ton computers right now around the country sitting under tents. So they're going to have to build places for those computers to live, and they're going to have to build out the energy infrastructure, not just to power them, but to cool them. Computers often have cooling below the floor. So utilities and industrials look like two sectors to us that are not as overpriced as, in fact, even attractively priced compared to information technology and comm services. And then a third way to diversify, or let's call it a second way to diversify, is to look for trends that aren't necessarily directly related to AI, but that play another big rock in the economy, and that's the fact that we think that the Fed we believe is going to cut 2 more times this year and another 2 more times next year. That's going to take the short end of the yield curve lower, and with long rates, we think, hovering near where they are right now, that's a pretty good looking environment for banks, right? They're going to pay short-term deposit rates, which are going down, so their costs fall. At the same time, longer rates stay high, and that's what they're going to earn on their lending. So we can play different trends here in different ways that aren't as overpriced as the overall market or the individual hyperscalers, the Mag 7. So I think that's the way to go here. You want to try to be as effective with your capital as possible. And look, there are going to be pullbacks. So we're going to get to earnings season. There are going to be some disappointments, and those firms will be punished. Those could be buying opportunities. We'll have to see what transpires.
Well, I'm glad you brought up the energy demand that it's going to be for this entire AI boom. Electricity demand, do you think that could end up slowing this momentum because it might not keep pace with what these hyperscalers are trying to do?
Yeah, it's a good point. I mean, look, there are always going to be constraints when you're going through a growing trend, a growing pains trend like this one. This is a very disruptive economic trend. We saw the same thing if you go back to the 90s, right? There were shortages of things. If you go back to the 40s and the 50s and the 60s, we were developing automobile, ship, and air transport, and there were constraints there. We eventually broke through those constraints, and for investors, those constraints really represent opportunities, right? So as long as you see electricity production and transmission being constrained, that means there's opportunities in utilities. There's opportunities in midstream energy. There's now opportunities in natural gas. For a long-term investor, those constraints have to be worked through, and we believe they will.
Well, I want to know what you think are basically what you're doing in absence of U.S. economic data. Christian Nolting from Deutsche Bank earlier in the program was talking about how actually it's been easier without having the U.S. economic data. What have you been relying on?
Yeah, it is easier in a sense that you don't have the reports coming out every day. But look, well, let's go back to the idea of the big rocks. For a long-term investor, what matters right here, right now, is that the economy is still growing. I don't think anybody doubts that. And that inflation is still moderate. I don't think anybody doubts that, really. And that combination, along with a labor market that's continuing to soften but is not generating a lot of new unemployment, that also tells us the Fed is likely to cut, the economy economy is likely to grow. We think earnings come up to $300 per share next year on the S&P 500. Those are the big rocks that investors really need to know about. The government shutdown, that's noise, it's distraction. Let's look through it.
Yeah, at this point, though, you have to wonder whether the strength that we're seeing in corporate earnings pairs with this idea of a Fed easing. We were talking earlier with Katie Kaminsky of Alpha Simplex, and she said it is confusing to her that we're not seeing some sort of sell-off in long-term bonds as a result of the Fed presumably cutting 2 more times this year in the face of real strength in the U.S. economy. How do you manage that risk, considering that we really haven't seen much of anything in the bond space in terms of volatility?
Well, that is one risk on the long end of the yield curve, the maturity spectrum, and we would agree that that's a risk. We would see other risks as well. Potentially, the tariff revenue will not generate as many dollars as Congress thinks, and so you could end up with wider deficits going forward. So there is risk, we think, on the long end of the maturity spectrum, and that's why we've been underweight there for some time, for some months. We're also underweight on the short end, expecting the Fed to cut. So that really leaves us with a bullet strategy where what we really like is that intermediate portion of the maturity spectrum, the yield curve, that 3 to 7 year range, investment grade munis and corporates. That's where we would target. Look, you're going to get a yield in that 3 to 7 year range that's not far off of what it is in the 10 year, but you're going to get a lot less duration risk, a lot less risk from fluctuating long-term yield. So whatever the reasons are, yeah, we would agree that we want to be underweight long-term debt at this point.
Are bonds still the diversifier that they have been traditionally?
Yes, over time they have been, and I mean we've done the work behind this to show whether it's short-term or long-term, in terms of the number of years you look at. Bonds are consistently the best diversifier for equities, on a regular and ongoing basis. At the moment, there's lots of trends that are churning around fixed income. So there's some buying in the fixed income space, pushing yields down a little bit. That's also tending to push more money into stocks. But that's just part of the normal give and take between those two markets. We would want people to hold both bonds and stocks because we don't want to try to predict when one is going to peak and the other one's going to trough.
Paul Christopher of Wells Fargo Institute, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. The U.S. has launched a bailout for Argentina, offering $20 billion in financing and carrying out a rare intervention to prop up the peso. Treasury Secretary Scott Bessent announced the currency swap and government purchases in a social media post. Trump's support for Argentine President Javier Milei comes ahead of this month's midterm elections in Argentina. Meanwhile, the Bureau of Labor Statistics has recalled staff to prepare the September CPI report because it is necessary to calculate the size of next year's Social Security checks. The agency was directed by the White House Office of Management and Budget to bring back employees to assemble the report in time for publication by the end of the month. And it was a stunning start to NFL Week 6 as the New York Giants pulled off a major upset on Thursday Night Football, defeating the defending Super Bowl champion Philadelphia Eagles 34-17. The Giants' rookie duo of Jackson Dart and Cam Scativo led the way for Big Blue as Dart accounted for 2 touchdowns, while Scativo powered his way to 3 rushing scores to secure the victory. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. Up next, the morning calls, plus Sheila Kayalu of Jefferies as airlines get set to face the impact from the government shutdown. Have you booked flights recently? Are you concerned about this?
About flying domestically? Yes. Internationally? No.
Well, that's next. We'll get her view. This is Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Senators are certainly having conversations about what they'd be willing to do. All the Senate has to do is pass the continuing resolution and keep the appropriations process going. Schumer, I think, for internal Democratic political purposes, chose to pick a fight with Trump.
That was Arkansas Congressman French Hill. As we reach day 10 of the government shutdown, both sides seem to be pretty dug in at this point. Right now, what you are seeing in markets is a rally that seems to be increasingly dug in as the session grows older. Futures now up almost 0.2%. Meanwhile, the dollar fading just a touch after a strengthening trend, counter to what we've seen for most of this year. And that rally building in the bond space is coming after Chris Waller said that he would be open to a quarter basis point rate cut at the next few meetings, and talked about a labor market that really is, as he sees it, under pressure. Time now for the morning calls. First up, RBC raising its price target on Tesla to $500, noting potential market share growth in the humanoid robot business. Those shares up about 1/3%. Next up, Evercore ISI raising its price target on Oracle to $350, expecting it to raise its revenue forecast. Oracle reprising some of the gains, up about 2.2% after a number of skeptical notes about the circular financing that we keep talking about. And finally, Bernstein raising its price target on Delta to $74. That's up from $59.80 right now. It's citing its premium demand in domestic travel. Those shares up 0.4% after a huge rally yesterday on the heels of an earnings report that projected real strength across the cabin. Sticking with air travel, flight delays rippling across the country as the government shutdown heads into its 10th day. Bloomberg's Tyler Kendall joins us now. Tyler, is there any sign that people are going to come back to Washington, D.C., or have they all left town for their long weekend?
Lisa, at this point, no one's coming back. According to the Senate, they adjourned last night. They're going to be back here on Tuesday, but no doubt this strain at airports nationwide is going to continue to ramp up the pressure on Congress as the government shutdown really does drag on, because we're seeing these flight disruptions across the nation due in part to this shortage of air traffic controllers who are being forced to work without pay, miss their paychecks amid this threat from the administration that they could actually lose their jobs permanently if they don't show up from work. Now, I think it's worth mentioning that during the last government shutdown in 2019, we heard from airport employees who said they had to pick up second jobs because they weren't getting paychecks, or they had to stay at home because they couldn't spend on childcare. And partly due to this pressure from airports, we saw that contribute to the deal that ultimately helped the government reopen. But Lisa, at this point, the data is pretty stark. The U.S. Transportation Secretary Sean Duffy saying that on average, air traffic controllers contribute to about 5% of the delays that we see at airports. That number has jumped to 53% in just the last week alone. I will point out that the problems have the potential to compound here. Lisa, the U.S. Travel Association says that the U.S. travel industry is estimated to lose $1 billion in spending each week that this drags on.
Bloomberg's Tyler Kendall, thank you so much. Sheila Kahyaoglu of Jefferies joins us now. And Sheila, as somebody who might or might not be interested for personal reasons as well as otherwise, how much are we seeing these delays really trickle through the airline industry?
We're seeing some delays, but some select airports were closed yesterday for several hours, like Burbank. But in general, the airlines are telling us this is not going to impede travel demand. and we're going to continue to see momentum in the airlines. So it's unfortunate for the consumer, not so much for the airlines and the workers who aren't getting paid.
Essentially, people have to get places regardless of how much of a pain in the neck it is to get places. So it's not necessarily going to affect revenues for now. Nonetheless, does this kind of put a hitch in some of the airlines' plans, particularly I'm thinking United, that's been trying to really fight and counter some of the reputational risks around the likes of Newark?
Delta reported yesterday, and they gave us a range for Q4 of up 2 to 4%. And I think that range puts into account how long the shutdown lasts. Last time it was only about $1 million a day. This time they think it's going to be less than that for the last 9 days that they've seen. So Newark is always a highlight and a poster child for air traffic delays. So we'll see how United fares. Southwest has a slightly more exposure to government employees as well. But for now, we don't think it's going to stop travel demand. I'm out all week, next week traveling. I don't think I'm canceling my plans.
So you can give us a personal update on next week
Yes.
if you're seeing delays. But we are seeing delays, and we're seeing staffing shortages across air traffic control towers around the United States, and we're 10 days in. What happens when we're 20, 30, potentially days into the shutdown?
Yeah, we'll see more and more delays, but unfortunately, we see 1 to 2% cancellations usually, and about 20% delays. So it'll just have people stay at the airport a bit longer, but that's all we have for now.
Do you think this is a pressure point for Washington, D.C.? Because 2019, when we saw massive delays in big airports like Orlando and New York, that day, President Trump caved, and then the government reopened. Could it come down to just, airlines and delays?
I think it's a lot more than that. I mean, if you look at the defense side of the business, Secretary Hegseth is talking about awarding the 6th-gen Navy fighter. This is during a shutdown. So I think the administration's trying to move forward, but we'll see what happens with the shutdown and how badly consumers are affected.
One thing that we've seen consistently through all the earnings reports has been, and I'm just moving to what we got from Delta yesterday, aside from the government shutdown, is that the front of the cabin has been the real money driver and the back of the cabin has been the laggard, and it sort of is a tale of two airlines, the ones that are able to cater to the business class side of things, the ones that are faring with the budget customers. Did we see a shift in tone yesterday from Ed Bastian of Delta?
I think on a number of fronts. Not only the discrepancy between main cabin and premium, that pricing Delta gap even wider, that was the first. Corporate was up 8% year over year. That was really solid. Cargo was up 16% or so year over year. Their MRO business was up 60%. All these stats were pretty positive economically, if you ask me. Some of it is market share gains on MRO and cargo, but still, those were pretty high percentages.
Well, that's where I wanted to go. Is this a read-through to the entire industry, or is what we're seeing a consolidation of market share in the likes of Delta, United, and American at the behest of some of the budget carriers?
I think both fronts. You're seeing United and Delta really outperform. They've picked the right strategy. We saw United add more routes to Europe yesterday. Europe would be the one area in Delta's report I would call out that was negative. The read-through on pricing in Atlantic revenues were down in Q3. That means there was either too much capacity or there was tariff-impacted bookings. So people that were going to book summer travel in March decided not to travel into the U.S. So that would be the one data point I would call it as weak. But going back to the airlines, it's the story of United and Delta winning, the strategies of Southwest and American and JetBlue needing to refocus their areas.
Did you see any evidence that the rest of the cabin, the people who are sandwiched into economy, are coming back? That the recovery that you're seeing in demand is also coming from people at the middle income, the lower income spheres of the population, rather than just the people at the front?
You saw that a bit. In the first half, we saw pricing for airfares down. In Q3, Delta's report was a turn positive, and they're forecasting an improvement in Q4. So we really needed to see that positive inflection in the main cabin in Q3, and we got that, and we're going to see more momentum into Q4. Some of it is because airlines are cutting capacity, so you're having less routes, and some of it is because the consumer feels more confident, and that was evident in their close-in bookings. They saw more and more cash sales.
What are you expecting from American and JetBlue based on what we've learned from Delta?
I think the Atlantic data point for American is one that we've highlighted as potentially being weak. They're the third carrier in the Atlantic. If you have too much capacity, not enough demand for multiple reasons, I think you'll see a weak report there. We're more bullish into United, but I think Delta put up a very clean print without any news, any other items to muddy the waters.
What about the budget carriers? Given the fact that Delta is saying, to Lisa's point, it's the entire airline, do you think the budget carriers are going to do well, or are those customers going straight to the big dogs?
You know, we lean into the network carriers. I think Southwest adding routes into cities like Las Vegas isn't going to necessarily help their pricing momentum. But United opening up a route to Bari or Bilbao in Spain or Italy, I think that, you know, that ignites demand that wasn't necessarily there. That's a route that nobody flies directly from the U.S., and it could, you know, instigate demand. Last year they did Greenland, so this year they stuck a little bit more conservative with their routes.
Sheila Kailu of Jefferies, thank you so much for being here. Really interesting point there that Sheila made, Emery, about the international travel for Delta and this question of whether it's tariffs, whether it's other issues, the international inbound class. That's the one area of weakness that you are seeing.
And the issue with tariffs, if you were looking to potentially not take that trip, not buy that car, well, once you have certainty, you're willing to maybe buy the car. But are you going to go take the trip now that it's October and it's a little bit cold when you were maybe planning on doing a summer holiday in Europe? No. So maybe you just say, I'll go next year. You can't make up for some of that lost demand.
Meanwhile, what you are seeing in markets is something of a rally that is building on the heels of these comments from Fed Governor Chris Waller, where he did say the job market was a bigger concern than any kind of inflationary pressure, saying that payrolls was likely negative. This in an interview this morning, that's giving a real boost to what we're seeing in the bond market and then giving a boost. The Russell 2000 futures up 0.4% now, Emery, really outperforming on the heels of the rally in the bond space.
And Governor Waller has been making this case for months. It was almost as if Jay Powell at Jackson Hole, the speech you were there for, almost it was like Governor Waller wrote that speech. He's been talking about the cracks in the labor market. What really concerns him is the north of 7% unemployment for college graduates. So it's no wonder here, this is where his bias is going to the end of October, whether or not we have the U.S. government data.
Given the fact that he is a potential contender to be the next Fed chair, his voice has a lot more clout in the market as we're seeing this morning. Coming up next, Alejandra Grindal of Ned Davis Research as more U.S. economic data gets delayed. Plus, Danny Berger with your morning movers, the data that we do get. Levi's falling after warning tariff impacts are just starting to bite. This is Bloomberg Surveillance.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Seeing a lift to the open as we get a little bit closer, futures higher on the heels of comments by Chris Waller, Fed governor, when he said that he was looking at the labor market first and foremost and seeing a weakening that has ignited the stock market rally, particularly futures on the Russell, up 0.4%. It is because you are seeing a deepening rally into the bond space, particularly on the longer end of the yield curve, led by that 30-year denomination down 4 basis points to 4.68%. Similar kind of move in 10-year treasuries and a 3 basis point or 2 basis point move in the 2-year yield. 1 hour away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa, we had earnings from Levi's and they upgraded their outlook. Their profitability is looking better. Yet this is what you're seeing, a decline of nearly 7.5%. Yes, the shares have run up, but the thing investors seem to be grabbing onto is the CEO saying that tariffs are just starting to bite. So that profitability they got because they were able to raise prices and people kept buying jeans, maybe that's limited for where we go from here. Elsewhere this morning, silver stocks are having a really great day. A lot of the miners here up at least 1.4% this morning with Pan American, First Majestic Silver. That's up 3.9% with silver, the precious metal, trading around record highs. It's outperformed gold. It's that whole fear, debasement trade, what have you. And also there's some real tightness and some oddities in the London spot market that also seems to be fueling a premium in New York. Meanwhile, we're looking at Venture Global, those shares getting crushed. This is the LNG company. It in a surprise loss in arbitration with another oil major. The concern is that this sets up potential litigation actions around its LNG shipments for those that face similar issues. So those shares down 18%, Lisa.
Thank you so much, Danny. Just picking up on what Danny was talking about, silver. It just really is remarkable to see up more than 70% so far this year. And I was looking at some statistics. The metal is used in things like solar panels and wind turbines. All of that industrial use accounts for more than half of the silver use. So this isn't just jewelry. It isn't just necessarily storing in your basement. And demand is set to exceed supply for the 5th consecutive year.
Yeah, there's actually a use case for this, which is a really good point, unlike gold, where everyone just wants to basically flood into because they're nervous about central bank buying and geopolitical risk. Silver is actually higher than gold has been doing. Gold is up 50% for the year. Silver's up 70% on the year and still counting.
Yeah, well, you're still to talk about some pretty big numbers at this point. Turning to the global economy and the historic U.S. investment in Argentina, Bloomberg's Michael McKee joins us now. Mike, you did a great job putting into perspective what this is like. Can you just give us a sense of how unusual this type of $20 billion credit line really is?
Yeah, it is the swap line, not the intervention in the currency markets, that's really kind of unusual. The U.S. has intervened in currency markets before, never on such a small level as Argentina. They've bailed out the euro and they've bailed out the yen. But the swap line is kind of different because ordinarily they're between central banks, and the idea is that the central bank that needs dollars will send their currency to the Fed, and the Fed will send dollars to that country for companies that need to repay loans in dollars.
and then they will send it back, and the Fed will take a little bit of an interest rate gain on that. In this case, it doesn't look like we're going to be sending dollars. At least Scott Bessent says we're not going to be sending dollars to Argentina in that sense. Maybe more along the lines of guaranteeing loans, which is kind of what they did in the Mexican peso crisis back in 1994. Some loan guarantees, and then the U.S. bought some of the Mexican paper. But we don't have any details yet. And of course, there are people who are noting that a lot of people who are in the hedge fund business and worked with Scott Bessent in the past have bought a lot of distressed Argentine debt and wonder if he's trying to help them out. He's not going to tell us, but that could be an ancillary benefit.
Mike, in the meantime, we're talking about this as we don't have really official data to talk about. We're going to be focused on the University of Michigan sentiment survey that comes out in about an hour and a half. But then we would be getting CPI, we would be getting retail sales, we would be getting PPI and unemployment claims next week. But it looks like right now we're not going to get it, right?
Well, we're not going to get it next week, but we may get CPI. The Michigan numbers are going to be important today because of the lack of other data. It's the inflation expectations number that you can see there. That's the 1 year that is going to matter to the Fed because they're trying to keep inflation expectations grounded. We did see in the New York Fed version of inflation expectations that they went up on a 1 year basis to 3.4%. They run a little bit hotter in the Michigan numbers, but if they stay where they are, and not rise, that would be some good news for the Fed. Now, as for the CPI, the Bureau of Labor Statistics said last night that they are going to bring back some employees and put together the data that they had already gathered in September of the CPI and try to get it out by the end of the month. Their goal is to have it ready because it's used in the calculation of Social Security cost of living adjustments. But if they can get it done by the 29th, when the Fed meets next, it would be a big help to Fed officials trying to figure out what's going on in the economy. The one thing they have not explained with this, though, is why they don't put out the employment report, because that's already finished. They don't have to bring anybody back to do it. They just have to push the button. So that's a question still out there for the BLS.
Yeah, Mike, great point. Mike McKee there. Thank you so much for that. And Chris Waller was saying that he thought it would likely be a negative payrolls number had we gotten it. Alejandra Grindal of Ned Davis Research joins us now. Alejandra, it's so interesting. We don't have the data coming out of official government sources. We do have the data coming out of the hyperscalers that just shows incredible investment and profitability. Is that essentially what everyone has to hinge their bets on at this point in the absence of anything else?
At least for the time being. Thank you for having me again. And I do want to point out that there's still a fair share of private sector data out there. So even though we're not getting as much of the public sector data that we've been used to getting, we'll have the PMIs, the ISM, NFIB. You mentioned the University of Michigan later today, Conference Board data. And, you know, I'll be honest with you, I'm also a global economist, and I have to deal with a lot of instances where there isn't much data, certain countries, especially some emerging markets. So if you look at it in the whole realm of things, we're not necessarily flying blind. We're definitely dealing with less information, but we're not flying blind either.
Are you saying that this is a good time to look at the template for emerging markets and take out that playbook and follow that in the absence of everything else? What is it showing if you are looking at the other data points that are available? Does it confirm this idea that Chris Waller was talking about, that the labor market really is flagging? Or does it confirm this idea that the stock market seems to be rallying around, which is that everything is great?
Well, so most of the data is telling us that we're seeing slowing economic growth, but no recession. So the stock market usually continues to rally as long as we don't have a recession, right? But in terms of some of that job market weakness, that's why the Fed has intervened. We have seen some job market weakness, and we actually did start seeing that in other data even before we started seeing it with the payrolls data with the establishment survey. Some of it was official data, such as the JOLT survey, but we were starting to notice some weakness in jobs through some of the survey data, such as the Conference Board's Consumer Confidence Index, some of the NFIB data, and even the ISM data.
So if we have a weakening job market, what you talk about is below trend growth in the US, but not a recession. So what kind of environment is this?
You know, it's a lot of it is just an environment that's being held down by near-term uncertainty. You know, at Ned Davis Research, we tend to focus on a lot of data, and most of the data we look at will look for, you know, what are called like recessionary thresholds that look at a broad array of data. And for the most part, they're not really giving us an indication that recession is a near-term concern. And we have gone through periods where we've had below trend growth and no recession.
How do you feel about inflation now, the fact that, as Lisa has brought up today, we're hearing companies talk about it like Levi's, that they are passing on these costs to consumers?
You know, for the time being, we do, and I think last time I was on the show, I said the same thing. We do see upside risks to inflation, obviously coming from the tariff perspective, but I think also a very underappreciated source of upside inflation can come actually from a lot of the deportation policies that are seeing a decline in workers in certain services-related industries and agricultural industries. So we do expect a modest upleg in inflation. Up until now, yes, you mentioned Levi's. They have a lot of consumer goods tend to have smaller margins, so they may have to pass on the higher costs. But up until now, we have seen businesses absorb a larger share of the tariff costs. The issue is this going to be just a one-off thing, or will it continue for longer? And that's really the question up in the air, and something that the Fed needs data for to be able to gauge. We do anticipate that the Fed will reduce rates, but how much they end up going, whether they actually get to neutral, will depend on how long this tariff impact happens. And the longer we see prices accelerate, even if it's modest, if it starts impacting inflation expectations, then that ultimately could become a self-fulfilling prophecy, and that's really what we'll be watching.
Has it surprised you, Alejandra, that we haven't seen those expectations of higher inflation priced into Fed funds futures, whether it's the long end of the yield curve, or even just inflation expectations in break-even rates?
Yeah, it's a balance of risks. And so for the time being, because the market-based measures of inflation expectations remain fairly stable, we are, you know, reasonably confident that we won't see runaway inflation, but we'll be watching it because we are seeing it within the consumer measures. Mike McKee mentioned it earlier. We'll probably see a little bit with University of Michigan today. And if it moves further and further, then it might start impacting the market-based measures. But at least the fact that those have remained, you know, fairly stable gives us some hope that the impact of tariffs will be relatively short-term.
Meanwhile, the incredible rally this year has left a lot of people nervous, and they've been trying to poke holes in it. And earlier this week, we talked a lot about the potential for an AI bubble. And then Microsoft comes out with this overnight, where they forecast data center crunch persisting into 2026. Is there just this fundamental drive that really does force any kind of bearish sentiment around the hyperscaler space or the AI rally that we've seen to just go away and hide in the corners for a little bit longer?
Well, that's the fundamental question, right? How long can that work? It's a lot of also what's been driving the economy, right? Like if you look at capital expenditures, we're seeing quite a bit in the AI space, and that's what's, you know, keeping that element of the economy afloat. And then it's driving markets. And for those who own stocks, that's creating a positive wealth effect, and it's keeping people spending, despite the fact we're seeing some of these job concerns, especially keeping spending within the higher income levels. So that's definitely driving that story. Whether it's excessive optimism, I mean, we have a lot of measures in-house that try to measure optimism, and we're not seeing excessive measures yet. I think there's still some people sitting on the sideline because they're concerned about the impacts of the Trump administration. There could be other folks sitting on the sideline, but you know, we could be getting closer to that point, but I don't think it's coming, at least within the next few months.
Alejandra Grindal of Ned Davis Research, thank you so much for being with us, and have a wonderful weekend. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. The 72-hour period to release the Israeli hostages has begun. Steve Witkoff, the U.S. Special Envoy to the Middle East, says the ceasefire agreement between Israel and Hamas started at noon local time. President Donald Trump is planning to travel to Israel on Sunday to be on hand for the release of the hostages. He also said he might address Israel's parliament. Meanwhile, Maria Corina Machado of Venezuela has won the Nobel Peace Prize. Machado won for her work promoting democracy and decades-long struggle against authoritarianism in Venezuela. Machado has been in hiding for more than 14 months after Nicolas Maduro declared victory in last year's election. President Trump's assistant posting on X, Nobel proved they place politics over peace after the announcement. And Apple will expand the roles of some top executives as Chief Operating Officer Jeff Williams prepares to leave the company. Services Chief Eddie Q will take over Apple's health and fitness teams, and Craig Federighi will oversee the Apple Watch operating system. The moves come ahead of the planned launch of a new subscription service dubbed Health Plus. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Have a wonderful weekend, and thank you for this morning. I can't wait until we don't have doctors anymore. We just have wristwatches that tell you, please stop eating that. That's what I imagine.
Or rings.
Or rings.
That tell you that you're not sleeping enough.
Or little humanoid robots that tell you to go get more exercise. Up next, setting you up for the day ahead, plus Charlie McElligott of Nomura saying that investors are not shying away from the AI trade. I know you all were wondering that. Looking today, again, NASDAQ futures up ahead of the open. This is Bloomberg Surveillance.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
You try to get everything you get from the data perspective. So for example, ADP, when you don't get the non-farm payrolls, you really watch closer. But of course, you need to take into account what kind of indicators are there. And I think, yeah, for a certain period of time, you probably can fly a bit blind from the data perspective.
That was Christian Nolting of Deutsche Bank, who said it was easier without all of those data points that you have to analyze, considering the fact that things are still tugging along. Counting down to the opening bell, here's a trading diary into next week, 10 a.m. Eastern, University of Michigan sentiment survey. Also today, rounding out the week with Fed speak from President Trump, who's making an announcement. Next week, More key economic data that we're probably not going to be getting. On Wednesday, we've got CPI data, or we don't have it. On Thursday, PPI and retail sales are supposed to come out with that additional round of jobless claims that we did not get this week. Turning back to markets, Charlie McElligott of Nomura writing, in spite of such euphoria in asset prices leading to what many would expect as caution, the client refrain for many now is you cannot own enough AI trade mega cap tech. Charlie joins us now. Charlie, thank you so much for being with us. I have to say, it seems like in the absence of data, the buy AI trade only gets stronger because ultimately the data that we do get just continues to support it. Is there the skepticism in your clients that we hear from investment analysts sometimes on this show?
No, there really isn't. I mean, look, there's dual narratives right now. The AI, the AI phenomenon has been, massive with regards to the CapEx, and now this very kind of self-referential, self-reinforcing financing dynamic. And that's been part of the high water raising all boats with regards to markets and easier financial conditions. But macro-wise as well, there's been this kind of fiat currency debasement trade, right, where governments are running fiscal hot, heavy deficit trajectory, the spending in conjunction now with central bank easing. And when you have all of that working together, it's creating more of this kind of pro-cyclicality, both in markets, market forces, economic forces. So people are more concerned right now, just having my big macro quarterly dinner this week, more concerned about missing the right tail than they are about downside, even with markets at highs.
It sort of raises this question, especially when you talk about the debasement trade and this monetary and fiscal bazooka that it seems to be firing on both cylinders right now. A question of whether the AI trade is viewed as almost safer than some of the more traditional ones, and I put it in safe in quotes, but the idea of that being more reliable than, say, government debt or credit in certain spheres.
Yeah, for sure. I mean, look, these companies are, and the big difference between this time and, kind of the tech bubble, right, is that this is not, a dream per se, right? These companies are generating massive profits and cash flows. And so far, that's been most of the financing of this pursuit of the chips and the centers and everything, with regards to the kind of the Delta One around that, the halo of the energy providers and the utilities and all that stuff. The thing is that these companies are super high quality, obviously, very highly rated debt as well, at a time where bonds haven't worked, right? And you want to speak to about this kind of speculative environment, the speculative backdrop, right? It's not just risky assets. It's not just the AI right tail. It's short volatility strategies, right? Short volatility strategies have kind of become this new tool for income generation in a world where bonds haven't worked for 5 years because we've been running, above trend. So they're quality, they're big cash flow generators. They have this story to them. They keep going up. They're liquid. There's a lot of stuff going for it right now, and honestly, right now, imminently, it's going to take some sort of a margin shock, that currently is not out there, that the market has not really felt, to sway them from this trade, and it keeps, again, working with these market forces, particularly, the stuff that I care about, options and leveraged ETFs. It just feeds us higher.
Does it give any of these investors pause, though, that all these deals are rather circular?
They are, but I think, again, the difference being that there's real money that's being made right now. Real money, real profits, real cash. The thing that I think can inflect us as we go forward here is this idea that, and you've already seen this with Oracle, right? And you've seen, the Oracle kind of, the debt ratios really change, where you're talking now about bringing debt because you're burning through so much of your cash, right? Cash has been a huge part of the buyback story for 15 years. When corporates learned with, how well rewarded you could be with buying back your own stock, that's become that was probably over the past 15 years, the largest single source of demand for equities, and it's a vol suppressor, right? You're shrinking the float, you're stabilizing bid under the market, and then when stocks are selling off, they're even more aggressive. If that cash is now being burned through in pursuit of this, CapEx euphoria, and you start now having to bring more debt to kind of fund all of these things at the same time, The risk here, and something that I'm watching closely in coming quarters, is if you see that almost perpetually higher announced buyback number across S&P 500, which is largely these AI mega cap tech companies, if that starts turning lower at the same time that the debt issuance from these companies is moving higher, because that now has to be brought in too to fulfill all of these obligations, that's something I'm going to watch, because again, that buyback bid to stocks has been the #1 source for stocks over the past 15 years.
Jonathan's made this point a lot, though. The market is rewarding these companies for doing that, for levering up.
Well, I mean, but it's still really, really low leverage. And look, you know, this has been a talking point too this week at at the macro dinner, our credit discussion. You know, people are nervous, you know, kind of on the outside looking in with regard to First Brands and Tricolor and, you know, delinquencies at Carvana, wondering if some of this clustering you're seeing in pockets of like asset-backed or super subprime space is something bigger. And it is going to be part of the story next year, because tech is now the largest part of kind of IG issuance. You know, that's a big story. If this kind of keeps perpetuating, where you have to bring more debt to finance these pursuits, and it's somehow also, too, at the same time impacting the amount of stock you're buying back, it's something to watch. But again, these companies are incredibly cash flow positive, incredibly high quality because they're so profitable. So that's an inflection in the future, but that's not a now issue.
How much are people stretching outside of the hyperscaler space in order to get returns, in order to get alpha, given the fact that it's a pretty played out trend, if not complete, on the hyperscalers?
Yeah, so I mean, the fear of the right tail is you know, taking prominence, as we've spoken about. And I think the last time I was in here, I was talking about this kind of people were in the bunker. So we've moved from the bunker to the fort, fear of right tail. In this case, people now, and this tends to corroborate what you're seeing with regards to an early cycle move, right? Fed cutting into an early cycle economic reacceleration. You're now moving into really high beta, junkier stuff. So like unprofitable tech has been on a tear. Short basket's been on a tear. A lot of these things up 15, 20% in the past week and a half. So you're seeing elements of that. Obviously, you've seen crypto move to new highs, partially as a function of dollar debasement or fiat debasement, most recently the yen, with regards to the elections there. You know, so you're pushing into like the wingier stuff, which is providing that extra beta. You know, it's silver, as you spoke about earlier, right? Silver is, you know, the junky high beta version of gold. You know, and it's acting that way, even with an industrial purpose, right? That's where you're getting your juice. Call skew in these things, right? Demand for out of the money stuff versus at the money, 95th to 100th percentile on all this stuff. So people are reaching because they're worried about this right tail and all this stuff, because you have a career anxiety right now. It's performance anxiety, like it's existential. If you don't capture this, you're cooked. The trick here now is that at one point does all of that suppressed volatility, all of that exposure built off of the suppressed volatility, all of the leverage into the highest beta stuff, you know, oftentimes that tends to tip over and kind of collapse under its own weight. And that's what I'm conscientious of. So like I'm constantly looking at like where are people hedging, and it's the VIX calls, VIX upside, VIX call spread space.
Charlie McElligott, thank you so much for being here.
Good
Wonderful to have you. Let's do it again. Charlie McElligott of Nomura with the meme medals with silver. I love that. That's a fantastic way to look at it. Coming up on Monday, Peter Shear of Academy Securities, Alessio DeLongis of Invesco, Seema Shah of Principal Asset Management, and Jean Beauvais of BlackRock. Thank you for listening. Have a wonderful weekend. This was Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
It's a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to
continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of meatballs.
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually veggie balls and plant balls. And personally, I don't love the veggie balls, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Finally made it to Friday. In just 30 minutes until the start of trading, I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, China opens an antitrust investigation into Qualcomm as President Trump and President Xi jockey for leverage before they meet at the end of the month.
And on the earnings front, jeans maker Levi's raises its full-year outlook, but warns that tariffs are starting to bite.
Plus, Wall Street banks gear up for earnings season that kicks off next week. Investors are going to be watching deal-making performance after $1 trillion in deals were done during the quarter.
A lot of enthusiasm there, but where there's not enthusiasm is some corners of tech this morning, Matt, especially with Qualcomm. It's one of the ones we're watching, down 1.4% in the pre-market. As you mentioned, China investigating the company for suspected violation of the anti-monopoly law over a deal to buy Autotalks, a auto tech company. That deal was announced way back in June, and it's yet again tension between the U.S., China, American companies ahead of talks between Xi and Trump.
All right, that's a story we'll cover. Also, Levi Strauss warns that it is starting to feel the pain of tariffs. It continues to expect tariffs of 30% in China. You can see that the shares right now down 8.6%, and we're going to talk about that. I mean, really a legendary, iconic maker of jeans, although the product has changed quite a lot, Danny.
I'd assume so. They don't have the looms. They're made by machines. I should say shares are up 45% year to date, so a little bit of weakness today isn't ruining the overall rally. Let's begin, though, with China targeting Qualcomm. Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh, joins us now around the desk. Mandeep, it does continue to feel like these companies are being thrust in the middle between disputes with the U.S. and China. Is that what's happening here or something different?
I mean, look, when we look at NVIDIA, they acquired this company, Mellanox, a few years back, and there was an investigation opened for that as well. Right now, we are in an environment where any company on the hardware side or chip side with exposure to China revenue, they are in the crosshairs of this negotiation and, the trade dialogue that's going on between U.S. and China, and it's not surprising that, Qualcomm having got almost 60% revenue exposure, so clearly, it's not that unexpected that they are caught up in this.
And Intel, what's the chip they have, Panther Lake or something? It's apparently super special for laptops. Intel's market cap may overtake Qualcomm today, which I find pretty amazing because, you know, last year we were talking about the possibility of Qualcomm buying Intel.
Well, look, the U.S. government, when they took the stake in Intel, it was pretty obvious that, Intel is front and center in terms of both their fab side and as a company, the government wants them to do well. And with all these deals getting announced by OpenAI with NVIDIA and AMD, it makes you wonder, what would it take for one of these companies to announce a deal with Intel? NVIDIA did that with Intel, but it wasn't for the foundry.
Right,
so
that's the
need
question.
That foundry component. And
so do you expect that,
I
Mandeep? Do you think that Intel is going to be making chips for companies like NVIDIA?
I don't know if it will be NVIDIA, but I do expect some sort of a deal for Intel fab, simply because the government has made it very clear they want more onshore manufacturing, and Intel is the only company or the biggest company that has the fabs. You have Global Foundries and other companies as well, but Intel is front and center from that standpoint, advanced node capacity here in the US. And I expect with all the money that's going on at the data center level, we're talking 50 billion per gigawatt. Well, there is 75% of the components in that data center is chips. So where are those chips made? By TSMC outside the US. And so that's where the question will arise, why can't it be Intel in some capacity? And I would say companies that are at the front of it, OpenAI and Google and Microsoft, maybe one of those, so who knows?
All right, Mandeep Singh, great to have you here today. Mandeep covers tech for us from Bloomberg Intelligence, one part of a team that makes up the deepest and most robust tech coverage in the industry. The other part is Anurag. Applied Digital surged this morning. The company smashed earnings estimates with announcement that it's in advanced talks to fill its second data center campus in North Dakota. Anurag, what do we know about the data center story? How is this shaping up?
So we already heard yesterday there is a shortage of capacity for Microsoft. Bloomberg News did a very good story on it. And this is really the theme at this point. It's not as if you can spin up these data centers overnight. It takes time. So what happens is the entire supply chain, Mandeep just talked about, $50 billion for a gigawatt. Where is all that money going to? They're going into chips. They're going to creating data centers. So for a company like Applied Digital that provides, the cooling, the infrastructure and area, or you can say physical area for people to put their servers in, this is going to be a boom for them. It's already happening. You can look at Digital Realty, Equinix, and then you can look at the companies like CoreWeave or Nebius. So all of them are seeing the downstream effect of all this funding coming in. And it's no surprise that we are, in a situation like this right now.
Anurag, part of the reason we also saw Applied Digital rally, though, was because it talked about that CoreWeave had signed a lease for them. It kind of surprised me that they had been building these data centers without first securing a tenant. Matt and I also spoke to the CEO of Fermi yesterday, which is building energy resources, but again, without customers. Building first, customers later. Sure, there's a crunch now, Anurag, but is there a risk in that the build-out just goes too far and these companies don't get tenants down the road?
That is a very big risk, but I do not know whether we are 2 years away from it or 3 years. But look at it from another point of view. Look at any digital transaction right now. It has to have some element of AI in it. So when you look at a particular data center, and you can ask any company at this point, if they have X amount of workloads or 100 workloads right now, how many of them have any element of AI in it? I think that number is very low. It doesn't matter whether I'm opening my email or chat, there is more and more AI-related features out there. It could be on any other factor that you can think of. So those workloads have to transfer from a CPU-oriented workload to a GPU-oriented workload. And given the shortage of, you could say, capacity that we're hearing from Microsoft right now, I think we have a few years to go before we can say that, we are going to be in that big crunch.
All right, Anurag, thank you so much for joining us this morning. Anurag Rana of Bloomberg Intelligence off the back of Applied Digital, up nearly 30%. Now, in other earnings news, Levi's raised its full-year outlook. Shares are down, though, 9.6% in the pre-market. They warn that tariffs are starting to have an impact. Joining us with more is Bloomberg's managing editor for global business, Shelly Banjo. Shelly, it's remarkable to have a company that raises its outlook, that profitability looks good, that consumers are having and absorbing higher prices, and yet shares are down almost by 10%.
Yeah, people are wondering what is sort of, why isn't it better? And so, you know, when your stock is up as much as Levi's is so far this year, they're talking glowingly on the call about how the consumers are really getting into their jeans and their offerings, and yet they only raise their outlook by a little bit. And so people are asking what gives. And I think the issue is also around profit margins. They're raising their sales. They're saying sales are going to be good, sales are going to be good. Profit, maybe not so much. Temper the expectations because of the tariff impact.
It's amazing. I mean, what a cool company to cover, right? It's got to be one of the most well-known clothing brands in the world. But the consumer has to be there, right? To your point about data centers, it's got to be the same for jeans as well. And we're at a point where maybe there's a little bit of concern about the consumer, especially considering what we heard from, for example, Chris Waller today on the labor market.
Yeah, I mean, people are still buying, especially showing up for something new. So what they have done right with Levi's is launch all sorts of new partnerships with people, Beyonce, Shabuzi, like these folks that, you know, really enter into the...
What's Shabuzi?
Matt, you have some homework to do. We're gonna. I'll send you a Spotify playlist later. But you know, they're entering into the marketplace where people are talking about. But that doesn't mean that they are still not going to suffer from these big tariffs that are hitting them pretty hard.
Is that like a Labubu?
No, wait. To be clear, it's a person, not a thing.
Okay.
You're like, what's a Shabuzi? It's who is Shabuzi.
Okay.
Yes, correct.
Shelly, thank you very much. Shelly Banjo runs company coverage for us here at Bloomberg. Quick check on what's going on in futures. Pretty little change really across the indexes, and we actually fell about 0.3% yesterday on the S&P 500 in the cash session. It does look like, you know, green arrows at least across the board here. 0.1% the gain, but not too impressive.
Yeah, Chris Waller at least helping with small caps in the bond market rally, saying that we might have a negative payrolls report had we had the data. Elsewhere, coming up, Stellantis shares, they are moving higher, more on the automaker, and some solid sales coming from them as they move higher by 1% in the pre-market. You're watching Bloomberg Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators.
Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get to high interest now. Look what's making headlines around the world. Treasury Secretary Scott Bessent has reportedly narrowed the list of candidates for Federal Reserve Chair to 5 from 11, including Fed officials Mickey Bowman and Chris Waller, Director of the National Economic Council of Advisors, the National Economic Council, Kevin Hassett, and ex-Fed Governor Kevin Warsh, but notably BlackRock's Rick Rieder. Bessent plans more interviews before sending a short list to President Trump, who's expected to name a new Fed leader early next year as questions remain over the administration's commitment to central bank independence. And Venezuelan opposition leader Maria Corina Machado won the Nobel Peace Prize, praised as a woman who keeps the flame of democracy burning. The decision sidelines President Trump, who's long sought the honor and whose aides called the move political. Trump's reaction could shape his next steps abroad, including peace efforts in the Middle East and pressure on Venezuela. Stellantis shipments jumped 13% last quarter, led by a 35% surge in North America as the car maker restocked U.S. dealers with models like the Ram 1500 pickup truck. The rebound signals early traction for new CEO Antonio Filosa's turnaround push, even as unions in Europe sound alarms over production cuts. Stellantis reports full results October 30th. And we are very much looking forward to that. For a bit of a preview, although it's kind of early, Bloomberg Intelligence Global Autos and Industrials Research Analyst Steve Mann joins us now. And, you know, I'm a Mopar or no car guy, so I'm excited about this, Steve. But do they have the product? Do they actually have the Chryslers, the Dodges, and the Ram trucks to do as well as we expect on earnings?
I think a lot of consumers are thinking the way you're thinking about Stellantis and its brands in North America. They do have very, very strong brand, very reputable brand, and I think that's been the issue with Stellantis in North America, is that they've over the past few years, after the merger, when they started cost cutting, they've discontinued a lot of the popular brands. So I actually, this 13% growth globally, 30-some% growth in North America, maybe just the start. It's off of a small base, but they are bringing some of these cooler brands that resonate with the consumers back, like the Hemi V8 for the Ram trucks and the Jeep Cherokee.
Should be noted, Matt did a fist bump when you talked about
because I have a Hemi. Because I have a 6.4-liter Hemi in my Challenger.
Okay, so it reintroduces this model that, Steve, that people like Matt like, but it's also at a moment, Matt was also talking about this, that the consumer is maybe challenged. These are big trucks that cost a good bundle of money. So what is the dichotomy there between getting that audience, having them pay for it at a time when they're weak, despite some of these iconic brands coming back?
Yeah, you're absolutely right. I think you've seen some of the leasing programs that are coming out. They've been extending it to 72 months, 84 months to make them make vehicle purchases affordable for consumers. But what's been happening over the last few years without the Hemi, without the Cherokee, is that Stellantis has been losing market share to GM and Ford. And I think in this environment, there are a lot of consumers that want those vehicles back. The orders have been strong for those new vehicles from Stellantis. So we're actually looking into possibly a fierce fight for market share between the Detroit Big Three.
How does Filosa set up this company for the future, Steve, I wonder? Because the Dodge Charger EV, which is kind of a silly product to offer a muscle car audience that really wants an internal combustion engine. It's a fantastic product, but doesn't sell, right? It's overpriced. Yes. The same problem with a lot of the Jeeps. Their prices are sometimes over $100,000 for a Grand Wagoneer. How are they going to compete when consumers do want to buy EVs, and in a world when people are tired of paying 6 figures for a pickup truck?
Yeah, I think they do really need to listen to the consumers. I think cars, some of the pickup trucks, some of the cars like the Charger, really shouldn't be offered as an EV because people buy them for the noise, for the sound, for that engine sound, right? For the exhaust sound. So Porsche, as you know, has actually dialed back their EV endeavors. So, but Stellantis is actually transitioning. Look, when they were merged into Stellantis, there was a big push to achieve cost savings, and that's what Carlos, the previous CEO, did. And I think now with the market shifting, there is more focus on let's not just rebalance that focus, not just internally but externally. What are the customers saying? What are the dealers saying? And I think they're setting themselves up to better sales comps in the coming quarters, like we just saw in the last quarter.
What is at the moment separating the Steves and the haves and have-nots? You have Stellantis and Volkswagen also reported stronger sales, but at the same time, BMW and Porsche lowering their outlooks in recent weeks. What's distinguishing between those that are succeeding and not in this environment?
Yeah, I think where Stellantis is at, they're at a low base, right? I think a lot of the profit that Stellantis generates actually coming from North America. Now, there is a risk. Let's not forget the risk. The European market has yet to recover. We heard from, BMW just recently dialed back some of their forecasts. So, but I think Stellantis is already at a low base. We know that the European market is weak. But where the biggest opportunity for Stellantis to actually improve the bottom line is in North America, and they're doing quite a bit of things in terms of meeting customer expectations over here in this part of the world.
All right, Steve, thank you very much for that. That's Steve Mann of Bloomberg Intelligence. Now, a quick check on futures, roughly about 10 minutes before the opening bell. We are higher, barely so, after a weekday that didn't maintain momentum yesterday. Maybe we can thank Chris Waller for the gains today, who was out saying that he is focused on the payroll, on the labor market, and there could be negative payrolls. Of course, Matt, we don't actually know if it was negative payrolls because we don't have the data. We might not have data next week. We might not have CPI unless the BLS is successful in getting people back. But even so, those concerns with us flying by, Waller sending bond yields lower and small caps rallying.
Right. I think also the idea that Waller is still on the list, that Bowman is still on the list, even though they didn't dissent with Stephen Myron for a bigger cut at the last meeting, to some extent reassures investors that Fed independence remains a distinct possibility.
Yeah, I also wonder if people are looking at Waller speaking, and it's almost like a Fed chair, shadow chair effect, where they're looking at him saying, okay, when Waller speaks, maybe I'm looking at the next person leading the FOMC speaking, and therefore I trade it.
Definitely something that people are talking about in the markets today. I've been reading Neil Dutta on this, very interesting stuff from Renaissance Macro. Coming up, green shoots in other parts of the market outside of AI. Abby Yoder of JP Morgan Private Bank joins us to tell us what they are and how to capitalize. This is Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance. Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bank of America says that investors are flocking into everything from stocks to bonds and cryptocurrencies, signaling that risk demand remains strong despite the shutdown. Equity funds drew $20 billion for the week. U.S. stocks posted a 4th week of inflows. Joining us now, Abby Yonder, U.S. equity strategist at J.P. Morgan Private Bank. And Abby, we were just talking about one of the sectors that's been participating in this rally that wasn't to start the year, which is healthcare.
Yeah.
Now, that might be policy-based, but there are potentially some risks here that you're seeing, too, with that rally.
Yeah, I mean, so we had downgraded healthcare to neutral after the election last year, and it was really about policy. Like, we were just worried about what would happen, and that doesn't necessarily read through to fundamentals. It's more on the valuation side, which we saw throughout this year, right? It was one of the worst performing sectors. The valuation was really attractive relative to its own history, relative to the market, and so there was a lot of interest in it, right? Because in a market where everything's kind of expensive, clients are looking for areas that might be more attractive. And you got a little bit of a policy lift, a week and a half ago. And so you've seen valuations re-rate. Now the question becomes, okay, what happens from a fundamental perspective? We've got a lot of patent expiries coming up for these large cap pharma companies. Are they able to backfill those pipelines is now like the real question as it relates to fundamentals over the longer term.
That's too far into the future for this market, isn't it?
It seems like it. It seems like everyone's really focused on December, right? Like, just like, let's get to the end of the year where it feels like momentum just is really there, right? Everyone was talking about September is really seasonally hard, great September. So when does that really break down? I mean, I think almost this government shutdown without the data being, released all the time, it feels like markets kind of just have no reason except for to move up.
So it's not necessarily bad for markets. Right now, it's pretty good.
Yeah, but I think, absent the macro data, right, we do have earnings that are starting next week. And I think that's going to be a real, focal point, notwithstanding the fact that we aren't getting data elsewhere. Just around primarily, what's going on with AI. We've seen eye-popping numbers. I think that's the struggle, right? I think it's labeled a bubble because of the numbers, because it's just really hard to wrap our heads around. But, there's real ROI on these investments for a lot of these hyperscaler companies at this point. As long as the direction of travel is up for those ROIs, I think that's very important for the market.
Yeah, it seems like every single day we're discovering some new data center company that we didn't know about that's up 0.25%. I think it's, Applied Digital is up a bunch today. So a lot more to discuss on that front as it lists everything up. Abby, you are staying with us. That's, of course, Abby Yonder. And a quick check on where futures stand ahead of the opening bell, Matt. We are still higher, to be fair. Only 0.08% for the S&P 500 after falling yesterday. But it is the Russell 2000 that's doing better after bond yields also coming back below 4.1%.
Yeah, interesting moves. Interesting that we're holding at these very high levels. And yeah, every day we learn about a new data center company that's going to produce more electricity than the entire Eastern Seaboard needs. We're back with the opening bell. This is Open Interest.
not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, well, Trump's been, sort of saying, well, we shouldn't be focused on this, but yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We are moments away from the start of trading on this Friday. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at pretty little change on the indexes, on the futures here. 0.1% for the NASDAQ and the S&P. Russell 2000 futures doing a little bit better, as Danny points out, likely because Chris Waller came out and said he wants to continue to cut rates, and that's what they need. University of Phoenix ringing the opening bell after an IPO at the New York Stock Exchange. They've been trading for a couple of days and are doing quite well. You made a couple of bucks if you bought that stock, if you got the syndicate. And Jefferson Capital also been trading now for a couple of months, and they've also done fairly well. If you got it at the syndicate, you're doing even better than if you bought it on the first day of trading. They're up about 25% so far. Danny, what are the stocks that you're watching today? I'm pretty excited about one.
Yeah, okay. I hope it's Qualcomm, because that's what I have for you. Yeah, okay, perfect. We've made TV magic. Qualcomm down 1%. Matt, that's off the back of China investigating them. There's suspected violation, they say, of an anti-monopoly law over a deal to buy Autotalks. It's an auto tech company. It helps cars talk to each other for safety and the like. It is the latest in a string of tit-for-tat moves, with President Xi Jinping and President Trump jockeying for leverage before a key meeting in South Korea that's due to take place at the end of this month, Matt.
Yeah, I'm watching, and I think we'll have a chart of Qualcomm versus Intel, because Intel has done really well, obviously, and Qualcomm less so. And as a result, Intel is, at the open, it was worth $175 billion. Qualcomm was worth $178 billion. And those two may flip-flop in terms of market cap. So we're looking to see what happens today. On the earnings front, Levi Strauss raised its full-year outlook, but the shares have been decimated after a warning that tariffs are starting to have an impact. Of course, Levi has been an outperformer this year. I think it was up 45% year to date, but it's losing 1/10 of its market cap in today's trade. A pretty harsh punishment for something that you must have known was coming.
Well, also, they actually did well. Their profitability was better. Their sales have been good, but it's run up a lot this year.
Yeah, so. Because of Shabuzi.
Yes,
apparently.
And I think Beyonce, did Beyonce do a Levi's thing? I'm not sure. But
yes, but not Sydney Sweeney.
Notably not Sydney Sweeney, correct.
Still with us here on the desk is Abby Yoder, U.S. equity strategist, JP Morgan Private Bank. And, we were talking, Abby, about some of the other sectors that you're watching closely. AI takes almost all the air out of the room. But banks start reporting next week, and it's got to be fascinating because they've done so much in M&A. We've had so many IPOs. We've had so much trading revenue, as evidenced by Jefferies. So what do you expect?
We've had so much of that in one quarter, right? Like there have been years of this being like depressed activity, right? And I think that's where it's really important. Like those are big numbers. You all have, Bloomberg has done a great job in terms of talking about, okay, $1 trillion worth of deals in the quarter, but that's after, 2.5 years of kind of nothing. So that's something that we're focused on. The banks start reporting next week. And the unique thing about them also is that they touch every part of the economy, right? So they can really get an idea of not only what's happening from a capital markets perspective, but what's happening with the consumer, right? There's been a little bit of concern given some notable bankruptcies over the past couple of weeks, like what's going on with the lower end consumer. We can get that read through banks. And so that's something that we're going to be focused on. And then also, what's their outlook for the economy? What are they thinking in terms of their net interest income outlook as you've got, the Fed lowering rates on the short end, but the longer end remaining relatively anchored, which is the net positive in terms of their net interest margin expansion.
Can I just say on that front, it's incredibly confusing because there's some areas that look really weak. You pointed out the lower end consumer, housing looks really weak. And then on the other hand, corporate profits are really strong. The stock market trading at all-time highs, retail sales have been really robust. You put all that together, do you have a clear picture of where exactly we stand?
Well, I think the market and the economy are not the same thing. They never really have been. And when you think about the S&P 500, yes, it's definitely tied to consumer spending, but it's not 70% of, what is economic growth. And right now, we're also in this very unique period where it's been essentially AI driven, right? We all know that there is a concentration, concept within the S&P 500 over the last 2 years, both from a market cap perspective, from an earnings contribution standpoint, but importantly, what we saw starting in 2Q and what we expect, in 3Q is that 493, so the rest of the market, starting to participate from a positive growth perspective, right? Like flat to negative growth on a quarterly basis for, 2+ years, given the high interest rate environment. That's changing at the margin, so you can see more cyclical parts of the market start to, do better in that scenario.
If we are in a bubble and it bursts, obviously that kills the entire index. How do you hedge against that? And are you concerned about an AI bubble?
We're not concerned about an AI bubble at the moment. I think the rhetoric, again, I think this goes back to the numbers that we were talking about. There's big numbers. It's hard to understand. It's a very complicated technology that seems to be taking off.
By the way, yesterday, Bruce Richards of Marathon told us he thinks there's a bubble in people talking about the possibility of an AI bubble.
The two can exist at the same time. Just pointing that out.
But wouldn't you think that a bubble would be consensus, everyone agrees it's a bubble, and then but because there seems to be...
Having lived through 1999 and 2000, I know that's not the case.
Well, I think to get to that point, there are going to be pockets of unproductive spend, right? That's the definition of a bubble. That's certainly going to happen with the amount of capital that we've seen thrown at this. And you've heard CEOs of these, hyperscaler companies say that in so much as, that they think, look, but the risk of being behind is just so much bigger.
Exactly what Zuckerberg said. That's right. He said, we could misspend a couple of $100 billion, and that would be bad. But the bigger risk is that we don't spend enough.
And that's why you have everybody piling behind it. We were just talking about this earlier, this idea you have people building data centers, energy resources without people to even back it. And at the same time, these companies get business models that are increasingly complicated as they all invest and have revenue in each other. How hard is it to invest in this place in the market, which is increasingly making up the entire market, and be a generalist and not fully understand all of that? Does everyone need to be an AI expert in order to invest in this equity market right now?
I mean, to a certain extent, and you need to know how it works, right? And I think that's something you have to use it, you have to understand it, you have to understand how your business is going to use it, and really think about different use cases across that. But I think what's interesting, the biggest bottleneck right now is energy, right? That's the problem with this. It's building that out, but this grid problem that we've had in this country, right? An aging grid that was exposed to power outages, that was happening before AI, right? So if we get this investment in the grid where we get this upgrade, that's not lost because if AI ends up being a bubble down the road, right? We needed that anyway. This is getting kind of momentum behind it from a regulatory standpoint that I think is important and good and won't be a bubble down the line in terms of that build out.
So your base case, we're there. For the mid-2026, your base case is 66.50 to 67.50.
Yes.
Does that mean you lean towards the bull case? Because since we've already achieved that, we'd have to stagnate to stay at your base until June of next year.
Well, and look, we've been operating in an environment that's like very low volatility. That's not something that we expect going forward, right? Like this is going to be a choppy, particularly as going into the end of the year, where we have this kind of really tenuous relationship where the labor market seems to be weakening and inflation seems to be moving higher. Like I think that's going to create some volatility within the market. Ultimately, we think we avoid a recession. But to your question, we've been increasingly talking about our bull case. We'll get a lot of information through 3Q earnings, but what gets us to that 72.50 of our bull case is, a combination of better earnings growth. We're below the street in terms of 2026 earnings growth, so maybe coming up to where the street is, and then also a higher valuation, which I think is one of the things that's like a little bit eye-popping in terms of thinking about staying at a 22 multiple in the current environment.
There are lots of parts of this market that are rallying, though. I saw this statistic from Bespoke that really surprised me, that micro caps over the past 6 months have rallied 20 percentage points more than the S&P 500, and the last time that happened was out of the 2020 nadir into 2021. If you look at that, is it a re-acceleration of the economy trade or is it a speculation trade?
I think it's probably a little bit of both. I think it's, if you break that down, I'm sure what's driving that is probably microcap tech names or those tied to quantum computing or something like that. But there's an element of, okay, when you look at when those started to rally, it was August, right? So preemptively in front of what the Fed was going to be doing. And just because you're not seeing the 10-year move materially down doesn't mean that you're not seeing financial conditions ease, right? Which is the key component when you're thinking about, okay, what could get growth to reaccelerate and what has been holding back, other parts of the market on the small cap side who are, much more floating rate debt exposed, which, has much bigger ramifications from an interest rate perspective. So the fact that we have financial conditions coming down because we have high yield spreads where they are and we have the equity market where it is, that is a positive feed through into growth. And that I think is a net positive for those smaller cap companies as well.
Abby, we're going to have to leave it there. Thank you so much. It's been fantastic. Enjoy the rest of your Friday. That is Abby Yoder of JP Morgan Private Bank. Let's get a check on a stock market that's going a whole lot of nowhere right now. We are up 1/3%. That's better than we were in the futures trade when it was literally flat. It's a pretty even split between what is moving it and what is not moving it. It's tech on both sides of the column. Apple, Alphabet, JP Morgan, so the big cap tech stocks are the things that are helping us, along with banks. Matt mentioned we're going to get the banks kicking off reporting season starting next Tuesday. On the other side, it is Amazon, Meta, AMD also falls by 1% this morning. United Health also down nearly 1%. If you look at the sectors, how they performed this week, you get a very AI flavor to things. Because if you look at utilities, yes, that's at the top of the pile. That's not a safety trade, though. It's so many energy stocks and power providers. Abby Yoder was just talking about this. The desire and the picture that still needs to be figured out for this AI boom is how we power the things. Infotech, that follows close behind. Again, maybe the same story. On the bottom of the pile, you have real estate, energy, materials, industrials, so kind of a more cyclical type flavor to the things that have been falling. But overall, we are on track for another week of a gain, up 0.6%, Matt.
All right, so watching a market climbing, I was going to say towards the close, but we still have, a lot of time, 6 hours.
The weekend's not here yet,
It'll happen eventually. Coming up, U.S. earnings season kicks into high gear next week when Wall Street banks release earnings. We'll take a look at that next in depth. This is Bloomberg Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, the more that, if you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersetchi in Vienna, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
A check on equity markets this morning. We're higher by 0.5% for the Russell 2000 index. That leads the way up 1/3%. We're at the highs of the morning compared to where we were for futures markets. Maybe it's because Governor Waller said that the labor market is a concern to him and we could be seeing negative payrolls growth. Next, it is your top calls of the morning, some of the analyst action that we're focusing on. First up, Morgan Stanley upgrading communications equipment company Ciena, saying that concerns around the margins are overdone. Even so, shares falling 0.6%. Comerica, that gets a downgrade from KBW and sets its price target to $93 after its deal with Fifth Third. The analysts say that the deal is positive for both banks, but downgrade brings Comerica's rating in line with Fifth Third. Those shares, though, are up 0.4%. Finally, Venture Global, that gets downgraded at Mizuho after an arbitration ruling involving BP. That decision finding that Venture Global failed to declare commercial operations at one of its facilities on time. A negative surprise, according to the analysts. Those shares getting crushed this morning, down 18.3%, Matt.
Absolutely crushed.
Crushed.
All right, let's talk about the far larger companies that are reporting, and most important really to us, the biggest banks in the U.S. Are going to come out with earnings next week. JP Morgan, Goldman Sachs, Wells Fargo, and Citi all kick off earnings on a banner Tuesday, followed by Bank America and Morgan Stanley on Wednesday. For What to Watch, Bloomberg finance reporter Catherine Doherty joins us now. And Cato, this is going to be a big one, right? Because M&A is like back in a huge way.
We're seeing signs of a resurgence. That's right. It was the busiest quarter for initial public offerings that we've seen in years, since 2021. So what does that mean for the banks? It is likely that we're going to hear a lot of enthusiasm, not just for the quarter, but for the remainder of the year and potentially for the year ahead. A lot of the banks will come and talk about their both advisory and equity underwriting. Equity underwriting tied to this resurgence of the IPO market is likely to lift the bottom line for the biggest banks. As you said, we'll hear from JP Morgan and Goldman Sachs on Tuesday. We have Bank of America and Morgan Stanley the following day. Jefferies has already reported. They're the first to come out, and they've given some signs that, at least for them, they had their best third quarter on record. It remains to be seen whether or not the other U.S. banks are going to report some of their own record highs. But if the deal pipeline that is any indication, it's likely that this momentum is not just a sign for this quarter, but what's to come.
What about retail activities from these banks, Catherine? Everybody will be listening to Jamie Dimon, I'm sure, about what weather event he describes this economy as. But what are expectations for those areas of JP Morgan, Bank of America, Wells Fargo, the very retail exposed ones?
That's right. So listening to Jamie Dimon, Brian Moynihan on Tuesday and Wednesday, there's likely to be commentary about U.S. spending. There's always the consumer check-in where they will be comparing not just year over year, but quarter over quarter to see whether or not spending has slowed down. If there's any indication, also delinquencies within credit card rates, that's another sign that we'll be listening out for. But so far in the year, all that we've been hearing whenever analysts are asking these types of questions to executives on big conference calls, there really hasn't been any signs so far of any cracks or any sort of concerns that have emerged. That being said, if there's starting to be signs, that will be something that I am sure analysts will be emphasizing, not to mention the fact that with all of the BPI reports and that being delayed, there's now these signs coming from the U.S. banks that not just the bank analysts, but analysts at large will be looking and diving through the own reports from the banks to really get a checkpoint on how the U.S. consumer and businesses are doing.
Catherine, what about the bankers themselves? We've only got about 30 seconds here, but are they still desperately needed? Are they still getting paid? You know, is there still a talent war, or is AI coming in and doing more of the work?
I think what we've heard from so far is that the AI is helping with their work, but it's not replacing these bankers per se. Jamie Dimon is coming forward and saying that for his own cohort, they're able to work faster, and all of the money that they're putting into AI, that they're actually seeing a return that almost equals or cuts out what they're putting in. So if we hear from more of the banks around that front, there's going to be a lot of pressure for them to really show and not just tell how AI is transforming their business and helping their bankers at large.
Gotta say, Catherine, it feels like that pressure is literally everywhere, whether it be banks or Levi's or some pharma company. Catherine, thank you so much. Looking forward to your reporting next week when you get those earnings, Catherine Doherty. Coming up on Open Interest, how an AMD ETF wipeout could spell trouble for other leveraged single stock funds. ETF Friday, that's coming up next.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is
indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on in stocks at this moment. The S&P 500 had appreciated up 1/3 of 1%. Now it's up 0.2%. NASDAQ as well. So we're seeing some gains here. If you take a look at the biggest tech stocks, you can see a little bit of a split, right? Apple is a gainer. Actually, Apple and NVIDIA are both gainers right now, but you've got Meta down just a little bit today, AMD down after a stellar run, Qualcomm down after that Chinese investigation, and Stellantis, even after a positive sales outlook, down 1%. It's a difficult job for Antonio Filosa over there to try and right the ship, Danny.
Yeah, that's painful. Even that 13% sales increase.
Yeah.
Point taken, Matt. Elsewhere, speaking of some pain in this market, Granite Shares was forced to shutter a 3-time short AMD exchange-traded product after shares of AMD surged and wiped out its entirety of value. The product aimed to offer 3 times the inverse return of the chipmaker, so you can imagine just how painful it would be. Joining us now is Athanasios Saravegas of Bloomberg Intelligence. Athanasios, it always blows my mind that these products exist, that a retail investor can invest in something that can literally blow up and go to zero. What does this saga tell us about what else is out there in the ETF market that risks a similar fate?
Yeah, well, I think first what it tells us is people feel so good about the market, right? That you have these blow-ups and it kind of doesn't really, investors don't skip a beat. But it definitely comes at an interesting time because you had mentioned these exist in Europe, but they don't exist here. But issuers are trying. Just last week, they filed for 3x versions of all these different stocks, and you had this blow up. So I think it's just a reminder that this risk of a blow up is actually a real possibility for some of these stocks. And if you see what they're trying to put in these ETFs, it's not just AMD, right? AMD is a pretty large cap company. They're putting small cap quantum stocks. They're putting meme stocks. So they're really sort of stuffing these really volatile names in these leveraged ETFs. So I wouldn't be surprised if we see more in Europe, or even, if these 3X are approved here, the possibility could also happen here.
I mean, if you put everything on black 22, you got to expect that you could lose it all. Gambling, what we consider traditional gambling is more and more allowed. It feels like almost encouraged by regulators in the U.S. Can't we expect the same of the markets? Like, is there any question that we're going to be allowed to invest in riskier and riskier products?
Oh, I think there's no doubt. Look, NYSE just bought some shares in Polymarket, right? They bought a portion. So I think that there is this encouragement of wanting to gamble more. And if you just look at how ETF launches have changed over the year, like all of it is encouraging trading. Like 1/3 of all the launches this year use leverage. 1/4 of them are single stock ETFs. So it's really almost come full circle. It's all about, let's buy ETFs for diversified exposure. Now it's for single stock leverage. So I think it's just conducive with the market. The market keeps going up. These sort of bets on these speculative stocks are paying off. So the issuers are really just leaning into it and launching more and more of these products, upping the leverage. I think this gambling phenomenon is going to keep continuing.
All right. Athanasios, really appreciate your time. Athanasios Saravegas there of Bloomberg Intelligence. He makes up a triumvirate
Ooh, great word.
of ETF reporters that we rely on, along with James Safer, Eric Balchunas.
Yes, of course. Who, by the way, was pointing out, Eric Balchunas, the huge amount of flow into gold. Superlatives abound. It's so popular right now.
Yeah, and we're going to talk about gold later on in the program. We have someone very important from the industry that tells what he thinks about the $4,000 target. We also are going to talk to Joanne Shu of the University of Michigan. Consumer sentiment data coming out, as well as James Lindsay of the Council on Foreign Relations. This is Bloomberg.
cidade estava sitiada.
Isso, ao começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Israeli troops have begun leaving parts of Gaza. Palestinians march northward as the first phase of President Trump's peace plan takes effect and a ceasefire begins. The BBC's Hugo Bechega from East Jerusalem.
The Israeli military has pulled back to lines agreed under the deal, although IDF troops still occupy over half of Gaza. The countdown has now begun for the release of the remaining hostages, including the 20 believed to be alive, in return for hundreds of Palestinians in Israeli jails.
Swap expected to begin Monday after President Trump attends the signing of the peace agreement in Egypt and addresses Israel's parliament in Jerusalem. The White House blaming peace over politics after the president was snubbed for this year's Nobel Peace Prize. It was awarded to Venezuelan opposition leader Maria Corina Machado, who is in hiding.
I'm honored, humbled, and very grateful on behalf of the Venezuelan people.
CBS's Vicki Barker.
The committee praising Machado for uniting the opposition around shared democratic values.
At a time when democracy is under threat, it is more important than ever to defend this common ground.
A setback for the president in his bid to have National Guard troops patrol Democratic cities to protect ICE agents and facilities. A federal judge in Illinois has temporarily blocked them from deploying anywhere in the state. Correspondent Ian Lee from Chicago.
The decision came after soldiers, including roughly 200 Texas Guard members, had already arrived in the area and were seen patrolling the federal ICE facility in the suburb of Broadview. In response, Illinois Governor J.B. Pritzker wrote in a social media post, "Donald Trump is not a king, and his administration is not above the law."
The 10-day-old government shutdown could prove problematic for travelers and for some federal workers this Columbus Day weekend. CBS's Chris Van Cleve from LAX.
Transportation Secretary Sean Duffy raised some eyebrows when he said air traffic controllers found to be taking advantage of the FAA's sick leave policy could find themselves in trouble. In fact, they could find themselves out of a job.
They won't get paid until the shutdown's over. Officials in New York have busted up a scheme that sold permits to wannabe commercial truck drivers. CBS's Michael Wallace.
Prosecutors say drivers would pay up to $3,000 to have Jamie Middleton of Queens take the required written test for them. She would allegedly wear disguises, even mustaches, as she took the test for at least 10 people. One of her customers was hired as a garbage truck driver on Long Island. In all, 7 people, including DMV employees, have been arrested.
Dow up 153. This is CBS News. Muhammad Ali's 1967 draft card goes up for auction today.
His name is called twice at the Armed Forces Examining Center in Houston, but the reigning heavyweight champion of the world refuses to step forward. After he left the federal building, he told reporters why he refused.
That I've said it once and I will say it again. The real enemies of my people are right here, not in Vietnam.
Christie's auction house says the draft card was almost certainly in Ali's wallet that day. Christopher Cruz, CBS News.
A first at the Sphere in Las Vegas. Gwen Stefani will become the first female headliner at the venue when she reunites with No Doubt for 6 shows next May. Pre-sale tickets begin next Wednesday. All tickets follow October 17th. The Sphere opened 2 years ago. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Catch us on YouTube or streaming there. Go to youtube.com and search Bloomberg Live Radio, and that's where you will find us. It is Scarlett Fu and Paul Sweeney with you for the Bloomberg Intelligence program for the next 2 hours. Coming up, we're going to check in with Joanne Shu, University of Michigan. They came out with their surveys today, a little bit better than expected, so we'll get the data there. Jay Polofsky, he's the Chief Investment Officer, co-founder, TPW Investment. Get his thoughts on these markets. And then Anurag Rana, Bloomberg Intelligence technology analyst. Microsoft is out there saying they're not going to have enough data center stuff for all their AI clients until like sometime next year. So they're pushing that out. So it's just another data point that this AI spending continues to go unabated, that's for sure. Sri Natarajan, Bloomberg News Chief Wall Street correspondent. He's going to join us here. He's going to get a little preview of some bank earnings, which kick off in earnest next week for the big New York City Money Center Bank. So we'll have all that coming up over the next couple hours. Let's kick things off like we do on this Friday with John Tucker and a Bloomberg Business.
All right, we'll start there with you, Mish. We are data dependent, so let's get right to it. The sentiment index, this is the headline number, coming in at 55. Better than expectations, a little lighter than the previous reading that we had. As far as the inflation expectations, I'll do 1 year. That's 4.6%, a little better than the expectations of 4.7%. A little better than the previous month. As a result, let's go right to the policy-sensitive 2-year yield, 2 basis points lower, 357. The 10 down 4 at 4.09%. The major stock averages pushing higher on the final trading day of the week. Real quick, Levi Strauss, after their earnings report, down close to 10%. Leaders at AI computing company CoreWeave, they sold shares worth more than $1 billion after the lockup on the stock. CoreWeave shares up right now 5%. Paul Christopher at Wells Fargo, he remains bullish of stocks, even if he's a little worried about just how expensive they are.
You know, you have to sort of focus here on what I'd call the big rocks. The big rocks are that artificial intelligence is a trend. It has some momentum behind it. It's investable, and we need to take advantage of it.
Yeah, right now the Dow up 171 points, S&P 500, hovering around the record, 17 points higher right now. That's up 0.25%, 67.52. The Nasdaq 100, 64 points higher. That is up 0.5%. The Trump administration recalling a group of federal workers it now realizes it really can't do without workers at the
air traffic controllers.
Well, they're on the job; they're just not getting paid. These are the
so much better.
People who are off the job. But the Bureau of Labor Statistics, those number crunchers, because we have inflation data that they have to get out. The reason they have to get out, and the administration cares about that, is because the CPI, we base the cost of living adjustments for Social Security payments next year.
That's a big
And I would guess the last group of people you want to get angry are seniors collecting Social Security
who
do vote.
To the vote. Yep.
Yes, so that's that. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett, and I don't know who to touch back to.
We're not sure either.
I can tell you're pointing back and forth. No, you take it.
John Tucker, thank you so much. We'll check in with you a little bit later on. Scarlett Fu and Paul Sweeney here, and we want to bring in Bloomberg News' Bailey Lipschultz, who is taking a look at some stocks on the move today. Bailey, get us started on Qualcomm.
Yeah, Qualcomm shares ticker QCOM down about 1.5%, and this comes after reports that Chinese regulators will investigate the company's acquisition of Israeli company Autotalks. So this comes with the China State Administration of Market Regulation saying that the company violated the country's anti-monopoly law regarding those talks, not disclosing enough information. It seems like from some of these reports, this could be part of a bargaining chip or looking for leverage between President Xi and President Trump. We've seen a lot of going back and forth around chips and ships and tariffs. So it does seem like this could be a part of it. So not a big move. It was down a bit more in pre-market, but still not a positive to be a company like Qualcomm and be somehow dragged into the back and forth between the leaders of both China and the U.S.
Let's talk about Mosaic. What is Mosaic and what's going on there?
So Mosaic is an agricultural chemicals company. Nice. Ticker MOS, down more than 7%. So this, when you're looking at size and scope, worst day since early August, trading at the lowest level, at least on an intraday basis, since early May. This comes after the fertilizer company said third quarter phosphate production fell below what management expected. They cited some mechanical issues at one plant, utility interruptions at another. The thing that stands out from the Wall Street reaction, Scotiabank analysts saying that the stock will underperform in their downgrade to sector perform. But guys, credibility questions will resurface again. It's never good to have analysts who are on the sell side, who are supposed to be promoting stocks, coming out saying you have to question the credibility of management and what they're actually doing.
Yeah, questioning credibility are not words that you want linked to your stock ticker. All right, let's talk about Levi's, which did report earnings yesterday.
Yeah, reported earnings that were pretty solid, raising their full year outlook. But the big thing, the topic of this earnings season in particular as it relates to retail companies, tariffs. So they did warn that tariffs are going to impact companies or impact their operations. The thing that stood out to me was they're saying that they still expect tariffs of 30% in China, but they bumped up their expectations to 20% for the rest of the world. Just a quarter ago, they had that at 10%. So doubling that. Shares of Levi, ticker LEVI, down more than 10%. Worst day since early April when tariffs were unveiled. We saw Helen of Troy, the company that makes OXO goods, Hydro Flasks, saying that tariffs are starting to bubble up and be a concern for their supply chain and kind of how they're going to be pricing goods. Now we're seeing it show up in Levi Strauss, and it's going to be very interesting to see how this plays out because, again, this is a topic for the holiday season, but really going into 2026, a lot of these companies ramped up bringing their goods into stores and into the U.S. ahead of time. So Levi already has 70% of their products they need for the holiday season on hand. What does it mean for 2026? That's where these questions pop up.
All right, Billy, good stuff. I am a Levi's. That is my gene.
Yeah?
Are you?
501?
Yeah.
I only wear chinos. I'm not a jeans guy.
Oh, man.
Levi's makes chinos, or they once did, right? Levi's makes chinos, or they used to make Dockers, but I think they sold them, right?
I don't know.
That's part of it.
What do you do?
And I'll remind everybody that the remnants from denim production by Levi's is used for
You told me this.
Insulation.
the U.S. currency.
Really?
Yeah, hold up a bill. It's got a little remnants of denim in it, the little
interesting.
fibers.
If anybody has cash in this room,
You guys, I say that every time we do Levi earnings.
Yeah,
You
we
guys
don't-
forget that every time.
How does inflation impact, though, the production of the U.S. dollars is my
exactly right.
Good question. That's your assignment for this weekend.
All right, Billy, thanks so much. We appreciate that. We had some economic data here today. Our good friends at the University of Michigan out with their data. And, oh, by the way, the University of Michigan football team plays at USC tomorrow night, 7:30, so check that out. But they also have some economists there. One of them is Joanne Shu, Surveys of Consumers Director at the University of Michigan. Joanne, the numbers came in a little bit better than expected. Tell us what some of the headlines are for you.
Essentially, consumers don't really perceive any material changes in the economic outlook between last month and this month. These are relatively low readings. Consumers broadly don't feel very confident about the economy, but they don't feel that differently relative to last month. They're still most concerned about pocketbook issues, such as the burden of high prices and inflation, as well as concerns about a weakening in the labor market. And overall, they don't see things as materially different than September.
What about their outlook when it comes to inflation?
Inflation expectations ticked down just a touch for short-run expectations from 4.7 to 4.6, and long-run expectations held steady. And both of these numbers are about midway between what we were seeing about a year ago and the spike in inflation expectations that we saw in April and May when the tariff rhetoric really reached a peak.
So, Joanne, I'm just looking at the University of Michigan sentiment. The headline number came in at 55. Where would you like to see it? What would be an indicator of a solid economy?
What we want to see is several months of sustained increases. We don't want to be bouncing around at this 50, 60 level. These are not optimistic numbers. We want to see some sustained increases in an upward trajectory. That would be really important. I think it's, given that consumers are very loud and clear, they're worried about inflation, they're worried about high prices, they're worried about the trajectory of their incomes going forward, that they don't really see any relief coming imminently on those dimensions.
Given that we have this government shutdown and we don't have official data to work with, certainly on the labor market front, although John did tell us that the guys over at the BLS are going to be coming in and working on the CPI report, which will probably be delayed until later in the month. What kind of feedback, or what kind of questions, I should say, have you gotten from folks in the market about the UMich data? Because this is a solid data point that they can trade on in the absence of official data.
Well, the number one question I got over the last 2 weeks was, are you going to release on time today? and we did. We're unaffected by anything happening at the federal level. So we will continue to put out data at 10 a.m. on our schedule. And I think it's really important to look at data points like ours. You know, the missing data points are largely backward looking, what happened in the past. Consumer sentiment is forward looking. What do consumers project into the future? And I think one of the key things I think people should look at are our labor market expectations. We've had a pretty dramatic increase in the share of consumers who expect unemployment to rise in the year ahead, almost double the number from last year to now. And it's been several consecutive months where we have 60% of consumers or more who expect labor markets to weaken. Moreover, consumers are worried about job loss. That risk has ticked up as well. People's income expectations remain pretty anemic, and at the same time, troublesome for policymakers. These inflation expectations numbers are still elevated.
So, Joanne, the other thing is this release today, these are preliminary numbers. When you do the revision or you update it, how much change do we typically get between the preliminary read and the final read?
We're getting about half of our responses in for the preliminary, and we'll still have another half of interviews to go for the rest of the month. How much the revision is really depends on what happens over the course of the month. I think key for October is how long this government shutdown lasts. So far, we're not seeing a whole lot of evidence that the government shutdown is influencing consumer sentiment one way or another, but it's still early. We only had, I think, about a week of the shutdown at the time we closed our interviews. And in 2019, 2019, it took the second, the shutdown started at the end of December. It took until the middle of January to see an effect. So if the shutdown continues, we might be seeing something at the end of the month here.
All right, good stuff. Thank you so much. Joanne Shu is, of course, the University of Michigan Surveys of Consumers Director, talking about today's latest UMich data, which shows sentiment pretty much holding unchanged as from the previous month at 55. Inflation expectations sticking slightly lower to 4.6% for 1 year, 3.7% for the 5 to 10 year outlook. This is Bloomberg Intelligence on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Right now, the S&P 500 higher, coming off just the second loss in the prior 10 days. Levi Strauss, they are down 10% right now for one of the market's bigger moves, even though it reported a stronger profit for the latest quarter than expectations. You have Brent crude, which is the international benchmark, dropping 2.4%, $63.73 a barrel. Price of gold hanging around $4,000 an ounce, $4,002 right now. As far as the other major averages, the Dow up 143 points, S&P 500 up 13, the NASDAQ 100 52 points higher for a rise there of about 0.2%. The 2-year yield 2 basis points lower, 357. 10-year down 4 basis points, right at 4.0. I'll call it 4.1%. How about that? And among the best performing stocks in the S&P 500, I found this interesting. I really can't find like a news story associated with it. Generac Holdings, those shares up 2.7%. The ticker symbol.
This is the generator maker?
Yeah, GNRC.
Lifesaver.
I'm going to guess that it's related to the nor'easter that's coming up the coast of the U.S.
The one that has no name.
The no names. Well, they don't name nor'easters. You name hurricanes.
Well, you named it in honor of me.
Oh, this Storm Scarlet.
Yes, exactly.
It's raging.
Yes.
Coming at this way.
Sounds about right.
Get your generators fired up. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well, so check us out there. We got the markets higher and to the right, that's for sure. People getting a little antsy maybe about not just valuation in this market, but maybe this whole AI as a driver. How much longer, how much more juice does that have to propel the market? Jay Pulaski, he's a founder. He's a chief strategist at TPW Advisory. He's in New York. Jay, what kind of conversations are you having with your clients these days about maybe AI is being maybe overplayed, or is this market reacting, I guess, correctly?
Great to be with you, Paul and Scarlett. I think there's certainly been a lot of talk about AI and the Mag 7 and it being overplayed. I mean, we don't really share that point of view. To us, what's happening is AI is broadening out and encompassing more and more of kind of the global marketplace. And the way we've been thinking about it is how the digital is devouring the physical. So digital is the AI expansion and everything related to it. And the physical is the reality that without physical power, without water, without copper, without silicon, etc., you're not going to have an AI age. And so we begin with the premise that AI is existential, that every government, every country, every company needs to be a part of it, and therefore the spending is going to take place. Will there be overspending? Of course, but that's not really the point. The point is that this is a global issue. You see the U.S. and China tussling almost on a daily basis now about the tech stack and who's going to control it. And so to us, what we're doing is we're believers. You talk about Levi Strauss, we're believers in the pick and shovel theory of investing. So we're invested in semiconductor chips. We're invested in copper miners. We're invested in water. All the things that we think are going to be critical for the AI build out. And that's, I think in that way, we protect ourselves against kind of narrowness and the over-reliance on the Mag 7, for example. We have no position in the Mag 7. We like China tech in terms of the big tech companies way more than we like the Mag 7.
So there's no doubt that AI has jump-started entire sectors of the economy. And if you look at it, the second and third derivative as well, it's not just stocks that are rallying. We also see investors flocking to crypto, to gold, to credit as well. What do you make of this everything trade, the everything rally trade, where nothing is left behind?
Well, I think that's interesting, right? We're believers that there's a lot more to it than that. I think we go back and start with the reality in our view that we're reflating. We're in reflation, not recession. We think we're still early in a global growth long cycle that's being fueled in part by the existential nature of AI and the fact that everybody has to spend on it, combined with things like defense and climate. So there's a fiscal spending process that's global that is driving economic growth. And in that way, when we look at the world in the investment space, what we're really excited about is emerging markets, for example. We're very much convicted on the view that we are early in a secular leadership change within global equities away from the United States to the rest of the world. We think we're in the first or second inning of that, 2025 being the first year where non-U.S. outperformed, first year in many, many years. We think that's going to continue. We also think, as a result of a lot of this, that we're in the early stages of a commodity bull cycle, which you touched on gold, which gold, typically commodity bull cycles begin with precious metals. That's happened, then extends to industrial metals. We note that copper miners, COPX, is up 25% in the past month alone, up 40% in the last 3 months. So clearly industrial metals participating. And then the last thing that plays is energy. And so we're actually really been adding in the last couple of months to the energy space, which is unloved, is the worst performer year to date, and where we think there's going to be a significant up move in oil once people figure out that we're not going into recession, that the global economy is reflating, and that the surplus of oil that people use as a bear case is actually not anywhere near as robust as people think it is.
Interesting. Jay, great ideas, great themes. As always, Jay Pawlowski, founder and chief strategist for TPW Advisory here. Speaking of technology, piece of news out I thought was really interesting, Scarlett. Microsoft saying, hey, we're not going to have as much, data center capacity as we thought. And we're not going to have as much as we need until maybe sometime next year. It's just another data point that, as Jay was just pointing out, there's lots of ways to play AI. Money's being spent all throughout the economy, not just the tech stack.
But there's still logjams nonetheless.
Yeah, still logjams nonetheless. So let's see what's going on with our good friends at Microsoft. Anurag Rana joins us, technology analyst for Bloomberg Intelligence. Again, what do you make of this Microsoft news, Anurag, that they say, the data center crunch is going to persist into 2026?
Yeah, Microsoft talked about a little bit of this in the earnings call about, let's say, 12 months ago. And then they said things are easing or things are improving. And it does have an impact on their cloud business growth rate when things are tight. Now, this news, I think it was an excellent article written by Bloomberg News. And, it gives us a lot of things to think about as to what's going to happen over the next 12 to 18 months. We think CapEx could go up. We think cloud realization of the rates could go down, and the AI boom is going to continue, or the AI infrastructure boom is going to continue, because if Microsoft needs more capacity, it's going to go to people like CoreWeave, Nebius, Oracle. They're going to go to their companies that they work with to create the data centers, and the downstream effect of that. So positive news for the AI infrastructure space, but maybe has an impact on Microsoft's cloud growth rate.
Does it have an impact on Microsoft's spending as well? And how will that show up in the earnings when the company reports?
Yeah, I think it can have an impact on their gross margins. You may see it tick down. They have said that, that in next financial year, the next fiscal year, they're going to spend more on CapEx than last year, but the rate of growth is going to go down. Now, they haven't given any figure, so you can drive a big truck in that particular range because they are giving themselves the flexibility to say that. One could argue that the year after that, now they're, maybe they're going to spend even more. So that really, has an impact on the entire cycle. So that means Oracle has to spend more. That means Meta has to spend more. Amazon has to spend more. And that continues this big boom of all the downstream companies. We have anything from chips to, data center cooling and water, etc.
What inning, Anurag, do you think we are in this AI tech build out?
I think we're in a fairly early innings because unlike software coding, or you could say, the build out of a new e-commerce website, this one's going to take some time because every data center takes a long time to come up. I mean, from breaking ground, getting permits, to getting power, to actually building it, then putting it together. I mean, it takes a few years for that to build out. So I do not see any reason why in 5 to 7 years we'll still not be talking about this topic.
You know, when we come back to this data center crunch for Microsoft, is this a zero-sum game where it's Microsoft's loss for now in the short term as it builds these things out and its competitors gain? And if so, what are the names that are likely to be most able to benefit?
No, I don't think it's anybody's gain at this point. So the crunch that they are having, I bet the same thing is happening with Google, same thing is happening with Meta and Amazon. They are all going out to these third-party neo-cloud providers to see wherever they can find capacity. And at the end of the day, whoever has any capacity left, you know, they will find a customer from one of these large vendors because not only what they're doing is selling products to the third parties outside, their internal processes, they are actually improving it as well. Somebody like a Meta, they really are improving their ad business because of AI, and they need more capacity because of that as well.
Earnings will be kicking off the season next week for the banks, and then we'll get the tech companies a little bit later. What are you going to be listening for, Anurag, during this earnings cycle for your tech names?
It's a big tale of two cities. One side, we're going to see an actual drop in discretionary spending. So any of the consulting names, they're not going to have a good time. Any of the traditional software names, even SaaS names, they're not going to have a good time because subscription growth is going to slow down. But on the other side, you know, somebody like a CodeWeave or an Oracle or a Microsoft, they will talk about more bookings. Oracle is not going to report in this particular earnings season, but a month after that, I think they will all see a good increase in the backlog or the order book. But the rest of the space, I think, is going to struggle.
Once upon a time, a lot of the companies benefited from the end of the year rush to use up the IT budget. You know, every company had a certain amount of money allotted to spending on IT, and a lot of times companies didn't get around to using it until the fourth quarter, and then they would do so in a big rush. Do you see that happening this time around?
Yes, it would happen, but only happen on the AI side of things. The non-AI side of the tech spending, I think that's still going to struggle. We may not have a resolution of that till the global macro environment improves, till we have a resolution between US-China trade war, till we know what's happening to interest rate. I think that part of the equation is going to struggle.
All right, Anurag, thanks so much. Appreciate it as always. Anurag Rana, Senior Tech Analyst for Bloomberg Intelligence, bringing us up to date on what's happening in the world of big tech. I saw CoreWeave, some of those insiders sold after the lock expired.
That's always interesting.
A lot of money for those folks. Good for them. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are hovering right now right around a record with the S&P 500. You have 7 of the 11 major industry groups in the index. They are higher right now, and the biggest lift is coming from consumer staples. That's home to PepsiCo. Right now up over 3%, so it's adding to yesterday's pop. You have NVIDIA, Apple, Broadcom, the individual leaders in the index in terms of the index points right now. Amazon and Microsoft on the other side of the ledger. They're the laggards. Katie Kaminsky at Alpha Simplex says in this market there aren't a lot of themes for investors to latch onto.
I think the interesting part is the only trend is all systems go. Equities have continued to move. We have been talking a lot about gold this week. I know it reverted yesterday, but really it's this lots of headlines, but nothing moving the markets. Government shutdown, everything is good, and it's kind of confusing.
Gold up 29 today, 4,001 an ounce. Dow up 123. The S&P 500 up just about 10 points, 67.45 of the index. NASDAQ 100, 37 points higher. I had never heard of these. Samyang Foods, the parent company of Buldak, B-U-L-D-A-K, instant ramen. They have harnessed viral videos as core to the strategy for the company. The stock up almost 100% this year alone, and sales of its spicy noodles topping $185 million in the first half of this year in the U.S. They posted video of a little girl in San Antonio crying with joy when she received a package of the instant ramen for her birthday. Posted online, had almost 60 million views within just 2 weeks.
Were people hate watching or love watching?
I love it because she's so cute. And
There you go.
All she got was ramen for her birthday, and she loved it.
My son could subsist on ramen for months, I think. No protein in it, but, that stuff will...
Just don't get me ramen for my birthday, please.
Yes. Well, now we know.
Now we know.
Okay.
All right, let's talk about earnings season because it is coming up fast and furious next week, next Tuesday to be exact. JP Morgan and Wells Fargo begin reporting their results. Sri Natarajan is Bloomberg News' chief Wall Street correspondent. Sri is here to give us a preview. Sri, what is going to be the defining issue for banks this earnings season?
Well, in terms of the numbers that have gone by the third quarter, I think the big figures we'll all be looking at will be the investment banking figures. This has been the year of the deal-making rebound, and that will be very evident when we see the results from the likes of JP Morgan, Goldman Sachs, Morgan Stanley. If you look at announced deal values this year on the Bloomberg terminal, it's been up year over year comfortably. In North America, it's up about 40%. Last week, David Solomon was on Bloomberg TV, and he talked about the idea that when you think about the mega cap deals, the $10 billion plus deals where Goldman Sachs tends to do really well, those deals have been up 100% year over year. And remember, when you have a surge in deal making, like one of the analysts pointed out in our reporting today, it has a multiplier effect. It's not just the fees that you gain from advising on the deals. With it comes equity financing, debt financing, all sorts of hedging and divestitures that you have to think about. So there will be other pools of fees that you can harness. On top of that, really strong equity markets mean that IPO activity has seen a big uptick as well. So ECM revenue will also be higher. So on that front, it's looking really good for the banks.
All right, the bankers are good. How about the sales and trading side of the business?
It's been when you look at the sort of volatility we've seen this year and the direction of markets, which is it's all been headed up.
Yep.
It's the kind of volatility that they love to call good volatility. You will see numbers that again you wouldn't have imagined possible a few years ago. Equities trading coming in at about $4 billion, higher than $4 billion at places like Goldman and Morgan Stanley, numbers that they've already posted earlier this year, and they'll continue to post again. So those were not one-offs. They're continuing to do that, and that's expected to be really strong, especially for banks that are strong in products like derivatives in places like Asia. So Goldman Sachs, Morgan Stanley, who have been strong, perhaps not so much, say, a bank like Bank of America in that region, but even those products have done really well. So you will see good trading figures across the board.
I feel like last quarter was already record numbers for these banks when it comes to trading revenue, and we're just going to pile on top of that and kind of end the year with this momentum. we focus so much on the capital markets. How about the other sides of the business? Are they how big or small are they relative to the investment banking capital market side?
Look, equally important. The only thing there is that you don't see massive gyrations on that front like you might see on the investment banking side. So you could have one quarter when business and activity is completely dead and it completely roars back in the next 3 months. On the consumer side, when you think about the health of the consumer, the commentary that we've heard from top executives has been that things are fine. Yes, you're seeing some normalization. Yes, you're seeing some increase in net charge-off rates, but nothing to worry about is what Jamie Dimon told us earlier this week, where he did point one area of concern, if you had to pick one, is Jamie Dimon did talk about the subprime sector where he's seeing more weakening than, say, normalization. But again, nothing that they have to be concerned about. You will see analysts ask them about issues with some of the recent bankruptcies that we've seen, like Tricolor and First Brands, and how that is going to affect banks. And the question there will be, is it a sectoral impact? Or would it fall in the idiosyncratic category? I think the banks will tell you those are idiosyncratic issues, potentially tied to fraud. We don't know that yet. And they will say that they are carrying out all the checks necessary to make sure that they're not overexposed to any other crazy kind of risks.
When President Trump was elected to a second term, one of the sectors that was really expected to benefit from a lighter regulatory touch was the big financial companies. What are the CEOs saying about that? Are they seeing it? Are they feeling it? Is it still something that could come into play?
More than the CEOs, look at what the stock market is telling you right now. This year, since President Trump has been back in office, Goldman Sachs up 37%, Morgan Stanley 25%, JPM 29%, Citigroup 38%. So it has been a really good year for them, and the mood music out of Washington has been talking about easier capital requirements for these banks, which is why investors will then have questions for these executives as to what do you plan to do with the excess capital when these rules get formalized, when it's clear that you will have some more excess capital at your disposal. How do you plan to use it? We will be waiting to hear if they're talking about dividends, if they're talking about buybacks, or if they're even talking about prudent acquisitions, because those opportunities also exist for these banks right now, because Washington is not going to tamp down any effort at deal making, even at the big bank level. Of course, these banks are not necessarily looking to buy another major bank. What they are trying to figure out is, can they beef up their wealth management business or their asset management business? And that's where opportunities might lie. And that's where some of that excess capital may be directed. It's a good time to think about that.
Sri, before we let you go, which bank has the potential to surprise the most?
That is a very good question, because while we've talked about results that will likely be really good, the problem is expectations have also been set in very high. When your stock's up 40% of the year, you have to post some really crazy numbers to see a massive pop. So if you're asking me which bank is likely to surprise you, I would pick the banks that are laggards in this sector right now, because Bank of America is only up 15%, 14% this year. Wells Fargo is up 14%. So any positive surprise from either of those banks could have an outsized impact on their stock market performance.
All right, Sri, great stuff as always. Sri Natarajan, senior finance reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Again, big banks kick it off next week, Tuesday morning before the open, JP Morgan and Wells Fargo, I think. And Wells Fargo is always good to get a sense of just kind of how corporate America is doing, as well as the individual retail America as well, because they bank individuals all across the country and then up to the largest corporations. So that's a good one to hear from.
And also, they have recently had their asset cap lifted by the Federal Reserve. So now they can grow, they can kind of move forward with all their plans, whether it's on the corporate side or on the consumer side. It's like the shackles have been removed for Wells Fargo.
Yeah, it's kind of about time from their perspective.
Yeah, it took many years and many lawyers to get to this point.
Exactly. So I'm looking at Wells Fargo. This stock is up about 14% year to date, up about 38% over the trailing 12 months. So we'll get a good feel for the big banks starting next week, and what will be a period where the expectations, if you look at the earnings estimates, EE function for the S&P 500, not looking for a lot of earnings growth in the quarter. That was kind of similar to last quarter, and then it came in and beat.
Well, yeah, because it's all the trading numbers that generated the upside. I'm really curious to hear what all the different banks will say about their prestige credit cards, because those things have been raking it in terms of fees. And JP Morgan Chase raised the fees on its card. Amex did as well, and they're making a lot of money on this.
Absolutely. I'm going to go to JP Morgan. I'm going to check. Maybe I might walk to the train station. I'll walk to the JP Morgan building.
Is it open yet?
I
Can
don't
you
know.
go in? Can
don't
I
know.
go in?
I'll let you know.
All right.
I'll let you know, because I'll walk by there today. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Paul Sweeney and Scarlett Fu on Bloomberg Intelligence. We're streaming live on YouTube, and it is that time of the week on Friday when, you know, we look ahead to what we're going to do this weekend. And for a lot of people, that means sitting in front of the television because, you know, the NFL on Sunday, increasingly on Friday, on Thursday. Is it on
got
Saturday?
college football. Most of the country is huge college football.
Yeah, but I feel like the NFL has taken over every day of the week.
Yeah, they have. They have, and they'd go more if they could. So
And
more
here
games,
for
and
us
more
in New
weeks.
York, baseball season is over.
Yes.
Right? I mean, unfortunately. Hockey season has just began. But we're also looking ahead, of course, to the basketball season. And Randall Williams, Bloomberg Business of Sports reporter, is here with us to tell us more about the WNBA. Because although the NBA season has not yet begun, we are looking at the WNBA, which has a different season than the National Basketball Association. Their finals are being overshadowed by a labor dispute. Talk to us about what's going on there.
Yeah, the players originally opted out in October of last year. They first met in December. They've been negotiating for almost a year now, and they're not close to a deal. And so you saw frustration boil over last Friday when Nafisa Collier, who's one of the league's best players, most popular players, she went to the podium and said that the WNBA has the worst leadership in the world. WNBA Commissioner Kathy Engelbert responded on game one, and Nafisa said a lot. She said that Engelbert said that Caitlin Clark's salary and her endorsements were a result of the WNBA, and then Kathy said that was a lie, that was inaccurate, and so they are at bitter odds.
War of words.
I mean, the WNBA, finally, they're experiencing this tremendous spurt of growth in popularity and all types of measures. Great for them, and they just negotiated a new
media deal last summer.
A new media deal. So, but I'm shocked when I see the salaries for these women. I mean, they're not even minor league baseball level salaries. So, I don't know how do you deal with that, I guess?
Well, that's a big part of what they're negotiating with. I think both sides do want to see salary growth. The WNBA has said, Kathy has said that as part of their proposal, it would be a tremendous increase in salary. But the issue here is a system thing. They want a new economic structure, and they are on differing sides of how they see that. But the last time that CBA negotiations happened some years ago, they extended the deadline. And whenever you extend a deadline, that means there's progress.
Okay.
If we get to the end of October and their deadline is October 31st and there's progress, they'll extend it. But if not, we could see our first ever WNBA work stoppage / lockout.
That would be something else, especially because the WNBA has regained a lot of momentum.
Exactly.
And they definitely don't want to see that stopping. This labor stoppage, potentially, these labor issues, it's because the union opted out early from its last CBA. And that's because the economics of the game of their league changed so dramatically. Are they able to, I don't know, call pause and go back to what it was? Or is it too late for that?
Go back to what it was? What do you mean?
The original CBA that they had been in place.
No, it's they opted out and they chose that, and now this is sort of the result. And okay. I think that they could have, if they, let's say they chose to just accept the conditions and not opt out, then what would have happened is, the system would have been 2 years down the line. You don't get a chance to renegotiate salary. And so they did that, and knowing that it may result in a work stoppage. And all that we've heard, we had Terry Jackson here at Bloomberg's Power Players a month ago, and she said the entire time over the course of 10 months, they're prepared for a work stoppage if it comes to that.
So Bloomberg previously reported that the WNBA generated $144 million in league revenue in 2024, 177% increase since 2019. That sounds like a big number, and if I'm a player, I think I'd want to participate in that growth.
No, you're right. I think that the players are looking at all of these metrics. You see the new media deal, you see all these merchandise and digital sales and all these different things that are increasing, but yet when WNBA Commissioner Kathy Engelberg goes to the podium, they often talk about profit and how they're not profitable. So I think it's a mix of both. The economics of the league are a bit camouflage. Like the players the WNBA hasn't been transparent with them. That's what they claim. And so with that in mind, we don't know if they're profitable and if they're not. But whenever they're negotiating, they say they're profitable. But whenever they're at the podium, they're saying we're growing so fast. So there's a lot of frustration involved.
All right, let's move on to another story that you wrote, which is about the NFL narrowing down its list of possible flag football partners. The NFL is getting into flag football. I didn't realize this.
Yes, they are. I mean, it's ahead of the Olympics in LA 28, where flag football will make its debut. And with that in mind, the NFL wants a flag football league. I think that, personally, I think women's flag football could do incredible. But the league has went through a number of proposals earlier this year, and now they're down to two. One, which is Tomorrow Sports, and another effort that's led by former NFL running back and Hall of Famer Curtis Martin.
Yep, former Jet. Tomorrow Sports, led by no two slouches, Tiger Woods and Rory McIlroy. So there's some quote-unquote players out there with some money behind them. Mark Lazary, another one, is out there. Is this really a business? I mean,
I think so.
What are they basing it on?
I think we'll see. We'll see. We don't know the structure. We don't know how many teams. We don't know the players. All of these things are to be determined. What we do know is that the facilities are essentially already there. Now, I'm not sure that we don't know if they're going to invest and develop women's flag football facilities, but we do know there's a stadium in MetLife right over there. There's plenty of football stadiums. And so we'll see how the NFL decides to move forward with this. But I think it's really exciting. Women's flag football and men's flag football is growing at a high school level. And if you can get into a college level and maybe it becomes a spring sport that leads into the summer, I think that could be a really, really fascinating league that we could see in some years.
Yeah, I know a lot of families whose kids play flag football. Yeah. And it's become a big thing.
Very cheap sport.
Yep,
yeah, that's a good point.
Too. Yep.
All right. Randall Williams, Bloomberg Business of Sports reporter on the top business sports stories. Of course, we're keeping an eye on the WNBA as those discussions continue, and this new NFL flag football situation, which, Paul just shook his head.
Yeah, I mean, I don't know. You put it on TV, I'll probably watch it. Exactly.
There you go. That's what everyone's doing this weekend.
Yep. So we'll see. All right, Randall, thanks so much. Appreciate that. Randall Williams, U.S. Sports Business Reporter, bringing us that story. Looking at the markets here, we've got the S&P down 22 points. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well, so check us out there. Coming up in this hour, we're going to check in with Steve Mann. He's the autos analyst for Bloomberg Intelligence. We're going to talk about Stellantis. They've been the hardest hit by Trump's truck tariffs, and so we're thinking about reshoring. That might be a good idea for them, so we'll get the latest there from Stellantis. It is Friday, which means we talk municipal bonds because we love the muni market. Shruti Singh, a Bloomberg News municipal finance reporter, is going to come to us and give us the latest reporting coming out of that municipal bond market. Nathan Dean, Bloomberg Intelligence senior policy analyst on the U.S. government shutdown. We'll get the latest coming out of D.C. and Lindsay Dutch, Bloomberg Intelligence consumer hardlines report. Apparently, Dick's reported some earnings. We'll get the latest there and how the sporting goods business is going and how the consumer's doing at the retail level. So a lot coming up in the next hour. But first, let's kick it all off with John Tucker on the Bloomberg Business Flash.
All right, this comes under the heading of breaking news. I was telling you all the major averages were higher before near records. They have just taken a nosedive on this headline that is crossing the Bloomberg. President Trump threatens, quote, massive increase of tariffs on Chinese goods. And of course, stay right here on Bloomberg Radio. We're going to bring you all the details as soon as we can flesh this out and get a little more information. But again, the headline just crossing the Bloomberg, President Trump threatens massive increase of tariffs on Chinese goods. So we go from hovering around records to the S&P 500, now down 0.7%, a 48-point drop right now, 66.83, still dropping. The NASDAQ 100 down 240 points. That is down a full percent right now, and the Dow Jones Industrial Average taking a dive of about 335 points right now, down 0.7%. The speculation is that David Ellison had just bought Paramount, wants to buy Warner Brothers, so that's why that's one of the most active stocks. Also, one of the best performers in the S&P 500, Warner Brothers Discovery at this point. Meantime, Rebecca Patterson spoke to her earlier today, the former chief investment strategist at Bridgewater Associates. She sees a risk associated with the next earnings season coming up.
I think that this will be another one of what we're used to seeing. The market will largely come across over those expectations. With AI, though, keep in mind, the more money that goes in here, the higher the valuations get, the harder it is for them to continually impress expectations.
Okay, again, the major averages, after being higher earlier, in fact, hovering near records, they are on this headline. President Trump says he's threatening massive increase of tariffs on Chinese goods. So we'll try to flesh that out as more details become
Trump
available.
says there seems to be no reason to meet Xi in South Korea.
Xi Jinping, they had talked about a meeting in South Korea.
This is an abrupt change from just a few days ago when everything was great.
It's a tweet. You don't read too much into these things. They tend to go back and forth. So, but anyway, John Tucker, thank you so much for that. We appreciate it. John Tucker giving us the latest there. Scarlett Fu and Paul Sweeney live here on the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. And we'll stay on top of this news from President Trump, again, saying that threatens massive increase in tariffs on Chinese goods, as John Tucker was just reporting, and also saying, President Trump says there seems to be no reason to meet Xi in South Korea. So we'll see how that plays out. Right now, let's get a sense of what's going on in the marketplace, what stocks are on the move. To do that, we check in with Bloomberg's Denitsa Sekova. Denitsa, what are you looking at?
Let's start with Applied Digital. Despite the pullback in stocks, that's one that's clearly soaring today. It was up as much as 33%. Now it's about 20%. The firm said it's now in advanced discussion with a hyperscaler client for its second data center. This is one of the latest AI infrastructure name that is just soaring. The stock is up more than 300% year to date. The ticker is APLD. First quarter revenue was well ahead of estimates. There was one income payment from a tenant fit. When it comes to the losses, they were better than expected. Adjusted loss of 3 cents a share, narrower than the 16 cents that was expected. Of course, with the AI revolution, there is a whole race between the biggest technologies companies spending billions for data centers, and clearly this is one of the new favorites winners, and it's getting a big spike today despite sentiment soaring.
All right, let's also talk about Levi Strauss.
Yeah, and that is one stock that is affected by tariffs, and clearly things are moving fast there. Levi Strauss shares were down as much as 14% today. The apparel maker upgraded earnings guidance, still fell short. They mentioned tariffs, and they mentioned some tariff calculations that are changing pretty fast. They're expecting tariffs of China about 30%. They increased their expectations to about 20% for the rest of the world. So clearly we see a lot of those retailers are constantly upgrading their forecasts and facing a lot of pressure. That was one name that was actually some of the big winners this year. It was up more than 40% going into the print, and it's still up 25%, but you can see how big of a move we're seeing on tariff uncertainty. Revenue was $1.5 billion for the third quarter. Some of its brands like Beyond Yoga has been performing very well, but yet it's all coming back to the macro and what we're seeing in tariff news.
Okay, one more. What do you got?
We can talk about Mosaic, which is down today. It's about 8%. The fertilizer company said the third quarter phosphate production fell below what management expected. The ticker is MOS. That is another stock that was actually doing quite well year to date. It's still up 25% after the earnings report today, but the Tampa-based company said Friday that mechanical issues and utility interruptions led to a meaningful decline in production. This has been a series of issues for the company, which has already taken a hit from U.S. tariffs as farmers have less spending power. The company said in August that imports of phosphate and potash were down about 20% year to date. So more pressure from trade policy here for sure.
All right, Denitsa Tsakova, thank you so much. Denitsa, of course, one of our cross-asset reporters for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. And just a recap here, we do have indexes in the red with the NASDAQ lower by more than 1%, Paul, after the president has posted on social media that there seems to be no reason to meet Xi Jinping, the president of China, in South Korea as they had planned. This is certainly disrupting markets, at least in the early hour on Friday.
Yeah, and the president's out with a very lengthy social media post where he kind of goes into some details about some of the behavior from China that he finds
objectionable.
Objectionable, thank you. And so this is the time to potentially retaliate. So we'll see how it plays out from here. But as you said, Scarlett, definitely impacting the markets here with the S&P off about 0.75% and the NASDAQ off more than 1%.
All right, let's turn now to a sector that, of course, is affected by tariffs directly, and that is the auto sector. Steve Mann is Bloomberg Intelligence Global Autos and Industrials Research Analyst, and he joins us now to talk about Stellantis. Stellantis, it's Chrysler, right, Paul?
Jeep, Chrysler, all those good brands.
Okay, I always get confused because I see Stellantis. I'm like, what car company is this? I don't get it. In any case, its third quarter shipments climbed to 13%, led by a rise in North America. So there is a bit of a recovery here after the car maker has been working down inventory in the U.S. Steve, thanks for joining us. Let's talk a little bit about Stellantis and how sensitive, vulnerable it is to President Trump's tariffs.
Yeah, I think they are very sensitive to tariffs, but I think a lot of the impact on companies like Stellantis and the Detroit Trio is really their operations in Mexico and Canada. I think Trump is looking for them to actually move some of those production back into the U.S. and employ more U.S. workers. So, I mean, there's been a lot of rhetoric and a lot of potential changes. Changes are impending, but I think for now, auto tariffs has been pretty quiet, and I don't think the Trump, the tweets is going to impact the Detroit 3.
So, where are we in terms of implementing tariffs on autos, just incoming and outgoing in the U.S.? Where are we? Are they actually being levied at the moment?
Yeah, it's happening at the moment. We've heard a lot of news on companies moving production back to the U.S. GM have moved some of their Silverado production, one of their highest profit vehicles, from Canada back to the U.S. So we're hearing that from Ford and some other automakers. Hyundai is investing a lot in the U.S., likely to move some of the production from South Korea into the U.S. So we are already starting to hear and see the effects of those auto tariffs.
Steve, this might be an unanswerable question, but with companies making the moves to do that, this will take a long time. This is a multi-year process, right? You don't just decide that you're going to reshore manufacturing. It happens the next day. Is just saying that you're going to do that enough to appease the administration?
Well, I look at it as a two-phase process. There's what I call low-hanging fruits. So, for example, I gave earlier on the Chevrolet Silverado that GM shifted back to the U.S. If they have spare capacity in the U.S., that's a no-brainer. They can shift that back quickly. But you're absolutely right. Longer term, it's going to take years to kind of unravel the North American supply chain to focus more in the U.S. It's going to take years because plants take years to build, and you also have to bring back the suppliers. The suppliers rather produce their parts near the near the assembly plants, rather than in other countries where shipping costs could be very high. So it could take, if not years, a couple of decades to actually turn that ship around.
So where is Stellantis, just from a positioning perspective right now, relative to the other automakers out there?
Yeah, Stellantis has been losing quite a bit of market share on their the higher profit vehicles like the Ram trucks, the Jeeps. And with the new CEO coming on board, the shift, the strategy has shifted from more of achieving cost savings from the mergers that created Stellantis back in 2001 to more of an outreach. How are they gonna answer the demands of the consumer? They really want the V8 back, which is what they're doing. They're bringing that V8 Hemi back, and they'd also bring the mid-sized Jeep Cherokee back, which has been very popular with consumers.
All right, Steve Mann, thank you so much. Steve Mann is Bloomberg Intelligence Global Autos and Industrials Research Analyst on Stellantis and some of its challenges to bring manufacturing back to the U.S. Let's go now to Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, on the news that just broke at the top of the hour, which, Mandeep, I think you've seen as well. The president posting on social media that he sees no reason to meet Chinese President Xi Jinping and threatened a massive increase of tariffs on goods from China. And, of course, that sent U.S. indexes deeper into the red. They've bounced back a little bit, pared some of their losses, but we are still seeing red on the screen for equities, and treasuries are higher, pushing yields lower at the moment. What does this mean for your sector, especially when it comes to those all-important chips and advanced AI chips at that?
I mean, look, everything is on the table in terms of how these companies plan to build their data center capacity. Even a company like Qualcomm, having an investigation to one of their acquisitions that they made. I mean, any company right now in the hardware or the chip space that has revenue exposure or supply chain exposure to China gets affected by all these, trade negotiations. And to me, this is a sign that negotiations are not going very well. The fact that they probably won't even meet. And that has a bearing. I mean, if you're an NVIDIA, you already lost some China revenue. You have taken out that revenue from your guidance for next quarter. And Jensen Huang has been very vocal about how important China is as an end customer to sell their chips. Even if that means selling H20s, he wants to sell those chips. So with news like this, probably they are not getting any China revenue. Even Apple, I would say that gets affected in terms of what they are able to do in China going forward.
So have the companies in their guidance incorporated this? I know you mentioned Huawei, Jensen Huang at NVIDIA. Have other companies done it pretty well, do you think, or are people still kind of wait and see?
I mean, so just compare NVIDIA and Apple. In the case of NVIDIA, they've taken out the China revenue from their guide.
Okay.
Apple still has 20% China revenue exposure, and they haven't taken anything out of their guide in terms of unit shipments or the potential sales in China. So, and they have a much higher supply chain exposure to China.
Yes, they
so
do. Yep.
From that perspective, look, all this, I would say, has its ebbs and flows in terms of, one day we get optimistic about, what the China exposure means and how things are going. But on the other hand, I think this is a looming threat in terms of just what the tariffs mean in terms of the cost of building all these things. There's a reason why it costs about $40 to $50 billion to add 1 gigawatt capacity here in the US. Whereas in China, it's much lower because they have more power.
Yeah.
So when you think about it from that perspective, 5 gigawatts will cost $250 billion. If you impose tariffs, that takes up the cost even higher. Whereas if there is a resolution and there is a deal, then eventually that $50 billion will probably go down, and that's positive for AI adoption. So that's how, as an investor, you have to think, where are we headed in terms of the costs?
Where does this leave TSMC, Taiwan Semiconductor Manufacturing? I know that all the big chip makers rely on it. It is an important manufacturing partner for NVIDIA, for AMD, for all these companies. And whatever it makes, it's not exposed to China tariffs specifically, but it is very much tied to China as it is to the US. Where does that leave it?
So the two deals that OpenAI announced in the last 2 weeks, one with NVIDIA and with AMD, both of them pointed towards using TSMC. At the same time, the US government has taken a stake in Intel, and they are very keen to have Intel get some slice of this data center pie in terms of the fab side of the equation.
So Intel's going to be our TSMC?
Not TSMC, but even, some portion of that data center build out, if that comes to Intel in some capacity, I think that will be huge. And it's getting reflected in the bid up for the stock. So clearly there is some anticipation of that. News like this makes me probably lean towards that even more. I think that's also part of the negotiation, having Intel some advanced node manufacturing. So clearly all things are pointing towards Intel taking some share, but at the same time, TSMC is way better in terms of manufacturing and their facilities. So that's not going to change overnight.
All right, very good. Mandeep Singh, thank you so much. We appreciate that. Mandeep Singh, Senior Tech Industry Analyst for Bloomberg Intelligence, joining us here in studio. Mandeep, we're smart. He would charge us like a per appearance fee. I mean, we rely on.
We're so lucky because we get them for free here.
Exactly, we get them all part of the plan here. S&P down 0.7%. The Nasdaq off more than 1%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Wow, what a difference a tweet makes. The major stock averages, they've gone from flirting with right around their record closes to an instant sell-off. And President Trump posting on social media, threatening a massive increase of tariffs on Chinese goods, and also saying there's not much of a reason to meet with Chinese President Xi Jinping. You heard Mandeep say that NVIDIA and Apple particularly exposed here. Apple shares right now down 1.9%, and shares of NVIDIA, they're falling. They are down 1.7%. Overall, the S&P 500, 72 points lower. That's down just over 1%, 66.64 on the index. The Dow, 301 points lower. And the NASDAQ 100 down close to 400 points. This is a decline of 1.6%. Also, another headline I want to bring to you. This one, according to the Wall Street Journal, Johnson & Johnson of New Jersey in talks to buy Protagonist Therapeutics, the ticker symbol there, PTGX. You bring that up, and because of the volatility, there is a trading pause in that particular stock, PTGX. That's Protagonist Therapeutics. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Muni Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's talk municipal bonds. Why? Because it's Friday, and that's what we do here. And today we're going to check in with Shruti Singh. Shruti is the municipal bond reporter for Bloomberg News, based out in Chicago. Shruti, thanks so much for joining us. Let's focus on Chicago a little bit today. Talk to us about the school system out there in Chicago and the finances of the school system and how that's impacting the municipal bond market.
Yeah, so the Chicago Board of Education is the largest issuer based in the U.S. of municipal junk bonds. So they're a very large school district. It's the fourth largest in the country, and they're a very large issuer of municipal bonds. We've seen some spread widening in terms of how much the district has to pay for its bonds in the last year or so, given everything that's been going on. One of the largest factors is some, tensions between the city and the school district. The school district is still under mayoral control. The mayor appoints half the board, and half of them are elected. This is a transition the school district is going through since about a couple of years ago, when there was a legislative change to make a 7-member board transition to a 21-member board, fully elected by 2027. So there's a lot of uncertainty right now in terms of where its funding is going to come from, how much support the city of Chicago is going to give the school district going forward. And we've also seen some questions about how much federal funding is going to go toward public education broadly, not just in Chicago.
It's kind of a perfect storm that Chicago is dealing with here. So what are the options, Shruti, then for the city of Chicago?
So the city of Chicago and the school district are certainly still tied together until the board is fully elected. But there's still two separate taxing bodies. The taxes go directly to the school district and separately to the city of Chicago. The city of Chicago itself is facing a different budget deficit from the Chicago Public Schools. The mayor is due to lay out his spending plan next week to close a $1.15 billion deficit for 2026. People are going to be looking for how he does that. Is there going to be any sort of cuts in terms of layoffs, furloughs, any pullbacks in services, or is it going to be more leaning towards a mix of new revenues? And that is the question that people are trying to answer over the next week as we all wait for the budget to be unveiled.
Shruti, how are the the bonds associated with the Chicago school system, how are they trading these days?
Well, we've noticed some spread widening recently, but it's one of those. It's an interesting situation because it's a very large issuer. It's a very large school district, but it is junk rated, and so the bonds, given its rating overall, they trade a little bit broader in general, but we have noticed some spread widening in recent months just because of the challenges we talked about.
The president has also taken aim not just at the mayor of Chicago, Brandon Johnson, but also the governor of Illinois, J.B. Pritzker. A lot of threats to bring federal troops into Chicago and, making a lot of comments on social media overall. This actually goes back a long way. It's not something that just popped up. Give us the backstory here.
So Chicago has been a sanctuary city for a long time, and that is something that's counter to what the administration's position is. And so there's been challenges going back and forth between the administration and the city of Chicago and the state of Illinois for a long time, just because of the positions that the two sides have taken. Also, with Governor J.B. Pritzker, he has been a longtime critic of President Trump and is under speculation in terms of whether he has some ambitions for national positions in the future. He's been speculated as a potential contender for the presidential nomination for the Democrats in 2028. So there's a lot of, backstory in terms of what's going on. But Chicago isn't the only one that, is under question in terms of how much federal funding it's going to get. We've seen recently that some transit funding, infrastructure funding could be frozen in other cities, including New York. And, recently we heard that there could be some transit funding that's frozen here in Chicago as well. But Chicago certainly seems to be a focal point, but it's certainly not the only city.
All right, Shruti, thank you so much for joining us. Shruti Singh, municipal finance reporter for Bloomberg News. She's located in our Chicago bureau there. Let's head on down from Chicago. Let's head down to Washington, D.C. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, is there. Nathan, we're usually talking to you about the shutdown because the government is still shut down. But love to get your take on kind of just the latest news coming from President Trump's social media about potentially massive tariffs on China, potentially not meeting with President Xi of China at the conference coming up in a couple weeks in South Korea. What's the feeling in D.C. just about this ongoing trade war?
So I think this was a little bit of a surprise, and I think this could be a little bit of a wake-up call for the markets here. I mean, there's a lot riding on this meeting with President Xi in South Korea. I mean, just talking to our ag analysts who are looking at the soybean space, there's a lot here that the markets want to see, and they want to see stability, and they want to see clarity coming out of that meeting. Now, in terms of this tariff threat, call it, that President Trump is saying that potentially more tariffs on China is coming, we just should note to our clients is that there's this idea of an IEEPA tariff versus a Section 232 tariff. Now, IEEPA is what's currently going through the courts, and we anticipate that the Supreme Court is going to strike down President Trump's usage of IEEPA tariffs. But it should be noted is that the United States also launched what's called a Section 232 investigation of rare earths in China back in April. So even if the Supreme Court challenges this IEEPA tariff, President Trump does have the authority to move forward with China tariffs in this matter related to rare earths because of that 232 investigation. The investigation takes time, but obviously this is something that President Trump has a higher legal ground doing. So we definitely need to watch out for whatever comes from the next couple of weeks.
What is our understanding of the state of negotiations between the U.S. team and the Chinese team just to even get that Xi Jinping-Donald Trump summit taking place?
It's challenging. So I was talking to our geoeconomics team that covers a lot of the geopolitical negotiations that take place between separate countries. And the story that we essentially learned is that it's very challenging because President Trump offers very much a carrot and stick strategy when conducting these negotiations. I mean, obviously, just a few minutes later after he posted about China, he posted another Truth Social post praising Vladimir Putin in terms of other context of negotiations and discussions they've had. So I will say is that this came on a Friday. This obviously will warrant a response from China. And we still have plenty of time until this South Korea summit takes place at the end of the month. So I wouldn't be surprised if you see the more carrot portion of that strategy play out next week. And we've often seen this with President Trump, just with anything related to tariffs. You have an announcement, you have the Truth Social post, and then over the next couple of days, more information trickles out that actually warrants more moderation. So will be very important to watch what happens, because, you know, this is not related to the government shutdown, and a lot of the power here, pretty much all the power here, relies on President Trump's ideas and thoughts.
And a sell-off in the stock market accelerating here. S&P is off 100 points. That's 1.5%. The Nasdaq off about 495 points. That's 2.1%. And the Dow Jones Industrial is off 440 points. That's almost 1%. So the sell-off is accelerating here in the morning trading session. Nathan, let's get back to your favorite topic, I'm sure, which is the shutdown, the day 10 or 11. I kind of lost count here. Now we come to the weekend here. Any reason to believe something will happen over the weekend?
So I don't think anything is going to happen over the weekend. I mean, both sides are going home for the weekend, just to cool off a little bit. But when they come back, we do have a massive pressure point that the U.S. military will not get paid on October 15th. And you are beginning to see cracks amongst some members of both parties that are starting to say, hey, maybe we should be reaching the point where we should be trying to figure out what a solution is. If there is a solution, it's most likely going to be, when there's a solution, because I don't think the government's going to remain closed forever, it'll be a reopening of the government.
Nathan.
Exactly. But I think there's also going to be an agreement to deal with these Obamacare subsidies. Now, what that agreement on the Obamacare subsidies looks like, if it's a one-year extension or if it's income-based limits, that's still to be determined. But you are going to see policymakers return from the weekend and come back here next week saying that maybe we should actually start looking for a solution here. I do believe that a solution is going to be found amongst the moderate senators, the bipartisan group of senators that have been talking about this. I think they are going to come up with their own solution. I think they're going to hand it off to leadership and say, here's what we have found. But the big caveat here is that if there is a deal on Obamacare subsidies and the Senate approves it, it then goes to the House, and there's this rule called the Hassert Rule, in which the Speaker of the House cannot bring something to the floor. It's an unofficial rule. It's not written down. The Speaker can't bring anything to the House floor unless the majority of his party or her party supports it. And so if there is a deal on Obamacare subsidies and Speaker Johnson doesn't agree with it, if he adheres to the Hassert Rule, we're right back where we are, and the shutdown continues.
Interesting that the House does play a role here after our talking about how it's all in the hands of the Senate, right? So, Nathan, what will you be watching for this weekend? Is this something where the negotiators, the lawmakers, are actually going to do something this weekend and try to get us out of this jam by next week?
So I'm going to look at two things, and one is the air traffic controllers and very much anecdotally what happens at the airports, because talking to anybody, they're all saying we're going to get to the airport early or there's delays and so forth. So the air traffic controllers, I think, is going to be an important thing to watch. The second thing I'm going to look for is additional polling data, because that's what I think members of both sides of the aisle are looking at the moment, is they're just waiting to see, when Senator Schumer says every day gets better for us, they're looking at the polling data. And if the polling data comes back and starts to tip one side or the other, and right now it suggests that more independents are blaming Republicans than Democrats for this, I think that's going to be the impetus to get these policymakers to say we need a deal. And I would also just add out for a third, there's been discussions about trying to extend military pay.
Yep. All right, Nathan, great stuff as always. Really appreciate you taking the time to help us out here as we navigate through all of these geopolitical issues. Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence, a real valuable resource for us here, and he's down there in Washington, D.C. Again, the sell-off accelerates. S&P off 110 points. That's 1.6%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, it was a Truth Social post that is sending stocks reeling, and the sell-off just keeps getting deeper. President Trump said right at the top of the hour he saw, quote, no reason to meet Chinese President Xi Jinping. He also threatened a, quote, massive increase of tariffs on goods from China, citing recent, again, quote, hostile export controls on specifically rare earth minerals that come from China. So after hovering near the record highs, again, the major averages are tumbling. The S&P 500, 115 points lower. That is down 1.7%. We're at 6620 on the index right now. The tech-heavy NASDAQ 100, that's down 577 points. So that's a sell-off right now of 2.3%. The Dow down 574 points. That's down 1.2%. It's also affecting a lot of other asset classes. We'll do treasuries. The 2-year yield, which is the policy-sensitive yield, that's down 7 basis points, 352. The 10-year, that's down almost 8 basis points, 4.05%. And then the long bond, the 30, is 7 basis points lower. Right now, that's 465, I want to call it. And then you go to Brent crude, the international benchmark, right now 3% lower. NYMEX American crude, NYMEX crude, that's down 3.5%. And then assets like gold, which you go to, you know, instead of sticking your money on the mattress, COMEX gold right now up 1.3% at $4,025 per ounce. The announcement casting in doubt not only the agenda for President Trump's planned trip to Asia, which including a meeting with Xi Jinping later at the Asia-Pacific Economic Cooperation Summit, but also the future of negotiations over things like the Chinese refusal to purchase U.S. soybeans. You'll know that this harvest season in the U.S., farmers were particularly counting on some sort of agreement. A lot of people have been calling this harvest season in the U.S. for, you know, corn and soybeans Farmageddon. So it's a real serious issue. And as Mandeep was mentioning, some of the tech shares also taking it on the chin, particularly exposed. Shares of NVIDIA right now down 1.9%. Apple shares are 1.9% lower as well. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and of course, we're going to stay on top of that live as any other developments take place. Scarlett and Paul.
I go back to what Nathan Dean was telling us of Bloomberg Intelligence, that maybe this is just a stick part of the carrot and stick negotiation that President Trump favors.
Yeah, exactly. So we'll see how that plays out. Red headline crossing the Bloomberg terminal. BLS will publish September CPI report on October 24th at 8:30 a.m. Wall Street time.
Versus the scheduled October 15th.
Okay, thank you. I didn't know what that date was. Okay, so we will get the data, just be a couple of weeks later here. Let's talk about the consumer here. How's the consumer doing out there? There's lots of ways you can kind of get a sense for that. We talked to Mike Halen from Bloomberg Intelligence about how the restaurant traffic is doing. And we also can talk to Lindsay Dutch. She covers the consumer hardlines retail companies. She's a senior analyst at Bloomberg Intelligence. Lindsay, let's talk like, I don't know, Dick's Sporting Goods, Ulta. You got a couple of companies that are going to be reporting earnings coming up. And what do you expect from these companies?
Yeah, thanks, Paul, for having me. We're taking a look at sort of full year guidance going into the third quarter earnings and, of course, that important holiday shopping season. And what we've noticed is, you know, the guidance ranges are very, very wide for these retailers. It's baking in a lot of uncertainty surrounding the consumer. But when we look at the demand trends and sort of first half results were pretty solid for many of these hardline retailers, and we're seeing better demand in the beauty space. You know, better demand for electronics even, and home furnishings, some categories that have really been struggling. And when I look at this guidance range, I sort of think that we might be able to trend sort of towards the middle, upper half of the range if that demand can hang on through the second half into 2026.
Can that demand hang on if prices increase or the supply is limited? We're hearing again these headlines from President Trump that there could be a massive increase of tariffs on goods from China. Dick's Sporting Goods, Ulta Beauty certainly do rely on China for for their supply chain. So I'm curious whether that gets folded in.
So I think when we think about the second half, I think a lot of that inventory is already in place, and there have been price increases that have occurred on that inventory. We're expecting to see that. We do think the shopper is going to come out a lot like they did last year, selective, value focused, but they're still willing to spend, on certain things. And I think that, the key draw there is, anything that's new, Nintendo Switch 2, anything exclusive or like a premium type product, which does skew to a Dick's Sporting Goods. I think when I think about the risk, of these headlines that we're seeing, Best Buy, is responding to those headlines. I think if we see a big, much higher levy on goods from China, that's something that they're going to have to address in the 2026 year. They have significantly reduced their exposure. Of those hardlines names we were talking about, Best Buy is probably the most exposed, 33% of COGS, but it's all indirect exposure. So it's not stuff that they're directly importing. It's just some of the inventory that they have on hand.
Lindsay, the companies you cover, the hardline retailers, what's their, I don't know if they have a collective view of how the consumer's doing out there. What are they telling you guys?
Yeah, again, I think what we've seen, and this is sort of going back all the way, to last year's holiday season, is that newness is driving demand, and that's no matter what the category. So like beauty, electronics, we saw explosive demand for that Nintendo Switch 2, but even in the sporting goods market, new product or a premium type product is really drawing that consumer in, even if it's a higher price point. So consumers are definitely value focused, but they're making sacrifices. They're choosing to shop value on certain things, and then they're splurging on other things. It's really hard to discern, but like I said, we've seen improvement broadly in the home furnishings category, also in electronics, and then beauty, which kind of took a leg down last year, is looking a lot better this year.
Lindsay, talk a little bit about these companies and their efforts to make sure that the consumer stays with them no matter what happens, even if they can go to, say, TJ Maxx and get it for cheaper, because they have these loyalty programs that tie the consumer so closely to their brand, even as an aggregator. Dick's Sporting Goods does not sell its own branded merchandise. It sells Nike, it sells New Balance, but people go back repeatedly to the store.
Right. Yeah, those loyalty programs, for the retailers are great because that gives them a lot of data on their customers that shop the most with them. I think this is where, assortment matters and exclusives matter. So, Dick's smaller peer, Academy Sports, they have not seen the growth that Dick's is seeing. And it's because they also carry Nike, but they might not carry the brand new Nike basketball sneakers for the season, whereas Dick's does. So the assortment, you really have to dive in and look at very specifically, what some of these retailers have. They have to have that newest product. They have to have, exclusive items where you can't go elsewhere to get it. And that is really key to keeping that customer back. I also think, when you have a positive experience shopping at a retailer, you're going to go back to them as well for that customer service or whatever it is that they're providing to you that no one else can give you.
All right, Lindsay, thanks so much. Appreciate it. Lindsay Dutch, Consumer Hardline Senior Analyst for Bloomberg Intelligence. She's down there in Princeton, New Jersey. Coming up, we're going to check in with Joe Doe. He's a Bloomberg News economic statecraft reporter. We'll get his thoughts on this latest social media post from President Trump about and threatening massive new tariffs and saying that he sees no reason to meet with Xi when they get together at this conference in South Korea at the end of this month. So that's certainly rocking the markets here, Scarlett.
Yeah, and you could argue that perhaps we were due for some kind of pullback given the nosebleed levels that stocks were trading at. People have been warning for a long time that there's concerns about bubble territory, that things were looking kind of toppy, 1999-ish, maybe 2007-ish. The S&P now down 1.3%. The NASDAQ off even more, lower by 1.8% so far today.
Yeah, and it's even impacting the commodity space. WTI crude oil off 3.5%, now $59.30.
You know what's up?
What's up?
Gold.
Yes, gold is up. The safe haven. Bitcoin, it is down. It's off 1.5%. We're now at 119,000. We'll have more coming up. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, the news of the morning. We were going along swimmingly there, folks, in the market, up about 0.5% and then President Trump took to social media around 11 a.m. and talking about maybe considering massive new tariffs on China, not happy with some of China's policies from the economic side, and then even questioning whether he wants to meet with President Xi, which they were kind of scheduled to do in a couple of weeks at an economic summit in South Korea. So let's figure out what's going on here. Joe Doze joins us here. Joe is a Bloomberg News economic statecraft reporter for Bloomberg News. Joe, what do you make of this social media post by the president? It seems to be a little bit of an about turn. It seemed things were maybe getting a little bit better with China.
Yeah, we have been preparing for what would eventually be some sort of talk between the U.S. and China, in particular, the meeting of the two, head honchos. The big conversation, at least among kind of diplomatic circles, was what is the U.S. going to do on export controls surrounding semiconductors and AI chips, and how was China going to have a similar discussion over export controls of rare earths, critical minerals, and permanent magnets? One needs the other needs the other, and that's really the core here. China announced 2 nights ago that they were putting more export controls on rare earths and permanent magnets, specifically tied to the equipment to make these things. It was a big deal in the community that follows this, the industry that follows this, but it hadn't really reached a level of knowledge to, I'd say, broader markets and audiences. And I think the president's Truth Social post just now has really brought this to the fore.
Yeah, exactly. I mean, and it was a very lengthy social media post from President Trump here, which I've read and seen. And in that post, he kind of calls out the fact that, listen, rare earths are important to the U.S.
Yeah.
And really important to the U.S., but we've got a lot of stuff that's really important to you, kind of making that argument here. So I'm wondering, you've covered this side of the business for a long time, and we've seen this president make some bold claims that it may be open to negotiation, and is that kind of where we're going to go here, do you think?
Maybe. I mean, this is so fresh right now that, as you know, like, it's unclear sometimes when the president is very, very serious about what he said, and sometimes when it might be like kind of a negotiating tactic. The sense has been, there is going to be some sort of haggling beforehand, and we'll see what that is. It's come to the front now at this point. Whether or not he'll meet with the Chinese president, with Xi Jinping, unclear. The bet would be, though, that these two sides are kind of lobbing into the public forum, like what is really at stake here. And tariffs. I mean, there are many people who've said now for a while, like, well, the tariffs have been so high on China since the first Trump administration that threatening higher tariffs, it's unclear what impact that would be. And of course, back in April, when he did threaten the big tariffs, that's when you saw China's true retaliation, which was the explicit export controls on rare earth magnets.
Yep, that seems to be a pretty big bargaining chip here. Do we have any sense of where China's coming from? Do they want to make deals with the U.S.? Do they want more open trade with the U.S.? Or are they pretty confident in their ability to go without it?
I think China knows what their leverage is. At the same time, just speaking to people in industry, in national security, defense, they also understand that they do want access to chips, right? The United States is well ahead of China, especially on AI chip manufacturing. And this is an industry that China would like to gain some space on. That's why Trump announced the revenue share from NVIDIA and AMD chips, these lower grade AI chips, and Letnick has talked about it, and that's really what's at stake here. And it seems like China thinks this is the pressure they can put on to convince the United States to lift the export controls that they have on those products.
It would seem to me it's always better to talk and to have dialogue and negotiation, and ideally to meet face to face. How important do you think a meeting with President Trump and President Xi at this APEC meeting, which is in the end of this month in South Korea, how important do you think that is to the whole thing?
It's a great question. It does feel like, even today in the highly technological world that we live in, that face-to-face does matter. And the president being able to see Xi Jinping face-to-face, maybe a little bit of the bluster that we see kind of publicly posted can ease a little bit, and they can have a more pointed conversation. But again, like you talk to people who've been in the room with Obama or Biden or previous presidents, right? Big diplomatic summits. This is the kind of work that is months in the making, and every comment and every smile or look is heavily practiced. So it is critical.
Yeah, it just seems like this is a president that is very comfortable going alone with maybe one or two aides and really face to face cutting deals like he's done his entire life.
Yeah.
And that seems to be statecraft in this administration. So we'll have to see, but it certainly have an impact on the markets here. Joe Do, thanks so much for joining us. Joe Do's a Bloomberg News economic statecraft reporter, getting the latest on these Trumps. And someone darkened the door I didn't expect to see, much less on a Friday at noon. Tom Keene coming in for Balance of Power. I'm assuming my people haven't been notified, so I don't know. But
coming in for Balance of Power. I mean, the markets are moving. It's
absolutely.
Like you and I were talking about this morning. There's something going on.
There's something going on out there. All right, so Tom Keene will be joining Balance of Power, and that's a good thing here at the top of the hour. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world-only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global headlines are coming up in just a moment. Again, let's recap the markets. They are selling off in response to President Trump's social media posts. S&P off 1.5%. The Dow's off an even 500 points. That's 1%. The NASDAQ off 429 points. That's 1.9%. We got movement in the bond market as well. 10-year Treasury in about 8 basis points. We're now at 4.06%. So big moves. Stay tuned for Balance of Power. They will drive this conversation forward. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. There's new U.S. tension with China, and a trade war could be heating up again. CBS's Vicki Barker.
Writing on Truth Social, President Trump says there seems to be no reason to meet with Chinese leader Xi Jinping as part of his upcoming trip to South Korea. This after China restricted exports of rare earths needed for American industry. Trump suggesting he's looking at a massive increase of import taxes on Chinese products in response. China, meanwhile, has just slapped added port fees on arriving U.S. vessels in response to U.S. plans to do the same to them.
The news has unsettled markets. The Dow is down more than 500 points. Now to the Middle East. CBS's Haley Ott reports the Gaza ceasefire is holding as the first phase of the peace plan plays out.
That 72-hour clock has started for Hamas to release the hostages. So we could see that happen anytime in the next 3 days. President Trump said he was expecting to see them released early next week, but it could be sooner than that. The Red Cross, which has facilitated previous hostage releases, says it has begun its preparations. So we know that work is already underway.
National Guard troops today began patrolling in Memphis for the first time. Tennessee Democratic Congressman Steve Cohen says it's not a good look.
Our country was not based on having military control of civilians. And even though the state guard is still the military, and we don't need them here.
The Memphis police chief says the Guard will help direct traffic and have a presence in retail areas. CBS's Ian Lee is at an ICE facility outside Chicago where Guard troops were spotted yesterday.
We have about a little over 100 protesters on the east side of this ICE detention facility. They are protesting loud. There has been some scuffles with the Illinois State Police. I witnessed some arrests. Tensions are a bit high right now.
Billionaire tech investor Peter Thiel has warned of the destruction of this country in a private lecture series, as we hear from CBS's Michael Wallace.
The Washington Post obtained recordings of Thiel's lectures. He said government oversight and proposed limits on Silicon Valley not only hinder business, but threaten to usher in the destruction of the U.S. and an era of global totalitarian rule. He called critics of technology and capitalism, like Swedish environmental activist Greta Thunberg, legionnaires of the Antichrist. The Post says Thiel's effort to cast the fight against regulation as a religious battle could intensify the tech industry's crusade.
First Lady Melania Trump says 8 Ukrainian children have been reunited with their families after ongoing talks with Russia's President Vladimir Putin. Wall Street, the Dow is down more than 500 points. The S&P down 100. This is CBS News. And NBA legend is facing a new lawsuit.
One Lakers fan didn't think LeBron James' big reveal this week was a bit funny.
In this fall, I'm going to be taking my talents to Hennessy VSOP.
He says it was a big dupe, and he's suing for fraud.
I feel like it's going to give me the best opportunity to win more at hosting. Not only that, win at signature cocktails.
The fan claims the build-up and talk of possible retirement tricked him into paying top dollar for Lakers tickets for what he thought might be among the Hoops legend's last games. 40-year-old James will have to sit out at least the first few weeks of this season because of sciatica on his right side. Deborah Rodriguez, CBS News.
Sister Jean, the school chaplain who became a celebrity during the 2018 NCAA basketball tournament, has died at 106. She was a visible presence as the Loyola Chicago men's team had an improbable run to the Final Four. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Well, there go the markets. Welcome to the Friday edition as President Trump hits detonate on the Friday trade. With a Truth Social post aimed at China, threatening new tariffs, throwing doubt now on his upcoming meeting with President Xi. Everything's up in the air. We're going to get a live report ahead from the White House from Bloomberg's Tyler Kendall with insights from the mayor of Global Wall Street. Yes, Bloomberg's Tom Keene making his debut on Balance of Power live from New York only moments from now. It is day 10 of the shutdown, if you're still keeping score. And as President Trump is set to visit Israel this weekend, we'll talk it out with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour. And we start, as always, on Wall Street. Charlie Pellet has the trade for us, and it's not going in the right direction. He's live in New York. Charlie?
Right now, indeed, Joe Matthew, looking at a sell-off. The Dow, the S&P, NASDAQ, all in the red. Not the Friday the bulls wanted. Traders sending stocks lower after President Trump threatened, quote, a massive increase of tariffs on Chinese goods, rekindling fears about an escalation of the trade war. We've got a whole lot more coming up right here on Balance of Power. Indeed, keep it locked into Bloomberg Radio for the latest on this developing story. S&P right now, right to the numbers, down 103, further retreating from a record at 66.31, drop there of 1.5%. Dow Industrials down 569, drop there of 1.2%. The NASDAQ Composite Index down 2%. Our Mag 7 Index now trading lower by 2.1%. 10-year at 4.06% with a 2-year currently yielding 3.53%. Gold is up $6 the ounce. $39.82, up 0.2%, still below 4,000. Silver, $49.95 the ounce, up 1.4%, and Bitcoin down 1.8%, 118,961 on Bitcoin. As for the overall inflation backdrop and policies from Washington, specifically tariffs, Alejandra Grindal is chief economist at Ned Davis Research.
We do see upside risks to inflation, obviously coming from the tariff perspective, but I think also a very underappreciated source of upside inflation can come actually from a lot of the deportation policies that are seeing a decline in workers in certain services-related industries and agricultural industries. So we do expect a modest upleg in inflation.
Alejandra Grindal, chief economist at Ned Davis Research. Again, our top story, President Trump says he sees no reason to meet with Chinese President Xi Jinping and has threatened a massive increase on tariffs on goods from China. China, meanwhile, slapping new port fees on American ships and started an antitrust investigation into Qualcomm. Qualcomm down by 4.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, great to see you. Happy Friday. Welcome to the threshold of the weekend, the Friday edition of Balance of Power on Bloomberg Radio. We're on satellite radio channel 121. You can always watch the radio on TV here at YouTube. Search Bloomberg Business News Live. It's a good day to do it because we're going to bring you to the North Lawn in a moment to hear from Tyler Kendall, and then we're going to talk with Tom Keene, who's at World Headquarters in New York, to explain to us just exactly what the rationale here is on Wall Street after President Trump dropped the doozy of the truth. And by the way, he's on his way to Walter Reed right now. He's got a doctor's appointment that has also prompted a lot of questions here in Washington, and maybe it's no wonder that there is, in fact, a public event in the Oval Office with the press pool in the room set for 5 p.m. Eastern. He's going to be making an announcement. That's all it says on the guidance. Although there has been some reporting here that it might involve something to do with pharmaceuticals. So, the Truth Post. Markets looked pretty good until this happened. They were higher in the pre-market session. Donald Trump, this is so long. James, how many words was it? We try to keep a count on these because I'm pretty sure this is a new record. Some very strange things are happening in China. He writes, they are becoming very hostile, sending letters to countries throughout the world that they want to impose export controls on each and every element of production having to do with rare earths and virtually anything else they can think of. Look, this is 504 words. I'm not going to read the whole thing to you. We scroll to the lines that matter here. I will be forced, he says, as president of the United States to financially counter their move. For every element they have been able to monopolize, we have too. He goes on to threaten a massive increase of tariffs on Chinese products and then throws doubt on his looming meeting with President Xi in 2 weeks at APEC. He says, I was to meet with him, but now there seems to be no reason to do so. Just like that, the markets turn south, as Charlie just illustrated. Bloomberg's Washington correspondent Tyler Kendall's on the north lawn of the White House right now, with all of this resonating here in the Capitol and taking our attention away from day 10 of a government shutdown. Tyler, what was he thinking when he posted that?
Well, Joe, I have to say, I actually was out there for President Trump's departure, and he didn't come and talk to us press. Instead, he got onto Marine One, and then moments later, while he was in the air, he posted this on Truth Social. Now, you really hit the headlines there. He accused China of being hostile in his words. Just for some context here, we have seen Beijing move in recent days to unveil new export curbs on critical minerals and rare earths, expanding that list of elements and technology that is on its control list. They've also forced overseas exporters of items that even use traces of certain rare earths sourced from China that they will now need an individual export license as well. That is also a new development in recent days. And we have to keep in mind that China really does have this grip on the global supply chain when it comes to rare earths. They accounted for about 70% of the global supply last year alone. But of course, this is coming against this backdrop that we are just weeks away from a potential face-to-face summit. Now there is doubt over whether or not President Trump will meet with Chinese President Xi Jinping. And of course, they had a long list of agenda items related to trade, but I'll point you to one of them that we knew was going to be at the top. According to the White House, President Trump was going to address those soybean exports to China. China is the top importer of U.S. soybeans and has not imported so far this harvest season. So there's a lot of different threads here for us to pull on, but that threat, Joe, of massive tariffs, we have to see what that is going to mean. As you well know, there's currently that 30% baseline rate on China from the U.S. when it comes to tariffs. 20% is related to those fentanyl concerns. 10% is that so-called reciprocal tariff rate. Some items see higher rates if they're subject to what's known as a Section 301 investigation. But, Joe, we were up against a firm deadline. Mid-November, President Trump had signed that 90-day truce, and that is up in mid-November. We're going to have to see if there's an escalation before or after then.
Yeah, it sounds like we might have one already. Tyler, just quickly, what's going to happen after the doctor's visit? We get a note from the doc on the president's condition?
We'll see. They're calling this his semi-annual physician's visit. President Trump himself says that he is feeling great, and he's also going to Walter Reed to meet with the troops. You alluded to this at the top. There has been a scheduled 5 p.m. Event with the White House press pool. A White House official confirms to us here at Bloomberg News it will be related to pharmaceuticals. We'll see what that means. We know, of course, that he had unveiled that drug pricing initiative alongside Pfizer last month for what's known as most favored nation rate status for certain Medicaid prescriptions. We'll see if it mirrors something close to that.
All right, stay close, Tyler. We'll talk to you in about an hour from the North Lawn. Tyler Kendall reporting for Bloomberg. We will be following the president's tracks as he gets out of Walter Reed back to the White House for the announcement that we'll carry for you most likely on the late edition of Balance of Power, assuming things stay on time here. I have to admit, though, it's not helping pharma stocks. See a little pop in J&J that's had a bit under it lately, but Eli Lilly, which the president had been talking about at the Pfizer event, is actually lower. Financials are lower. VIX is up back over 20 right now. Bitcoin is down over $2,000. Mag 7 down. This is not great. And when I heard that we could spend some time with TK, I was delighted because this should be surveillance nap time, I think. He's live with us from World Headquarters in New York, the great Tom Keene. Did the market just bump its head, Tom, or do we have a new taco buying opportunity?
Well, that's what we're going to have to see. Retail clearly over the last number of these events has stepped in and bought. I'm not saying they're buying right now with the Dow just printing 500 points down. The VIX out to 22 on the initial shock. We're back to 20.48. So somebody's on the bid right now off of 500 down. But I would say, Joe, that retail has shown a Trump pattern of stepping in and buying off of his excitable moment. So as you mentioned on Truth Social, let me paint you quickly here, and you did a great job with the cross correlations. But as you look at the Bloomberg screen, and let's say for the public, for the balance of power public, they don't know dollar yen from Naki Stocky. You look at the Dow, negative 400, SPX down 1.3%, NASDAQ hit down 1.8%. But I look also the way oil has pulled back. See, American oil under 60 a barrel, 58 handle on NYMEX crude. Global oil 62.78. It's come down $7 from a 70 level of a number of weeks ago. And then another way to look at it, Joe, is like the pro way, where we look at cross rates. And the first one I looked at was yen as compared to yuan at baseball, but you see a 3 standard deviation jump move, that big jump move, and you see that, Joe, in that currency, your currency pair, which shows the tension on the Pacific Rim.
Fascinating. How would you describe this market before that post? Because we hear about the froth every morning, the wall of worry, the most hated rally. Was this thing due to tip over?
Right. No, it's the closest a balance of power has gotten to Bloomberg surveillance. The only difference is you have Tyler Kendall. I can never get Tyler Kendall. I haven't seen Charlie Pellet in like 9 months. It's just great to be here with people I've never seen.
You're up too damn early.
It's just, well, I'm way too early for Tyler Kendall. But the point is here is it's a geopolitical linkage into our economics, finance, and investment. And the president has done that. Let's line it up, Joe, and you're better at this than me. France, Japan, the United Kingdom with their own set of worries, and now we see a tariff redo with all the balance of power tensions with Beijing, and they buffet off each other. I'm looking now at Japan and China is the point there. Here's the headline this morning. First headline I looked like, Joe, you weren't up yet. You weren't up. Here's the first headline I looked at today, folks. I'm trying to find it. Right now. It was so long ago, Joe, it's fallen off the screen. Japan's decades-old ruling coalition collapses, jolting markets. And what the president doesn't understand in his bilateral deal-making focus is when he does something, as you witnessed an hour ago, it affects Japan and the idea of their coalition collapsing. They're all interdependent.
Fascinating. This is a market that was pretending not to care about tariffs lately. I keep hearing that the uncertainty had passed us, Tom Keene, but a lot of folks were cautionary, saying that we were whistling past the graveyard because China was still a wild card. How did we get so far over our skis with so little settled in the world's second biggest economy?
It ebbs and flows. One of the interviews of the day for me, Joe, is KPMG out with a new report on the tone of business across America. And their lead word is uncertainty. And you see that uncertainty in our politics. You see it within global Wall Street. And the answer is we jump from to borrow from Alarian, we jump from unknown to unknown. The president just assisted us going to a new unknown. As Tyler said, looking forward to APEC. Now what?
Now what is exactly right. Now I get back to my first question. We've seen a lot of posts like this from the president, and he does stuff like this right before a meeting. Are we serious that he's walking away from China with massive tariffs, knowing what happened after Liberation Day?
I would look to the Secretary of Treasury. The president has many other challenges out there, and the stuff that you report on in balance of power each and every day. But no, I don't think anything's codified. The history of this president is to shoot first and think about it later, and that's what we're going to see here. Particularly if right now, what do we know? Joe, my eyes are failing me. You'd think I was a relief pitcher for the Red Sox. See, negative 541. I mean, come on, you give me, we're up 100 earlier, so we got a 600-point swing from surveillance. You give me another 300 points down, and all of a sudden the Secretary of Treasury is saying, Mr. President, about that tweet. That's, maybe that's what we see.
And you're up 1,000 points on Monday, and the taco trade exists.
Yeah.
It's the 3rd anniversary of the bull on Sunday. Do you care?
Yeah, I do. Urian Timmer on today with Fidelity of Boston, and Urian Timmer was just absolutely fabulous about the duration of a bull market. He measures this bull market, Joe, 16 years out. We are 16 years into a bull market, which means we're about due for the Red Sox to win. I think, 16 years into a bull market, maybe next year's the time.
Well, okay. Second half of the year has been pretty interesting here, and we're going into the seasonal period where everybody loves stocks. Do we melt up into Christmas, or is this going to keep that from happening?
I'm not going to predict that, but I'm going to say what I am focused on and what Team Surveillance is focused on is the earnings season, starting with J.P. Morgan on to tech. And, Joe, we're looking not only at the quote-unquote earnings, but we're looking up the income statement to that revenue pop of a U.S. economy that has stunned with a sprightly nominal GDP.
What does it tell you when financial stocks look like growth stocks? Is that due because of their valuations? Is it the animal spirit that we're still ready for? We're going to have a big IPO pipeline, or what is it?
You know the answer. I'm hardwired to the animal spirit, and I think if you talk to the leaders of our financial institutions, they see a less regulated Washington. They see a Washington, really across all politics, that is not apologizing for going out and doing business, and that builds confidence. I mentioned, Joe, someone you know well, Michael Turner, the former mayor of Dayton, Ohio, and that's the kind of Republican I'm looking at right now, are these centrist Republicans and Democrats and how they bounce off shutdown. Wait, Charlie, why is Joe Matthew working? There's a shutdown.
Well, let me send that over and suggest, why is Michael McKee working? There's a shutdown with no government data.
It's true.
Right. There's no data to talk about.
Well, Joe, this has been great. I love your music. Your music's more musical than my music.
Well, I don't know. You've got that hard-hitting morning stuff. Will this ever happen again, or is this a one-off?
No, it's not a one-off. This is the President of the United States. America knows whether.
No, I mean Tom Keene on Balance of Power.
No, me. Well, you got lucky. Your agent ran into my agent, and there was, this. And
he must have been having lunch in the neighborhood. He was at the Monkey Bar or something. Thank you, Tom. It's great to see you.
How did he know?
Have a great weekend.
How did he?
He's a man of impeccable taste. That's where he goes when he comes to New York.
I follow him around.
The TV that plays Phil Silvers. He knew I was under that TV.
We got to do this, the three of us. I mean, my God, Charlie,
fun.
just stay right where you are. It was fun. Thank you, Tom Keene. You know, Bloomberg Surveillance. Start your day there every day. Bloomberg Radio and on YouTube. And we want to put a finer point on the trade right now at 22 minutes past noon East Coast time. Charlie Pellet on the markets live from World Headquarters in New York. What do we have here, Charlie?
Right now, lower across the board. I do want to begin, though, with the intersection of Washington and Wall Street, specifically economic data. I was just joking about that just a couple of moments ago, but the Bureau of Labor Statistics says it will publish the September Consumer Price Index on October 24th, 8:30 a.m. Washington time. The release will allow the Social Security Administration to meet statutory deadlines necessary to ensure the accurate and timely payment of benefits. Of course, no other releases will be rescheduled or produced until the resumption of regular government services. Stocks lower after President Trump threatened, quote, a massive increase of tariffs on Chinese goods, rekindling fears about an escalation of the trade war. Stocks lower across the board. The S&P down by 1.4% right now, down 96, 66, 39. Dow lower by 483, drop there of 1%. The NASDAQ Composite Index down 438 on NASDAQ, a drop right now of 1.9%. The Russell 2000 Index of small cap shares is down 1.6%. Selling is widespread. The Bloomberg Mag 7 Index down now by 2.1%. 10-year, 4.07% with a 2-year, 3.54%. gold up $9 the ounce, a little changed actually, up just about 0.2%, below 4,039.86. West Texas Intermediate crude below $60 a barrel, tumbling now by 4.1%. WTI with a 59 handle, 59.03. And Bitcoin down 1.6%, 119,150. Automaker Stellantis' third quarter shipments climbed 13%, led by a rise in North America, pointing to a recovery after the ailing car maker worked down inventory in the United States. Shares of Stellantis, they are trading lower by 6%. Ford down 0.8%, GM down 0.6%, and Tesla's tumbling by 2.9%. Recapping and repeating our top story, stocks fall as President Trump's remarks fuel trade jitters. Balance of power continues now. We got you covered on this developing and major story. Once again, your host, here he is, Joe Matthew.
All right, many thanks. Charlie Pellet will help us get through the hour here as we track the trade on Wall Street following the Truth Social post. This hit just before we came to air with a more than 500-word post on Truth Social that we just went through with Tom Keene and Tyler Kendall, and it does have things upside down at the moment. We'll keep tabs. And by the way, assuming the president speaks to the media when he gets out of Walter Reed, and there's no guarantee that he will, we'll of course bring his comments to you here. There is a 5 p.m. announcement, as they're calling it. It's related to farmer prices that'll be at the White House for the late edition of Balance of Power. It's day 10 of the shutdown. No one's talking about it because of what we already have here in the markets, China trade, president on his way to Walter Reed, but it's also because nobody's here. Everyone's gone home. The senators have left town after last evening. The House was already out of town. Looks like they'll be back, at least the Senate next week. It's unclear exactly when the House is coming back because they keep extending it. And it's really starting to look like this will be a protracted shutdown. I know you keep hearing us say that, but you know, we've got a record of 35 days from the first administration, and it may well be surpassed here. There are lawmakers talking about, I think it was Senator Ruben Gallego, nothing's going to happen until the 1st of November. At the earliest. And here we are on the 10th of October here, remembering this is a pretty important day. This is the day when federal workers miss their first paycheck. Their last partial paychecks, assuming those were due to civilian federal workers, hit this morning. Military peers will miss their payday altogether on the 15th, as we told you, next Wednesday. Joining us to talk about this, which is the backdrop for a couple of key races, bellwethers that we're following, gubernatorial races in New Jersey and Virginia, never mind the mayoral race in New York City. We wanted to smash it all together with the help of Lisa Camuso Miller. Of course, not only a veteran of a former House Speaker's office, but former comms director at the RNC, a specialist in communications, as we learn each week in the Friday Reporter podcast. Missed you, Lisa. Welcome back. It's great to see you. Here we are. I don't know if you actually thought it was going to shut down, but we're going into our third week now, and I'm just wondering where your head is in a Washington where no one is talking.
They're talking outside the Beltway, though, Joe. They're getting themselves into trouble everywhere, every corner, these members. No wonder they're keeping them out of Washington, D.C. You know, Joe, it's an interesting time. And I did expect it to shut down, and I do expect the shutdown to continue. I think next week is, as you mentioned, is going to be a very interesting week to see if, when we send our military out into the world without pay, that could be a very big shift in the dynamic. But Joe, it's not going to be until each one of these sides feels like they have lost ground that something's going to happen and the negotiation table is going to be back to business.
Okay. All of that said, to your point, everybody's out of town. And there's going to be some fundraising this weekend, and it's both sides. The DSCC's Napa Valley Retreat. Wouldn't you like to be doing this? Producer James is going out there. He's got a long weekend. This is the 13th to 14th. DSCC chair Kirsten Gillibrand will still attend, Democrat from New York. There's a big Republican party this weekend in South Carolina as well. That goes through Sunday. John Thune is apparently pulling out, but you're going to have a lot of members raising a lot of money, clinking glasses and drinking cocktails and golfing and all the rest. Should these be happening?
You know, what's interesting, Joe, is that up until this is probably the first time I can remember that there has been a shutdown and fundraising has continued overtly. There have been lots of times when you'll see these fundraisers happen and members will not go, but their staff and their fundraising teams will still continue to raise money. But for some reason, and I can't really tell why it is, this shutdown feels different. And I do think it's because both sides think they're winning the debate right now.
That's right. Everyone's got the moral high ground, which is a recipe for a standoff. Lisa, we have breaking news. Somehow it always happens when you're on the air with us live. You talked about this feels a little bit different. It just got a lot more different. Russ Vought, portrayed in an AI video that was posted by the White House just days ago as the Grim Reaper. Just now on Twitter, the RIFs have begun. Okay? The layoffs have begun. The head of OMB says this is now happening. We're trying to get information on what exactly this means, Lisa, what kind of numbers we're talking about. But how does this now change the dynamic for Democrats and Republicans?
I think it doesn't work in favor of Republicans. I think it hurts them more than it hurts the Democrats. I mean, the Republicans are in charge of everything, and now they're saying that there are going to be rifts. I mean, there was that threat, but the fact that they're talking about it now, on the day that people are not getting paid, on the week before the military will not get paid, I don't know, Joe. Right now, you're asking me for my fresh hot take off of this. To me, this seems tone deaf. It seems like not the right time to do that.
I know that leaders on Capitol Hill were feeling the same way. The headline just went red on the terminal. Trump budget chief Vought says layoffs have begun. There you have it on your screen if you're with us on YouTube. It is real. It is no longer just a threat. Now, Lisa, I had a conversation with the Speaker of the House this week and asked him about President Trump's ideas that some federal workers who were furloughed should not receive back pay. He didn't give me an up or down. He said there are several different legal analyses that are floating around right now. Is this going to be the next problem?
You know, Joe, I've been saying it since the start. So many of my friends who are furloughed right now were saying at least there's going to be back pay. And I said, you know, the rules, the playbook, it is so different. And they were referring back to that 2019 law that said that they would be paid for their time. This is a totally new, we're in new territory here. And so I would not be surprised if this administration continues to move forward with that kind of movement. I think the Speaker's in a tough spot. He can't say one way or the other. He's got to keep the president happy. He's got to keep his members happy. He's got to keep the country happy. But the president and the administration really don't seem to be all too worried about that. But they also know that that's not going to affect how midterms turn out because nobody's going to remember in another 12 months.
Well, we've got a couple of elections that will take place before then, and this will be the backdrop now. There was a ripper of a debate last night. Of course, you know a little bit about Virginia, Lisa, and we saw the two candidates for governor go at it. I didn't really hear what half of it was about because Winsome Earl Sears decided to show up with a strategy to interrupt Abigail Spanberger, the Democrat, in every answer, multiple times, to the point where the moderators were pleading for her to stop. Does a story like this now, Virginia is chock full of federal workers, so is Maryland right next door. Every state's got a lot of them, but there are huge concentrations here because of the federal government and the presence of the military. Who does this help in a gubernatorial contest against the backdrop of a government shutdown?
Joe, Abigail Spanberger was always going to win this race. Winsome Sears is not the right candidate for the job. She is, I mean, even the way she behaved last night was classic. I mean, just poor behavior all around. It is not what people want. You cannot take the playbook that Donald Trump uses every single day and try to use it for yourself. He is a one and only guy. It is not the playbook that others can use and be successful. It's not going to help her. She should have been far more, it should have been a better performance last night. It was awful. I'm embarrassed for the party. I'm embarrassed for the way she behaved.
Wow.
And I think that I think that the way that this is happening, Joe, just fuels and offers more and more support for Abigail Spanberger. She will win that race in Virginia.
Well, in our remaining couple of minutes, let's tap your experience as a veteran of New Jersey politics. Of course, born and raised, so you don't mess with Lisa Camuso Miller. Jack Citarelli is planning a big bash on the Jersey Shore, and there have been a lot of different elements, I know, in this campaign, this race, that have brought he and Mikey Sherrill a lot closer than what we're seeing in Virginia. How's this going to shake out in New Jersey?
This is the way New Jersey does politics. Don't forget, I was political director in that state for a year when George W. Bush was on his way to the White House in 2000. This is going to be a remarkable race. Jack Ciattarelli has a long history of being a loyal, fantastic elected official in the state. He has demonstrated that over and over again that he's the right guy for the job. Mikey Sherrill stepped on her crank this week, Joe. She talked about the fact that nobody in town eats pork roll or Taylor ham. And listen, if you're not from New Jersey, maybe you don't know this, but that was probably the biggest gaffe I have seen in a very long time, where she showed that she is not a native. She's not someone that people are going to be able to identify with. And I think that was the death blow. I mean, I think Jack Ciattarelli's got a good shot, but it's going to come down to the wire, as it always does in New Jersey. Republicans we do this up until the end. Yeah. We get really, really close, and then something happens. But boy, I'll tell you what, she delivered him a gigantic gift in the gaffe that she made this week.
Lisa, calling the race over the pork roll. Are you a pork roll or Taylor ham girl? Does that depend on where you're from?
All the way, and I'll fight you
pork
to
roll
the death
all the
over
way.
it. But I'm a Central Jersey kid, so that's what it is. It's all regional. It doesn't matter. It's still delicious. We all eat it.
See how much we learn here? Now I want one. Lisa, thank you. Find her on the Friday Reporter podcast, former RNC director, comms director Lisa Cabuso-Miller. The panel's next, only here on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Traders are sending stocks lower after President Trump threatened, quote, a massive increase of tariffs on Chinese goods, rekindling fears about an escalation of the trade war. It's an ongoing story, developing story. Stay with Bloomberg. Balance of power for the latest. We got you covered. Stocks lower. S&P right now down 94 at 6640, retreating further from a record, down 1.4%. The Dow is down 433 now, down 0.9%, have been down more than 500. NASDAQ down 455 points for the NASDAQ Composite Index. That is a drop right now of 2%. 10-year yield at 4.06% of the 2-year, 3.53%. Spot gold is up $15 the ounce, just below $4,039.93, a gain of 0.4%. Silver back above 50, 50.08, up 1.6%. And West Texas Intermediate crude with a 58 handle right now, down 4.1%. Bitcoin down 1.6%, 119,185. There is economic data out this morning, private data. Consumer sentiment as measured by the University of Michigan was little changed in early October as Americans expect scant improvement in the job market or inflation. According to data, consumers expect prices to rise at an annual rate of 4.6% over the next year. Joanne Shu is Director of Surveys at the University of Michigan.
So as it turns out, at this time, we're not seeing a whole lot of evidence that the government shutdown, the federal government shutdown, is really weighing on consumers one way or the other. But it's only been about a week. It took a couple of weeks in 2019 for us to see an impact on sentiment. So I think the final read of the month will give us a little bit more information about that.
Joanne Shu, Director of Surveys at the University of Michigan, interviewed on Bloomberg Open Interest. Leaders at AI computing company CoreWeave sold shares worth more than $1 billion after a lockup on the stock lifted in mid-August, putting them among the top 10 individual insider sellers in the third quarter. CoreWeave shares today, they're up on a down day for the rest of the market. CoreWeave up by 0.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Balance of Power continues. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Well, this has turned into a different day now, hasn't it? That's why you tune in every day at noon to find out what's actually happening. That's typically when the news breaks around here. What is it about Truth Social at noon? Well, it was right before noon we got the Truth Social from the president that sent the markets south, promising massive tariffs against China. We thought we had the new lead story of the day, right? All the scripts go out the window. We're coming in, crashing in hot off the top rope at noon with the news. And as soon as we start talking about that, the announcement from Russ Vought lands. If you were with us a couple of minutes ago, you heard it as it happened. We were talking to Lisa Camuso-Miller when the budget director took to Twitter to write very simply that the RIFs have begun. Reductions in force. He could just call them layoffs because that's what they are. Now, we don't have numbers for you. I will tell you there's a Punch Bowl report referring to them as substantial, but will not hit every government agency. What's Wall Street going to think about this now combined? So you've got massive layoffs coming. And we just learned today that BLS is going to scrape together a CPI report for later in the month, but we still don't know what the heck the jobs numbers look like. And maybe suddenly, as the layoffs hit on the same day that federal workers start going without their paychecks, maybe suddenly Wall Street is going to be caring a little bit about the shutdown that it has been bored by so far. The Dow's down 500, NASDAQ's down 500. So let's get into it with the panel. I'm delighted to tell you they're both with us, and we need them now. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, our Republican strategist and partner at Stone Court Capital. Guys, we're going to be in for a long one because I know you're back on the late edition of Balance of Power. And just as everybody was taking a bite of their sandwich here in Washington, Rick, the whole world changed with Truth Social, and now this word from Russ Vought. Is the president trying to change the topic here? What do you make of the timing on these two hitting today?
You know, it's a little bit of a coincidence, I think, in some cases. I think the China reaction obviously was spurred by something that the president got briefed on yesterday, and he, was reacting to it. clearly a degrading of the U.S.-China relationship before the meetings in South Korea. Obviously, we'll wait and see whether or not there is actually going to be a Xi meeting with the president, but it doesn't sound like it. But things like this Rust vote move, that's obviously planned. That's a Friday afternoon massacre. We don't know what the extent of it is or how it's going to actually unfold. But the reality is they've been forecasting this for some time. And I think the idea that the president could be leaving town to go to the Middle East, drop a bomb while he's out of town so he doesn't have to answer any questions about it. I mean, that's sort of standard operating procedure at the White House.
Boy, okay. We just got another one, Jeannie. The Associated Press reporting layoffs will be in the thousands. That could be a lot. I don't know exactly what that means. But substantial, again, we see this word that was used by Punchbowl now on AP. Substantial firings of federal workers have started as White House exerts shutdown leverage. Bloomberg News reporting federal layoffs will be in the thousands, according to a White House official that we have spoken with directly. Now, I can tell you that that is a trustworthy headline from Bloomberg. Jeannie, how bad could this get?
Very bad. And, they are using the shutdown as an excuse to do what they have been doing prior to the shutdown, which is trying to cut the federal workforce. It is bad politics for the White House and for Republicans. And I suspect we are going to hear more Marjorie Taylor Greene's. She's come out, of course, on the issue of healthcare subsidies. But we're talking thousands and thousands of layoffs if these reports are to be believed, many of which will be in districts and states where you have congressmen and women who are on the Republican side. So it is devastating politics for Republicans. And, it is coming at the same time that, as Rick just mentioned, the president is leaving the country. It's understandable, Middle East peace, this peace deal, very important. But he's leaving the country with the government shut down. And oh, by the way, Scott Bessent and the administration have decided that while we're shut down, $20 billion of our tax money should go to Argentina. And that is something that Democrats in the Senate have been talking about, because what happened to make America great and keep things at home? So I feel like the White House has gotten a little bit off its rails politically and out of line with its own populist message, and is listening to the folks like Rust Vote and Project 2025 folks who have long wanted to take steps like they're doing now with the Doge cuts.
Well, with what we do know about this and what we've heard from Russ Vogt, what was written in Project 2025, Rick, should we assume that furloughed workers being laid off are permanently no longer part of the federal workforce? They're not coming back.
Yeah, a furlough is different than a RIF. What they're talking about today, all these 750,000 government workers are furloughed, meaning they're not collecting a paycheck and they're not working, but they expect to come back to their jobs. These RIFs, reduction in force, are permanent by definition. And so those people that are identified in these will be, in essence, losing their job today. Now, there are all kinds of legal remedies. This is not the typical reduction in force. There are a lot of procedures that are in place. Maybe this is what they've been doing for the last 2 weeks of the shutdown. But the reality is we saw these kinds of reductions in force last time when Doge did them. And a lot of those people wound up getting their jobs back. So, it's kind of a new spin on the taco trade, right? I mean, like the administration doing something, they think it's politically salient. They think they're going to, attack the government, which is the deep state, and we're going to fire all these people. Right. Then they're going to realize that they got stuff they got to do, and they got, go back to them and say, hey, look, we need you to come back. I mean, it's not exactly the way to build morale and productivity within the government workforce.
It's also deja vu. I'll tell you what, Jeannie, the headlines are just crashing in here. This has been a heck of an hour. Now Axios is reporting that we have some detail on the president's travel plans. I'll remind you, he's up at Walter Reed for a doctor's appointment right now. We don't know if he's under anesthesia. We don't really know anything about what's been referred to as a semi-annual checkup. We thought that was annual until now. Donald Trump to arrive in Israel Monday morning. According to Axios, he will travel to Egypt Monday afternoon. Jeannie, there's also reporting that while he is in the region, he's going to hold a summit of sorts while he's in Egypt. I'll back up a little bit and remind everybody that there is a public event in the Oval Office scheduled for 5 p.m. Eastern Time. It's billed on the White House guidance simply as an announcement. We have since learned that that will involve pharmaceuticals, and CBS News is now saying that AstraZeneca is the pick for a most favored nation pricing deal like we saw with Pfizer. I don't know what the second half of this day is going to be like here, Jeannie, but I feel like the president's going to have a heck of a lot to talk about. Will he need to quantify these layoffs tonight?
He very well. Strap in, Joe. It's going to be a ride.
Yeah, we
I don't
are.
see much rest for you going forward. Yeah, always on Fridays lately. AstraZeneca looks like it's going to be joining Pfizer. This has been great PR for Pfizer. It'll probably be great PR for AstraZeneca. Not so great for consumers. But of course, the president is going to have so many other things on his plate. And if he allows for questions, and he usually does to his credit, he will likely get a lot of questions on these mass layoffs and, of course, on the big news out of the Middle East. Also, as you mentioned, his health. So much going on like that. It's really important, even though the government is shut down, that the president goes over to the Middle East, because the White House is going to have to keep pressure on both Israel and Hamas in order to get from a phase one, which looks like it's, I shouldn't say a done deal, but everybody says cautiously optimistic. But the phase two and the phase three are going to be the much harder parts of this. We've even seen the Israeli members of the Israeli cabinet on the far right do not describe this as a peace deal or an end of the war. They're describing it as a stop in the hostilities, and that suggests that they may want to resume that once the hostages are back. And of course, Hamas on their side does not want to disarm. And so a lot to do to get from phase 1 to 2. And that's why it's really important that the president go over there, talk to our Arab allies, and of course, keep the pressure on both of these sides to move this, because he's been through this before. We had this in January, and we never got to the phase 2 in January.
Rick, were the layoffs meant to coincide with the day that federal workers stopped getting paid? And do you think this would have been announced if he won the Nobel Peace Prize?
Oh, a lot to unpack there. No, I don't think it's related to the payment. Remember, most government employees are on a direct deposit. That means they get their money 3 days earlier than this. So mostly it's a bit of a fantasy on these like dates of the payment of people's salaries. That being said, I mean, like, he's not happy with the decision by the Nobel Committee. And by the way, terrific selection. Maria Machado's a patriot, promoting democracy in Venezuela, very dangerous business. She lives in hiding. Somebody you would expect. But at the end of the day, I think he felt he earned it. And maybe next year's prize will go to him. Who knows? But I mean, I would think that maybe more the reaction that he had to China, changing their export requirements for rare earths, maybe have a little extra push in there because he's a little grumpy about that Nobel Committee.
Well, he did mention Middle East peace in that very long missive. Jeannie, I've got news for you here. Donald Trump may not be the man you thought he was. He called Maria Machado to congratulate her for her Nobel Peace Prize, according to people familiar with the matter. As I read here in the copy, I've got to finish the line here. Despite speculation, he would be indignant at not receiving the award himself. What does that tell you about the president?
I think it tells me a little less about the president than about Machado. I know Rick was singing her praises. There's a lot of people who are not singing her praises. She is described as a right wing, somebody who has sided with people like the leader in Argentina, who is a close ally of Donald Trump. This is a big win for somebody like Marco Rubio. And of course, she has been on the side of the United States in its battle so far, and I'm not saying war battle, but battle on the open seas against Venezuela. So I'm not surprised. I thought, and I think I've heard many people describe this as the Nobel Peace Prize, trying to have it both ways. They couldn't have possibly voted for Trump. This deal wasn't signed until after voting, but they did go with somebody that clearly his administration supports.
There you have it. From Jeannie Shanzano and Rick Davis, our Bloomberg Politics contributors will be back in our second hour with a lot more on a breaking news day. If you're just joining us, by the way, Bloomberg matching that news that AstraZeneca is expected to have the deal announced at the White House, a drug price agreement, much like we saw with Pfizer. We'll have a lot more on that in hour two, right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The layoffs have begun. Welcome to the Friday edition as President Trump's budget chief makes it official, announcing reductions in the federal workforce said to be in the thousands on this day 10 of a government shutdown. And it follows a social media post from President Trump threatening massive tariffs on China, which has now sent stocks sharply lower. I'm Joe Matthew in Washington alongside Michelle Jamrisco, who's in for Kaylee today. Michelle, this has turned into quite a day that we couldn't have planned even this morning. All this is happening as President Trump meets with his doctor at Walter Reed for what's being described as a semi-annual checkup. We do expect to hear from him in the Oval Office later today.
Yeah, happy Friday, Joe. Really,
How about
even though this administration doesn't seem to take Fridays in the same way as maybe previous ones and others have. But yeah, a lot to follow today. We will be tracking, of course, Trump's movements and his planned visit to the Middle East. But in the meantime, we've got a lot to unpack this morning. And
Well, that's for
news
sure.
keeps coming.
We've got a live report coming your way from the White House. Bloomberg's Tyler Kendall is on the North Lawn. We'll also have insights from Democratic Congressman Brad Sherman of California. I'm sure he's going to have some thoughts on these federal worker layoffs. So we're actually going to spend some time as well with Bloomberg Politics contributor, former Republican Congressman Patrick McHenry. Rick and Jeannie are with us this hour as well, so we're going to cover a lot of ground here, and stay with us for the next hour. We start, as always, on Wall Street. Charlie Pellet puts a finer point on what's happening on the markets since the Truth Post. Charlie, how's it look?
Right now, as we recap and reset, Joe Matthew, stocks lower across the board. Worst level of the day right now on the S&P 500 index. All of this coming down 10:57 a.m. Wall Street time, with President Trump saying he sees no reason to meet Chinese President Xi Jinping and threatened a massive increase of tariffs on goods from China, citing a recent hostile export control on rare earth minerals. China also slapped new port fees on American ships. Stocks straight lower as that news broke. Right now, the S&P again, worst level of the day, down 124 now, a decline of 1.9%. The S&P at 6611. The Dow is down 578. It is down 1.2%. The Nasdaq Composite Index down 588 points, down 2.6%. The 10-year 4.05%, with the 2-year 3.52%. Gold is at $39.80 the ounce, under $4,000, up under 0.1% right now. Silver was trading briefly back above 50. $49.92 on silver, up by 1.3%. And Bitcoin down 2.3%, $118,353. And sources have told Bloomberg that AstraZeneca is expected to announce a deal later today with President Trump to slash drug prices, making it the second pharmaceutical company to strike an agreement to advance one of the president's key health priorities. Pfizer, you recall, was first out of the gate in late September. AstraZeneca lower by 0.4%. Pfizer shares down by 1.2%. Lots of moving parts to this market. We've got you covered here at Bloomberg. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie Pellet, many thanks. We'll have more from Charlie on the markets in just about 20 minutes' time. We're really connecting the dots here once again between Washington and Wall Street, because this was a positive market with a pretty decent feel on a Friday morning when things started on Wall Street. We have since turned sharply lower since President Trump posted on China, threatening massive layoffs and questioning his looming meeting at the APEC summit with President Xi. And then, of course, the world changed again, only a short time later, when the president's budget chief, Russ Vought, took to Twitter, Michelle Jamrisco, X as I should call it, to say the rifts have begun. That's the headline of the day. Now, we don't have a huge sense of what that means beyond thousands of reductions in the federal workforce.
Well, and we've been waiting for this, Joe. This is one of the moves that has been widely broadcasted. We had no idea when it might happen or how, but we're starting to see it kind of crystallize here. So still a lot of questions about how that'll play out. And as you mentioned, how many exactly that means for federal workers.
How many workers, how many agencies? We've also got details on the event. We will hear from Donald Trump later, not necessarily from Walter Reed. He's at the doctor right now, but there's an event at 5 p.m., an announcement, as it said, on the White House guidance this morning. Bloomberg's done some digging. It will be a pharmaceutical announcement on pricing like we saw with Pfizer recently, and AstraZeneca is the winner. We've actually been following AstraZeneca shares on a down day, holding up not too badly, down less than 0.5%. Let's bring it to the White House for more on all of this ahead of our conversation with Democratic Congressman Brad Sherman. Bloomberg's Washington correspondent Tyler Kendall is at the White House. On Tyler, what's turned into a very busy day. Let's start with the layoffs. Bloomberg reporting thousands. Do we have any idea what that number will look like and what agencies will feel the impact?
Well, Joe, that's going to be one of the biggest questions moving forward. We did get this confirmation in this post on X, as you mentioned, from the OMB director, Russ Vought, saying that the reductions in force had begun. That is the technical term that the OMB had asked agencies to make plans for during this memo that we saw circulated in recent weeks. And that memo had asked these agencies to identify those workers whose activities are not paid for via mandatory funds or newly allocated funds from the One Big Beautiful Bill. They had also directed agencies to identify those programs that priorities might not align with President Trump. So we're going to be looking for details like that on which of these federal workers could ultimately be impacted. There is reporting that it is going to be widespread but might not hit every government agency here in Washington. It's good context to keep in mind that this is going to be a nationwide issue. Only about 20% of the federal workforce is here in the nation's capital. An estimated 750,000 federal workers are expected to be furloughed. We're going to have to see how many of those turn into permanent firings. Joe and Michelle, I'll leave you with one other statistic from our analysts at Bloomberg Economics that say that if this shutdown goes into a third week, which it does look like it's headed to, considering that they are adjourned until Tuesday, the unemployment rate could tick up to 4.7% as furloughed workers are counted as temporarily unemployed. That could now all be impacted because of this announcement from Russ Vought.
So, Tyler, as Joe mentioned, we're marking day 10 now. We've been talking for the duration of this shutdown about how unique it is that both sides feel they have the upper hand. Is something like this move today going to break the logjam for better or worse?
Well, at this point, that's really what we're waiting to see. It is ramping up that pressure. There's a few, of course, other deadlines that are ramping up the pressure here, too. Today marks the first missed federal paycheck for many federal workers. Since the Senate is going to be out until Tuesday, that is one day before October 15th, when members of the military might miss their paycheck. Also, big questions here about whether or not back pay will be given. And it's all adding to this picture, this mounting pressure. And we really haven't seen either side let up. In fact, they're really digging in, Republicans and this White House, saying that they are not going to negotiate until the government reopens. We heard from House Speaker Mike Johnson as well as Senate Majority Leader John Thune really reiterating that message as well.
All right, Tyler, let's turn to the post on China, which would have been a top story on any other day, but they're colliding, so we have to take them one at a time. He says some very strange things are happening in China, and it would take me the rest of the hour to read it. It's more than 500 words long. In summary, the president is threatening massive layoffs, as he puts it, suggesting that China is holding back on rare earths, letters that went out to many countries that give China a monopoly, and he's now questioning whether he will even meet with President Xi a couple of weeks from now. Is that meeting off?
Well, that is also going to be a big question. It's certainly in doubt. President Trump saying that he now has no reason to meet with the Chinese President Xi Jinping. They were supposed to meet on the sidelines of the APEC summit in a couple of weeks in South Korea. We'll see how this ultimately evolves. The context here is that Beijing had taken steps in recent days to unveil new export curbs when it comes to critical and rare earth minerals, adding both elements as well as technology to its control list. And President Trump is responding with this. But we know that this White House had a lot of priorities that they wanted to come out of that potential summit meeting, including making progress on a trade deal. October is only that set meeting was only a couple weeks away from November 10th. That is when the trade truce is set to expire. That is currently keeping those tariff rates lower, a 30% tariff right now on Beijing. So we're going to have to watch to see how the pressure sort of develops here, what those potential massive tariffs are going to look like. And then also quickly for your radar, of course, we're watching soybeans and what economic aid for farmers is going to look like. It's something that the administration right now is weighing, potentially is delayed because of the ongoing government shutdown. This all is, of course, connected here, but China hasn't been importing soybean imports, and that perhaps could be adding some pressure ahead of this meeting if this meeting does happen.
All right, boy, we've got a lot of questions to answer here still. Tyler, thank you so much for walking us through all this. And we haven't even talked about the controversy over the Super Bowl halftime show. It's a pleasure to go to California to speak with Brad Sherman, and I'm sure that the congressman has some thoughts about the layoffs that have just been announced. The Democrat representing California's 32nd district, Congressman Brad Sherman, welcome back to Bloomberg TV and radio. Russ Vought says the rifts have begun. Bloomberg News is reporting that they are in the thousands. Are you hearing anything more specific? And what will this do to negotiations if they ever happen, or the standoff in this government shutdown?
Look, there's no reason to do RIFs now. They could have done them 2 months ago. They could do them 2 months from now. They're doing them as an act of vandalism against the federal government, as if that will take revenge on the Democratic Party for not completely ceding all power. I mean, if it was up to Trump, there wouldn't be a Congress. So few dictators want a parliament messing up their lives, except North Korea style, to gather and cheer. And in fact, that's what Speaker Johnson has agreed to. He has sent Congress home. Not only are we not opening up the government, we're not doing any of the other business we're supposed to be doing, much of it that we're very, very far behind in doing.
Congressman, I want to ask you, given your years in Congress, decades watching these sorts of spats go on, where do you put this into context? It certainly feels like this is an escalated tensions on the Hill right now. I'm reminded of your late colleague, Senator John McCain, joking that, if we try real hard, we'll get into the single digits on congressional approval in rough times then, 2 decades ago. Where does this fall? Are we at a new low in decorum on the Hill?
We're as low as we've been since the 1860s, and I wasn't around then. You can compare this to other shutdowns, but the level of division in the country and Donald Trump's personality and personal approach is throwing kerosene on the fire.
Well, we saw what happened with Mike Lawler getting into a shouting match with the Democratic leader. We saw Democratic senators standing in front of the Speaker's office making noise about Jeffrey Epstein. I don't know if you guys are going to start caning each other like we used to in the old days, but Congressman, to Michelle's point, you've been up on the Hill for a minute. How do you get around this? Or should we assume that when the cameras turn off, you're having a beer with your Republican colleagues?
We're not out drinking. We get along reasonably well, perhaps as well as you get along with the people where you work. But we are responding to our constituents who are divided. And so many Republicans are not only loyal to their constituents, they're loyal to the president, whatever he says, and not only technically but emotionally. That's what they feel, and it's divided. Does that mean that? If I'm walking into the floor of the House, that a Republican sticking out his leg to trip me so I fall on my face? No, that's not happening.
Well, Congressman, you mentioned Trump's approach is pouring kerosene on the fire. I want to ask you about something else today that's kind of in your lane, in the foreign affairs lane, his Truth Social message on China. How do you think this changes the game in the overall U.S.-China negotiations? How worried are you about not getting some sort of deal with China, and what are your constituents saying?
Well, they haven't responded to this tweet. It's so strange because for so many years I was here and diplomacy was handled carefully. And now it's an emotional tirade, sometimes at 3 a.m, directly from the president. That's not the way to conduct foreign policy. It's not the way any other president has conducted foreign policy. And we see China uses its control over rare earth elements, and America has done nothing over the last several years to weaken that control. We should have strategic reserves of all those rare earth elements, and we should have alternative supply. It is not true that all of the ore for those elements is in China. It's just they're the ones who have created the big industrial apparatus necessary to extract and refine them. That could be done elsewhere. But that's just one of the many things that Congress should have been focused on and should be focused on today. Except
so here we are
here in the Rayburn building, and there are no Republicans.
I said you were in California. Forgive me. By the way, it matters right now when members are here in Washington. When's everybody else coming back? The Senate apparently is going to be here next week now. But the vibe we're getting from any lawmaker, D or R, Congressman, is that this will be protracted. We're nowhere near an off-ramp, even as John Thune suggests privately that he may offer Democrats an up or down vote on extending Obamacare subsidies. Where are we? What inning are we in this shutdown?
Well, and offering a vote if you know you're going to lose is symbolic and perhaps nice, but not all that important. This is going to last a long time. Both sides are digging in. The base of each party isn't saying, how do you put this together? They're saying, stand up for our position. And I think as long as the focus is on healthcare, and that is where we have put the focus, the people will be with us. What should happen, of course, is a negotiation. We may not get everything we want on healthcare, but the current position of the Republicans is give us what we want and we'll talk to you about whether we do anything that you want. That's not the way to treat a party that got 49% of the vote. And keep in mind, Republicans wouldn't talk to us in January, February, March, April, May, June, etc., about this healthcare cliff that we're about to fall over, where 22 million people will see their premiums more than double. And the letters are going out now. People have to decide whether to sign up for healthcare coverage. And as far as they know, it's at double the premium. They can't afford that.
Well, Congressman, there's certainly no shortage of big stories to ask you about today, but we'd be remiss if we didn't ask you about the Middle East and the president's forthcoming trip to the region. How are you feeling about this tentative peace deal? Are there reasons to be optimistic, bright signs here, even though it feels like we've kind of been close to this before, only to see a setback?
Hopeful. Optimistic may be too strong a word, but if the hostages are released, and Hamas is no longer in control of Gaza, then we can move forward. And it looks like that's what the settlement calls for. We'll see whether whether Hamas disarms and whether their leadership departs the region. But phase one is the release of the hostages, and that day can't come too soon.
Got about a minute left, Congressman. If this does hold, should Donald Trump get the Nobel Peace Prize? He didn't make it today.
Look, you'd have to evaluate Donald Trump's actions on the world stage in total. And I don't think they're quite Nobel Prize winning material. But look, Hamas has been pushed into a small corner of Gaza. They realize that Israel can take that corner as well. And I think that it's not so much what the president has said. The deal that he has offered is very similar to what the Israeli negotiating position has been all along. Free the hostages and free the people of Gaza, 2 million of them, from oppression from Hamas.
Well, he's on his way. Be there on Monday, apparently. Congressman, great to have you back. Brad Sherman, Democrat from California, thank you. Markets are extending losses now. The S&P down 2%. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Substantial losses for the U.S. equity market with the Dow, the S&P, NASDAQ all retreating. Traders sent stocks lower after President Trump this morning threatened a, quote, massive increase of tariffs on Chinese goods, rekindling fears about an escalation of the trade war. All of this breaking around 10:55 this morning. Right to the numbers, because now the S&P is at the low of the day, down 125 at 6609. That is a drop of 1.9%. We got the Dow down 585, down 1.3%. NASDAQ particularly hard hit as tech stocks tumble. Right now, NASDAQ down 2.5%. The NASDAQ 100 index also down 2.5%. 10-year 4.05%, with a 2-year currently yielding 3.51%. Gold 39.85 the ounce, up 0.2%. Silver back above 50, 50.19 right now on the precious metal, and Bitcoin down 2.6%, 117,966 on Bitcoin. Levi, after earnings, plunging 11.7%. Balance of power continues right now. Back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie Pellet working overtime in the sell-off today. Remember when the Friday news dump used to be at night on a Friday, at least the second half of the day? Now we start it in the morning. We got the Friday news dump on China, hence the market. We got the Friday news dump on the layoffs, the RIFs, as the wonks call them here in Washington. Russ Vought making clear reductions in force, said to be in the thousands, according to Bloomberg News, have begun, and Wall Street doesn't like any of it. We just wonder if this is another taco trade opportunity or maybe the beginning of something bigger. That's why we wanted to go a bit deeper with the help of Eric Weiner, Bloomberg Senior Equities Editor, live at World Headquarters in New York. Eric, how you watching this? We know, of course, this was a market that was pretty toppy before these headlines broke.
That's exactly it. There's a lot of selling right now in the big tech stocks that really were powering the thing higher. And really, it's about taking this moment where President Trump talked about tariffs, increasing massive tariffs on Chinese goods, and that's really a sensitive point for the market. And it's an opportunity. It's unclear right now if this is an opportunity to take some money off the table and really, sort of process where things are, or if this is an outright kind of the beginning of an outright panic. And really what you need to do is sort of take a look at what happens at the end of this session and what happens over the next couple of days as things sort of play out, because we haven't seen a 1% pullback in the S&P 500 since August 1st, and we haven't seen a 2% drop in the S&P 500 since April during the last tariff freak out. So really it's about kind of where this goes from here, and if this is a moment in time or if this is really something that's going to last.
Eric, we saw soybeans also take a hit this morning in the wake of President Trump's post. Are you looking at any other sectoral equities that might take a hit for the rest of the day or in the days to come?
Well, it's really, when you look at the tariff stocks, everything is selling off. Right now, the S&P 500, there were 400 stocks that were down. So you only have 100 stocks that are up. The risk is all over the place. It's small caps in technology. Anything that grows really is sort of right now is pulling back. And you have oil falling, you have gold rising, so it's all these sort of haven situations where people, what they call a flight to safety, where people are looking at safer assets, and that could last. However, things had gotten very toppy. Things had really gotten to the point where you would question whether there was any more to come from this. So this could be an opportunity to pull back. And that's really where traders are right now, is sort of in a holding pattern where, okay, let's lighten up the load a little bit, but let's see where things stand, because, you said the word taco. The question is where this goes from here, and if the tariffs really play out, because nobody really knows exactly what he meant by massive increases. Where is it exactly? Right. What exactly is going to be hit? And that's really the questions that'll be answered over the next couple of days.
Really great to have you, Eric. Thanks for your read on this. Eric Weiner at World Headquarters in New York, Bloomberg Senior Equities Reporter, with us here on Balance of Power. Alongside Michelle Jamrisco, I'm Joe Matthew. It's time to assemble the panel and get their take on this. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Rick is our Republican strategist and partner at Stonecourt Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Boy, how should we be looking at this, Jeannie? You read the long post on China, and there's not really a lot in there. He talks about massive tariffs, but does not quantify them, to Eric's point. He suggests that there's no reason to have the meeting with President Xi, but he doesn't cancel it. Isn't this the kind of move we've seen before, with big bluster before a big sit-down?
It absolutely is. And to your interview with Representative Sherman, it's not the way we normally make important policy decisions. This sort of venting, which is what this seems to be, and riles the markets, understandably, in this way, without any sort of sense as to where the United States is going to head policy-wise. And part of this is that we heard U.S. lawmakers earlier this week talking about banning chip-making equipment to China. We are seeing China post these regulations that very much mimic what the United States has done in the area of semiconductors. This is not a big surprise on China's part. They're going into negotiations with the United States. They need to have leverage, and we should have leverage ourselves. But for the president to sort of respond in this way doesn't seem like he is using the type of strategic leverage approach that we're seeing out of Beijing. And that is going to leave the U.S. weaker as we move, if we move into these negotiations. So, I don't think it makes much sense. And it's certainly not the way to do business with an equally powerful partner like China.
Well, Rick, to Jeannie's point, we've been in this sort of tit for tat for a while, including with the tech and export controls issues that have come about between the U.S. and China. I'm wondering why today? I mean, even just yesterday, the president was saying, there are things that the president of China would like to discuss with me. There are things that I would like to discuss with him. It seemed like we were on the right track to have that talk at the end of the month. Why has this blown up overnight?
Well, I do think there's some reaction to China's moves to lock down export restrictions on some of these rare earths, some of the technologies around some of the refined products. Remember, it's not like they're just exporting a element of rare earths. They manufacture these things into usable parts, and that's what we buy. And they're clamping down on that, and they're clamping down on chips. They took the first move. And I'm pretty sure that the president's national security staff probably were pretty apoplectic about this, because every time we make a deal with them, it's with the sensitivity that China's going to keep certain things flowing while we continue to buy their products. And the reality of it all is we have not been treating China as the adversary they are. We keep talking about them being a competitor, and they're not. They're an adversary. And I think this is probably, whether it's a device headed into South Korea, whether he meets Xi or not, or whether it's just an extension of the policy he's already had on China. But we got to get used to having a different relationship with China, and I think today's probably a step in that direction.
Well, case in point here, there is no bigger gainer that I can find in the middle of this sell-off than MP Materials. It just hit an all-time high, Rick and Jeannie, above $81. It's ahead by 13%. This is the materials, the rare earths and materials company that the Pentagon took a stake in. And we have seen others since then when it comes to lithium, Jeannie, and there's been a suggestion that more could follow. Does this codify or justify the administration taking stakes in the name of national security in rare earth companies?
It's strange when you hear about the Republican Party in the United States, the administration taking steps like that. It seems like something we would never have invited as in the Republican Party, at least. But at this point, the United States does need to take steps. And, what's so baffling about this is while Congress is sitting on the side, not doing, not even meeting in the case of the House, there are steps that can be taken. China does not have a sort of hold on this kind of rare earths. The United States has the ability, had we worked on this in the past or even today, to be in a position to compete on this, and we have not done it. We're sitting in the middle of another in a long line of shutdowns. And, you know, the market is responding to China and this announcement. They haven't responded to the shutdown. But that's frustrating to me, because I think they should respond to the fact that when the United States government isn't working, this is the kind of result of that. And so the sort of ho-hum attitude out of the market about the government shutdown, I think, is something that we should pay more attention to, because they are changing their focus from where it should be, which is that the government has got to work so we're in a position to compete economically and secure ourselves.
Well, Ginny, if I could follow on that, I mean, we've been waiting for a long time for the China hawks in Washington, who are usually so vocal, to come out and sort of challenge the president on what was seen as sort of a soft policy for a while, extending the trade truce and talking on a range of negotiations, TikTok being one that was taking a softer line than previous administration had. Where are those hawks, and where do you think the Democrats should be now in responding to something like this morning? Or do you think this could be sort of a blip in the radar and we return to U.S. and China are back on track, Trump and Xi will meet, you know, in a few days?
You know, I do hope that they meet. You know, we used to say, not just a few months ago, that there was one thing that everybody in Washington agreed on, Democrat or Republican, and that was confronting China, competing with China. I hope that that is still the case. I think it's noteworthy that these new curbs on China's behalf are not supposed to go into place until November 8th. That would give them time to meet and to make some agreements on these kinds of things. So I do hope that happens. But yes, Washington Congress has to get their act in order to confront China, because there is a lot of work to do in this regard.
Looking at NVIDIA today, it's down 2%. We've seen certainly worse days for the stock. I know that there's a sentiment here of negativity on Wall Street, Rick, but if we were really concerned that we were ending our economic relationship with China, wouldn't we be in a different place? This is a market that was pretty frothy, as we established before you joined us here. And this could just be another Friday when we look back on it, no?
Yeah, I think if you look at it just from the stock market in an isolation, you can come up with a lot of different points of view on it, and they could all be right. But I do think the reality of this administration is that they are in the process of decoupling with China. They have been much more restrictive on export of technologies that could help the China Red Army than previous administrations. They have been, even though many of these tariffs haven't gone into full effect, the fact that they have them on the books and are prepared to use them as a weapon of statecraft is important.
They're reacting to breaking news today. That's just the vibe here in Washington. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, will be back on the late edition of Balance of Power. Michelle and I looking forward to spending some time with Patrick McHenry, the former Republican congressman, and yes, Bloomberg Politics contributor, on the shutdown next here on...
1:40 on Wall Street. We do check markets all day long here at Bloomberg. Flaring trade tensions between the U.S. and China have sent shockwaves across markets, hammering stocks, oil, and crypto. The Dow, the S&P, NASDAQ off-session lows, but still in the red with the S&P down 109 now at 66.25. That is a drop of 1.6%. We've got the Dow down 511, down now by 1.1%, while the NASDAQ Composite Index is down 509. For NASDAQ, a decline of 2.2%. NASDAQ 100 Index also down 2.2%. Russell 2000 Index of small cap shares down 1.7%, and the Mag 7 Index hit hard down 2.5%. The 10-year 4.05%, with the 2-year 3.52%. Gold now at $39.89, up by about 0.3%. Silver is above $50 the ounce at $50.14, up 1.8%. But a retreat for crude was trading below $59 a barrel, 59 even right now on West Texas Intermediate, down by 4.1%. Bitcoin now lower by 2.7%, 117,870 on Bitcoin. Also coming up, 5 o'clock Wall Street Times. Sources tell Bloomberg AstraZeneca is expected to announce a deal with President Trump to slash drug prices, marking the second pharmaceutical company to strike an agreement to advance one of President Trump's key health priorities. Right now, we do have shares of AstraZeneca. They are trading lower, down by 0.5%. Pfizer, you recall, was first out of the gate in late September. It agreed to slash some drug prices by as much as 85%. Pfizer shares down by 1.4%. Again, recapping, stocks lower. The Dow, the S&P, NASDAQ, all in the red, bouncing off the bottom, with the S&P now down by 1.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie Pellet. Many thanks, Charlie. Here with Michelle Jamrisco in Washington. We're spinning a few plates today because the headlines keep popping on the terminal. We started with the truth post about China, sent the markets south, as you just heard from Charlie Pellet. Then Russ Vought shows up just in time with the word that the rifts have begun. He says so on Twitter. We've been doing some reporting to suggest that it will be in the thousands. We're also seeing now, I believe it was Punchbowl, Pentagon expected to be spared from the layoffs. So this is not every agency.
I was going to say, I can't even remember if that's where we started with China, or if all of this has just kind of meshed together.
That's right.
Of course, we've seen the markets react to both things, so it's interesting to follow today's events as they unfold.
For sure. It also happens to be day 10 of the government shutdown, which in any other world would have been our top story, with people crying as they can't get into the zoo. Although the zoo's still open, I think, at this point. I have to check on that. I was at the Smithsonian last weekend thinking it might be my last chance for a minute. All I know is, about a month ago, it might have been a little bit more than that, Patrick McHenry said in this studio that October is going to be a doozy. He might have used a different word than that, but he's with us now. Bloomberg Politics contributor, former Republican congressman, chair of the House Financial Services Committee, Speaker pro tem, the only in American history. Patrick McHenry, great to see you.
Thanks. It wasn't doozy. It was off camera, and it was more colorful language.
I thought that was right, yes. Therefore, I could have said anything, and they would have believed me. But it's coming true. When you see Mike Lawler standing in front of Hakeem Jeffrey's office with a piece of paper to get into a shouting match for the benefit of the cameras, tells us we are where?
Not yet at the negotiating table.
The performative
it's
stage.
A performative piece. The only thing that brings policymakers to some resolution is pain. And the announcement, it's not goodwill. Everybody's like, everybody's going to come together with their disagreements, and it's going to be goodwill that gets out of a shutdown. It never is that. It is the party that instigated it has to take the pain in order for us to get out of it. That's where we are. Usually it's been Republicans. This has been a much more chill shutdown in terms of what's happening here in D.C., like the rhetoric here in D.C., and it's because the Democratic Party is traditionally the defenders of federal employees and the federal government and federal regulatory powers. They're the ones that have instigated the shutdown in the name of a healthcare battle, or a healthcare policy, but they've instigated it. They've been very muted about the effects of the loss of government services. They're usually the ones that are first to the press. And now you have Republicans who traditionally believe that we need to pare down the federal government, not spare anyone in the federal government. they're the ones that are saying, well, look, we need to try to make this work for as long as we can. So you see some agencies are still open because they have account balances. OMB has these massive set of powers during government shutdown, which enables the OMB director, in this case Russ Vought, to take very specific action by individual agencies and account levels to either continue normative services or, in this case, have substantial layoffs.
So, Mr. Chairman, we had House Speaker Mike Johnson on the other night, and Joe, try as he might, did not help resolve the shutdown that evening. But one thing he did ask the Speaker was, why not just schedule a vote, as the Democrats have been asking for, and the shutdown? That's obviously not in his political will to do. He was saying it was not in his process capability to do. How do you unpack that? Take us behind the scenes. Could he do that? And would it be in his interest at all?
Two things can be true at once. And in this case, Mike can be correct and Joe can be correct. So, yes,
I love Washington.
Everybody wins.
So what the Speaker has said is we've passed a continuing resolution. That is a normative act in D.C. Unfortunately, since the 52 years we've had this budget process, we've failed most years to follow the budget process and the law. But a continuing resolution is now the default in the fall. What the Democrats say is we have to, in order to reopen the government, you have to have this expansion of health care benefits into next year. And what Republicans have said, if you want to have a debate about this, let's have a debate about it, but we should not hold the government hostage. Now, the last government shutdown we had, it was flipped. It was Republicans saying we're going to hold a hostage and Democrats saying, no, well, once you reopen the government, we'll have that conversation, right? So these roles are completely reversed and scrambled. The process in the House would require us, the House initiating a new bill, going through the Rules Committee. There are not the votes on the Rules Committee to pass what the Democrats have requested, which is about $200 billion of new spending for next year on health care in order to reopen the government. That is a really large bid just to keep the lights on for 6 weeks. It is an absurd bid. In order to continue the Obamacare subsidies for 1 year, that was the original debate here, it would cost about $26 billion to keep the government open for 6 weeks. I mean, these are big numbers. And so what the Speaker said is, look, we'll have that debate, happy to have the debate, but I'm not going to go originate a piece of legislation in the hopes my Democratic colleagues will then adhere to their rhetoric about why we have the shutdown.
Okay.
That said, we also talked about back pay.
Oh, yeah.
The president really started something here. Hey, listen, he said, maybe not everybody gets back pay, to the point of saying some don't deserve to be taken care of. And I asked the Speaker about that, and he said, well, there are a couple different legal interpretations of that law, because we all thought the 2019 law made clear that they had to be paid back when they were brought back from furlough. Are we really making this a jump ball? Is that good politics?
It's before 2019, the law changed. It's always been a jump ball.
Yeah,
it's always been a jump ball, an open question whether or not federal employees will get back pay.
Okay.
However, history has shown at every government shutdown that has ever occurred in the last century, they've gotten back pay. So these are federal employees that have signed up to do a job, and it is not their fault that the government shut down. It's not their fault that Congress can't get their act together. So I believe that Congress will have the sense to pay all federal employees for back pay, number one. Number two, I don't think there's clear debate. I don't think this is a debatable thing. The law is very clear that this is what will happen. And number three, you have the filibuster in the Senate, which means the Democratic minority controls whether or not the government is open. We have a shutdown right now because Schumer has the votes to withhold, to filibuster, and to stop the bill being taken up that passed the House to keep the government open. I don't think the Democrats would come to the table unless there's back pay. So there's a waterfall of things that are true here. I think if you're a federal employee, So
this is a distraction.
Yeah, it is a distraction. Now, the pain of the rifts, that's real, and there's a massive amount of not legal uncertainty, but definitive certainty on the power of OMB to take these actions in a governmental shutdown. Yep. That should be concerning to Democratic leaders on the Hill.
Absolutely.
So, Mr. Chairman, you correctly predicted this would be a mess a while ago, so I'm going to ramp up the pressure on your predictive capabilities. But next week, when we're looking the days ahead, we've got the military paycheck issue as well. Is this going to be resolved next week, or is this something that waits until after the shutdown, whenever that is?
I'll take the over. I'll take the over. And every offer that everybody's that presented me with a date, I've taken the over. I think the backstop of this is Thanksgiving. I think we're going to have a lot more pain before this thing gets resolved and people come to their senses. The fact is that you've already seen Schumer lose 3 Democratic senators. It hasn't spread beyond that. But as the pain ramps up, I think Democratic politicians in the Senate will come to the negotiating table. I think we'll have a reopening, and then we'll have a debate about health care and extending some of these subsidies, and then we'll have the longer-term funding for the federal government. But it's going to be choppy waters.
This piece of paper is going to be junk soon, though, right? November 21st, who cares? If they pass it in a couple of weeks, the government's just going to shut down again. And there are many who do think that once this is resolved, we will hit another shutdown at the end of the year. We just keep kicking CRs through the spring, or what's the best case scenario? Don't say regular order.
Well, this is regular order. Continuing resolution
this is regular
a
order.
normative thing in the House. 2 years ago, this was the finite cause of the ouster of Speaker McCarthy that we passed a clean continuing resolution. So this is a normative act in Washington. Unfortunately, these every couple of administrations, the normative act is also a government shutdown. It doesn't win you the policy, the underlying policy. Yeah. It does elevate your party in a political fight, and this is not about the policy, it is actually about politics. Schumer is getting hammered on late night TV like never before. Jon Stewart, who I don't frequently quote, called him a flat tire. I mean, these are very insulting things.
Sketch. That was a bad joke, the KF.
I mean, there are a lot of bad jokes on late night TV. Don't get me. I'm not going to get into that.
No, I mean the Schumer joke that got him in hot water there.
But Schumer's in this fight because he looked feckless and weak in March, and is now trying to look like he's given a valiant fight to his Democratic base. Hakeem Jeffries is doing the same thing. So those fights, that physical confrontation you almost saw on Capitol Hill, is trying to elevate Schumer and Hakeem Jeffries, Hakeem Jeffries to the speakership, Schumer to the majority. They need to show a fight against President Trump, and they have very little power to do it outside of a shutdown.
If a Democratic member had done that, would we be talking about censure?
Oh, for sure. For sure. I mean, look, all this stuff, all these performative acts are fun and games until somebody opens the door. And that is always the case, right? You're like, I'm going to go fight with somebody. And you're like, well, you're on a TV. I think they're in the 2 rooms behind you, right? Why don't you go just talk to them instead of yell on the screen?
So as far as the pressure points, though, you mentioned Thanksgiving. I wonder if part of that timeline is the flights issue. Are we seeing enough pain on flight delays, air traffic controller shortages, that sort of lane that the American public cares about to have a change in the negotiations?
Yes, and this is about, again, the nature, the timing of the reopening will be based off of pain and how that maps out. And you can't predict what the pain will be like for either party in a week's time. Now, I think the Democratic Party is the one that has to fold in order for the reopening to happen. But you can see different movement based off of who is deeply influenced by their constituents feeling pain, or frankly, they go to the airport and they can't get on their flight. That is a form of pain for those of us that travel.
So you're still looking at Virginia, Maryland, with the big concentrations of federal workers to maybe crack and join the jailbreak?
Yes, but those senators, the Democratic delegation there in the Senate is
Warner and
very
Keene are going to go there, right? Yeah.
So
Van Hollen, not so much.
No, but you also don't know how these federal employees map out. Like if you're talking about air traffic control, disproportionately they're located in Oklahoma. Okay. There's not a single Democratic federal office holder from the state of Oklahoma. So you don't know how these things are going to model out.
Really interesting.
You also don't know how that Oklahoma delegation is communicating with the OMB to ensure that their people are paid. So there's all this subtlety that if you're in charge of the OMB, you can either met out pain to your opponents or help your friends. And in this case, I think OMB is being quite adept at being targeted on who they're sharing pain with, and targeting who they're helping, and maintaining account balances where they need to help people.
Speaking of mapping out, it'll be really interesting to see where these all land. I don't know how long it'll take before we have that data, but we'll, of course, bring it to you here on Bloomberg. Patrick McHenry, Bloomberg Politics contributor, former Republican congressman. Great to have you. How often when you're on the plane, they recognize you're the guy who replaced Kevin McCarthy?
Zero without a bow tie.
I don't. Okay, well, that's a good answer, and he brought it with him today. We'll meet you back here on the 5 p.m. late edition of Balance of Power. Michelle, thanks for spending time with us. Michelle Jamrisco, Joe Matthew in Washington on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, on this Friday, October 10th, 2025. It is Bloomberg Business Week Daily, live from the Bloomberg Business Week studio at Bloomberg headquarters in Midtown Manhattan. It is Bloomberg Business Week Daily. That is not Carol Masser. That is Emily Grafeo. She's from the Bloomberg News Cross Asset Team. I'm Tim Stenevec. Emily in for Carol. And it is a day, Emily, where we are going cross asset.
Exactly. You look at investors piling into bonds, leaving Bitcoin, leaving stocks. We'll have a lot to talk about. We're also going to talk about eco as well. Bloomberg TV and radio, international economics and policy correspondent Mike McKee is going to join us very soon on tariffs, federal layoffs, Argentina, and more, Tim.
Jayatri Bardwaj is joining us as well from TD Securities on FX. And then we are going to the Middle East. There's a lot that investors and pretty much everyone around the world is keeping their eye on. Dana Stroll is going to be joining us. She's Senior Fellow of Director of Research at the Washington Institute for Near East Policy.
And finally, the CFO of the publicly traded telecom company, Lumen Technologies, joins us soon.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. But back to those markets, and here he is, Charlie Pellet.
Thank you very much, Tim and Emily. Indeed, lots going on. We got you covered. Going to be very interesting to see how things shake out at 4 o'clock when markets close here in the U.S. Right now, though, losses across the board with the Dow, the S&P, NASDAQ all slumping. A months-long calm on Wall Street screeched to a halt today when stocks erased early gains to touch session lows after President Trump threatened, quote, a massive increase of tariffs on Chinese products imported into the United States. So here's where we stand right now. Again, 2 hours to go ahead of the close. S&P down 1.8% at 6612. The Dow down 575, down 1.2%. The NASDAQ Composite Index down 580 right now. That is a drop of 2.5%. The Russell 2000 Index of small cap shares down 2%. Our Mag 7 Index is hit hard, down 2.7%. The 10-year at 4.05% with the 2-year currently yielding 3.52%. Spot gold is trading higher. Spot gold up 0.3%, $39.87 the ounce, but remains below 4,000. Silver above 50.09 right now, up by about 1.6%. And West Texas Intermediate crude down 4.3%, 58.86 for a barrel of WTI, and Bitcoin down 3%, 117,566. Sources tell Bloomberg AstraZeneca is expected to announce a deal with President Trump to slash drug prices. The president does have an event scheduled for 5 p.m. Wall Street time. We'll take you there as it all comes down. Right now, we do have shares of AstraZeneca. They are trading lower, down 0.3%. Again, recapping, stocks lower, S&P down 1.8%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. As Charlie mentioned, the S&P 500 down about 1.9% off the worst levels of the day, down as much as 2% earlier in the session. I want to bring in Eric Weiner. He's senior editor, Equities Americas for Bloomberg News. He joins us here in the studio. Eric, when you are on our program, more often than not, it's because we're seeing volatility. Today, no exception. The reason we saw stocks move lower is over concerns of an escalating trade war with China. How is today different than, I don't know, rhetoric that we've seen in the past few months?
Well, China is really sort of the tip of the missile on the tariff fears. So when the president said we are, going to massively raise tariffs on China and basically, unspooled this whole thing about rare earths, we knew immediately that the market was going to turn and it would probably get pretty ugly. So the question becomes what this actually means. If you look at where the market was, it was pretty toppy. Things were already getting to the point where people were on Wall Street were kind of wondering how much further it could go. So this is a good opportunity to step in and be like, okay, well, let's pull some stuff off the table. Let's see what happens over the weekend and go from there. The question is where we go at the end of this trading session and then next week. Because if this continues and it sticks around, things can get ugly.
Talk about the nature of the sell-off that we're seeing right now. We have tech stocks moving lower. The most risk-on parts of the market seem to be selling off in the worst way today. What does that tell us about just where we could go next?
Well, when you see the index move like this, when you see the S&P 500 move like this, even though, yes, there are 400 stocks that are down, there are about 15 that you're really looking at because the thing is so concentrated. So the risk is in those big tech names that really, really drove the equity index much higher. When you look at it, you're like, okay, we'll take some We'll take some profits out of Facebook. We'll take some profits out of, or Meta. We'll take some profits out of NVIDIA and go from there. But it's like when you saw the VIX jump over 20, that's when traders start getting cautious generally. So there are two things going on. It's the breadth of the decline and then also these big names coming out.
But are we seeing a significant rethinking of valuations right now? Because we're only off 2% of all-time highs. It's the worst day for the S&P 500 since April 21st. But if you actually look at what level we're at right now, it's the lowest that it's been since September 25th. So we're basically going back in time, like, 2 weeks.
Yeah, it's exactly. We're back to where we were in,
late September,
way back
was
then.
a record then too.
And that's what I mean by we don't really know anything right now. When you talk about like we're going to massively increase tariffs on Chinese goods, what exactly does that mean? Who gets hit? It's not there. There isn't a lot of discerning trading going on. It's just let's get out of these positions. And it's a good excuse to kind of what they call take profits. But like in terms of the actual risk and what's going on, we haven't had a 2% drop. Like the market has been incredibly calm. We haven't had a 2% drop, as you said, since April. We haven't had a 1% drop since August 1st. So like this is one of those situations where like why not get out of here right now and sort of see where we come back next week? Because the market has bought every dip. That's what we're kind of betting on from here is that investors will step in and be like, okay, well, there was a sale, let's pick it, let's scoop stuff up starting on Monday.
What would you need to see in the market to say that this is not going to be another dip that's going to be bought? Would it be, more declines Monday, Tuesday, Wednesday? Would it be a certain sector selling off? Like what would really generate some concerns here that the rally is not going to be sustained?
When you start seeing it become really broad-based. So, we look at two measures of the S&P 500. You look at the S&P 500 equal weight, and you look at the S&P 500 regular. The equal weighted version means that there's a lot more breadth in there. You can sort of see what's going on. Right now, the S&P 500 is performing way worse than the equal weighted version of that. And that will flip. If that gets ugly, if the S&P 500, if the equal weighted version comes down with the regular version, then you start thinking, wow, and it starts holding because we need to sort of see it happen for like a couple of weeks for this to go on. Then you start thinking, well, maybe we're actually getting some repricing, but we aren't seeing that. I really want to stress we are not seeing that right now.
Eric Weiner, thanks so much for joining us. Senior Editor, Equities Americas for Bloomberg News, joining us here in the Bloomberg Business Week studio. Eric, don't go far. We might be calling you back a little later today. I do want to bring in Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent. He joins us also here in the Bloomberg Business Week studio. As we've been talking about, Mike, markets lower on fears of an escalating trade war. You're a macro guy. You're International Economics and Policy Correspondent. Is this a rethink of U.S. of U.S. policy, U.S. trade policy? It's just a social media post.
Yeah, I think, well, there's a couple things going on, and I think Eric's right that the markets are using this as an excuse to sell off because we don't know exactly what's going to happen. Chinese have said that they're going to put new restrictions on rare earths and supermagnets and things like that that have been under discussion. And Xi and Trump are supposed to meet at APEC later this month and talk about this, and there was thought that they might reach some kind of deal. Some analysts think that this is basically the Chinese trying to get some negotiating leverage. And Trump doesn't want to be backed into a corner, so he's negotiating back in the kind of language that he tends to use. The Chinese, the main body of the Chinese new restrictions wouldn't hit till November or December. So it's not something that's imminent, and it could be that this is just all posturing, and one has to hope that at this point. But that may be why we've got a 2% fall, or roughly 2% fall, and nothing worse. I think if the president had really come out and said, I'm going to jack up these tariffs to 50, 60, 70%, then you would see a much bigger reaction.
These comments, of course, are coming before he's set to meet with Chinese President Xi Jinping a little bit later this month. Have we heard any details about whether that meeting is still going to be taking place in the wake of the social media posts?
Well, we haven't heard that it's off. The Chinese did not mention it's off, and the president said, I don't see any reason to meet right now, but he didn't say I'm not going to. So at this point, I think we just have to wait and see how this plays out over the next couple of days. Maybe he gets it off. Maybe he's mad because of the Nobel Prize, and instead of going after Norway, which we all thought he'd do this morning, he's just taking it out on China for the time being.
But he was thanked by the winner of the Nobel Peace Prize.
Well, yeah.
And then he reposted this.
Yes. Basically, she said we're counting on President Trump and our friends in democracies around the world to continue the struggle for Venezuela. She didn't say, thank you, President Trump, exactly.
Well, let's shift gears a little bit, Mike, and talk about reductions in force, the idea of layoffs, permanent layoffs. Russ Vought earlier today, White House budget director, saying the reductions in workforce have begun. He's referring to the federal government's term for layoffs here. Do we know how many? Do we know who? Do we know where?
What we know is that the White House, senior White House officials told Bloomberg News that it would be thousands. Representative of the American Federation of State, Local, and Government Employees said that they heard 1,300. But there's no exact number at this point. It does seem to be affecting many agencies. I've heard as many as 9. And this is obviously going to provoke lawsuits from the federal unions. The administration and Vought say this is necessary because of the government shutdown, but it's not. They've never done this before.
Yeah, why?
The workers aren't being paid right now, so it doesn't. It's just. It's also theater. Now, does the administration? They could be setting this up as a bargaining chip. You know, Democrats come to the table and they concede something, and the president says, "All right, we won't fire these people." Because remember how this went with the Doge thing. People were on the payroll, off the payroll, on the payroll again. So this could also be a big smokescreen.
I'm wondering how you think that kind of impacts what could be an already weak labor market that we're seeing. We had Governor Christopher Waller from the Fed saying job growth has been negative for the last few months. The labor market is his biggest concern. Of course, that's what we've also heard from Jerome Powell. These firings, wouldn't that make the labor market even weaker, or is it not quite related?
There's not enough people getting fired. I mean, is it terrible for them individually? But at this point, if you said thousands, I mean, there are something like 2 million federal employees. So it wouldn't mean that many people are going to affect the economy, but it does contribute to the overall sense that the country is not doing well, that the economy is not doing well, and that may hit consumer confidence. And the more layoffs you have in your neighborhood, the more you start to worry about yourself, and then you cut back on spending, and that's how recessions begin, basically, is a confidence matter. So it's not good news in that sense, but it's not something that we will really see in the economy. What ends up happening with government shutdowns is spending is delayed, but it's not completely gone. People will get their back pay, in theory. The administration's threatened that too, but the law says they get paid, and then they'll go make the important payments that they have to make. And I'm sure they'll use their charge cards for groceries and things like that in the meantime.
Well, speaking of getting paid, Argentina is about to get paid to the tune of $20 billion. Is it fair to call this a bailout?
It's fair to call it a bailout, but they're not really going to get $20 billion from the U.S. Essentially, they're calling it a swap line, which it isn't exactly either. The swap line is an agreement between two central banks, one that needs dollars, sends money to the Fed, and the Fed sends the equivalent amount in dollars to them so that their companies in that country can pay their dollar-denominated bills. And then they send it back and when the crisis is over and the Fed sends them back their money. This is more like a rescue package along the lines of what happened with Mexico in 1994, where the U.S. used the Exchange Stabilization Fund and agreed to guarantee Mexican bonds that couldn't be sold because there was a concern about whether or not they would default. And so the U.S. guaranteed those. The U.S. bought some of the assets. They didn't give Mexico cash directly. And I don't think we're giving Argentina cash directly, but it'll be a system set up like that.
Is it a little different than Mexico back then, though, because we share a border with Mexico? The stability of Mexico is in our best interest because it's such a large trading partner, at least right now. I mean, Argentina is a little bit of a different story. It seems more political.
Well, there's definitely a political angle to it, and it just kind of depends on what your cynicism meter goes up to. Argentina is obviously a poster child for bad financial management. They owe the IMF billions and billions of dollars. They've defaulted something like 23 times. And you could argue that it could be a sort of economic domino in the way we saw things happen in the Asian financial crisis. But there's also the idea that a lot of the hedge funds that hedge fund leaders who worked with Scott Bessent over the years have loaded up on Argentine debt, distressed debt, because they can buy it at a discount. And if the Argentine peso keeps falling as it has and is predicted to do if they lose the congressional elections coming up, then these people lose a lot of money. And if the U.S. can prop up the peso, then it helps Bessent's friends. Now, I don't have any evidence one way or another, but the New York Times is reporting this. Paul Krugman did a column on it today. So that is something for, I don't think you have to go as far as a tinfoil hat. Maybe saran wrap hat or something like that that could be.
Maybe it's in the same drawer where you would find the tinfoil.
Well, and you get in these situations, you get people who are nervous about the impact on American investors and funds. We saw the same thing happen with Greece, and Greece was definitely going to default, but it was handled very gingerly so that it didn't cause systemic problems.
Well, this coming from the Treasury Department, but certainly the next Fed chair might be thinking about the implications of this. And that's kind of where we want to end with you, Mike. We learned earlier today some other names that could be in the running or are in the running for Fed chair finalists. Rick Rieder, Michelle Bowman, Chris Waller, Kevin Warsh, Kevin Hassett. What's the timeline here? Is there anyone else to add?
This is a CNBC report that they are the final five.
Okay.
And that they would do another round of interviews, and then sometime maybe in December, the president would nominate someone to the Stephen Myron seat where the term expires at the end of January. And that person would be essentially the de facto Fed chair in waiting. And then if Jay Powell resigns, they could put Steve Myron back in that seat or somebody else. We don't have any other outside confirmation of that, but it certainly tracks with what the president has been saying. He's called the Kevins and Chris Waller the finalists for some time. Michelle Bowman might be a little bit of a DEI here because we know they like her in the regulatory role that she's in, and Rick Rieder obviously has a good reputation in the markets. It depends on what the president ultimately ends up wanting in a Fed chair. How much of a splash does he want to make in a sense of a rock falling in the pond and sending out ripple? How much does he want to upset the apple cart, and how much can he do without upsetting the markets? So this is going to be something to watch over the next couple of weeks, because once we get to an announcement, there's going to be a lot of reaction to that as well.
Well, we'll certainly be talking to you many times between now and then. Michael McKee, Bloomberg News International Economics and Policy Correspondent, joining us here in the Bloomberg Business Week studio. Mike, have a good weekend. The S&P 500 still down to the tune of 1.8%. The NASDAQ Composite down 2.5%. The Dow down 1.3%. We're kind of going all over the place geographically right now because investors have a lot to think about. Observers have a lot to think about, including the durability of lasting peace in the Middle East. Israel began the process of withdrawing troops from Gaza, while the U.S. started the clock on a 72-hour window for Hamas to release all remaining hostages as the complex process of ending the two-year war got underway. Dana Stroll is Senior Fellow and Director of Research at the Washington Institute for Near East Policy. She joins us now from Washington, D.C. Dana, good to have you on the program today. Is this the beginning of lasting peace in the region?
Doubtful, but it could bring relief for Israelis and Palestinians. So what we're going to see over the next 72 hours
is just the initial phase of this pretty extensive, very broad 20-point plan. So we'll see Israeli hostages hopefully released within the next 72 hours. We'll see Palestinian prisoners released from Israeli jails. We'll see the IDF withdraw out of to part of Gaza, but they're still going to be present in more than 50% of Gaza. And we'll see a lot of humanitarian aid flow in. But that doesn't address Hamas's weapons. It doesn't address what the constitution of an international stabilization force on the ground in Gaza will be. It doesn't address what the future governance structure will be. It doesn't necessarily put us on a path to Palestinian statehood. And of course, it doesn't address everything else that's keeping us from having peace in the Middle East, like Iran's nuclear weapons program and other terrorists who still have ballistic missiles and they're firing them.
Right. So a lot of outstanding questions, but talk about the current deal so far. What makes this ceasefire and this hostage deal different from just previous efforts for peace that we've seen between Israel and Hamas?
What's really unique about this time is the convergence of stakeholders who all decided to pressure all sides. So for the past several ceasefire negotiations with respect to Hamas and Israel, the United States was working with Qatar and with Egypt, who were then mediating with Hamas, and the United States was working with Israel. But this time, President Trump started at the UN, bringing Arab and Muslim leaders together all to back his plan. And then we saw in these high-stakes negotiations in Egypt, Turkey join hands with Qatar and Egypt, all putting tremendous pressure on Hamas. And finally, we have the personal investment and commitment of President Trump, who backed Israel, but then at the final hour told Hamas, I will guarantee that Israel will not restart this war if you uphold your commitments.
Now that that 72-hour window has begun, what is the U.S.'s role in enforcing the ceasefire?
Well, first of all, it's whether or not President Trump is going to stay personally invested and that level of presidential interest and commitment. And secondly, is the U.S. military role. So CENTCOM, the head of U.S. military operations in the Middle East, has announced that they'll contribute to this joint task force to support hostage recovery. And the U.S. military will probably have a significant leadership role in standing up this post-war stabilization mission in Gaza and bringing others in.
I'm wondering about the significance of certain people involved here, especially on the American side. Steve Witkoff, for example, Jared Kushner, for example, who doesn't have the same role that he had in the White House during the president's first administration.
Well, Jared Kushner has not had an official role in the second Trump administration, but I think it's fair to say he's been in the background the whole time, and you can really see his fingerprints on this 20-point plan. Kushner has always been a real advocate of economics, trade as part of a path to peace. There's a lot of economic angles to the 20-point plan, and he clearly was sitting alongside Steve Witkoff in Egypt and now in Israel to see the details of this followed through.
What's the right way to think about what happens in Gaza if there is lasting peace, the power vacuum, who actually comes to power there, and what their views will be?
That's really TBD, but here's the risk. We get through this initial phase of the ceasefire and there's a security vacuum and there's nobody there on the ground other than Hamas, who still has their weapons, or Israel, who's still present in 50% of the Strip. What President Trump would like to see happen is this international multilateral force with a lot of Arab and Muslim countries contributing. Really hard to see them going in if Hamas doesn't agree to give up their weapons. And I think the leaders of Hamas understand that if all 20 points of this plan are implemented, that means surrender for Hamas. They have to commit to peaceful coexistence with Israel. Hard to see a terrorist organization doing that. And if they leave, then they're surrendering everything that they've worked all these decades to build up. So the likelihood is actually more instability and more violence in the short term. The hope is that if this peace plan is implemented, we actually have a chance at Palestinian self-determination in Gaza and also in the West Bank.
You noted that Hamas accepted this deal under military and international pressure. I'm wondering what kind of lessons we learn from that? Does this mean that more pressure needs to be applied in order to reach the next stage of a deal that could lead to lasting peace?
Well, the Israeli operations in Gaza have received so much international and regional condemnation and criticism, but I think we have to be honest here that we wouldn't be where we are today without some of the Israeli actions in Gaza, which took out all of Hamas's top leadership, have dismantled a lot of those tunnels, and we're continuing despite all of this international criticism. But it's clear that it's not only military pressure alone, it's this political pressure from the longtime backers of Hamas. So exactly 2 years after October 7th, what's clear is that Egypt didn't want a flood of Palestinians from Gaza coming into the Sinai. Qatar wanted it to be over, especially after that Israeli strike in Doha that targeted Hamas leadership sitting in a fancy building. And Turkey, who has a longtime connections to Hamas, President Erdogan's top national security aide was on the ground in Egypt negotiating this. So the backers of Hamas really pressured it to agree to give up these hostages.
Dana, always appreciate you taking the time and joining us, especially on such a busy Friday. Dana Stroll, Senior Fellow and Director of Research at the Washington Institute for Near East Policy, joining us from Washington, D.C. Coming up in just a minute, we're going to be speaking with the CFO of the publicly traded communications company Lumen Technologies. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, I thank very much, Tim and Emily. Here's what's going on. Very close to session lows right now on the S&P 500 index. We're on track for a losing week. Right now, looking at a loss of 1.5% on the week. But right now, we have got the Dow, the S&P, NASDAQ. They're all in the red. A months-long calm on Wall Street came to an end today when stocks erased early gains after President Trump threatened, quote, a massive increase of tariffs on Chinese products imported into the U.S. Stocks started selling off around 10:55 a.m. Wall Street time. S&P now lower by 1.7%, again close to session lows, down 112. The Dow down 515, drop there of just about 1.1%. NASDAQ is down 2.3%. Our Mag 7 index down 2.5%. The 10-year 4.04%, with the 2-year that's currently yielding 3.51%. Gold 4,007, advancing $30 the ounce, up by about 0.8%. And we've got silver back above 50, 26 the ounce, up by 2%. Johnson & Johnson is in talks to purchase Protagonist Therapeutics. That, according to the Wall Street Journal, citing sources. J&J down 0.5%. It reports earnings next week. Protagonist up now by 33%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. It is time for another edition of the CFO Briefing. This week, we are joined by Chris Stansberry, Chief Financial Officer and EVP of the Louisiana-based publicly traded global communication services company Lumen Technologies. Market cap of about $6.8 billion. Shares so far this year up more than 25%. Also with us here in the studio is Nina Trentman, a Bloomberg News senior editor. She writes the CFO Briefing newsletter. You can subscribe to it at bloomberg.com/CFO-briefing. Chris is featured in the most recent edition of the newsletter. Chris joins us from Denver. Chris, welcome. The company divesting non-core assets, for example, earlier this year announcing the sale of its mass market residential fiber unit to AT&T for $5.75 billion in cash. Now, what you're planning to do is leasing existing fiber routes to hyperscalers and social media companies to transport AI traffic between data centers. I want to know, how big of an opportunity is it to lease to these hyperscalers?
Yeah, thanks for having me today. It's been quite a journey at Lumen over the last 3.5 years. And really what we see as an opportunity and have seen really through our transformation is the AI multi-cloud world that's being developed right now. The network of yesterday wasn't built to support it. And if you really think about the economics of AI and the economics of a GPU, you want to keep that GPU fed as much as it can consume so that they're spinning constantly, and that's where you get the economic benefit. So the problem with the network that has existed so far is that as those data loads get spread further and further away, as data centers are in search of power and cooler temperatures, there's latency problems, and there's access problems. It takes a long time for networking to adjust. So what we're doing is building a mesh that basically goes anywhere to anywhere, where the customer on demand can move those workloads where they need them in super low latency manner. So that's the big change. And so it's not just hyperscalers, it's really the full connectivity between the hyperscalers running those clouds, the hyperscalers obviously building those AI algorithms, and large enterprise customers who are on the AI journey now and will be using it much more heavily in the future.
Yeah, Chris, thanks for joining us again. It's great to chat. Just wondering, with the AT&T deal and also what you've done in capital markets in recent weeks, you've really improved your financing structure. You're saving hundreds of millions in interest expenses a year. Talk to us a little bit about that.
Yeah, if you go back in time when we all joined Lumen and saw this opportunity, the balance sheet was not our friend. We had a lot of debt. Half that debt was due in 1 year. It was due in 2027. And that was job number one. We really needed to strengthen the foundation of the company so that we could go do the things that we're executing against today. So that was really accomplished through a couple of things. One is we did the largest out-of-court debt restructuring in history. That's not quite 2 years ago. And that allowed us to push those maturities out a bit, but at a significant expense. Our annualized interest expense at that point was about $1.4 billion. But from there, we saw in the middle of those negotiations, we saw this opportunity with the hyperscalers. And soon after that debt negotiation was completed, we signed $8 billion worth of deals, and that has grown since. That allowed us to monetize an asset that has been in the ground for 25 years, which is conduit that we can blow fiber through to meet the needs of the hyperscalers in a fairly short period of time versus building new. And that's really the core enduring advantage of this business. And then we layer the digital on top of that. But the cash from those deals allowed us to refinance and delever. So we've made a number of moves so far this year. And with the sale of the consumer fiber business to AT&T, when that closes, our debt will be down to just over $13 billion, and our interest expense on an annualized basis will be about $700 million. So in a 2-year period, dramatically reshaping both the quantum of debt as well as the maturity curve. And now that balance sheet is a real asset for us as we invest in the AI multi-cloud world.
Yeah, I'm actually wondering about the investments. Of course, there's a lot of CapEx that's required in a business like yours. We've seen earlier this year the One Big Beautiful Bill Act that was passed, which tries to encourage investment, including in capital investments, by allowing you as CFO to depreciate certain investments faster. Like, do you think this will make an impact as you're thinking about future investments in your business here in the U.S.?
Definitely. If you go back to the 2017 legislation, the big problem with that legislation is it created an unequal playing field between, say, more service-oriented or asset-light companies and asset-heavy or infrastructure companies. And if you look at where the administration is focused today, it's clearly around infrastructure. That's where I think the U.S. has the biggest challenges, really, is making sure that we don't get too far behind with our infrastructure. So the recent legislation has leveled that playing field. And really that was around two things. The first is that there was interest deductibility limits that used to exist that have been relaxed dramatically because, again, asset-heavy infrastructure companies tend to have higher leverage. And then to your point, the ability to accelerate depreciation to help on the tax side is significant. That reduces the risk that companies that are investing in infrastructure take on when they make those kinds of investments. So it's absolutely an opportunity for us.
Chris, gonna have to leave it there, but you got to come back and join us once again. And I do remind everybody that Chris is featured in the most recent edition of the CFO Briefing newsletter. You can sign up for it at bloomberg.com/CFO-briefing. We've been speaking with Chris Stansberry, CFO and EVP of Lumen Technologies. Also joining us here in the studio, Nina Trentman, Bloomberg News senior editor. Sign up for that CFO briefing newsletter. After an exciting week of Hollywood coverage with Screen Time, take another deep dive into the film industry with a brand new episode of Bloomberg Chief Future Officer. This one features IMAX CFO Natasha Fernandez. Tune into Bloomberg TV Wednesday at 9:30 Wall Street time. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index holding just above 6,600. We're very close to session lows. The Dow, the S&P, NASDAQ, they're all in the red. A 600-point drop right now on the Dow, down 1.3%. S&P is down 1.9%, down 127 points. NASDAQ down 585, drop there of 2.5%. A months-long calm on Wall Street came to a screeching halt today when stocks erased early gains to touch session lows after President Trump threatened, quote, a massive increase of tariffs on Chinese products. Right now, we have got, again, the S&P down 1.9%. The Russell 2000 index of small cap shares down 2.1%, and our Mag 7 index is down now by 2.8%. The 10-year at 4.04% with a 2-year that's currently yielding 3.51%. Gold is up $18 the ounce, was back above 4,000 briefly, right now at $39.96, up 0.5%. Silver also was back above 50 briefly, $49.91 right now on silver, up by 1.3%. A big retreat for West Texas Intermediate crude below $59 a barrel, $58.85, down 4.3%, and Bitcoin showing a 3% decline at 117,519. Automaker Stellantis' third quarter shipments climbed 13%, led by a rise in North America, pointing to a recovery after the ailing car maker worked down inventory in the United States. Automakers lower, Stellantis down now by 6.6%, Ford down 0.5%, GM down 0.6%, and Tesla down by 3.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. I mentioned we are all over markets today. Dollar sliding as President Trump threatens a, quote, massive increase in tariffs on Chinese goods. Well, the greenback is still trading on the cusp of its best week of the year. The president's latest tariff salvo threatening a once promising dollar rally. We've got with us Jaya T. Bardwaj, Director of FX Strategy at TD Securities. She joins us here in the Bloomberg Business Week studio. Jaya T., we wanted to talk FX. We knew you were the right person to talk to. We've seen the dollar recover a bit this month until today. Is this a temporary setback or is it something bigger?
Thank you so much for having me again. Always a pleasure to come talk to you guys. I would say that, interestingly, what's been happening in the last few sessions, at least, is that we were living in sort of like a U.S. nirvana where we don't know where we're flying. We're flying blind. We don't know what the U.S. data is indicating anymore. And the hyper focus that markets had on path of Fed cuts, how much is the Fed going to cut, how much are they going to ease next year. We took a break from that thanks to getting no U.S. data, and immediately market focus shifted to everything that's happening elsewhere in the world, which is where you had elections in Japan did not turn out the way markets were expecting. You had French election uncertainty drag on. All of this sort of allowed the dollar to behave like a safe haven again, something you saw only up until last year. So that sort of gave dollar the kind of strength it has been used for the last 5 years and gave dollar that nice rally. I think you bring a very good question. Does that change the picture meaningfully, or is it just a bounce? That's a question that clients have been asking us as well. But I think big picture, it's unlikely that euro is going to collapse to the level where we were at the start of the year. The U.S. administration policy uncertainty is still going to live, is still going to be there for the majority of the next 3 years. And if anything, today is the perfect example of that, where you had headlines come out with China, the relationship there deteriorating, and that's clearly taking a hit on the dollar again.
I want to just talk about what you mentioned as the dollar being seen as a safe haven asset, because we're also seeing treasuries really rallying today, people piling in there. How do you kind of compare which one, I guess, signals a weakening outlook for the macro picture? If traders are piling into treasuries versus the dollar, are there any signals we can glean from those moves?
I think that's also like a good debate that people have had. Like, surely the dollar has had a very bad year, but you cannot say the same about treasuries because you've not seen active signs of anyone dumping U.S. treasuries. In fact, the major holders out there, Japan, EM, Asian central banks, while obviously they have been clearly buying gold and amping those reserves up, it's not as if they have deserted treasuries. But the dollar's relationship with treasuries is broken because while everyone still wants to hold U.S. assets, they don't want to hold U.S. assets unhedged. So they are clearly diversifying away from the dollar, not from US assets per se, but clearly there's a shift away from the dollar, which has made that relationship weaker.
We have to talk about the debasement trade then, because you had mentioned gold when you came in before the show started. It's at a record high. Bitcoin has been rallying.
You went there. You went to Bitcoin.
I mean, all of these other assets, is this a result of people moving away from the dollar losing its appeal?
I think definitely yes. So people have always talked about dollar as a share of reserves collapsing, but that's been true for the last decade. But I think as we entered this year, the marginal collapse in the people holding the dollar has amplified because of all of the uncertainty we're dealing with now. Now, for the last 5 years, most of the uncertainty around the world was housed in the Middle East. Was housed in COVID, which was a supply chain shock, which was also outside the US. I think this is the first time in many, many years where US has become the source and the emanating source of global uncertainty around the world, which is why everyone is now even shyer of holding dollar in their portfolios, which is why a lot of the investors and clients we speak to are now thinking of diversifying away from US assets, not marginally, much less so, because I'm sure there's still not a very strong alternative to US equities, as we can all debate for months on end. But clearly there's alternatives to the US dollar now, where people have shown a greater preference for the euro. And in fact, at times, euro has been behaving like a safe haven and the dollar much less so.
If we're talking gold, we got to talk about what we heard from Ken Griffin earlier this week. Was that this week or last week? I don't even know what day it is.
That was this.
Okay, that was this week. Okay,
yes.
Thank you.
And Ray Dalio as well this week.
Yeah, Ray Dalio as well. You were you at that event too?
I was at the Greenwich Economic Forum.
Okay, so Ray Dalio said that gold is certainly more of a safe haven. Then you had also Ken Griffin essentially say, if he asked if he was agreed with the view of Ken Griffin that gold's rise reflected anxiety about the U.S. currency. How is gold a diversifier now versus where it was maybe just a few years ago? Should people be thinking about the position in its in our portfolios differently now?
I think gold has clearly been a very topical point of late, and that definitely plays into both the fact that central banks around the world have been diversifying and trying to hold gold assets. So central banks' purchases of the yellow metal have surged in the last year. In fact, that's a trend which has been ongoing for the last 5 years, but it has taken a big amplification up this year. So that is what led to that massive rally in gold. And then a lot of the other investors, like who've mostly been on the sidelines with gold, who've not traditionally seen gold as a safe asset, now with the uncertainty around the world, with people now pitching stable coins, now people talking about holding their debt in Bitcoin as well, with all of that and with greater uncertainty in the US and greater reliance on the US dollar acting as the global reserve currency of the world, there's definitely a bigger shift of investor preference into holding gold both as an investment asset but also as a safety asset, because whatever happens at the end of the day, it's a physical metal which you hold in your reserves, which is not linked to any particular government and their policy, whereas the dollar clearly is linked to the US administration and its policies.
I want to end on just the headlines that we're seeing today, this idea that perhaps trade tensions are escalating even further now between the US and China. How does that specifically impact your views on G10 FX just within the next few weeks here?
I would say that depending upon what kind of a picture this evolves into, if the outcomes from here get worse, let's say if Trump comes out and again announces a tariff increase on China close to 150% or even above that, which is what we saw at the start of the year, that's again going to bring back a lot of macro volatility into markets. In fact, FX volatility has been heading lower. I think a lot of FX traders were frustrated with the move we saw in Q3. I think that's going to change. You will bring back a lot more volatility into the markets. I think there will be concerns on both sides. Both countries linked to China and Chinese exports, so euro can take a hit. Chile, the Chilean peso, which is usually linked to the outlook of copper prices, and China will also take a hit. The US dollar will also take a hit at the end of the day. So it will definitely be a lot more volatility and will hurt currencies in that way.
J.T. Bardwaj, Director of FX Strategy at TD Securities here in the studio. In the meantime, we're seeing stocks hit a new low as we get into or close to the last hour of trading. The S&P 500 down right now by 2%. When we come back, some stocks that are on the move. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
This is Bloomberg Business Week Daily. I'm Emily Gruffeo here with Tim Stenovec. Carol Masser is out today. We have a sell-off going on in markets right now. The S&P 500 down 2%. The NASDAQ 100, those technology stocks, down almost 3% right now.